Our FTSE and DAX futures. Maybe a little bit more movement we saw in Paris. We've had numbers out from Schneider Electric. That could be one that goes higher at the start of trade. Rolls-Royce in London could be a mover at the start of trade. There's a buyback in focus there. And in fact, buybacks for a number of businesses is certainly a bit of a theme this morning. We talked to LSEG. We've heard about that from WPP and restructuring taking place, at WPP. That's that story. So there could be some areas of individual focus for individual stocks that we'll keep an eye on then, Lizzie.
Yes, indeed. Let's take a look at the individual stocks that we have our eye on this morning. So you mentioned WPP. We already are watching European advertising companies this morning after they had that unexpectedly weak first quarter forecast from Trade Desk. This is the US ad tech company, but shares down as much as 18% in post-market trading. So another reason to watch WPP, but also the likes of Publicis in Paris and Havas in the Netherlands. Lots of earnings to factor in this morning. You mentioned Rolls-Royce. They indicated higher on TradeGate, also minding Puma, forecasting another year of losses, scrapping the dividend, and indicated lower on TradeGate as a result. We're inching towards the open, Anna.
Yeah, we are. We'll see what the sector picture brings us as well. Yesterday, we saw banks delivering an area of strength. Food, beverage and tobacco was an area of weakness. We had real downside moves from some big players in London on that front. So the London market taking a moment to get into its stride this morning. Pretty flat. So as the futures had suggested, perhaps we don't see a huge amount of movement at the start of the trading day. We've had earnings stories coming thick and fast, but not necessarily a huge amount of expectation that those stocks move vastly at the open. So the FTSE 100 actually down a touch this morning, just down 0.1%. The big picture story overnight, though, Lizzie, has been around NVIDIA, and so you wonder whether there is any tech read across into what we get from ASML or other tech names within Europe, ST Micro, for example, and other chip makers. Although what read across would look like is a little difficult to assess because, yes, they beat estimates. The story is a positive one, but the stock didn't move very far in the end after an initial pop higher. So we will watch tech stocks, though, regardless. What are you seeing, Lizzie?
Well, if we start there with the chip stocks, you've got the likes of ASML down 0.1%, B Semiconductor down 0.8%, ST Micro also down 0.1%, and Infineon down 0.4%. So a lot of negativity, not that much actually, in the chip space. It's the tepid sort of reaction we saw around NVIDIA itself. But if you break it down by sector across the continent, about just under half of sectors in positive territory. Financial services leading the gains this morning. Media not far behind. But bottom of the basket, basic resources, banks, telecoms, chemicals, all in the red this morning. Now, we've had loads of earnings to get through, and just some of the moves that are standing out. Engie up 5.6%. LSEG, we were speaking to their CEO just a moment ago. Those shares up 4.3%. So the buyback news clearly enough, even if it wasn't what Elliott had wanted, but enough to impress the market. Puma, as we expected, is up 3.4%. In fact, sorry, we'd expected Puma to fall, but in fact, Puma shares are higher, 3.5%. And also looking at Stellantis down 0.6% off the back of their earnings.
Okay, so a bit of movement on the back of the earnings stories. Basic resources also an area of weakness as we see some retreat in silver prices, the likes of Fresnillo moving a little bit lower. Let's talk about these wider markets, though. Karen Ward joins us, EMEA Chief Market Strategist at JP Morgan Asset Management. Very nice to see you this morning, Karen. Thank you for being with us. So let's start with the preoccupation in these markets overnight, which has been, what has NVIDIA added to the sum of our knowledge about where the AI story goes from here? They've given us comforting words about what hyperscalers are doing and the amount of visibility they have about their sales as a result of that. How are you feeling about that AI theme as we head further into 2026?
Well, look, the fundamental question is, is AI going to change the world? Is it going to be that enterprises find use of AI to dramatically change their business models? And the honest answer to that, Anna, is we don't know yet. Lots of companies are trialing it, seeing how they can improve revenue, productivity, whether it impacts their workforce. We're in the trial stage. The way I think about all these pieces of information is it's like Chinese whispers. And when you play Chinese whispers, you want to be at the front of the chain, the person who gave that information. The person at the front of the chain are businesses who are trying this out. Are they finding that they can reduce workforce, increase their output? At the back of the chain of the Chinese whispers are the chip producers. And so really, I think NVIDIA doesn't add to the big question of ultimately, is there demand for this all of this compute capacity that the hyperscalers are working on? Are enterprises going to pay for it? And also, how that relates, how much they're going to pay for it, how that relates to the spiraling costs of compute capacity. Because to me, that's the big news this year on the tech story, is that we're not yet getting to the point where the hallucination rates are coming down for this to, I would say, viably transform all businesses, but yet the cost of producing it is skyrocketing.
Yeah, so there's the costs in focus, the quality of the product that these AI systems will churn out, and so that does raise questions about the end demand or how quickly we get there. Do you think this whole thing really comes down to a bit of a mismatch in timing? And even if you can see the potential in a technology, it doesn't mean it fully delivers tomorrow. And that's the market seems to have jumped way ahead of itself. Is that where we've got to?
I think that's exactly right. I mean, look, Bill Gates got it exactly correct when he said we always overestimate how technology will change the world in 2 years and underestimate how it will change the world in 10 years. And I think that's exactly it. The markets, the hyperscalers were priced to perfection when we were in most of last year thinking this AI rollout is going to be successful and quick. And I think it's the quick part that is looking very sticky because we're getting these significant bottlenecks in the cost of production without, I would argue, the improvement in the quality of the product.
So you see it as a positive development that CapEx restraint is now being rewarded by investors. That's exactly what we were just hearing from the LSEG boss, David Schwimmer.
Yeah, I think investors are absolutely right to be picking into this story and the price to perfection. How easy is this going to be? We know from former technological excitements that the question of who buys this product, whether it's enterprises or consumers, because consumers don't pay, enterprises pay for products, how much they're willing to pay, and the cost of production, where the market was priced this time last year was too optimistic on all counts. So I think, yes, the market's asking for the hyperscalers to show a little bit more proof in the pudding. Last year it was, oh wow, you've raised your CapEx numbers, you're convinced, I must be convinced. Now investors are saying, I need to see the ROI on this CapEx before I want you to do more.
So given your skepticism about mega cap tech, how much further does the rotation away from US stocks have to go?
As I say, fundamentally, the answer to the question of is this going to change the world, is there going to be the ROI, none of us know, no matter if you're spending all of your days. So it's not that I'm deeply pessimistic about this. To me, it's just there are so many unknowns. So I think the allocation there, I don't want 30% of my US allocation in a part of the market where there are enormous questions. So I think the rotation still has a lot further to go. I think that rotation is within the US market. It is comforting to at least see there are some other options in the US market. I think the US economy will stay strong, which gives that rotation legs. But I'm still more optimistic about Europe here. Europe is not priced for perfection. When I was talking about European outperformance last year, I was laughed out of the room. Now, at least people will listen, but there's still a heck of a lot of skepticism. There is still a belief that Europe is structurally incapable of growth, of growing corporate earnings. And I think that's wrong. I think for the last 10 years, we did ourselves a disservice, an act of self-harm in fiscal policy and regulatory policy. And the tide has changed in Europe.
Okay, so the tide has changed. And that takes us on to fiscal, because actually you think that's well, is that maybe an under-discussed driver for markets this year? How does that play out in a European context then? Because there is a lot of expectation that we get a big fiscal push in Germany, for example. Is that one of the reasons that you're very positive about Europe, or is it other factors?
Definitely. I don't think we talk enough about the role of fiscal policy in US exceptionalism. In the period of US exceptionalism, government debt to GDP in the US rose by 40 percentage points. Constantly sending checks in the post and cutting taxes was very good for the US economy and for US corporate earnings. We were, in that period, focused on austerity and restraint. So the change in tone in Germany's joining the party. You know, they've looked up this year and thought, crikey, we're so focused on keeping debt low, saving the planet, all these incredibly long-sighted, well-intentioned plans. But look how much more fun everyone else is having. So forget it. Let's join the party. And this fiscal program is 12% of GDP. This is big money they're trying to spend. Most of the questions and skepticism are just whether they can spend the money fast enough. I mean, look, we're sat here in the UK. What a problem. Imagine our government thinking about, gosh, can I get this money out the door fast enough? This is a meaningful shift. And I think markets fixate on monetary policy, but fiscal policy is much more powerful.
Okay, and so with that in mind, how do you lean into that European theme then, Karen? Is this still about German defence names? Is it about the euro? Where is the focus of this
I think it's very broad, because I think the cynicism about Europe and this perception that it's structural hits most European sectors and assets. So I do think it will be broad, but there will be beneficiaries. And I actually think it's going to be some of the real losers of the story that might, because they are so beaten up in prices, they may be some of the biggest upside from here. I mean, European autos have had the most horrifically challenging time for the last 15 years. And now you can see, you only have to look at the speeches by Ursula von der Leyen, where she's saying, gosh, you know, you're a big employer in our region. We've got to work out how to help you in the way that Chinese producers have been helped for the last 15 years. So I think for me, it will be broad, but maybe you can lean into some of those previous losers who, as this policy tide changes, could be the winners.
What about all the tariff drama over the weekend? Does it give you doubts about the US fiscal position, for example? Does it make you see that yields could go higher, that the dollar could be weaker? Do you think that companies could be hiking prices to try and protect themselves, and that could help the Fed to start hiking? I don't know, lots of different ways.
Yeah, I mean, I think to me, actually, I reflect on this as good news. It's a demonstration for US assets and the rest of the world. It's a demonstration that the institutional framework in the US is functioning. That should be good for perceptions of US assets and the dollar. But the checks and balances that will be in place about how the administration runs trade policy from here, I think is a signal to the rest of the world that you're less likely to wake up on Monday morning and learn from a tweet that there is a significant change in policy towards you. So I actually think that we're past the high watermark on trade aggression, and therefore that business uncertainty is going to continue to ease, and that's going to be all part of the broadening and reflation story this year.
So institutions working in the States should be a comfort. What about our level of predictability around their reaction function? I'm thinking of the Fed here. You talk ahead of our conversation, Karen, in your notes about an asymmetric Fed, a Fed that's alert to job losses and will react with rate cuts pretty quickly if needed, but maybe less keen. You tell me, less keen to react on inflation fears. Where does that take us?
Yeah, I mean, Kevin Walsh is a very credible candidate at the Fed. The markets received the news positively, and there's a lot of institutional credibility from the institution and the way the committee itself is set up. So I'm not worried about Fed independence. But, you know, let's not be naive to the pressure all of the world's central banks are under. And I think for markets, that does create an asymmetry. We know that it would take a lot of upside news on growth and inflation for them to get back into territory of talking about rate hikes. However, signs of weakness, particularly in the labour market, they're going to be fast and with large rate cuts. As an investor, that's very comforting. So I think it's that asymmetry. I mean, the Fed may well be on hold for the whole of this year, but it's the knowledge of the asymmetry that comforts me in my risk allocation.
Okay, Karen, always good to see you. Karen Ward, EMEA Chief Market Strategist at JP Morgan Asset Management. Thank you so much. Okay. Let's take a look at the core six this morning. How are they shaping up? We have Novo Nordisk here up 0.7%. The loser this morning, Rheinmetall, down 0.3%. Of course, we're watching the chip stocks off the back of those Nvidia earnings last night. ASML actually up 0.4% now. And Schneider Electric had its results earlier on. They see rising sales, profit on this data center boom. Those shares, the outperformer in the core six, up 2.4%. But let's dive into some of the other individual stocks on the move this morning with Charlie Wells. Charlie.
Good morning, Lizzie. So the market is sifting through a deluge of earnings that really have come through this morning. And we're seeing Rolls-Royce really soaring this morning, up nearly 6%. And this is on the back of a very strong earnings report. They were able to show a lot of demand for large jet engines, but also for the systems that power this AI economy. That is a dominant theme coming through this morning. If you are able to show the market that you can power this AI economy, you are being rewarded with a lot of green. So Rolls-Royce, they're up 6%. Also talking about a buyback this year in the range of about £2 billion, much more than that over the course of the next few years. I was talking about energy, and we've got to talk about Engie, up over 7% as well. So this energy theme, this powering the AI energy needs, that is a theme coming out loud and clear. They have announced that they are going to acquire UK Power Networks. That is that regulated asset. And again, this is something that we've seen across the board in Europe. These long-term investors love acquiring these regulated networks. So Engie able to announce that acquisition and up over 7%. LSEG as well, another kind of different story here on the AI trade as well, more in that software space, but they were able to announce as well a buyback this year of about £3 billion, so up 4.2% there, showing in this software space, in this kind of data analytics space, that you have some safety despite a lot of the AI fears as well. There's an interesting tale here that doesn't really have to do with AI, but I want to bring it up because it's a little bit surprising, and that's Puma. Up over 5.6%. And we know that Puma has been struggling. They had such a great time in that kind of post-pandemic, very sneaker-friendly environment. But they've been going through a transition. They've had some really difficult times. And also, this was a little bit unexpected, Lizzie, as you mentioned before, because their CEO was talking about this year as being a transition year, when they've got to offload a lot of this inventory, going to those factory outlets. That sounds bad, but this could potentially be the market seeing this green here, saying, look, we're on board for this transition. Let's go. Let's change. Let's move in the direction that we want. Freenet. So this is a German mobile provider. They actually had a pretty difficult quarter. They had some earnings out that disappointed, and there was a contract that kind of hit some snags for them. So again, the market really not liking what it's seeing there, down over 8%.
Charlie, thanks so much. That's Charlie Wells there. And we're going to continue the earnings theme in just a moment. After Allianz reported a multi-billion euro share buyback, we're going to be speaking to the CFO of that insurance company. That's next. This is Bloomberg.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Astonishing day for US technology. It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Allianz reported fourth quarter profit that met analyst expectations as the CEO plans to return more capital to investors. The German insurer says that it's to start a new share buyback program of as much as 2.5 billion euros. And we can now welcome the Allianz CFO, Claire-Marie Coste-Lepoutre. Good morning to you, Claire-Marie. Thank you so much for making time for us. I know that the shares are actually slipping this morning despite this seemingly positive set of results. What do you think that investors aren't getting? Do you think perhaps you've been too conservative with your guidance?
So maybe let me recap a little bit 2025. So 2025 is a record set of numbers. What we see is that we see growth, we see profitability across our 3 segments, so P&C, Life and Health, and Asset Management. And clearly, those numbers are putting us in an excellent path when it comes to the delivery of our midterm targets. What I think is also very important beyond the sustained performance momentum or financial momentum we have seen in 2024 and 2025 is the fact that we have enhanced our resilience, not only from a base, but as well from a sensitivity perspective. So I think those 2 elements combined put us on an excellent track with full confidence towards 2026. And then I think when it comes to our outlook, those who know us well will definitely know that it's a fairly technical approach we are following. So we have a traditional way of picking our midpoint for the outlook, which is using the landing point in terms of operating profit of the previous year. So 17.4 billion plus minus 1 billion euro in terms of range. Clearly the range gives a lot of optionality, I would say, and everybody knows that we are a very competitive company. So clearly we are going to strive for outperformance there, clearly.
Well, let's dive into that. What will be the key drivers of growth going ahead?
So when I think you need to look at it across our businesses, right? And I was mentioning we see fundamental momentums into each of our businesses. On the P&C side, we had announced as part of the capital market, as part of our capital market day back in December 2024, that as an example on the retail side, we have this focus on volume growth, which is also fueled by our customer centricity, which is also fueled by our leveraging AI to give like better customer-centric journey to our customers, which is fueling that growth. And we see that into our numbers already in 2025, because in the second half of 2025, we had more business volume that was coming through already. And then maybe you just take asset management on the other side of the range. We had 140 billion of net inflows in 2025. The first quarter was a record level for a first quarter, and that trend is continuing as we speak in 2026.
Good morning to you, Claire-Marie. Let me start with that fund management side of things. PIMCO, of course, the focus of this earnings story. How has that particular business been navigating the market volatility that we saw in 2025?
So I think definitely extremely well. I mean, the track record of PIMCO in terms of getting inflows is absolutely stunning for 2025. And what is also very impressive is the share of asset under management which are outperforming their benchmark on the 3-year basis. So for the total asset under management managed by Allianz for third party, we are at 93%. So we are adding a lot of value to our customers, and that's also one of the reasons why we are also attracting inflows. Another super interesting KPI from my perspective is the fact that more than 44% of the dividends that we do pay to our clients under the PIMCO funds are being reinvested by our customers. So that's really a very clear demonstration that there is a lot of value being created now.
Okay, and thinking about the business more broadly, Claire-Marie, where do you see areas for growth, and is the focus going to be on organic or on M&A? Some in the sector have been loading up on private credit businesses. More recently, there's been some more negative press coverage and media coverage of the private credit sector. I wonder where you see M&A opportunities.
So our M&A opportunity is absolutely unchanged. So we are focusing on bolt-on, and we are focusing to add scale where it's required, as an example on the P&C business, where we are not on the top 3, because it's very important with the machine we do have in particular in terms of technical excellence. We need scale in order to do that, so we need to be in the top 3 in our market. So that's basically where we are further targeting in the markets where we are. We continue to invest where we are building platforms, which is very important to build ecosystem, also to have the full ability to scale our AI journey, which is absolutely essential and the key success factors for the future. And then we continue to look at further enhancing our geographical focus. So typically looking at Southeast Asia as an example is an area of focus.
Well, I'm glad you brought up that area, because I know your offer to buy a majority stake in Singapore's income insurance hit some local roadblocks, shall we say, a year ago. Do you think you might give it another go? Are you having any conversations about that now?
So, I mean, as mentioned, so definitely Southeast Asia is an area of focus. In Singapore, we are convinced we can add a lot of value. So we can always have conversations in this market, definitely, where we can bring our full ecosystem and really support also local developments for retail, for also SME in particular.
Okay, Claire-Marie, thank you very much. Thank you for joining us. Claire-Marie Coste-Lepoutre, the CFO of Allianz. We thank you very much for your time this morning. So many earnings stories to get through this morning, Lizzie. And yet, European equity markets not, as I say, not doing doing a disservice to the level of news flow that we've had out this morning. We've got the FTSE 100 entirely flat. The CAC 40 is making some gains, but the German market offsetting that. And so net, we go nowhere in a hurry here on European stocks.
Yeah, so Rolls-Royce is up 6.6%, Puma about the same, Engie up nearly 7%. Some of the earnings stories do actually lead to some big moves. I saw Cisco shares falling 23% earlier on after their earnings miss estimates. So some whopping great moves, but as you say, at an index level, it's pretty quiet.
Yeah, and it does seem to be some of the buyback stories that are pushing things around. So LSEG, that we spoke to earlier, that is one of the stocks that is moving higher. And there was a buyback story in there as well, wasn't there? Coming up on the programme, we will return to private credit markets. Fears that AI may spell bad news for software giants. Those fears are creeping into private markets, of course. We'll discuss that and much more with our next guest, Bruce Richards, CEO, Chairman and co-founder of Marathon Asset Management. This is Bloomberg.
Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones.
Some good-looking trophies. 1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're the 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox. That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslinda Amin, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
This is the opening trade. We're 30 minutes into today's session, and you could be forgiven for thinking that not much was happening in the European equity picture this morning. The Stock 600 pretty much flat as a pancake at the moment, but that is deceiving. We've got a lot of happening on the earnings front, hence the outperformance of the CAC 40 this morning, up 0.4%. That comes largely back to Engie, its earnings, but also the news that it's going to buy UK Power Networks. We're also factoring in the results from Nvidia overnight, but the market reaction there pretty tepid, and that feeding into the chip sector narrative this morning. Anna, what are you seeing under the hood?
Yeah, not a huge amount on the volume story this morning, so delving into the details around the Stock 600, we are pretty in line with where we've been on 20-day average volumes, so not much to see here. Pretty divided in terms of members going higher and lower on the Stock 600 as well. As you say, though, Lizzie, there are some decent-sized movers. Let's dive into some of those. Engie is in focus over in Paris, up by 7.4%. Yes, the results, also that deal for UK Power Networks, so that's a focus. LSEG, we talked to the CEO, David Schwimmer there, 4.7% higher, a buyback, that's going to do it. That seems to be the message for this morning. With that in mind, Rolls-Royce also trading higher, and again, a major stock buyback coming there and raising their midterm goals over at the engine maker and maintenance provider. On the other side of things, some less positive news flow around Gerresheimer, this business facing regulatory audit questions, and that's certainly weighing on the stock this morning, 12.9% to the downside. Freenet is another one that's in focus to the downside, down by just shy of 10%. And HSBC down by 1.8%. That was actually a gainer at the early part of yesterday's session, but pulling back just a little bit this morning. Lizzie.
Well, that's what's happening in the markets. Here's what else you need to know this morning. The Trump administration has imposed sanctions on more than 30 entities that it says support Iranian oil and weapons sales. The move ramps up the pressure on Iran as the two countries head into a third round of nuclear talks in Geneva later today. Elsewhere, the French utility, as we've been mentioning, Engie, has agreed to buy UK Power Networks, the largest power distribution company in the UK. That's for £10.5 billion. The deal will make Britain Engie's second largest earnings contributor after France. It comes as the UK rushes to expand its grid to meet surging demand from renewables, EVs and data centres. And Nvidia has failed to impress investors with its latest sales forecast, signalling that concerns about an overheated AI economy will continue to weigh on the company. CEO Jensen Huang pushed back on the concerns, arguing that customers are already making money from their newly acquired computing power and will keep investing at elevated levels. Anna.
Let's stick with technology themes and how that feeds into other parts of the market then, Lizzie. Concerns are mounting in the private credit markets, mostly because the sector has lent so much money to software companies that could face competition from AI. Our next guest predicted software-related pain when speaking to Bloomberg some 8 months ago.
We're avoiding software companies. I think private credit has somewhere between 20 to 30% of their book in software-related companies. And so I think they have all the downside with none of the upside other than getting your coupon, your cash flow on par.
That was Bruce Richards 8 months ago. We're joined by him again, CEO, chairman and founder at Marathon Asset Management.
Good to see you, Anna.
Good to see you. Thank you so much for being with us, Bruce. So clearly you're not surprised by software and the link to private credit becoming such a talking point in markets. You were telling us that this would happen some 8 months ago. What do you think the fallout from this episode is going to look like? How bad is it going to get for the sector?
Well, you see the fallout already in the public credit markets and the public equity markets. So public equities year to date, down 25% for software when the equity market's up. And so you've seen that adjustment already. And so here's the big takeaways to think about. So as it relates to the public credit markets, only 3% of the high yield market in the U.S. is software. So that's in really good shape. No problem whatsoever. In the broadly syndicated loan market, which is also a liquid credit market, 13% exposure. Probably manageable, but will be under pressure. In the private credit market, as I mentioned in that clip some time ago, and I've been talking about this for a year to 2 years already with our investors. In the private credit market, it has 23% exposure. Now let's take that back and give you the picture. In the public equity markets, and I'm looking at the S&P 500, as well as in the United States, as well as the broader market, the Russell 2000. Do you know that only 7% of the number of companies are software companies? S&P or the broader market, only 7%. And so if you're a private equity manager, if you're a private credit manager, and you have less than 10% exposure, I think you're just a market and you're perfectly fine and the market's doing quite well, the overall broader market. Okay. But if you have 23% exposure, which is actually the number for private credit exposure to software companies, you're having a lot of pain right now, and you're going to have to deal with a lot of fallout from this. So there are, at the end of the day, there's going to be two types of software companies. Software is going to survive, and software is going to do quite well overall, but the multiples that they trade at have contracted, and they'll probably stay contracted for a while until we can sort out the winners from the losers. The winners will see the creative destruction from AI, allow it to soar to new values that are much greater than what we see today. But the fallout is that companies that won't survive this, because it's not creative destruction, it's just destruction, yes, will be very problematic. So in credit, here's the problem. In the public equity markets, the companies aren't very leveraged. They're only a half a turn of leverage, which means they're less than 1% debt to EBITDA, net of cash. But in the private credit markets, they're 10 times levered. And so any type of problem with debt financing is a real problem. And that's really what we're seeing, yes, the inability to roll the debt on these highly levered buyout companies. And so it's a whole complex that needs to be sorted out.
It needs to be sorted out, and I wonder how that happens. So from all the numbers you've given us there, Bruce, a really good picture of where the pain is and isn't. Does the pain stay where it is? Does the pain stay in software and in private credit markets rather than getting into all those other areas that you mentioned?
Yeah, no, I think it's here to stay, the re-rating of the industry, this whole concept of ARR, annual recurring revenue, allowed companies to trade at way too high of a multiple because everyone can count on the ARR, so they thought. And so private credit, as opposed to having 7% exposure like the broader market would indicate that they took 23% exposure. And so they have way too much exposure. And the companies can't support all of this debt. And so when you have all this debt on the company, then the question is, can you reinvest back in the business, or are you just doing debt service because you need to reinvest back in the business to adapt to an AI-first world? And so it's a very complex complex set of circumstances. So not only is private credit way too exposed to the software industry, the companies have way too much leverage. As a result, the default rates will be much higher, and the loss rates will be much greater.
But you're not worried about contagion then, it sounds like, via the banking sector, for example.
I'm not really worried about contagion. I think the banking sector has very little exposure to software, and so I don't think you see any contagion there. It's not like the housing market back in 2008 when the banks had enormous exposure to that sector there. It's really something that resides within the private credit market, first and foremost, not the public equity markets as much. And so you see the public equity markets, despite all this volatility down below, you see the public equity markets doing just fine, and the economy, most importantly, doing really well.
So what sort of private credit default rate do you see? Because UBS was talking about 15%.
Well, I think 15% for the software industry is a good number to put on it. I don't think that's the number for the overall sector of private credit. So when we use the term private credit, first of all, there's three components of private credit. There's asset-based lending, there's direct lending, and there's opportunistic, credit as well. And so we're just talking about really the direct lending space, because you don't really see this exposure in opportunistic credit, and you have none of this exposure that's in the ABL market. And so it's just really the direct lending sector. Within that direct lending sector, I think, loss rate, default rates, we'll stick with default rates, that's your question, might be as high as 4, 5, 6% in these next many years, but it'll be dominated by the software segment. But it won't be 15% overall as the sector. But it could be a much higher number for those that have enormous exposure to software. So if you have a direct lender that has 30, 40% exposure to software, you could have a rather high number.
And you draw the parallels to the financial crisis. We had Danny Moses of Big Short fame making parallels because of the lack of liquidity and talking about really private credit and private equity firms push into retail products. He says that's what reminds him of those years. Is the current volatility a warning sign that retail and 401k money should not have easy access to private markets?
Well, I think it's like anything else. I think it's a disciplined investment strategy. And so what the investment allocators, the capital allocators should be looking at, now that the tide's gone out and we can see kind of how the seabed lays, people should be very savvy. And the first question is, what is your software exposure? And again, if you're less than 10% exposure, you're the market and you're fine because the market's fine. But if you have 23% exposure, 26, 28% exposure, that's where you want to be cautious. So private credit is a great solution for wealth channels, for the insurance channels, and for institutional clients. But you don't want to have, particularly knowing what we know now, excess of exposure to software. And that's where you would want to have caution.
Are you surprised it took so long for your software warnings to shake out?
It wasn't a matter of if, it was just a matter of when. And so the markets have woken up. And so, no, I'm not surprised at all. I tried to warn people 2 years ago, a year ago. I wrote about it. I spoke openly to our investors here on Bloomberg Television.
So why did it take so long?
And so, that's a question for, the markets, and so the markets take some time to adjust sometimes. But to me, it was a train coming down the tracks that you can see from some distance, because we first started learning about this with the first drop of OpenAI 3 years ago. And so I started thinking about this 3 years ago. I started openly speaking about this 2 years ago. And so that's why Marathon only has 1% exposure to software in our private credit investments.
So, Bruce, I was going to ask you where you see opportunities. Clearly not there. You've made that very clear.
Well, we think there's going to be opportunities in the software sector, but you have to play it very smart, and you have to wait to see how it all sorts itself out right now.
But I also think that you've mentioned asset-backed lending, and is it the case that you see more opportunities there where you've got asset-rich businesses or with fixed assets?
The physical world is real. I mean, back in the United States and around the globe here, you just spoke about data centers here just a moment ago before I came on your set. And the simple fact of the matter is there's a huge reindustrialization happening around the world. And so back in the United States, auto manufacturers coming back, chip manufacturers coming back, and this reindustrialization that brings supply chain back requires a lot of capital and a lot of investment in plant, equipment, materials to support all this. And so that's number one. Number two, when you talk about asset-based lending, like in our direct lending business, put asset-based lending aside for a second, our last two deals was a concrete deal and a sod deal. Talk about the physical economy between, grass on lawn and commercial settings, as well as, erection of buildings, whatever those buildings are for concrete, or roads and infrastructure building. That's where we're leaning in the direct lending business. In asset-based lending, we're all about the physical world. Just yesterday, as Bloomberg has reported, we did an aircraft securitization. 41% of our aircraft that we own and lease are to European airlines and Asian airlines, U.S. airlines, and represented this securitization. 27 airlines, 27 different airplanes, 18 different airlines around the world. And so whether it's airlines or airplanes or engines or turbines or transformers or cranes, we love asset-based lending. It's physical. You can lend at a proper LTV. It's a nice balance between doing cash flow lending, which is direct lending, and it's a perfect fit to balance a portfolio within a credit mix. And so we love the physical world. We love lending to help with the industrialization, manufacturing, the physical plants that's happening, because it's a big, big economy, and lending to that makes for a great opportunity.
Bruce, speaking of deals, we've got to ask you about the CVC Marathon deal. How did it come together? What made you sign it? Why did you decide it was time to sell? What changes because of this deal? And really, is it all about size now, or is there still a place for privately held managers?
Marathon didn't retain a banker, so we weren't running a process to sell our firm. That's first. And so when you come across the best private equity investors in the world, I'm talking about the smartest, who has the best culture with respect to performance orientation and serving clients, and you have a chance to meet the best private equity investors in the world, and they have a need for a U.S. credit manager. They already have CVC, one of the best, if not the single best, credit team in Europe, here with CVC Credit. Andrew Davies and the whole team, absolutely amazing. But you have a private equity team that's absolutely number one. You have an infrastructure business, DIF, which is groundbreaking and a top infrastructure firm in the world. A secondary business, which is fantastic, but they need a U.S. credit manager. And so we fit the perfect bill. We have the public credit markets. We have the private credit markets between ABL, USDL, opportunistic credit. It's the perfect fit. It's the perfect fit from a cultural standpoint, too, because we're performance-oriented, and our goal is always top decile for everything that we do in every one of our funds and every one of our product offerings for our clients. And so it's the perfect fit coming together when you have such brilliant people that have identified the best private credit manager in the U.S.
Everyone's happy.
Everyone's a winner. Bruce, thank you so much. It's the Oracle, Bruce Richards, CEO, Chairman, and founder at Marathon Asset Management. Let's see if it takes another 3 years for the market to listen to those views. Good to have you with us in the studio. Thank you. Well, coming up, the US and Iran are set for a third round of negotiations today as the Trump administration levels new sanctions on Iran's missile program. We'll get you all the details next. This is Bloomberg.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy. in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the U.S. or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Welcome back to the opening trade, 8:49 in London, and the European equity picture is entirely unchanged at the surface level, but underneath the surface, the DAX is in retreat just a touch, and the CAC Garonne up by 0.3%. Angie making the difference there, it would seem, Lizzie, in terms of the CAC outperformance.
Well, in terms of commodities, I'm looking at Brent, just shy of $71 a barrel, so oil steady this morning as the US and Iran come together to discuss Tehran's nuclear program. The Iranian Foreign Ministry spokesman says that the negotiating team has a reasonable amount of flexibility in those talks. This is as President Trump continues to pile on the pressure. His administration's imposed sanctions on more than 30 entities that it says support Iranian oil and weapons sales, and the US is demanding Tehran curbs its weapons program.
The negotiations tomorrow and the talks tomorrow will be largely focused on the nuclear program, and we hope progress can be made, because that's the president's preference, to make progress on the diplomatic front. But it's also important to remember that Iran refuses to talk about the ballistic missiles.
Joining us now is Jumana Basechi, of course, the anchor of Horizons Middle East and Africa. Jumana, what hope is there now for a diplomatic solution? Good morning.
Well, certainly people are hoping that there might be a diplomatic breakthrough. And of course, the U.S. have been applying a lot of pressure on Iran in the run-up to these negotiations, be it verbally with President Trump saying or warning that very bad things will happen. He's talked about the possibility of military action. We know that there's been a massive buildup of these military assets in and around the Persian Gulf. And then also in the last 24 hours, these new sanctions that have been applied to 30 entities that are involved in the export of Iranian oil and weapons. So certainly a lot of pressure coming through from the U.S. side. Now, in terms of the scope of the discussions today, what we understood from the Secretary of State Marco Rubio is they're going to be mostly centered around the nuclear program. So far, it doesn't seem like they're going to be addressing the substantial ballistic weapon arsenal that Iran are sitting on. And as it pertains to the nuclear program, the big question here is going to be about how much enrichment, if at all any enrichment, the U.S. are going to allow for Iran to continue with. Iran are pushing for a token level of enrichment for what they say is civilian purposes. The U.S. up until recently have talked about a more maximalist approach of zero enrichment, but perhaps in the last few days have opened up the possibility of a limited amount of enrichment alongside very stringent measures accompanying it, including Iran willingly handing over that already existing enriched stockpile of uranium, so disposing of it, and two, opening up the country to full inspections. And you may recall that IAEA have not had access to any of those nuclear sites since that June war last year. And overnight, there's an article on the Bloomberg terminal suggesting satellite imagery showing that Iran have begun to reconstitute some of those nuclear facilities. So there's still a lot to discuss, a lot of daylight between the two sides. The hope is that the differences can be reconciled, because if not, then military action is still very much on the table. The region is on high alert as we go into the weekend.
Yeah, absolutely. Another weekend of high alert. Jemana, thank you very much. Jemana Besetcha, our Horizons Middle East and Africa anchor, of course. Let us tell you what else is coming up on today's agenda. Of course, the US-Iran talks in the mix. We also have a by-election taking place in the UK. That's taking place now in Manchester, so that'll run throughout the day. 1:30 p.m. at UK time, we get US jobless claims, and that's really the data point of the day. We get some after-hours tech news coming through, Dell Technologies and CoreWeave. We have inflation in focus in Japan as we almost get into Friday. That'll be tomorrow's story.
We mentioned the US macro data. Let's get some more now with Skylar Montgomery-Koenig from our Markets Live team. Skylar, good to see you. It's odd, isn't it, given the macro backdrop that we've already seen, that you've got US fixed income outperforming equities this month. We're nearly at the end of February.
Yes, exactly. This to me tells you that the equity move is in part a valuation adjustment. It's also very weird when you think about global equities. Global equities have done very well outside of the U.S., where you've just kind of seen this flattening. And I think in U.S. fixed income, this speaks to the idea that the AI trade or worries around the AI trade are overblown, because the view is, yes, maybe you're getting some safe haven flows from equities into fixed income as you trade sideways in the U.S., but also, worries around joblessness rising because of AI, worries around deflation because of AI, that's showing up in the treasury market. But what we do know is that AI is likely to raise productivity. You're getting more investment with it, and that should actually mean structurally higher yields in the U.S. And so I think as we get to the extreme in these two trades, or maybe we move past more market angst around AI, the 4% on the U.S. 10-year can be increasingly a floor.
Yeah, the link between AI and inflation and yields, one we will no doubt talk about for months and weeks and years to come, Skylar. What a thing to look forward to. NVIDIA has been in focus, of course, overnight. Did it add to our understanding from a macro perspective about what's happening in the tech space and beyond?
I think it's just reassuring in terms of the strong earnings results that you got tell you that the AI story is intact in terms of it can still generate growth, it can still generate earnings. I think the issue with the earnings season generally is that companies don't want to over-guide in terms of they have relatively pessimistic expectations, and so the majority of companies surprise to the upside. And the expectation then is that you're going to surprise to the upside, and you'll surprise to the upside strongly, and that's what you need to see a rally. So I find it encouraging that you had an upside beat, and you did actually see some positive price action on that. And as we move past the big catalyst of the earnings season, and we've had this valuation adjustment intact, I think people are increasingly looking to buy into that, even if they're more discerning on the stock level.
I'm just looking, we've got President Christine Lagarde of the UCB, of course, speaking at the moment. This is a regular hearing with European lawmakers. She's speaking in Brussels. She said that they're going to meet this 2% target over the medium term. And, of course, we've got some more European inflation data coming tomorrow, Skylar.
There isn't anything hugely surprising expected from the inflation data in terms of you're still going to have this low inflation in France, kind of around target inflation in Germany. I think, though, it's important because it's the last inflation reading we have before the March ECB, and at that meeting we will get new projections. And increasingly the risks look tilted to the downside on those inflation numbers in terms of the demand drag from tariffs, the fact that you have a very strong currency, even if it's not risen substantially this year, that'll be a drag on inflation. And then you also have this oversupply of China that, the goods that used to go to the U.S. are now going into Europe at a lower price. And so increasingly the risks look tilted to the downside. And if that shows up in the inflation numbers and in the projections, then you can start thinking about another ECB cut this year.
And all of those factors accentuated since the weekend, it would seem. The IMF warning about the growth risks from that tariff uncertainty. Skylar, thank you so much. That's Skylar Montgomery-Koenig from our Markets Live team. Well, coming up on Bloomberg TV, we will have an interview with the Snowflake CEO. That's at 4 p.m. UK time. Don't miss that. But that does it for the opening trade. The Pulse is up next as we're looking at the European equity picture. Doing not very much. This is Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo.
And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this yield forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Bersetchi. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
The world's most valuable company, NVIDIA, easily tops expectations, but it's not enough to impress investors. Secretary of State Marco Rubio says the U.S. will investigate after Cuban forces killed 4 people who had opened fire from a speedboat with Florida tags. And the U.S. and Iran start a 3rd round of indirect nuclear talks in Geneva. That's according to Iranian reports, with just days to go until President Trump's deadline for a deal. Well, good morning, everyone. Again, there's a lot going on, especially in the tech space, but actually I would say all asset classes is something we need to watch out for. Look, NASDAQ futures is it pressure when it's down 0.1%? I think it's more of the broader spectrum of what that could mean for NVIDIA going forward, or certainly market sentiment around it. The U.S. 10-year yield, 4.04. Brent, you can see at 70.84. Let's also very quickly look at the European markets map. I would say today is a little bit more of, the narrative is basically the rally in stocks that we've seen is now stalling after NVIDIA underwhelmed investors. But a lot of focus will be on U.S., Iran, and, of course, everything that's happening for these round of high-stakes nuclear talks. Look, this is a picture for NVIDIA, gaining some 1.1% pre-market. Let's also have a look at Salesforce, because yesterday they were down some 5%. So let's see if there is an impact pre-market, or if they've recouped some of the losses at Salesforce, down 3.7%. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, NVIDIA has failed to impress investors with its latest sales forecast. The chip maker delivered a first-quarter outlook that really easily beat the average Wall Street estimate, but it still faces uncertainty in China, and then there's a shortage of memory chips. Well, our Bloomberg intelligence analyst, Matt Bloxham, is here. Matt, so is it fair to say that these numbers were disappointing, or was it that we're just expecting too much?
Yeah, I mean, I think objectively, you couldn't really describe the numbers as disappointing, because revenue was up kind of over 70%, and the forward guide points to a revenue growth of close to 80% at the top end of their range. But yeah, I think it's kind of the context is where expectations are at. I think when you see what the hyperscalers talked about in terms of CapEx for 2026 a few weeks back, totaling something like $650 billion of spend. I think nobody could have possibly expected anything other than a good print from NVIDIA and a positive outlook, because there's a huge amount of near-term demand. The big question that remains unanswered is whether that's sustainable, because most of the demand today is coming from the big hyperscalers who are investing kind of speculatively almost in terms of the kind of AI-powered future. And if that kind of investment isn't backed up ultimately by enterprise demand for not just pilot AI but scaled AI, then the whole kind of outlook starts to kind of crumple. And there wasn't really anything that they could say yesterday to kind of shift investor optimism towards that kind of important next phase of the AI story.
So if you look at the future, though, for NVIDIA, they also said they had this license for the good chips, the H200s, and they can sell, a small amount to China.
Yeah.
Is that really significant?
No, I personally think that's a bit of a red herring. China is a red herring. I think for NVIDIA now, given the geopolitical situation, China is clearly shifting its domestic technology companies to source from domestic suppliers, for example, Huawei. And I think that's going to continue. And, I think really anybody that's kind of baking China revenue into their NVIDIA profit projections is being overly optimistic.
So interesting, Matt, as always. Thank you so much, our Bloomberg intelligence analyst, Matt Bloxham. Now, Cuban forces have killed 4 people who opened fire with a speedboat with Florida identification tags. The Interior Ministry in Havana claims that the boat's occupants intended to fight against the government. Secretary of State Marco Rubio says the U.S. is investigating the shooting. Let's bring in Bloomberg's Washington Deputy Bureau Chief, Laura Davison. Laura, what do we know about the incident, and how significant could it be?
So we don't know much yet from the U.S. side. The Cuban government has come out and said that there were 10 individuals on this boat. They were armed and headed to go commit terrorism in Cuba. The boat was registered in Florida. The U.S. appears to be caught rather off guard by this. Secretary Rubio, Secretary of State, was asked about this and said that he was not going to comment until there could be an investigation from the U.S. side. This comes at a really auspicious moment, though, between U.S. and Cuba relations. Cuba itself is sort of on the precipice of economic collapse. There's been an oil embargo imposed by the U.S. since January, since the ouster of Maduro from Venezuela, which was Cuba's biggest benefactor. This is really, comes as, Trump has repeatedly said that, he wants to see the regime ousted within Cuba. He has not been specific about what kind of actions he might take, but hasn't ruled out military action, at least not yet.
Yeah, are we expecting a response from Washington?
We are. Rubio has said that the military, that intelligence forces are looking into this. We have not heard anything yet. Everyone has been very quiet, but expecting that there will be more on this in just the coming hours, if not days.
Laura, thank you so much. Bloomberg's Washington Deputy Bureau Chief, Laura Davison. Now, geopolitically, events and big tech are 2 of the big market stories today. And with us now is Greg Peters, Co-Chief Investment Officer at PGIM Fixed Income. Greg, I'm so excited to speak to you because there's everything and anything that could be market moving. But actually, my favorite phrase is the market is stuck in the mud. So you don't really know if we're risk off, risk on. What's it mean for my fixed income?
Well, I think we're in a wait-and-see period. There's lots of talk. We were just talking about AI, and there's lots of strong opinions and views. And the truth is, we're not really sure what the shape looks like over the medium and longer term. And so I think, we're very much, trying to figure it out, right? What we're seeing on the credit side is a clear revisitation of the software space, anything AI-related. That's been a big growth area in credit for quite some time. So you have that. And then you have the geopolitical side driving, sovereign bond yields. You have debt and deficits. So you have a confluence of so many things going on. So we're stuck in the mud, but we're watching this mosaic of tremendous activity around us.
What happens to treasuries and dollars? So does the dollar weaken much further from here?
I think you have to have a short-term and a slightly longer-term view. The longer-term view is, yes, I think the dollar is in a kind of a secular, weaker mode here. Over the short term, the dollar, U.S. Treasuries are still very much of a safe haven status, right? You've seen it with the potential conflict in Iran. So it still has that attribute to it. But we're working through that cycle over time. And I think the question is 5 years forward, 7 years forward, will it have the same kind of efficacy around that risk-off hedge?
What are you expecting the Fed to do? There's so many unknowns because of tariffs and trade. Frankly, we don't know what happens after 150 days. We don't know actually what happens with, the tariffs or the taxes that were collected in the previous 8 months. Does that impact jobs or inflation, or are you looking more towards AI?
Well, I think, once again, it's a combination of everything. But I think what the Fed is looking at is wait and see. So I don't think there's any real reason to move today. I think they need to wait. It's clear that the labor market has been stagnating for a while. The data flow keeps moving up and down, but I think that's the trend. AI is a clear disruptor that has near-term inflationary implications, longer-term disinflationary. But I think we're in wait-and-see mode. More importantly, we have a tremendous amount of stimulus coming through in the U.S. fiscally. And there's a real push to kind of overheat this market heading into the midterm elections.
But so does that make it impossible, again, to cut, because inflation could be creeping back up if they needed to cut on the labor side? How much does it complicate things?
Well, it definitely complicates things, particularly given kind of the change in chair. President Trump has been quite vocal, of course, around wanting interest rates lower. Kevin Warsh is a known, more on the hawkish side, wants to trim the balance sheet, all those types of items, all else equal. That doesn't drive rates lower. The markets are really trying to figure that out. It is a paradox here, but I think the markets have given kind of Warsh a free pass. It doesn't see any real kind of move on the rate cutting cycle front. The market hasn't really priced in anything more than 2 cuts. And the balance sheet, I think, is for another day.
Greg, how would you describe the bond market over the last couple of weeks? Because there was, when I started out in this profession, there was a correlation between equities and bonds. And over the last 3 to 4 years, that's been pulled apart. But actually, they've behaved more like normal asset classes. And I don't know whether, what you think the underlying cause of that is, and whether we go back to older days.
Yeah, the past couple months or so, it's behaved like it has normally, typically. Right. So it has been that kind of risk-off, risk-parity hedge. Leading up to this time frame, though, has been very volatile. And once again, the efficacy of that trade has really been quite poor. And that just creates more questions and confusions, actually. The fact that it's worked is great, but I still think there's a longer-term assessment of whether that holds true going forward. But yes, the bond market has done exactly what it's supposed to do. Yeah. It's traded as a safe haven. The curve has really flattened out, even though all roads point to steeper curves. That has frustrated investors like myself, but it's safe haven, it's risk-off type of behavior.
How has AI and how will AI actually impact bond markets? Is it impacting Treasury positioning?
I don't think it's impacting Treasury positioning per se. The real AI story is in the credit markets, right? So there's $5.3 trillion that needs to be financed over the next 5 years. That's a tremendous amount of debt. A lot of it's hitting the investment-grade corporate market. You've seen the deals come fast and furious this year. Over $32 billion year to date, just 20 from Alphabet or Google last week. Including the 100-year Sterling deal. So that's where the action is on the AI front. Haven't really seen any impact on the Treasury side.
But is there any way that you think bond investors should be reacting to it? Again, there's always a reaction function, right? We talked a little about inflation, is there like an AI play in fixed income away from credit now?
I think it's mostly in credit. I think it's cleaner. Once again, you think about the impact on productivity and what that means. You're having this tremendous capital being put into the system right now. All else equal, that's inflationary. Over time, it's disinflationary. So, I think it's more of a step function type of move as far as rates are concerned. But all else equal, I think rates are a little too low here, given the growth, given the inflation, given the AI boom. But once again, it's being driven by factors like risk-off and fears of Iran and those sorts of things.
Greg, JGBs. JGBs gave us a little bit of made our hearts race. What do you think long-term, where do you see the most value in Japan?
Yeah, so I mean, you know, for years and years it's been dormant. There's been a dramatic repricing. They've been out of step with the rest of the world, right? So, you know, what they found is that with, you know, government intervention for so long, they wound up with a broken bond market, right? There was no natural buyer for JGBs, right? And on top of it, you had, you know, the yen carry trade. So I think with yields moving higher in Japan, I think all else equal, that just sucks money out of the global system back into Japan, right? Those Japanese flows have been fast and furious for decades now, and that gets recycled back. I think that's the larger implications for the JGB move. I expect, you know, rates to continue to kind of move higher there. I expect the currency to continue to weaken as well, but I think we're caught in this cycle of readjustment that's long overdue.
What about Europe? I mean, overall, where do you find? I mean, what do you buy today to make money?
Yeah. So the good news about global fixed income is that the correlations are lighter today than they've been. You know, leading up to the past year and a half, it's been just a dollar proxy, treasury proxy trade with different betas attached to it. But you're seeing different inflation regimes, different growth regimes, different central bank pace in terms of adjustments. So the value is going global.
Right.
But, you know, you look at, you know, the gilt market. The gilt market looks pretty attractive in here. There's a lot going on.
There's a lot
locally.
going on, Greg. I mean, attractive, but also, again, not for the faint-hearted.
It's not, but you know, it's 110 basis points, you know, higher than France as an example. There's some things going on there as well. So the way we're thinking about it is the back end of the curve is much more treacherous, right? Because it's tied to factors that are way outside of your control. As you get closer to the central bank policy rate, so the belly of the curve and in, it's more controllable. Yeah. And so we like the steep curves. Fixed income does really well when curves are steep. So yields are high, all else equal. Curves are steep. It's a very good time to be in fixed income. And it's about roll and carry. So I'm not looking for massive change in yields or spreads. I'm looking for the roll and carry.
Greg, we have viewer questions. You're such a popular guest. We have many viewer questions. If we get 5 viewer questions, I'm going to give you a free espresso.
Yeah.
Okay, so this person's writing in saying, has a bond equity correlation broken down since COVID due to the tremendous amount of new debt created since then?
I mean, the debt dynamic is an interesting one because it doesn't matter till it matters. I still don't think it matters. Clearly we're in an over-indebted world, but I think it has been in part due to that, right. But I don't think it's precisely due to that. What investors on the bond side really care about is the trajectory, right? And so look at Japan as an example. So Japan has had the lowest interest rates globally with the highest debt to GDP, right? So that's not the single factor. What investors focus on is really the trajectory and the stability of government. So I think that is a precondition. Mm-hmm. Higher debt to GDP is a precondition, but it's those other factors around trajectory, rule of law, FDI flows, and alike that drive it more. So I think it's part of the reason, but not the sole reason.
So interesting. Greg, so good to have you. Thank you so much for joining us. Greg Peters, Co-Chief Investment Officer at PGIM Fixed Income. Coming up, the Swiss chemicals giant Clariant meets sales estimates in the fourth quarter. We'll hear from the company's chief executive next, and this is Bloomberg.
Bringing you up to them in the news whenever and wherever it happens. I'm Shevrian in Seoul, and this is Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Well, the Swiss specialty chemicals company Clariant has reported sales that met estimates in the fourth quarter amid the global market challenges. Well, we're now joined by the Clariant CEO, Conrad Kaiser. Mr. Kaiser, thank you so much for joining us. So will you reclaim, and we'll get to the earnings in a second and your outlook, but actually right now, will you reclaim any overpaid tariffs from the U.S. given the recent Supreme Court ruling?
Yeah, it is a very recent ruling. The Supreme Court has said the tariffs are illegal. That we know. We know that they're no longer in place since last Tuesday. That we also know. What we do not know yet is any procedure to reclaim tariffs. So we're expecting that clarity from the U.S. government in the weeks ahead of us.
Are your customers expecting the money back?
This is obviously one of the challenges we have. Our customers would expect these tariffs to be paid back because as a company overall last year, we by and large have been able to pass on these tariffs to our clients.
So have you gotten any guidance actually on this from the Swiss government? I know Switzerland has been so impacted and we're hearing more and more chief executives really trying to figure out what they should do next.
Yeah, we're trying to get clarity from the U.S. customs clearing agencies. This is primarily also about the new tariffs that are in place right now, the 10%, because we have products shipping in and out every day. We're trying to get that clarity from the customs clearance agencies in the U.S. I will say for us overall as a company, this is a manageable impact. We've indicated last year we have an annual run rate of roughly 20 million Swiss francs of tariffs that we're paying. By and large, we supply local for local. We have 68 factories globally. And in the US, we typically produce in the United States for the United States. But still about 20 million of tariffs that we paid last year. And like I said, by and large, we have passed this on to our customers.
How do you see overall the environment developing for chemicals in Europe?
Yeah, overall, the environment for chemicals in Europe still is challenging. If you look right now at the chemical industry in Europe, last year, production rates were still roughly 20% below the last year before Corona. Worldwide, chemical markets have recovered from Corona. In Europe, we're still 20% below. And the key reason for that is the energy price. So even at current gas prices, which are relatively low, again, around 30 euros per megawatt hour, that's still double the price of energy, double the price of gas from what we had previously with the cheap piped-in gas from Russia.
How's business going in China?
Business in China, we are seeing a slowdown. Last year, overall, if you look at chemical markets, China still showed growth, roughly 7% production volume growth. The expectation is for a slowdown. We do see a weaker sentiment right now. There has been a significant capacity built up specifically in chemicals in recent years. So markets are at the moment oversupplied. You see that primarily in commodity chemicals and petrochemicals. In specialty chemicals, we still actually see a good environment where we also see good margins for our products in China.
Mr. Kaiser, I mean, overall, your business seems to be performing well. The share price maybe hasn't been, quite catching up to your expectations. Are you frustrated by that? And what can you do to maybe align those matches?
Yeah, there is an overhang on the share price from ethylene litigation, which is a past legacy item. If you look at the operational performance of the company, it is actually the third consecutive year where we've increased our profitability. So last year we finished the year at 17.8% EBITDA margin. That's an increase from 16% in the prior year, and that already was an increase from 14.6% in the year before. So we finished 3 years of consecutive profitability improvement, both in EBITDA margin as well as in absolute EBITDA. So for us, we focus on what we can control as management, as leadership in the company, and that is try to continue to outgrow our markets and increase profitability year on year, and that's what we've delivered.
Is any strategic move actually possible before litigation is resolved?
Yeah, we have a lot of liquidity. We have a very healthy balance sheet. We have a very strong cash generation. In fact, we increased our cash conversion debt to EBITDA from 30 to 40% last year. So we're well funded, and if there would be strategic opportunities, we definitely would like to pursue those. Our strategy is first and foremost about organic growth, margin improvements, but we certainly are open for bolt-on acquisitions like the Lucas Meyer acquisition that we did actually. Those are perfect fits, but we will be disciplined. We only would add companies that basically strengthen our core businesses that would deliver real synergies.
Yeah. How much money do you have to actually spend on acquisitions? How quickly do you think you could potentially make them? And is there anything that you'd be selling off?
Yeah, we have obviously a pipeline of targets. And if you look at those targets, they're typically smaller bolt-on deals, which also typically yield good synergy. None of these are capital constraints, so we have a healthy balance sheet. Our leverage has actually come down further last year, so we're in a good position to acquire companies if and when the opportunity would present itself.
If the sector is prone to consolidation, as you say, is there a danger, or actually do you think that U.S. and other foreign companies would come into Europe and buy some of our assets?
Yeah, if you look at the sector overall, we haven't seen a lot of M&A activity in recent years. But it's fair to say that if the outlook for growth is modest, and it is very modest right now, there is little or no growth right now, that historically always has triggered a wave of consolidation in the chemical industry. We are expecting that also actually in the coming years, that a level of consolidation will occur primarily in Europe, primarily in the US.
What's your, when you look at the next 5 years, again, what do you think is the most important chemical strand for Europe to keep? I don't know if any of some of the chemical companies are strategic for national security or even defense purposes, but how do you see that?
Yeah, well, I think it's a great question. The chemical industry is, per definition, very strategic. It is the mother of all industries. If you look around you in the room where you're sitting right now, Francine, roughly 95% of the products has some form of chemicals in them. So for Europe to have a competitive manufacturing base, it also requires a competitive chemical industry. You cannot make electric vehicles competitive if you're not also have all the chemical products that get into these cars competitively made within the region.
Mr. Kaiser, thank you so much for joining us. That was the Chief Executive of Clariant, and this is Bloomberg.
The phone is, what's great about it is it's a well-developed gaming ecosystem, right? So, folks know to find games there, but it's also a highly competitive gaming ecosystem. So it's developed, this gives you both that upside and that downside. But what's exciting is that now we are moving beyond the phone to the TV. So I mentioned like one of the big gaming areas we're going after. One of the big gaming areas we're going after now is, social gaming experiences that will show up on your TV. So we are now announcing, we're going to announce here actually, that we're going to have these social party games that you can play on your TV with your phone as the controller. And it's things like, recognizable games like Boggle, you got Pictionary, we've got a Lego party game. We, basically are gonna like unleash this with a bunch of creators, and they're gonna go figure out stuff that we didn't even imagine that they can do with that interactivity.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslinda Anand, only on Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacroix here in London, and these are your top stories. The world's most valuable company, NVIDIA, easily tops expectations, but it's not enough to impress investors. The U.S. and Iran start a third round of indirect nuclear talks in Geneva, according to Iranian reports, with just days to go until President Trump's deadline for a deal. And Secretary of State Marco Rubio says the U.S. will investigate after Cuban forces killed 4 people who had opened fire from a speedboat with Florida tags. Now, the German Chancellor Friedrich Merz continues his first official visit to China today, with news Airbus is set to secure an order for 120 planes from the country. Now, the Chancellor has said he considers the main goal of his trip to get a better understanding of the Chinese President, Xi Jinping. Well, let's bring in our Chief Europe correspondent, Oliver Crook, and our Chief Asia correspondent, Ross Matheson. So thank you both for joining us. Ollie, has the trip been a success for, Chancellor Merz and importantly for Europe?
Yeah, I think as Chancellor Merz boards his plane, we understand he's about to do that to return to Berlin right about now. I think he can call this a victory in large part because there has been this sort of deliverable here potentially of these aircrafts, 120 Airbus aircraft. So obviously it's a joint company between Germany and France. So something that the Chancellor can come back to Europe saying that they have really won something. And this is sort of an interesting trip for the Chancellor of Germany. Germany has sat for a very, very long time, for many, many decades, very comfortably between the United States and China, basically being able to play kind of both sides and having a very good relationship with both. It was the German auto industry that really developed the car sector within China back in the 1970s. What Germany has been contending with for the sort of last decade, or really the last decades, is actually the German model being adopted by the Chinese and them having a great deal of difficulty coping with that, whether it's the competition they now face in the Chinese markets around EVs, whether it's the competition they now face within Europe with some of these companies coming into Europe. And Chancellor Merz was there in China to basically have a conversation with Xi Jinping to tell him basically that there are degrees to which the trade practices that China are practicing the Germans are not happy with, but they still do need to continue to build a sort of strong relationship. But Merz came into office talking more aggressively about de-risking from China, but as you can see on the board there right now, last year Germany did 252 billion euros worth of trade with China. It is now the biggest trading partner of China and Germany. That relationship was replaced by the United States, but ever since Trump sort of came into office, that is not something that the Germans can rely on anymore. So the difficult conversation that the Germans are having is being sort of stuck in these sort of frenemy situations in the East and the West between the United States and China and trying to navigate both of those.
And Roz, I mean, China has hosted a number of world leaders, a number of European world leaders. So what are they trying to get out of everyone?
Well, China does like to maximize the opportunity, and having all these leaders come through is a chance to project themselves as being a good partner on the global stage, including when it comes to trade, and having these kind of conversations, including with the German leader. Of course, we just saw, his comments that he's expecting a further round of consultations between the governments later this year or early next year. That means the relationship, according to China, is on a different kind of footing, and to maximize those rifts that we're seeing between Europe and the US on trade. We're in this environment where for a lot of countries it's diversify or die. So everybody's trying to build different kinds of partnerships and trade relationships, and China is a key part of that, not just for the EU, but for a lot of countries around the world. And so for Xi Jinping, having all these leaders parade through China is a great moment for him to present himself both at home and on the global stage. And certainly, of course, building up to the big one, which is going to be his meeting coming in March with the US president.
Yeah, and Ollie, a lot of European leaders, including, Chancellor Merz, talk about not decoupling but de-risking from China. What does that look like, and is that even possible?
Yeah, I think that's something that Chancellor Merz was talking a lot more aggressively about in his election campaign in the early stages, and that was, of course, before Donald Trump was reelected as president of the United States. So I think the Germans were in a much more comfortable position once upon a time with a more sort of hawkish narrative around China, and you can kind of see that has eroded a little bit from the comments that we've heard from Chancellor Merz. Now, that being said, he says that the Germans should still continue to de-risk from China. However, he's not going quite as far as he did in the election campaign, where he was basically warning against German companies continuing to invest in China, saying that basically the government will not have your back, they will not bail you out, Germany will not bail out its own companies if something goes wrong in China. That is the kind of rhetoric that we've seen sort of abate a little bit, and we should say that German investment in China has reached the highest point that it has in the last 5 years. So to your point, your question about how sort of reasonable and how viable is it for these German companies to step back, it doesn't seem to be exceptionally so. The other concern that the Germans now have is, I'll give you an example of BYD within the European market, for example. Last year in January, BYD had market share in Europe of 0.7%. It now has almost 2% of all vehicle market share within Europe, and that is while it's still paying tariffs on importing goods. Now, in the next couple of months, BYD will have its own factory within the sort of tariff zone of the European Union in Hungary. That is going to pose an incredible challenge for some of these German companies. So again, just sort of illustrating all the different ways in which the relationship with China is very difficult for the Germans, to say nothing of the Chinese position on geopolitics in Ukraine, and of course the issue of raw materials.
Yeah, and Ross, how are you expecting actually the relationship between President Xi and President Trump to evolve, especially when they're due to meet at the end of the month or at the end of March?
Well, that's going to be the interesting one. We've had all these leaders come through. It's been really important for Xi Jinping's prestige at home, but Donald Trump is on a whole new level, and obviously the relationship is shifting quickly on the back of that Supreme Court ruling, which really weakened Donald Trump's ability to put heavy emergency trade penalties on China. So it's taken away some of his arsenal, some of his leverage, and China will be keen to see what they can do with that. Now will they demand different things from Donald Trump in return for continuing to send the US rare earths, for example? At the same time, they will want that meeting to go well. It's really important for China that meeting is seamless, it goes off without a hitch, there's no disasters, and that Donald Trump in a way comes away happy from it. So they'll have a vested interest in being quite muted perhaps in the run-up to the meeting. Hard to say what will happen in the minute, but they want to show the US that they can be the bigger partner in all of this in a way. So it'll be very interesting to see those dynamics. But certainly things have shifted quite quickly in the aftermath of that court ruling.
Thank you both for joining us. Bloomberg's Chief Europe Correspondent Oliver Kirk and our Chief Asia Correspondent Roz Matheson. Now, the European Bank for Reconstruction and Development is forecasting resilient growth in its regions despite ongoing trade tensions. Now, the EBRD's latest report comes as a U.S. Trade Representative, Jameson Greer, says President Trump will sign a directive raising global tariffs to 15% where appropriate. Well, joining us now is Beata Javorcic, the Chief Economist at the EBRD. Beata, as always, thank you so much for joining us. We're a little bit in limbo in terms of trade and tariffs because you're not 100% sure what can be reclaimed back, what happens next, how long does it last after the 150 days. So what kind of impact do you see it having on emerging markets?
Well, so far, when you look at new tariffs that were introduced last year, they did not have much impact on exports from emerging Europe, and that's because a lot of goods entered the US market in the first quarter, prior to tariffs kicking in. So the effective tariff was actually below the statutory tariffs. But, you know, there is one underappreciated cost of these shocks to trade policy, and that's because they force policymakers to focus on the urgent, to operate in an emergency mode, and all the long-term challenges, such as competitiveness or dealing with aging, are being pushed down the priority list. And that's the real cost of those tariffs in terms of long-term growth.
I mean, when you look at, you know, a lot of the economies, everything has to do with dollar strength, or dollar weakness in this case. How do you see that evolving?
You know, for the countries where we operate, for emerging Europe, what is the key is how the new development will affect Germany. Because really the impact of trade policy works primarily through the impact on the German economy, because that spills as demand from Germany for imports of both goods and services from the region. And it's not just supply chains, it's also consumer goods.
I know you work quite extensively on future plans for reconstruction of Ukraine. I mean, this week is the 4-year, I don't want to call it anniversary, but it's been 4 years since Russia tried to, you know, is invading Ukraine. So how, you know, can you reconstruct before the war is ended, or is everything just waiting on some kind of ceasefire?
Well, as an institution, we have been supporting Ukraine under war conditions, having deployed 2.9 billion euros last year. But of course, for the proper process of reconstruction to begin, you need a stable solution. And actually, when you consider 200 years of wars, what you see is that the success of reconstruction is actually not to be taken for granted. You know, in half of the cases, countries don't catch up with the pre-war trend quarter of a century later. And that's because peace is elusive, because wars tend to reignite.
What do you see in Ukraine right now? Where do you need, you know, is it infrastructure? Is it energy? Is it other parts of the economy that need the most help?
At the moment, dealing with destruction of energy infrastructure is a top priority. That's where we have been focusing. But when you think about the phase of reconstruction, dealing with services, keeping basic services going will be the key to help people function, to bring the refugees back. Of course, improving institutions is a key priority. When the time for reconstruction comes, taxpayers in donor countries, we want to know that the money is being spent well. Support for entrepreneurs, for small businesses will be the key. Even under war conditions, through our de-risking facilities, we have helped channel 3 billion euros to SMEs. So there are many needs that will need to be dealt with.
Beata, overall, when you look at, you know, I had actually a pretty explosive panel at Munich Security Conference where the U.S. ambassador to NATO said that with one phone call, China could stop what's happening in Ukraine. And I know this was probably discussed also with, you know, the chancellor over there in China. But does China benefit from Russia's oil market? Like, can you talk to how these economies have changed because of the war in Ukraine?
Well, look, there are linkages between the economies. Sanctions we as the Western world have imposed on Russia meant that European exports to Russia have dropped dramatically. Yeah. And that has created a vacuum in the market, and that vacuum has been filled by exports from China. But nevertheless, you know, sanctions are working in a sense that we are depriving Russia access to knowledge, to technology embodied in our products.
So does that change? I mean, again, does that change the Russian economy longer term?
Yes, this has an impact on productivity growth in Russia. You know, there are critics who say sanctions are not working, but the real impact of sanction works through slowdown in productivity growth. It's just that this is something that's very hard to capture in statistics, you know, year-to-year statistics.
So, I mean, there's, again, quite a lot of debate about a new sanctions package for Russia. Again, does that hurt the economy meaningfully, or is it longer term, which doesn't have an immediate impact on what happens in the war today?
Well, look, sanctions have multiple objectives. One of the objectives is to signaling commitment of sanctioning countries to create their support for the country they want to protect. Another objective is to hurt the country under sanctions. So sanctions tend to increase the cost of obtaining technology, the cost of imports. If you think about goods that were circumventing sanctions and still reaching the Russian markets, yes, that was happening, but it was only part of the flows that disappeared that was compensated for in that way. And those goods came at a higher price. So that was hurting the Russian economy.
Beata, there are a number of countries also going through elections. I'm thinking of Hungary, a number of others, of course, in the regions that you cover. Is it do we trust the polls? Is it, will it be a referendum on democracy or actually the economy?
Well, Hungary has been hit by the energy shock, by the slowdown in Germany, by weaker performance of the automotive sector. So certainly economic factors are going to play a strong role. Really, the growth in Hungary has been quite lackluster. And because Hungary did not have access to the EU funding, investment was much weaker. This year we expect a better performance of Central European economies, in part because the deadline for using EU function is looming. So everybody will want to tap into this EU fund. And that is increasing public investment. Under uncertainty, private investment is suffering. So public investment, infrastructure, European funds, defense is compensating.
Beata, thank you so much, as always, for joining us today. Beata Javocic, the chief economist at the EBRD. Coming up, the U.S. and Iran head for a third round of negotiations today as the Trump administration levels new sanctions on Iran's missile program. We'll have more details on that next, and this is Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Astonishing day for U.S. technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Welcome back, everyone. Now, the Indian Prime Minister Narendra Modi has announced closer defense, trade, and counterterrorism ties with Israel during a rare visit. Now, Modi told the Israeli parliament that the defense partnership is essential in today's uncertain world, and both sides are working to expand trade and investment. An Indian official told Bloomberg that Modi is also expected to finalize a major order for Israeli-made missile systems. Now, the U.S. Trade Representative says President Trump will sign a directive in the coming days, raising global tariffs to 15% where appropriate. Well, Jameson Greer also says the changes would not result in higher levies for trading partners that have negotiated lower tariffs, and that would include the EU and the UK.
So our goal with all of this is to have continuity. So we want to have the 10%, and we're looking about how to implement the 15% that the president indicated, because we want to have continuity. We want the countries, we want the companies, we want people to understand that what we were doing before, we're going to reconstruct with alternative tools, because we want to keep going, maintain the policy. We'll just have a change in the legal implementing authorities.
Well, the Ukrainian President Volodymyr Zelensky says he and U.S. President Donald Trump discussed preparations for a meeting between negotiators from their countries planned for today in Geneva, as well as further peace talks involving Russia. The conversation, which lasted 30 minutes, came a day after Ukraine marked 4 years since the start of Russia's full-scale invasion. Bloomberg understands that another round of U.S.-led trilateral talks may take place next week. And the U.S. and Iran are also to hold a third round of nuclear talks today in Geneva, with just days to go until President Trump's deadline for a deal. The Iranian foreign minister's spokesman said the negotiating team has a reasonable amount of flexibility in the talks. Well, joining us now is Bloomberg's Jumana Barsechi, anchor of Horizon's Middle East and Africa, and Paul Wallace, our managing editor for the Middle East and North Africa. So, Jumana, I mean, this is, again, a third round of nuclear talks. What are we actually expecting at the end of them?
Yeah, well, we got a little bit more color from the Secretary of State, Marco Rubio, overnight, and he said that the talks this time around will be centered around the nuclear program only. There was some speculation that perhaps the U.S. were pushing for a broader portfolio of subjects, including Iran's ballistic weapons arsenal. But for this round of negotiations, it seems like the conversation is going to really be focused on the nuclear program. And here is where a lot of the sticking points lie, because the U.S., undergoing a maximalist approach, have been pushing Iran for a zero enrichment policy. Iran have responded saying that they are entitled, as being a member to the NPT treaty, the Non-Proliferation Treaty, to a token-level enrichment for civilian purposes. So we have to see whether there's going to be some leeway from the U.S.'s perspective on allowing for that quote-unquote token enrichment. Now, if they do go down that path, it would have to go alongside very stringent criteria, including, number one, allowing for full inspections from IAEA inspectors. As you know, when you were speaking to the Director General a couple of days ago, the inspectors have not had access to any of these nuclear sites since the June war last year. So number one, full inspections. Number two, actually handing over that enriched 400 kilo plus stockpile of enriched uranium, verifying its whereabouts and potentially moving it out of the country. And three, ensuring that Iran doesn't have those advanced centrifuges to start up the nuclear program again. So these would have to be some of the criteria that the U.S. are insisting on. And at the same time, from the Iranian perspective, they have said that they have flexibility with these negotiations, but equally, they're going to be pushing for concessions on sanctions. So we'll see whether the U.S. are willing to offer sanctions relief in exchange for Iran perhaps being more open to the other criteria when it comes to nuclear enrichment.
And Paul, I guess, you know, Trump has given Iran a very firm deadline between, he's given them 5 days, but between March 1st and 6th to strike a deal or threaten military action. I mean, are there pros and cons of military action? You hear from the U.S. side that actually could be very targeted. You kind of get the job done. I don't really understand what the end game from the U.S. is, and whether it could also get into something bigger that embroils more factions or some of the Gulf states, for example.
Exactly. I mean, I think it's undeniable that there are huge risks and huge complications for the U.S. if Trump decides to strike Iran. A limited strike, a strike that, is not aimed at, say, regime change and perhaps only lasts a night or 2 nights or something, is very different to an extended campaign over a month or something that is looking at regime change. And there are a huge number of doubts, even with the U.S., that regime is possible with an air and naval campaign alone. A lot of people just say it can't be done. It's important to realize that Iran has a high pain threshold. Iran can sustain losses in terms of both military personnel and civilians to a high level, probably a much higher level than anything the U.S. is willing to tolerate, or Israel. There is some thinking that if Iran drags this, if there are strikes and Iran drags the campaign out for a month, then, you know, the US could ultimately be the loser, because that is not going to play well domestically with Trump.
Paul, we also understand that these, you know, the nuclear capabilities are not easy to get to, right? They could be buried underground.
Yeah.
So again, do they know exactly where they're striking? I mean, I know we're not military experts, but it feels quite hard, actually.
Extremely hard. I mean, Trump said that the nuclear facilities that mattered had been obliterated at the end of the June war last year. He said that again and again. Now, there is some evidence, as we've reported today, that Iran is trying to sort of rebuild or reconstruct some of those facilities and sort of ensure that they're even better protected against airstrikes. It's incredibly difficult. And Iran can obviously lash out, as it's promised to do. And, you know, the most obvious thing that will happen is that oil will spike. You know, you've got to ask yourself, does Donald Trump want oil spiking in a year of midterm elections?
And Jamal, I mean, again, this is it, you know, does Iran retaliate, and what happens to the Strait of Hormuz is probably the kind of, you know, the day after questions.
Yep, no, absolutely. And to what Paul was just saying, it's really interesting, that article that we do have up on the terminal today, the satellite imagery of the reconstitution efforts that are underway with many of these nuclear reactors, facilities, and centrifuges, which indicates that Iran not only has the capability, but also perhaps the willingness to restart the nuclear program should they not be thwarted. When it comes to the retaliation, they have said over the course of the last couple of weeks that if the U.S. strikes, they would not hold back in their response. And what we got, you know, back around the June war, the 12-day war last year, was a very telegraphed strike on the Al Udeid base in Qatar. But this time around, there's reason to believe that they would potentially go after other military assets in the region. They've even spoke of all of these assets potentially being a target. And don't forget that they are sitting on an immense stockpile also of drones, of these ballistic missiles that they will probably direct towards Israel as well. And speaking to our colleagues from the Israel Bureau, the country is on a high state of alert there, with the real possibility that we may see a restarting of attacks and counterattacks between Israel and Iran should the U.S. go down the military path. This would very unlikely be a situation where it would just be U.S. on Iran. Iran would likely retaliate, targeting some Israeli assets as well, infrastructure in Israel.
And Paul, again, I guess Iran's influence has diminished in recent years, you know, on the oil market because of sanctions, limited foreign investment, but still accounts for 3% of global supply.
Exactly, and even if you just take exports, it's about half of that. It's about 1.5% of global production is Iranian exports. So it is important. And you could say, yes, the global market can probably absorb even an extreme scenario of Iran's exports going to zero, but could it absorb Iran lashing out by hitting Saudi or Qatari or Iraqi oil tankers and LNG tankers going through Hormuz? That is what, you know, Iran has effectively threatened to do if it feels that, you know, it's facing an existential crisis, a regime change type of operation from the U.S.
Also, an important fact I did not know, China is actually taking up 90% of all crude exports from Iran. Thank you both for joining us. Of course, Paul Wallace and Jumana Bursechi. Now, we have plenty more on Iran. We have plenty more on NVIDIA. This is what the market is telling us about NVIDIA. Look, some say it's a little bit unfair because NVIDIA wasn't, you know, it kind of beat by some metrics expectations. Maybe there's just too much hope on some of these big share prices. NVIDIA now gaining some 1.7%. We'll have a full market roundup. We'll talk geopolitics, and we'll also talk about credit markets and software. Up next, Bloomberg Brief, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
A cidade estava sitiada. Nisso eu começo, eu não sabia o que fazer. Foi a mais terrível que eu passei na minha vida. Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado. Porque no final, tudo é dinheiro. People back home, they are suffering, and someone is driving a Range Rover with their money. Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
Reduce the opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
So stocks mixed today following a two-day rebound. Markets awaiting more earnings, and of course those jobless claims are on deck. And it's a busy day of talks in Geneva. The U.S. resumes discussions with Iran and is set to meet with Ukraine. So let's take a look at those markets, because of course we're pre-market and they are bouncing around just a little bit. As you can see, the S&P 500 and Nasdaq 100 basically unchanged at this point. They've been both higher and lower in the session as the market makes up its mind about NVIDIA's valuation and whether it should be richer or perhaps less rich, at least today. That said, we're back in the green for the S&P 500 on the year. We're up 1.5% after the last 2 days of gains, and we're up about 0.3% on the Nasdaq 100 after the last 2 days of gains. Continued uncertainty about software in various sectors. Ed Yardeni this morning saying that we've gone from AI fatigue to fear to now AI derangement syndrome. So we'll see where the market takes us next. Let's take a quick look at bonds. Not too much movement here in the US, a little bit of movement still in Japan. That story bears watching. And then we had a little softness to the dollar earlier as well. All right, let's get to some individual movers now. Stocks to watch with Abir Abu Omar. Abir.
Good morning, Vonnie. Obviously starting with NVIDIA this morning, which is gaining nicely 1.6% up in the pre-trade. And that is after a lukewarm response by investors yesterday to the earnings that were quite robust. Their forecast, their revenue forecast for the first quarter is quite strong. Segments across NVIDIA are doing quite well. Gaming is a little bit under pressure. It was shorter than what the average analyst estimate was. But overall, NVIDIA results were pretty strong yesterday, and that is why you're seeing it trading up in the market, in the pre-market this morning. Moving on to Salesforce, this software company, Vonnie, has been sort of the poster child for the software ruse that we've been seeing across the S&P this year. Now it is down 3.7% almost this morning, and that's on the back of disappointing earnings. Now, although the earnings or the revenue came in line with what estimates were, investors were not very excited about that. And then finally, moving on to Nutanix, it is gaining in the pre-market trade this morning 21.8%, adding to those gains from earlier, and that's on the back of this AMD deal where AMD ties in a partnership where it pays $150 million for its stock. So that is gaining pretty nicely, now 22%. Vonnie, back to you.
Huge move potentially there in the session. Abir Abu Omar, thank you. She'll be back later in the hour. Also coming up this hour, a deeper dive into those NVIDIA earnings with Frank Lee of HSBC, and later again, Callum Pickering of Peel Hunt joins us to discuss the market impact of tariffs and geopolitical uncertainties. But first, Secretary of State Marco Rubio says the U.S. will investigate the deadly Cuba speedboat shooting.
I'm not even going to speculate as to what it could have been. It's a wide range of things. But suffice it to say, it is highly unusual to see shootouts in open sea like that. It's not something that happens every day. It's something, frankly, that hasn't happened with Cuba in a very long time. But we're going to find out. We're not going to base our conclusions on what they've told us.
Joining us now is Bloomberg's Laura Davison. Laura, what do we know for sure about this, given that much of what we've been learning is from the Cuban side, right?
As you mentioned, we don't know a whole lot, and as Rubio said in that clip, the U.S. really hasn't speculated and essentially, is expressing a little bit of disbelief, or at least a lack of trust in exactly what the Cuban government has said. What the Cuban government has said, however, is that there was a speedboat licensed in Florida with 10 people aboard who were armed, who had Molotov cocktails, weapons, other things, and the Cuban government says they were headed toward Cuba to commit acts of terrorism. The Cuban government shot and killed 4 of those individuals. The other 6 are injured. This is an unusual thing, and comes at a really critical moment where there are heightened tensions between the U.S. and Cuba. There's been an oil embargo for several weeks now in Cuba that the U.S. imposed after the ouster of Maduro in Venezuela, and the country is really kind of at an economic crisis point. There isn't fuel to energize many of the things that they need. A lot of business activity has stopped, and Trump has openly mused about potentially getting involved in Cuba, whether it be regime change or something else. It's not at all clear what the U.S.'s plan is, both in terms of bigger picture with regime change or in response to this action. But it's a very critical and moment when tensions are heightened.
Yeah, well, we'll see what the U.S. comes up with in its investigation. Now, we have a lot of talks going on in Geneva today. Crucially, Iran and the U.S. start their 3rd round of nuclear talks. Are we anticipating that we'll see any breakthroughs?
Really unclear. The Iranians have gone into this round of negotiations saying that they have, maximum flexibility. They're able to kind of really bring something to the table here. They have expressed some dismay, though, that they're hearing conflicting things from U.S. officials. President Trump, in his State of the Union address just a couple nights ago, mentioned that, he had some strong words for Iran, saying that he wanted to find a deal diplomatically, but wasn't afraid of using, military force here. This is also coming as the U.S. is sending additional fighter jets, combat jets, to Israel. Of course, Israel and Iran being prime enemies here, sort of suggesting that the U.S. is further adding to its arsenal of weapons and military assets that it's amassed in the region, suggesting that Trump is at least, keeping his options open when it comes to military intervention.
Yeah, and it also suggests that maybe he's trying to pacify Bibi Netanyahu, right, who was very unhappy with President Trump not wanting more involved in these talks, not wanting to talk about ballistic missiles, for example. I mean, this sending of the fighter craft means that potentially Israel could be defended in any worst-case scenario, too.
Yes, this is the whole situation with Iran has been very difficult for Trump to keep, kind of keep those talks going, but also keep Netanyahu happy. The Israelis essentially won't be happy if there's any sort of deal between the U.S. and Iran. They see Iran as their prime enemy and don't want, Iran to be getting off with some sort of deal. This has kind of been, kind of one of the unspoken tensions as these negotiations have gone on. It's still not clear exactly what the U.S. wants out of these talks. Rubio, said earlier that, they were going to be focused on Iran's nuclear program. But Trump, in the State of the Union / in many appearances, hasn't said what his specific goal is, which is highly unusual for a U.S. president to not go in to some of these high-stakes talks with the potential for military action without having clear bullet points of what they're looking to get out.
Yeah. Laura, just on U.S.-Ukraine talks, which also take place today as well, President Zelensky has said that we're at the beginning of the end of this war, and at the same time, there doesn't seem to be any breakthrough on the territory question, nor can anybody foresee how that might work. Are we getting anywhere there?
Trump has expressed impatience, but it's not clear that there's any, breakthrough happening. Zelensky did say that he thinks that after this round of talks, that there might be ready for a leader-level meeting between the U.S. and Ukraine on this, between Zelensky and Trump himself. We really have not seen signs of that breakthrough come to fruition. This is, with the umpteenth rounds of talks, and we even saw J.D. Vance, the vice president, say that the U.S. may have overestimated just how easy this conflict was going to be resolved. Remember, President Trump said on day one in office, more than a year ago, he would be able to resolve this conflict. There's still no end in sight.
Yeah, absolutely. Laura, thank you so much. That is Bloomberg's Laura Davison. Turning to tech now. NVIDIA now turning positive in pre-market trading after shares fluctuated following another solid results and a stronger than expected outlook. Matt Bloxham of Bloomberg Intelligence joins us now for more. Matt, what were your key takeaways, given that we got a lot of guidance, but potentially not guidance on the things that we really wanted to know about, like why Rubin is lagging, for example, or a little bit more on the Blackwell outlook?
Yeah, and I think, that the kind of key data point that people are looking for, which I think would be unrealistic to get yet, is the next phase of the AI demand story. Right now, NVIDIA's revenue outlook is being supported by the massive investments by the hyperscalers, $650 billion of investment in 2026, most of it, or a big chunk of it, going to NVIDIA. Really, what you're looking for the next leg is, for the enterprise demand to go from pilots to full-scale deployments, which will then give the market confidence. This isn't going to be just a short-term kind of investment cycle driven by the hyperscalers, but it's going to get sustained by that enterprise demand. And we didn't hear any of that narrative yesterday. So I think, it's not surprising that NVIDIA reported really strong numbers, because they were strong numbers, up, over 70% year on year, and the forward guide is up almost 80% year on year. So, yeah, objectively, that's great performance, but everybody knows where it's coming from, so there's no incremental surprise about the momentum.
All right, we actually have to leave it there. Matt Bloxham, thank you so much. We're going to be speaking to Frank Lee of HSBC as well on NVIDIA in just a few minutes, so do stay tuned. Now to other top stories trending on the terminal this morning. Apollo and BNP are said to be near a deal to partner up in Europe's private credit market. According to sources, the two firms will arrange loans to corporate and private equity clients in Europe. The sources didn't specify the size of the deal. Rolls-Royce plans a huge stock buyback of as much as £9 billion over the next 2 years. The company raised midterm earnings targets on soaring demand for aircraft engines and power systems that drive data centres. And shares of French utility company Engie rose as much as 7% after agreeing to buy the UK's largest power distribution network. It's acquiring UK power networks in a $14 billion deal. Engie is seeking to capitalise on an expected surge in demand from electric vehicles and data centres. Coming up, we'll take a closer look at NVIDIA results with Frank Lee of HSBC with his price target cut on the stock. That's next. This is Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jemana Versace in Davos, Switzerland, and this is Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
NVIDIA hit it out of the park yet again.
It was a solid set of earnings.
75% growth year on year on the data center space.
They had a very confident outlook for how they were going to sell more AI chips and data center product going forward. Is that going to be a thing?
As the market plays tug of war over is the AI economy booming, or are there concerns around the AI economy, and NVIDIA continues to beat regardless of what this debate is concluding, the stock just keeps getting cheaper and cheaper to the point where it's becoming an obvious buy.
Could it be any bigger than this? And they basically said yes.
NVIDIA bouncing back this morning then after some post-earnings swings. HSBC's Frank Lee joins now. He has a buy rating on the stock and has just lowered his price target from $310 to $295, just $15, but still well above where we're at right now. So Frank, you weren't surprised by the bullish outlook, and indeed you were quite happy with it, right? But you do feel like there may be a lack of a narrative going forward. Can you explain your case to us?
Yeah, sure. I think, the earnings is fine. This is the second quarter that NVIDIA has had a clear beat and raise. They did that last quarter, and that was the first time in 6 quarters that they started reigniting that momentum. But I think one of the issues that we've seen over the last couple of months is that there hasn't been anything new as far as a new narrative, right? I think, for the first couple of years of the AI trade, NVIDIA wasn't just beating numbers, but there was an increasing TAM opportunity that people could really see. But now I think, we see that they're doing great, but then, there hasn't been anything new as far as like something, last year we've talked about enterprise and sovereign, but we still haven't seen clear signs that that is clearly building the TAM market much bigger. They're still very dependent on the hyperscaler CapEx, which so far has been on an upward trend.
Were you satisfied with the answers? Analysts asked a lot of questions on, margins and the sustainability of those margins, and also the cash generation of the hyperscalers, as you mentioned. Did Jensen Huang put to rest any concerns the community might have had?
Well, I think there's two things that we need to think about that has somewhat shifted a narrative a bit. The first one is that, the memory pricing going up in the last couple of months has been a lot more than people expected. There was some concerns on whether this could impact margins. It doesn't seem like that's the case, given their margin guidance was still very constructive for the upcoming quarter. But it does mean that, as the hyperscaler CapEx goes up, they have to pay more for memory in other areas, so that there is more competition for some of that CapEx. The second thing is that I think the agentic AI narrative has also been gaining steam since the beginning of the year. And I think what's not entirely clear is how much of a benefit is this going to be for GPU versus CPU? CPU has been a very strong market this year. So does agentic AI also benefit CPU at the same proportion, or if not more than GPU? So I think those are the two things that the market is still having some doubts about.
We obviously have the GTU conference next month. Is it possible that Jensen Huang is keeping something in his pocket for then? I mean, he can't constantly have updates, right?
Yeah, that's a good point. I think, the Rubin Ultra, while it's positive and constructive, we've known about this narrative since the GTC last year. So it's been about a year. So I think what the market's going to be looking for is perhaps what comes next after the Rubin platform. So Phenom is the next generation. There isn't a lot of details so far on it, but I think this is what the market's looking to see on GTC, is to see, what are the spec migrations that we can see with this next generation that could bring their ASP even higher.
So margins were very healthy, obviously revenue healthy and so on. Frank, what would you need to see in order for the stock price to move towards your price target? Because right now it's questionable whether we'll get back above $200 today, for example.
Yeah, so I think what we need is probably, as along with the overall AI trade, I think what you're seeing is, it's the re-rating story on AI is getting more difficult. So I think you need either a very strong new narrative or a significant beat in earnings that's going to lead to a significant revision, not just for the next quarter, but over the next probably 1 to 2 years. That's going to bring earnings up significantly again.
I want to ask you about some of the other companies that we saw report, Frank, because I know that, for example, on Synopsys, you're also lowering your price target just by $5, but it's sort of the direction that's important here, right? Are you concerned about the software companies, and are there some that will survive any kind of scenario?
Yeah, so we actually downgraded Synopsys last week to a hold rating, but Synopsys is not your typical software company. So I know there's a lot of concerns about AI threatening the software core businesses, but in Synopsys' case, at the end of the day, it's still very much a semiconductor-related company. And I think where we do see this year, their challenge is a transition, because this year, they're not going to see that much growth outside of the Ansys acquisition they made. And the reason they're not seeing much growth is, one, I think, there's still some geopolitical overhang because of China. They are very dependent on China semiconductor companies using their software. And secondly, I think, Intel Foundry is also a big customer, and there's not much visibility about Intel's Foundry business. So I think that is the transition period they're going to see this year that's going to lead to lower growth.
Bruce Richards was on earlier talking about how many private credit firms have way too much exposure to software companies, and he seems to think that they're going to be in trouble. Can we get through this period without seeing some kind of a major fallout for not just private credit, but for the whole market, the public markets, in at least software, if not some of the other industries that have been taking it on the chin recently?
Yeah, so I think what we're going to see a lot more this year is just a lot more focus on earnings quality, earnings delivery, and that matching with valuations. I think we're now past the stage where if you're an AI company, you get a free ride on re-rating. I think those days have passed. I think it's going to be a lot more focused now on, can you deliver earnings? Can you surprise the market on earnings? And if you are trading at a high valuation multiple and you're not delivering an upside, that's going to make you very vulnerable.
I do want to come back to NVIDIA for a moment, because one thing analysts didn't particularly ask about was China. That seems to be sort of in the rearview mirror a little bit, but we did also get the news that NVIDIA can now ship some H200 chips to China with various conditions attached, I suppose. They're not going to add it to first quarter revenue, but could it be meaningful going forward, Frank?
Yeah, so our view on China since last year has always been that we look at China as an optionality. It's a nice to have, but it can't be a critical part of your thesis to buy NVIDIA, because there's just too many unknowns around the geopolitical uncertainties. It seems like the news flow changes every other week or every other month, whether they can be in China or not. So I think right now, the way we have addressed it is take that part out. And I think most of the analysts have taken the earnings expectation, including NVIDIA, has now taken out of their earnings. And we just basically value NVIDIA based on its existing business. And you look at China as a nice cherry on top of the sundae, but you don't look at it as a key driver for your business right now.
I'm sure that's not the first time China has been described like that. Frank, thank you so much for joining us today. That is Frank Lee of HSBC. Coming up, the race to get tariff refunds. Look at what else is making headlines in your front page news next. This is Bloomberg.
The problem we've got as an industry is when the government overtax, and let's say they tax at 30 or 40% of net gaming revenue, what happens is it starts making it uneconomical for the regulated operators like ourselves. And then the customers land up going to the black market, and the black market don't pay tax, do whatever, and there's no customer, there's no responsible gaming, and the fiscals of these governments don't collect any money. So it's finding a balance between overtaxing and then not regulating. Anything from 15 to 25% of the net gaming revenue paid on tax is probably the right number. And when you start going above that, the metrics start becoming a bit more complicated for lots of the operators.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo. And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Bloomberg Brief. I'm Bonnie Quinn in London. Time now for your front page news. First up, the Wall Street Journal leading with the scramble for companies to get their tariff money back. The Journal points out that President Trump's far-reaching global tariffs netted at least $130 billion in the 10 months they were in effect. For businesses, though, getting a refund could take far longer. Lawyers are predicting a deluge of litigation. Next up, the New York Times leading with President Trump's choice of wellness influencer Casey Means for Surgeon General. At her confirmation hearing on Capitol Hill, the Times says Means was calm and mostly unflappable when pressed on her stances on birth control, pesticides, psychedelics, and whether she believes vaccines cause autism. Means repeatedly sidestepped questions about vaccinations. And finally, the Washington Post reporting a top Treasury official, John Hurley, is leaving his post after privately raising objections to White House-backed plans to crack down on alleged fraud within the Somali immigrant community in Minnesota. The Post says Hurley had recently conveyed his concerns to Treasury Secretary Scott Bessent about a project to enhance federal monitoring of the international payments from the Minneapolis area. Let's check markets this post-NVIDIA morning. So we had futures higher and lower. Right now, we are seeing S&P 500 futures down ever so slightly. That said, the index is back in the green for the year. We are in the green to the tune of about 1.5% on the S&P 500. And in terms of the NASDAQ, we're in the green to the tune of about 0.3%. But that's after 2 days of gains now. In treasuries, we're not seeing a whole lot of movement, at least on the U.S. side of things. More so in Japan. Coming up, dollar weakness.
Say that there's maybe a little bit of a bubble in AI. When you have companies with market caps of $5 trillion, you don't see any bubble there at all?
Whenever we have an acceleration in technology and people get excited about it, you have significant capital formation around new companies that are trying to capitalize on that opportunity. And, you know, we've seen this before through history, and you're seeing it now. It won't be a straight line. The opportunity set with AI is enormous. There will be winners and losers. And it's hard to pick the winners and losers now. And certainly a lot of the capital that's being deployed will not produce adequate returns, and a bunch of the capital that's being deployed will actually not produce any returns. But it's hard, it's hard to call the timing on these things. And the thing I'd point to just from a historical lens is in the fall of 1996, Alan Greenspan talked about irrational exuberance in stock markets, and the NASDAQ was at 1,300. And the NASDAQ peaked 3.5 years later at over 5,000. So, these things can go on for a long time, but ultimately, there are adjustments, there will be drawdowns, there'll be rebalancing, and just, it's hard to call it because the technology trend and the investment is real.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
It's 5:30 a.m. in New York City, 10:30 a.m. in London. Good morning. I'm Vonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Another beat and a raise. NVIDIA share is bouncing back now after some post-earnings swings as investors see strong AI demand. That's going to have an impact on stocks today after a two-day rebound. Markets awaiting more earnings and also jobless claims are on deck. And it's a busy day of talks in Geneva. The U.S. resumes discussions with Iran and is also set to meet with Ukraine. So let's have a look at those markets because we have been bouncing around. Right now, we're very fractionally lower on futures for the S&P 500 and the NASDAQ 100. Russell 2000 futures, though, are doing well. Now, for the first two indices, we are back in the green on the year after the last 2 days of gains. Several things to watch, though. Obviously, we have to see how NVIDIA trades. It faded its post-earnings gain, but that said, it was lower this morning. It's now back up again. So I think the market is trying to make up its mind about NVIDIA. And then also in the background, there's this idea that the U.S. and China rhetoric is heating up again on tariffs, with Jameson Greer saying China tariffs are going to still be between 35% and 50%, and China saying, look, we'll retaliate if you're not careful. Let's take a quick look at bonds. Not seeing too much movement here in the United States, though we are hugging that 405 mark on the 10-year. Let's get to some individual movers now. Back with us, it's Abir Abu Omar. Abir.
Bonnie, good morning. The world's most valuable company is doing quite well this morning. It's gaining, pairing some of those gains from earlier in the pre-trade session, but still gaining 1% just north of that. Now, this is after a lukewarm response by investors post its earnings. In fact, its earnings were quite robust, and the revenue forecast for this quarter is also quite strong. Segments across NVIDIA are doing very well when it comes to data centers, automotives as well, but gaming was facing a crunch, if you were. Moving on to Salesforce. Now, Salesforce is often referred to as one of those poster childs for the software crunch that we've seen across markets this year. It is down by almost 3%, 2.6% this morning in the pre-trade session. Now, this is not because of a revenue miss. In fact, its revenues have met analyst estimates, but investors are not really that excited about the story, and you could see that reflected in the share price this morning in the pre-trade. Moving on to a stock that's doing quite well, Nutanix is gaining this morning, up almost 23% at this point, adding to those earlier gains, Vonnie, and that is on the back of a deal with AMD, where AMD pays $150 million for its stock, adding $100 million for some joint duties there in the deal, and that is Nutanix for you, up 23% this morning. Vonnie, back to you.
Lovely pre-market gain there. Abir Abu Omar, thank you so much. Callum Pickering of Peel Hunt weighing in on price moves so far this year, writing, quote, financial markets, businesses and households face even more uncertainty than usual. Markets set to remain risk on, though, as global economies expand at a decent pace, despite a host of uncertainties. Why? Stimulus matters. I'm pleased to say Callum joins us now. He's chief economist at Peel Hunt. So, Callum, before I ask you about all the things that might detract from any stimulus we're going to get, explain to us what you mean, the effects of the one big beautiful bill. What else will be stimulative?
If you think about the four biggest economies in the world, US has recessionary levels of borrowing at full employment. 7% of GDP is just a huge number for a government to be borrowing when the economy is so strong and labour markets are so strong. The second biggest economy in the world, China, less of a structural story, but periodic stimulus just to keep growth at around the 5% target. Third biggest economy in the world, Japan, just fought an election over how big the fiscal stimulus will be. There was a big majority in favour of more spending. And Germany, just 18 months ago, won an election with the government planning to borrow €1 trillion to invest in defence and infrastructure. That's a lot of stimulus. Central banks, Fed likely to cut this year, Bank of England likely to cut, ECB might cut, BOJ, even if it hikes, policy is easy. That money just has to wash through markets, and it tranquilizes all our nerves against all of these issues that we're facing.
All right, I think we can go home now.
Exactly,
no,
yeah.
I'm just kidding.
But we need an explanation as to why markets are up despite the risks, and this, for me, is the best one.
Well, sure. That said, I could see why, the immediate reaction might be risk on, but why wouldn't all that give the market pause, given that that's a lot of uncertainties being injected into the global economy as well, including the after effects of anything inflationary?
So there's a specific type of risk that I'm most concerned about, which is any kind of supply-side shock where suddenly we have a shortage of something running up against this demand-side positive story. And so think about it from the bond market's perspective. Basically, as far as the eye can see, public debt levels will rise across the advanced world. This will have to show up in borrowing costs at some point. We're also in a much more inflationary environment than before. Not higher rates of inflation, but be these periodic inflation shocks because of geopolitics and the like. And so the big risk to this is one of these geopolitical issues that we're paying attention to goes wrong. Suddenly we have a shortage of a key commodity, we have a shortage of energy. That's reflected in higher prices. The bond market reacts negatively, discount rates go up, and and equity markets come off. If it's not that kind of risk, if it's not a supply risk to the world, the market can wear it. So trade tariffs, this is a risk that the market can wear. Softness in private credit, that's a risk that the market can wear. The one I'm most concerned about is US-Iran, because if you get a blockage on the Strait of Hormuz, 20% of global hydrocarbons go through there, it's a major shipping lane, suddenly you're in a situation where even if companies have the money to buy the inputs and the energy, it's just not available. We just don't have the supply, akin to the 2022 supply shock with the Russian invasion of Ukraine, or even the disruptions to chips that we had in 2020.
Yeah, I think if something like that were to happen, it would be all bets off the table and everyone would have to recalibrate. But given the other scenario that you mentioned, so not anything, extraordinarily out there, but stuff that's already happening already, stuff that we can foresee, if you like. Does that mean a race to the bottom for sovereigns, for curves across the world, that we're going to see them steepening and rising?
So my guess is markets will tolerate the high levels of debt so long as inflation remains roughly under control. And this, for me, is the key story at the moment. It's very easy to look at the level of debt and say, this is the thing that's driving interest rates up. I'm really not sure that it is. I think this is the underlying vulnerability, and this is the thing that in the end we'll have to deal with. But the immediate problem for markets is how much inflation will economies produce. So to give you two instances, the UK faces the highest borrowing costs in the G7. If I look at the 10 today, we're around 4.3, 4.4. That's the highest in the G7 by some way. We don't have the worst fiscal position. We have the second lowest public debt to GDP. The deficit is actually falling over time. Canada's the only country where that's happening alongside the UK, and yet we face the highest borrowing costs. Why? Because we've had the most inflation over the last 10 years. Take the case of Japan. For 20 years, anemic growth, underperforming stock market, debt to GDP, public debt rising every single year. The last 18 months, the economy's accelerated, markets have performed well. Despite the stimulus, actually the debt level versus GDP is declining, and yet bond markets are pricing in higher interest rates. Why? Because inflation has returned. So if we keep inflation under control, we can wear the risk, markets can go up. If we get the inflation, we have a problem.
Yeah, where is the risk most active that bond vigilantes will activate at some point then?
For me, the key issue is around this Middle East problem. If we suddenly wake up tomorrow and we have a shock to global oil markets, we can't get the supply that we thought we could, that's an immediate. Most vulnerable from an economic point of view to this story unfolding is actually the US. So at the moment you have this positive reinforcing cycle. The economy is like a three-legged stool. You run a big deficit, you draw in capital from abroad, you pay your construction workers, you pay your public sector workers. That fuels domestic demand, it pushes up the stock market, everyone feels well off, they spend every dollar they earn. This is a self-reinforcing cycle. Suppose the US struggles to finance at these deficit levels, then suddenly the stock market comes off, consumers turn more precautionary, and we have a problem.
We obviously have initial jobless claims a little bit later on. Yep. Paul Donovan of UBS was pointing out earlier, look, in a no hire, no fire environment, jobless claims don't tell us that much. We need to be in at least a firing environment for them to tell us something. What's your read on the US labour market and whether it's completely not as fragile as we thought it was a few months ago, and as the Fed thought it was a few months ago?
I don't think the US economy is actually fragile at all. I mean, I'm very constructive in my base case. My sense is a year from now, 2 years from now, markets will be significantly higher as long as we avoid a supply shock, but the nerves are going to be coming out of the end of our fingers. We're just in a world where there's lots of stuff going on, but a lot of it I think we can wear. As for the US, I wouldn't be surprised if labour markets sort of stabilise from here. There's a medium-term headwind from immigration. I suspect there are going to be two forces at play. One is it's very hard to imagine US momentum staying at around 3%, which we've had for the last couple of years. So a slight moderation probably keeps a lid on strong jobs growth. We'll probably see a little bit of destruction at the margins because of AI diffusion, which pushes up the unemployment rate. And I think that will just allow the Fed, which is, yes, it's a dual mandate Fed, but it really cares about its full employment mandate. As long as inflation's in the safe zone, I think the Fed will find excuses to just cut this year.
Twice?
Three
times. All right, Callum, thank you so much. Callum Pickering of Peel Hunt joining us today. Now to other top stories trending on the terminal this morning. Apollo and BNP are said to be near a deal to partner up in Europe's private credit market. According to sources, the two firms will arrange loans to corporate and private equity clients in Europe. The source didn't specify the size of the deal. Still on private credit, Marathon Asset Chairman Bruce Richards says private credit is too exposed to the software industry. He spoke on Bloomberg about the levels of risk he's seeing.
If you're a private equity manager, if you're a private credit manager, and you have less than 10% exposure, I think you're just a market and you're perfectly fine and the market's doing quite well, the overall broader market. Okay. But if you have 23% exposure, which is actually the number for private credit exposure to software companies, you're having a lot of pain right now, and you're going to have to deal with a lot of fallout from this.
The U.S. vowed to maintain high tariffs on China hours after Beijing warned any future hikes. U.S. Trade Representative Jameson Greer says President Trump wants to keep tariffs on the country steady at a range of 35% to 50%. Now, Greer's comments come ahead of President Trump's trip to China at the end of March to meet with President Xi. Coming up, meetings abound in Geneva. The latest on U.S.-Iran and U.S.-Ukraine talks next. This is Bloomberg.
Is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
We have two crises,
two essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked. And we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
You know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
I'm not even going to speculate as to what it could have been. It's a wide range of things. But suffice it to say, it is highly unusual to see shootouts in open sea like that. It's not something that happens every day. It's something, frankly, that hasn't happened with Cuba in a very long time. But we're going to find out. We're not going to base our conclusions on what they've told us.
Secretary of State Marco Rubio insisting on getting to the bottom of Wednesday's Cuba speedboat shooting that killed 4 passengers and injured 6 on a Florida-registered boat, according to a Cuba Interior Ministry statement. The Cuban government says the occupants were intent on entering the country and planning an uprising. Joining us now from Washington is Mika Zollner of Bloomberg Government. How does the U.S. go about an investigation like this? Mika, when could we expect some answers as to what actually happened here from the U.S. side?
Yeah, I think that the administration is going to act very aggressively to find out what exactly happened there overseas there in Cuba. But this definitely doesn't bode well for tensions between U.S. and Cuba, which have already historically been hostile and have increased under Trump's cutting off oil essentially to Cuba. And I know it's raised questions on Capitol Hill, too, with some lawmakers asking Trump. Democratic lawmakers actually sent a letter to him yesterday saying, what exactly is your plan in Cuba as the squeezing the country against its oil is starting to have impacts trickle down to the public. So there's a lot of questions here, but I know that the administration is going to act very aggressively on this.
Speaking of oil, Mika, the market obviously pretty complacent right now, but the Iran-U.S. third-round talks actually start today in Geneva. Are we anticipating we'll see any progress? And if not, could there be an attack on the part of the U.S.?
I think that it's very likely. The president has indicated that that's potentially where this is going, but White House officials have also been very quiet on their plans in terms of where they're going to go with potential strikes in Iran. Vice President Vance was asked about this yesterday, and he said he's going to defer all of that talk to the president, and he's been very quiet on this. The White House has also insisted that the president's first priority is having diplomatic relations with Iran, but at the same time, the U.S. has been shoring up its military presence in the Middle East, including to Israel, which is a first of its kind in sending aircraft to that region.
Yeah, symbolic and also, practically very interesting that the U.S. would do that. Now, when it comes to talks in Geneva, also the U.S. and Ukraine are talking. Zelensky and Trump are supposed to be discussing the next steps for peace. What are those next steps, given that we're really at a standstill on territory?
Yeah, absolutely. President Trump actually held a call with President Zelensky yesterday for about half an hour over the phone just to discuss what the strategy is going to look like here. But I know that both sides, Ukraine and the U.S., are getting very impatient in terms of, being no end to this war in Russia and Ukraine that's lasted years now. I know that the White House had a very ambitious timeline at the beginning. They wanted to end this war by Christmas time, but those peace negotiations are still in talks, with Ukraine really not wanting to let up a lot of the influence to Russia. So they're still hammering those out, but I know that this is a huge priority for the White House as well.
All right, we should have updates tomorrow. Mika, thank you so much. That is Mika Solner of Bloomberg Government in Washington. Turning to tech, NVIDIA gaining in the pre-market now after some post-earnings swings as results showed strong demand trends. Joining us now is Matt Bloxham of Bloomberg Intelligence. Matt, is it fair to say we heard everything we wanted to hear? We just didn't hear anything new, as frankly, of HSBC said earlier.
Yeah, I think that the missing piece of the jigsaw that people want to hear, but it's too early to hear, is about the kind of scaling of enterprise demand for AI. Obviously, right now, the vast bulk of NVIDIA's revenue is coming from the big hyperscaler clients who are, to a degree, investing speculatively in capacity to support what they hope is going to be a big ramp in enterprise and consumer demand. And that kind of ramp is needed to turn the NVIDIA strong growth story, 70-80% year-on-year revenue growth, into a sustained strong revenue growth story. And I think that's what people are looking for. Haven't quite got that yet. And so that if you were wanting to see NVIDIA become a $5 trillion, $6 trillion company, that's the kind of next catalyst we're looking for.
Where will those answers come from? So is it from consumers? Is it from other companies that are using NVIDIA products? Is it from Jensen Huang? Because the market seems to want it from Jensen Huang.
Yeah, I think it needs to come from the kind of really big enterprise customers. Somebody out there needs to suddenly say we're completely transforming our business model to be powered by AI, and that's going to be the catalyst. We heard from WPP today about a big kind of reorganizational strategy. Advertising agencies are really kind of exposed to the AI threat. We haven't quite seen yet, I don't think, the kind of big transition from the agencies, but I think that's a good spot to look at in terms of a real fundamental overhaul of a business model to leverage AI. So when you start to see companies like that take a big move, that's the signal that the next big wave of demand is coming.
Fascinating. We get GTC next month. What will Jensen tell us there? Because the market is going to be just looking for crumbs from that too.
Yeah, good question. I mean, obviously, I think people are going to be looking at what the innovation cycle is on AI accelerators. Obviously, we're kind of in Blackwell and we've got the Rubin. Where are they in terms of the pipeline? What comes next beyond those? And I think it starts to become not just about the technical capability of these things, but particularly the energy efficiency. Because we're starting to get to the point where the competition for scarce power generation is ramping up, and so if we do see these projections come true about the scale of increased use of AI, then that power crunch is going to get bigger. So it becomes a kind of onus on the likes of NVIDIA to improve power efficiency, and that could be a kind of a competitive axis with some of the upstarts like AMD and even like Google with its TPUs.
Yeah, I want to ask you about the software companies too, because we were excited for NVIDIA, but we were also excited for Salesforce and what it might say. What were the takeaways? Salesforce, Snowflake, Intuit, I believe, also? Yeah, so Salesforce, Snowflake, inline numbers, and inline isn't really enough to get people excited. You're looking for that kind of beat and raise. But I think if you look at someone like Salesforce, this is an incredibly well-established company. It's the market leader in CRM systems, and they are potentially at risk of being disintermediated by AI tools. And so really there's a lot of focus and pressure on them. How is their own agentic AI offering keeping them as the kind of leading player? Obviously, a lot of these companies have been under a lot of pressure because people think they're suddenly going to disappear overnight. I think that's like massively overstating the risk. They clearly need to do some things. But think about it. If a company has invested years and years of time and huge amounts of investment in a CRM platform from something like Salesforce, they're not just going to transition overnight to a completely different place. They can't. It's impossible. So even if they have a midterm strategy to get there, it's going to take a while. And that time is the opportunity for the likes of Salesforce to kind of reinvest in AI, improve their product, and keep the stickiness. And it certainly doesn't seem like anyone came out with a brand new shiny narrative for the market to latch onto. Matt, thank you so much. That is Matt Bloxham of Bloomberg Intelligence. Coming up, we're going to get you set up for your trading day with a slew of earnings and another treasury auction. This is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield around the world, right here on Bloomberg. Context changes everything.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
This is Bloomberg Brief. I'm Bonnie Quinn in London. Now a look at what's ahead today. Earnings continue with Warner Brothers Discovery before the bell. We also get Dell and NeoCloud CoreWeave after the close, so AI adjacent, you could say. Plus, initial jobless claims coming at 8:30 a.m. Eastern. And the Treasury will auction $44 billion of 7-year notes this afternoon. Let's see if that'll get this market moving. Okay, some micro movers before the open. NVIDIA higher now, but more red than green for other tech firms that reported. Salesforce, for example, well, the forecast was in line with analyst estimates, but it failed to impress investors, and it's down about 3.25%. Synopsys, too, the design IP revenue missed expectations, although overall results were very, very solid at Synopsys, but again, down about 3.5%. It's Trade Desk that's really taking it on the chin today, down about 17%. That forecast completely disappointed investors there. Let's take a look at the macro environment as we head into the Thursday session. After 2 days of gains, S&P futures pointed very slightly lower, but I think it's fair to say that we're a little bit mixed and unsure of direction. Russell 2000 futures, for example, are higher. The Bloomberg Dollar Index has been moving around. It is now unchanged. Asian currencies, though, are stronger typically today. And that 10-year yield is at 4.04. We have to watch where Bitcoin goes today, too, after that lovely rally for Bitcoin holders yesterday. That's it for Bloomberg Brief. Surveillance continues the conversation. This is Bloomberg.
Estava sitiada.
Nisso eu começo, eu tremia, não sabia o que fazer.
Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home, they are suffering.
and someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner. I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
I'm not sure the market is actually reflecting the strong nominal growth environment.
The mood around technology remains very guarded.
The bar is always very high. It's a tale of two markets almost.
There are incredible things coming out there for AI. It's not going to be quite on the sort of Wall Street timescale.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Thursday, big tech struggling to impress. A strong forecast from NVIDIA failing to spark a market rally as a soft outlook from Salesforce is sending the stock lower, leaving equities on shaky ground following 2 days of gains. Tech cannot get out of the penalty box.
And I don't know if anyone has a clear sense of what it will take for them to actually get out of the penalty box. On one hand, yes, Salesforce didn't exceed expectations in dramatic fashion. They met expectations, was essentially as missing in grand fashion given all of the fears. You have Mark Benioff really trying, saying this is not our first Sascopolis, saying that maybe it's a Sasquatch, meaning that they're going to get better when it comes to all of the uses of agent force. At the same time, it just is unclear the disruptors at a time of such dramatic change.
That's Salesforce. Take NVIDIA. Listen to these numbers. Revenue of 73%. Margins, 75%. The outlook better than expected. And the analyst community overwhelmingly looking at this as some kind of bullish thing. Truist, demand is not letting up. Citi, exponential demand. Morgan Stanley, the largest, cleanest beat and raise in the history of the semis industry, and the stock is up by 0.8%.
Well, frankly, if HSBC was on with Bonnie earlier, and he said they're doing great, but has there been anything really tangibly new that we are learning from this? And he doesn't think so. They're very dependent on hyperscalers for their CapEx. What happened to all the talk of enterprise and sovereign? Will we see more of that? I found notable that China, there was a lot of talk about potentially they were going to get this access into China because the administration said you can sell those H200s. Doesn't seem like any of that is happening right now. It is a big fat zero when it comes to their revenue.
We've said this a few times on this program, in fact, many times. You can learn something from the earnings and learn something from how the market responds to them. NVIDIA's one story, you mentioned Salesforce. Salesforce also came out with a $50 billion buyback program on a $180 billion name, and still that's not enough to engineer a rally in this name.
Look, the reason why I started on Salesforce is because NVIDIA just defies logic to me. I mean, they reported a 94% increase in profit and record sales. I mean, what were people looking for? I would say the same thing for Salesforce. Was it just beating expectations, giving some sort of forward look? The fact that they came out that they are buying back their shares because their CEO says, well, this is great value. We want to buy at a discount because we see ourselves as the winners. Nobody else is buying alongside them, even though their shares are down 28% so far this year. What will it take? What is going to be the catalyst for people to have their fears really assuaged? And frankly, with the existential conversations I'm having at home, I'm asking myself that question every night.
Salesforce down in the free market by 3%. We'll keep tracking that story for you. Coming up this hour, Angelo Zeno of CFRA as Wall Street shrugs off NVIDIA's blockbuster revenue report. Ed Yardeni of Yardeni Research on the less strong earnings season for the Mag 7. And Greg Moskowitz of Mizuho as a mixed outlook from Salesforce disappoints. We begin this hour with stocks flat as NVIDIA's blowout quarter, it's failing to impress. Mandeep Singh of Bloomberg Intelligence joins us now for more. Mandeep, go through those numbers again. Revenue up 73%, margins 75%, the outlook better than expected. Mandeep, where did they miss? Where did they fall short?
Well, it's because I think in the case of Salesforce specifically, it had to do with, the guide, and they are not seeing that top line acceleration. Compare that to an NVIDIA. The top line has inflected. In fact, they are accelerating from a very high already growth that they were showing. So I think it's just market is right now in that state where they see SaaS companies really not showing much momentum, and the semiconductor complex continues to see upward revisions. And, that's a kind of setup where there is a discrepancy. If they're buying more chips, it has to translate into faster revenue growth for mature companies like Salesforce, and you're not seeing that right now.
So let's just stay on the NVIDIA story, Mandeep, and park Salesforce just for a moment. All of this should be helping NVIDIA. The higher CapEx intentions, it's not. The stock rally has stalled. All of these numbers should be helping the stock. It's not happening. What's going on?
Well, so look, the numbers for next quarter look great. It's really about durability of growth for a company of NVIDIA's size. Given what's going on in the SaaS complex, you have to ask yourself, can they keep sustaining that 70% plus growth? And last night, Jensen did call out inflection in AI agent deployment. So far, generative AI was more about chatbots. Now he feels very confident that, the AI agent adoption will take off, given what we have seen with Claude Code and OpenAI Codex. So from that perspective, he does see inference revenue really take off for both the hyperscalers as well as companies that are focused on, these new offerings around AI agents. And that is the proof that I think the market wants to see before they feel this growth is sustainable.
Mandeep, thank you, sir, for jumping on. No doubt we'll catch up with you a little bit later. Mandeep Singh of Bloomberg Intelligence. NVIDIA in the pre-market high by 0.9%. The view on Wall Street looks like this. Angelo Zeno of CFRA with a 26 price target of 250, writing the following. NVIDIA posted Jan Q revenue of $68 billion, crushing expectations, driven by continued AI infrastructure build-out and successful Blackwell platform ramp. Angelo joins us now for more. Angelo, on this name, one sell, 4 holds, 78 buys. You're one of them, a strong buy, and a rally has stalled. What's behind it, Angelo?
Yeah, John, I think it has everything to do with it's something we had written about back in December. It's this changing AI narrative that you're seeing across the markets, right? And I think right now the street really more focused about the risks tied to AI more so than the growth opportunities here long term from AI. And I think that the street's really trying to grasp the two sides, but right now they're really focused on the risks tied to the AI side. You're getting this massive AI infrastructure build out, but we have yet to really see that AI monetization story really play out to the extent that maybe others had hoped it would play out to this. At this point in time, it's going to take time in terms of this AI monetization story, and I think there might be others out there that are just taking this wait and see approach. So we're getting these beat and raises. The quarter really didn't tell us anything new in many respects, in the sense that we expected a beat and raise, in the sense that we just had a Q4 earnings season where these hyperscalers all significantly ramped up their CapEx spend. So 26 is going to be good. I think that's pretty much baked in the stock. 2027, I think at this point also the visibility looks pretty good as well. I think the street more focused about really that AI monetization story at this point in time.
To put simply what you just said, Angelo, is it a case of fear porn trumping any kind of fundamental performance? Because ultimately, I don't know where the risk factor was in the earnings that were reported by NVIDIA.
Yeah, I mean, I think when you look at here, yeah, I mean, I think you're right. I mean, you look at NVIDIA, and I don't think you're going to necessarily see, anything that's going to cause you to raise an eyebrow and be concerned about the story here this quarter, next quarter, the quarter thereafter. I think, again, it is about just monitoring the markets at this point in time. I think on the software side of things, there's definitely some concern. You look at what Ben and you guys just really talked about Salesforce, but you look at Benioff, what he had to say about Salesforce. his conviction level there. You look at what OpenAI and Anthropic are doing. We need to monitor all of that. We need to see this agentic AI inflection really start to pick up in the second half of this year and into 2027. I think if you see that, you see those new use cases emerge, I think then NVIDIA also starts to work alongside that.
One thing that Salesforce did seem to point to is Agentforce, this idea of actually using agents, AI agents, to try to monetize this. Exactly what you're saying that NVIDIA needs to see, and frankly what Jensen Huang was talking about, that he is seeing that inflection point where you are seeing a monetization. What will it take to prove to Wall Street, to analysts, that the monetization is taking place? And ultimately, this is kind of the stick in the whole story. Is it vast layoffs to justify the expense? Is it efficiencies that get borne out in other ways that could potentially be punitive to the overall economy?
I mean, you need to see it in the numbers from the hyperscalers. You need to see it in the numbers from, and you have seen it to an extent from the hyperscalers, right? You've seen them be able to monetize AI to an extent, maybe not to the degree that Wall Street has wanted them to. But when you look at the AI inflection thus far, it really has been dominated on the consumer side. And really, you really can't monetize the consumer at this point in time because they're getting this stuff for free. On the enterprise side of things, that's where you need to see those applications really start to pick up. You need to see a number. You don't need to see the entire SaaS community really start to benefit from it, but you need to see some big wins there. You need to see that inflection in the second half of this year in terms of revenue acceleration, something that Benioff had talked about last night. So you need to see some of those use cases really start to pick up. In terms of the token count, the increase in tokens, that's going to play out. But again, we need to see the revenue really tied to that and be demonstrated, for Wall Street to really like the story here and to warm up to AI again.
Angela, on China, it's the largest market for chips. Do you think at any point this year, NVIDIA will be able to make some revenue from Beijing?
I mean, listen, personally, I'm starting to lose hope on the China story, right? I mean, it's hard to really continue to pound the table on China just on the fact that you've got these geopolitical uncertainties out there. The hope would have been at this point in time we'd start to see at least some sort of incremental revenue tied to China. Given that we haven't seen it yet, I'm just on the sidelines and saying, hey, listen, if we see it, great. If not, at least NVIDIA continues to find ways, to see their revenue trajectory continue to increase. But if you're Jensen, you continue to want to, and to some extent need China participation more because of the developer community there, and for those developers to really build on China's software ecosystem. But up until this point, and we've seen it also from AMD. AMD did see about $390 million or so in terms of China revenue in Q4. They guided to only about $100 million here in Q1, and the biggest reason for that is they just don't see the visibility either, and there's a lot of uncertainty. So at this point in time, we're not looking for much out of China.
I'm glad you brought up AMD, though. They are making some money off of China. What's the difference between what they're doing versus Jensen Huang?
It's hard to say. I mean, at this point in time, it's really just about the type of licenses they're getting approved for. I mean, clearly AMD is a much smaller scale type company relative to NVIDIA, but at this point in time, it's all about getting the necessary licenses approved there.
Angelo, always good to catch up, sir. Thanks for jumping on this morning. Angelo Zeno there of CFRA, following tech earnings overnight after the close yesterday. NVIDIA up for 4 consecutive days into the earnings print this morning. Not really inspiring a rally following some really, really decent numbers from that company for the quarter.
Decent really doesn't cover it, I have to say. A 94% increase in profit, record sales. You're talking about margins of 75%. They have increased dramatically from some 50% just a number of years ago. I mean, that's unbelievable. So what can they say other than we believe in ourselves, we see the expansion of our base, we think it's good. I don't know what it's going to take for people to actually get on board with ongoing multiple expansion.
The stock this morning is higher by just 0.6%. We'll keep tracking that story for you. Let's get you an update on stories worldwide. With your Bloomberg brief, Yahara has more. Hey, Yahara.
Hi, John. Sticking with NVIDIA, shares are barely budging this morning, up 0.6%. The chip giant's reporting first quarter profit and outlook that easily beat analyst estimates. Its latest sales forecast, however, falling short of some of the more lofty expectations out there. NVIDIA is facing uncertainty in China and a shortage of memory chips, which is holding back its gaming division. The Trump administration imposing new sanctions on entities accused of supporting Iranian oil and weapons sales. U.S. officials say the measures target individuals and companies involved in developing Iran's ballistic missiles, as well as vessels tied to its shadow fleet. The U.S. and Iran are holding talks in Geneva today. And the Pentagon taking its first step toward blacklisting Anthropic. Axios reporting it's asked two major defense contractors to provide an assessment of their reliance on Anthropic's AI model, Claude. The company is insisting the military refrain from using its products to autonomously target enemies or conduct mass surveillance of U.S. citizens. That's your Bloomberg Brief. John?
Yahara, thank you. Thanks for the update. More from Yahara a little bit later. That story is becoming more and more contentious.
Yeah, and I recently spoke to Undersecretary for Defense, Emil Michael, and he talked about when you sell to the Department of War, they're going to do Department of War things. That was their stance. And whether or not these companies decide to get on with it, this is where the big tension is right now.
It's an important story heading into the weekend. Up next on the program, rising AI skepticism.
AI is very, very important and very powerful and has a lot of potential. There are incredible things coming out there for AI. Just, it's not going to be quite on the sort of Wall Street timescale.
Up next, we'll catch up with Ed Yardeni of Yardeni Research, live from New York City this morning. Good morning. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Coming into Thursday, following 2 days of gains on the S&P 500, it's a familiar story. The rally stalls once again. Futures negative by 0.1% on the Nasdaq, down by 0.1%, even though the earnings have been pretty decent. We're looking elsewhere for a major rally, the Kospi, for a 6th consecutive session in overnight trading in Asia. The South Korean index is high by more than 20% for the month. And in the last 2 months, year to date, is up by almost 50%. A major rally developing in Asia.
Playing catch-up in some ways. The tech companies over in South Korea in particular, but also in China and elsewhere, sort of taking the helm after you saw U.S. big tech outperform. How far can that go? I think that's the question. I mean, at what point do people not see that as cheap and not see that as the brighter pastures? I mean, is this just sort of shifting around the eggs to try to understand where the next node of value is going to come from, or is there something fundamental here?
All the worries about concentration risk stateside, and we pile into South Korea, 2 names, 40% of the index. Amazing. Major rally developing in South Korea. Under surveillance this morning, rising AI skepticism.
AI is very, very important and very powerful and has a lot of potential. but that it's going to take a few years at least for us to understand how to adopt it and what it's going to be used for. And so I think we don't fully understand where we're going to deploy AI in the broader economy. There are incredible things coming out there for AI. It's not going to be quite on the sort of Wall Street timescale.
So here's the latest this morning. Stocks edging lower following a two-day rebound. Investors digesting the staying power of AI sales growth after NVIDIA's results. Ed Yardeni of Yardeni Research writing, this has been a less strong earnings season for the Mag 7 as their CapEx guidance has soared and their earnings growth has slowed from torrid paces. Ed joins us now for more. Ed, welcome to the program. What is it going to take to get big tech in America out of this penalty box?
Well, I think right now it's going to stay there for a bit because we've got what I call AI derangement syndrome. We've all gone from a situation where AI is all good, productivity enhancing, good for profits, good for the economy, to suddenly kind of a Frankenstein monster that's going to devour us. And I think that kind of extreme mood swing isn't going to last terribly long, but it could last through the middle of the year. And meanwhile, we have seen this beginnings of a great rotation into foreign markets, as you pointed out. We've seen a great rotation into sectors of the S&P 500 that certainly lagged behind during the rally we've had. So this is, I think, kind of a healthy repricing of valuation. Remember, there are all these concerns about how the market was too concentrated and that when these Mag 7s were going to start to underperform, that the whole market would underperform, we get a bear market. That's not happening. This is a pretty healthy rebalancing the way I see it.
And just clarify, which bit is deranged and which bit's healthy?
Well, I think the deranged part of it is the notion that this AI technology is going to eliminate jobs. I guess that started out when Anthropic announced that they were using code to write code. And so suddenly everybody thought, well, why do we need coders? And here I'm looking at the Indeed job openings for software developers. It's up 11% on a year-over-year basis. You would think that there were no jobs at all out there for software developers. We just signed up for Claude, that Anthropic's LLM, and within 5 minutes we designed a kind of a handy-dandy tool to analyze whether a FOMC meeting is hawkish or dovish, and we compared the last two meetings, and it was brilliant, absolutely brilliant. I didn't have to fire anybody. It just gave us another more productive tool to do our work with, and I think that's what I think the productivity gains are still going to be there. Look, you're talking to somebody who's biased. I've been talking about the roaring 2020s. I don't think they're going to come to an end with mass unemployment and businesses shutting down. You know, business applications are at all-time record high. Last year, they were over 5 million. I presume these business applications were not filed by robots, but they were filed by humans who expected to be working.
Fair enough, Ed. At the same time, a lot of people have argued that without the participation of the Magnificent Seven, and given the AI derangement syndrome as you see it, it's getting harder and harder to achieve some of the lofty goals for the S&P targets. I believe you have 7,700 on the S&P by year-end. At what point would you start to question that? You know, maybe not on the fundamentals, but at least on sentiment and how it's playing out.
Well, you know, 7,700 is a new all-time record high. I don't think a 10% increase from here is unreasonable, or from 7,000 to 7,700 is unreasonable. I think we're still going to get that. Earnings have been phenomenally strong right through the fourth quarter. I think earnings are going to remain strong, and some of those earnings are going to be tech earnings, but we're seeing the technology companies now aren't kind of hoarding all this cash. They're not likely to be doing big buybacks, but what they will be doing is spending a lot of money that will impact the good old physical economy. The virtual economy is kind of where all the action was in the stock market, and now we're seeing outperformance by the rest of the sectors in the economy, which is fine.
I guess that the question that people have, Ed, is the 10-year yield consistent with the productive nirvana that you're talking about? The idea that you can have the adoption of all of this technology that might not lead you to fire anybody, but might lead you to not hire anybody at your firm to do that kind of work. And frankly, it hasn't come with the commensurate benefits in terms of consumer spending and paychecks. You've seen paycheck growth really start to wane. I mean, at what point are 10-year yields and sort of this rosy version kind of in conflict with each other?
Well, the 10-year yield is still kind of stuck above 4%. So the 10-year yield has been pretty quiet through thick and thin through all of this, even with the Fed lowering interest rates. But all in all, I think that there are lots of moving parts here. Baby boomers are retiring. Baby boomers make a lot of money, so retired baby boomers are not going to be earning disposable income, labor income. So as a result of that, personal disposable income in real terms has been flat, and that's got people kind of freaked out. But it's natural that as the baby boomers retire, they will be spending their nest eggs, which are, we've discussed this before, $85 trillion is what they have. They're going to be spending that. The savings rate's going to go negative. And yet consumer spending is going to hang in there very well. A lot of the baby boomers are helping their adult children and their young grandchildren with financial assistance. So there's a lot going on here that I think people just don't really fully appreciate. And there's just too much focus right now on this AI disruption, kind of disrupting everybody's lives. But I think it's going to be, it is already a great tool that's making workers more valuable, not less valuable.
And I've got 30 on the clock. Speaking of consumer spending, we have seen a gap open up between discretionary and staples. Stock performance so far year to date. Are you expecting the gap to close in the year ahead?
I do. I think the consumers will continue to spend. They have, goods, real GDP rose 5% on a year-over-year basis in the fourth quarter. A lot of that was consumer goods, durable goods. So yeah, I do indeed think that, because I think there's just too much risk off right now in the market.
Ed, it's good to see you. Thank you, sir. Ed Yardeni there.
Thank you.
Ed Yardeni Research. AI derangement syndrome is a new one. I've not heard that one before. Dan Ives just published over at Wedbush. She says this: NVIDIA delivering a blockbuster quarter and guide is like watching Jordan with the Bulls. The problem a lot of people have got right now, we care about championship rings. And this stock is not winning championship rings right now, at least not this year.
If you're a $5 trillion stock, you already are Michael Jordan. It's not proving that you are. The question is how many free throws and how many layups and how many, three-pointers can you get?
Nice work.
Keep going.
Good work.
Yeah.
Good work. Save it later because he's going to join us.
Touchdown.
In about 45 minutes time. No.
I know.
Good. Coming up on the program, Andrew Bishop of Signum Global as US-Iran nuclear talks resume. Plus, your hire us back with your morning movers. Shares of Salesforce trading lower. The stock is down by 3.5%.
Have you ever thought about, or would you make a movie for a streaming service? Would you make a Netflix movie?
Man, that's a great question.
I mean, I'm waiting for one where I ask and you go, that was a shitty question.
Yeah. I mean, you good at your job, bro. Like, this is actually the first time anybody's ever asked me that. I'm not here to say what I would and wouldn't do in the future. But the theatrical experience is one that means a great deal to me. It means a great deal to us. I feel a certain responsibility. Like if Fruitville had happened a calendar year later, it probably would have come out on streaming. I've been fortunate enough that everything that I've written and directed has been a theatrical release. So I feel a duty to try to protect that. But that's where I'm at today.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Two days of gains on the S&P 500. The rally stores within 1% of all-time highs on the benchmark stateside. Equities this morning down by not even 0.1%. The Nasdaq down by 0.07. The Nasdaq running at 2.5% in the last two sessions, and software up by around 4 to 5% over the same time period. So we've had a bounce coming into these earnings from Salesforce and Nvidia. We are struggling to follow through. Let's get you some single names, some morning movers. Yahira has more. Hey, Yahira.
Hi, John. It's a show-me moment for software stocks, and Salesforce and Snowflake did not quite deliver on Salesforce. First, analysts calling the sales forecast, which was in line with expectations, lackluster and just not enough to ease fears that generative AI will limit rather than expand growth opportunities for the established software name. As for Snowflake, it did beat on revenue for the fourth quarter, but its outlook only met expectations. So Salesforce down 3.5%. Looks like Snowflake now positive 0.4%. Moving on to another software stock, C3. This is a name that investors initially piled into during the first wave of AI enthusiasm, but it's had a string of bad earnings, and it just posted another one yesterday saying that it's trimming its revenue guidance sharply. Plus, it will cut 26% of its workforce under a new CEO, so shares are plunging 22%. And we're on a software streak this morning. We end on Nutanix. This is a company that essentially sells software that helps businesses manage data centers and cloud systems. Well, it just announced a new partnership with AMD to use that technology, but tailored to AI workloads. AMD will also buy $150 million worth of its stock, so shares are surging 22%. John?
Yahira, thank you. Thanks for the update. More from Yahira in about 15 minutes' time. On a radar this morning, Nvidia failing to wow investors with its latest sales forecast. The CEO, Jensen Huang, insisting customers are seeing the big profits from AI investments, even as the company faces memory shortages and uncertainty in China. Elsewhere, President Donald Trump pushing for big tech to bear the cost of the AI boom. Executives from companies including Amazon, Meta, Microsoft, Alphabet, all heading to the White House next week to sign a pledge they will generate their own power for new data centers. And finally, the Pentagon turning up the heat on Anthropic. Axios reporting the following. Defense officials are weighing a supply chain risk designation, a move that would effectively blacklist the AI giant from military contracts.
Look, this is actually incredibly important, as Anne-Marie was mentioning. This is a question of who holds the keys in geopolitical conflict going forward. Is it going to be the government? Is it going to be the elected officials? Is it going to be the heads of some of these big tech companies? Ultimately, Anthropic was saying, we're going to put limits on what you can do. And Pentagon said, oh, no, you're not, and we're going to penalize you if you do. It really goes to jostling for leverage at this tipping point in geopolitics, where suddenly the technology seems to reign supreme.
If they decide, though, to basically say to Anthropic, you're a supply chain risk, this is what we do to companies that are foreign actors. So this would could be huge. And I recently spoke to the Undersecretary, Emil Michael, about all of this. And really all of this was kickstarted after we found out that Anthropic was used with the capturing of Nicolas Maduro. They haven't said that outright, but it's clearly obvious that Anthropic is aware that they were used in this, and potentially maybe that was one of their red lines. But he talked about the fact that if you're going to sell to the Department of War, we're going to do Department of War things. And he went on to talk about that adversaries are certainly using AI in bigger ways with bigger tolerances than our U.S. champions have. And that right now has a lot of tension, and they will need to get to an understanding between Anthropic and DoD, potentially what these lines are that could be crossed or not.
I think we're all trying to figure out what this company wants to be. Several of these executives came out of OpenAI. A lot of it was virtue signaling. More recently, have dropped the safety pledge. You were talking about that yesterday in a commercial break with me. And now they've got this kind of tension with the administration over whether they're going to be used for military capabilities and things like that. What is this company? Is it going to be a virtue signaling company, or is it going to get back to business, something in between? Is it struggling at the moment to know what it wants to be before it goes public?
And when you hear podcasts or discussions with some of the founders, you can feel that angst, that kind of internal conflict where they came at this with effective altruism, and now they're coming at this with the question of, realistically, who's in charge? Because they are setting the ethical framework for so much of society going forward, potentially. And right now, the government's challenging that and saying, we can use that however we want to. And they're saying, well, we don't know about that, and it's causing a lot of anxiety.
I think it's the tolerance that Anthropic is willing to tolerate, because the government has also said that we will be consistent in our use with mass surveillance laws and regulation laws. It's just whether or not Anthropic agrees.
This is sort of like the person who created Frankenstein. At what point do they realize they have to let go because it's already created? And that ultimately is what this feels like.
Are we at that moment? Let's keep it on the geopolitics. Talks between the US and Iran underway in Geneva.
The negotiations will be largely focused on the nuclear program, and we hope progress can be made, because that's the president's preference, to make progress on the diplomatic front. But it's also important to remember that Iran refuses to talk about the ballistic missiles, to us or to anyone, and that's a big problem.
The Trump administration ramping up pressure and imposing fresh sanctions on entities that help Iran develop ballistic missiles and advanced weapons. Joining us now is Bloomberg's Tyler Kendall. Morning, Tyler.
Hey, John, good morning. Well, as you just heard, the White House maintains that diplomacy is the first choice, though military action remains firmly on the table. As the Secretary of State just outlined, it's our understanding that this round of negotiations is focused solely on the nuclear program amid disagreements over whether the country should have any domestic enrichment capacity. The thing is, the U.S. has made clear that it wants to see these other top agenda items included in any potential deal. As Marco Rubio just mentioned, Iran's ballistic missile program, as well as Iran's support for proxy militia groups. And while deadlines here in Washington often do shift, keep in mind President Trump says that Iran has until next week to reach a deal. And experts have pointed out the fact that the diplomatic dispute extends beyond Iran's uranium enrichment. That means that we are likely going to see that potential list of targets the U.S. could be looking at for a potential strike widen beyond just nuclear facilities. Because, as you well know, there has been this massive buildup of U.S. military assets in the region, as Israel confirmed yesterday that the U.S. has deployed F-22 fighter jets as well as refueling planes to the country in a move that has never been seen before. John, you mentioned those other ways that the U.S. is exerting pressure, including that new list of sanctions that is targeting those entities that help facilitate the sales of Iranian weapons and oil. I have to say, a new analysis out by Bloomberg Economics yesterday really struck me, as they say it is now more likely than ever that if the U.S. strikes, Iran would retaliate by closing the Strait of Hormuz. This is something that has been long threatened but hasn't been done, though they do say if such a closure happens, it would likely be temporary.
Tyler Kendall with the latest in Washington. Tyler, thank you. We'll catch up with Tyler a little bit later this morning. Andrew Bishop of Signum Global writing, President Trump is not eager to go to war with Iran. This means that if in doubt about whether diplomacy can still succeed, he will continue to give it a chance. Andrew joins us now for more. Andrew, welcome to the program. The U.S. has already demonstrated superior military capability, and the Iranian government has already demonstrated how stubborn they're willing to be. Where is there space for a diplomatic breakthrough?
So frankly, in terms of getting to an actual agreement, I think there's very little space. We've been optimistic, I don't know if optimistic is the right term, but ever since January 14, that fateful day when it looked like President Trump was going to strike, ever since that day and on that day, we've continuously said that the president was not going to strike for several months. And that continues to be our view. not because we're optimistic about, as you say, the substance of these talks, but because we think the president wants to drag them out for as long as possible, both to see if there's even the sliverest of possibility of getting a breakthrough, but also for calendar reasons. We're in the middle of Ramadan. You've got Nowruz, Persian New Year. Liberating the Iranian people by bombing them is not necessarily good PR. And then President Trump is going to China at the end of March. And we all know that this would potentially be a multi-week operation. I don't see how bombing one of China's biggest suppliers of oil right before visiting Xi Jinping is going to help extend the trade truce.
So when do you think this could start if Trump had to use this option of a strike?
Yeah, we've said since January 13 that the most likely is after April 4, so essentially after he returns from China.
But then that would be going into the summer, which is peak driving season here in the United States. Andrew, how does the president weigh potentially what a spike in oil would be? Tyler was talking about the Iranians being willing to close the Strait of Hormuz to gas prices in the United States ahead of a midterm election.
Yep, that goes exactly back to both why we think he's so reluctant overall, and then on your question about timing, that gets to the issue of the fact that the Iranians are so hard-headed. I guess my point, and I do mean the government in this instance, what I mean by that is I think the president would like to get a deal before April, but if we don't get a deal, then he will act. I mean, what you see is what you get in terms of this government's position on striking. They want a diplomatic deal. If they really can't get one after having tried and tried and tried, they will bomb.
At the same time, Andrew, you could look at the troop buildup in Iran and around Iran, and you could look at the fact that a lot of people are saying that if there isn't some sort of military incursion here, it's just going to be kicking the can down the road because ultimately Iran's not going to get rid of their ballistic missiles. I mean, at what point is that a real pressure point that challenges the thesis that calls for dragging this out and a lack of a conflict?
The argument makes perfect sense. But if you follow, open source intelligence accounts and the like, you can point to about 100 or 200 signals since mid-January that suggested an imminent attack, right? It's sort of, yes, we're pre-positioning 24 F-35s. And then the following week, it's 48. And then really, we needed 48 all along, so 24 should not have been the signal. The goalpost keeps moving on this. So it's not, I don't disagree with the logic. It's just finding where that limit is, we think is a little later. And this is very similar to what happened with Maduro. Back in September, I believe, of last year, we wrote that President Trump was likely to take out Maduro, but he would take a lot of time. He would not be rushed into it. And by November, December, people were saying it has to happen now because we've deployed all this firepower. The truth is the president can afford to run the tab. And even from an operational standpoint, he does have the several weeks that he wants.
Andrew, as you know, Tehran and the Iranian economy right now is really struggling. How well funded are Iranian proxies in the region right now? What are their capabilities to cause disruption if Iran needs them to?
So their funding went through a hard period following the major strikes, and I'm not just referring to the June war of last year, but Israel's overall operations across the region. But they have really recovered quite well. If you take Hezbollah, for example, the smuggling routes for bringing in cash had to be rejigged, but they have been rejigged. The issue, though, is to be very transparent. I don't think that the reaction function of these proxies is going to depend that much on funding. I think it's going to be much more of a political decision. And we have a slightly nuanced position at Signum, which is we think that Iran will retaliate extremely forcefully. So the president's sort of scenario of a limited strike, limited retaliation is off the table, but not necessarily, in fact, not with its proxies. I think the proxies will largely sit this one out for political self-preservation reasons.
Andrew, could you describe what forceful retaliation would look like then?
Yeah, it's very simple. It's trying to kill Americans and Israelis, which is very different than what happened in June and during the prior operations, where the main goal was trying to demonstrate capability and sort of, show symbolic action. Here, we think that they will try to kill as many as possible. And from the military experts we speak with, it is statistically extremely improbable that we will have a war with Iran and no U.S. casualties.
Andrew, this is a serious conversation, and I think it's a question we need to ask. When you say kill Israelis and Americans, are you talking about in the region, around Iran, or beyond?
Both. I think they'll have less success beyond, just because their capabilities are less good beyond. I'm well aware that, Hezbollah and other groups have had success as far out as Latin America and the like. So that's not inconceivable, but I do think that there's a case to be made that short-range ballistic missiles have a better chance of killing American troops, for example, than Iranian operatives have at conducting a successful terrorist operation in the U.S., which has been largely off the table for the past 25 years.
Andrew, appreciate your time. A serious conversation. Thank you, sir. Andrew Bishop there of Signum Global. That is some real high-stakes stuff. When we talk about objectives are one thing. Are the risks worth pursuing those objectives? Well, that's the calculation the administration's got to make.
And there's a reason why officials from Trump 1 still have Secret Service details. And a lot of that has to do with the killing of Qasem Soleimani and that they still have a target on their back from this regime. And we know that Iran likes mass casualty events. So potentially, what could that look like? And obviously, this is something the administration is clearly thinking about as they have this vast buildup in the region.
We'll keep tracking that story. Less serious, of course, is the price action. But to get to that, futures this morning slightly negative by 0.1% on the S&P 500. With an update on stories elsewhere this morning with your Bloomberg Brief, Yahara has more. Hey, Yahara.
Hi, John. Tensions are escalating between Cuba and the U.S. Cuban forces killed 4 people who opened fire from a speedboat with Florida tags. Cuba says the boat was carrying armed Cuban exiles intent on entering the country to fight against the government. Secretary of State Marco Rubio said the U.S. will investigate the shooting. India Prime Minister Narendra Modi announcing closer defense, trade, and counterterrorism ties with Israel during a rare visit. Modi telling Israeli parliament the defense partnership is essential in today's uncertain world, and both sides are working to expand trade and investment. And Paramount Skydance reporting fourth quarter sales and earnings that beat Wall Street expectations. The results coming days after the company submitted a new bid for rival Warner Brothers, which is, of course, weighing competing offers from Paramount and Netflix. Warner Brothers reports earnings later this morning. That's your Bloomberg Brief. John?
Hey, Yahara, thank you. More from Yahara in about 30 minutes from now. Up next on the program, a major software slump.
Software companies understand AI better than anybody else. They actually have an opportunity to increase margins even further. It's just the market's ignoring that right now.
It's time to talk about Salesforce. Greg Moskowitz of Mizuho joins us next, live from New York City. You're watching Bloomberg TV.
is back to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly. Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard.
Oh boy.
Can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that. And the speed of the business has never moved faster.
My career might stop, but I'll still be driving some.
Yeah. Probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg. Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good question.
Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
There really is very little drama at the index level, within 1% of all-time highs, and this morning down by not even 1/10 of 1%. The Nasdaq down by 0.1, following a two-day rally of 2.5%. The drama is just the idea that we're getting these fantastic earnings in tech from the likes of, say, Nvidia, and the stock isn't rallying. The stock is up by 0.9%. And looking at the numbers this morning, Bramo, to go through the figures again, revenue up 73%, margins 75%, the outlook better than expected, and overwhelmingly the analyst community getting behind this name. And yet still here we are, just up 0.9%.
Frankly, it's leaving a mystery of what will it take for people to get enthusiastic, given that these shares have risen so much. I mean, this is nearly a $5 trillion name, so clearly a lot baked in. Nonetheless, this was pretty fantastic on all counts, even including a broadening out in customer base. Is there something else that they need to see? Dan Ives of Wedbush about 30 minutes away. He's got a 300 price target on the name. We trade at 197 in the pre-market at the moment. Salesforce in focus as well. Under surveillance this morning, a major software slump.
Software companies understand AI better than anybody else. Software companies don't sell software, they sell services. Software is a cost for them, and that cost is now going down very substantially because AI is the best at writing code. And so they actually have an opportunity to increase margins even further. It's just the market's ignoring that right now.
So here's the latest this morning. A soft outlook from Salesforce sending the stock lower and fueling investor concerns in the sector. Greg Moskowitz of Mizuho lowering his price target, but remaining optimistic, writing the following. We see a high likelihood of organic revenue re-acceleration and believe Salesforce remains committed to profitable growth. Greg joins us now for more. Greg, welcome to the program. We'll talk about the growth numbers and the outlook. I actually want to start with the buyback, because this has been a lingering question for a lot of people over the sell-off of the last several months or so. Why these companies haven't stepped in and bought their own stock. And then Salesforce did it and announced a major buyback, and it's failed to underpin confidence in the name. Greg, just on that specifically, what was your reaction?
Well, first of all, thank you very much for having me. It's welcome. Frankly, Salesforce is not the first company in our space that has done this, that has stepped up recently and has just said, you know what, from our perspective, there's too much intrinsic value in the stock. We are going to put our money where our mouth is and accelerate our buyback. Now, it's a $50 billion authorization. What Salesforce has not said is how much more aggressive they will be in the near term and the medium term. So that remains to be seen. But they made it very clear yesterday that they see uncommon value in the stock here. That being said, is it enough to overcome the negative narrative that exists right now that AI is going to be this disruptive force for so many software companies, or disruptive force to so many software companies? In other words, causing decelerating growth, causing more issues with SaaS-based models in particular. That narrative is very extreme right now. It's very strong. It's having an overwhelming effect on a lot of these names, including Salesforce. In my opinion, the buyback announcement is not going to be enough to offset that right now.
With that in mind, Greg, as you think about the runway, the path forward, the calendar from here, how much longer, how much more time does this name need to demonstrate that they can counter that narrative?
It's a terrific question. And I think, really, Jonathan, it comes down to acceleration. Now, it has been a while since we've seen accelerating growth from Salesforce. They are telling us now that they expect that will happen in the second half of this fiscal year. So we're about, in our opinion, that's going to happen in Q3 of fiscal 27. So we're 3 quarters away from that occurring. If that does in fact happen, we think then investors can start to have more confidence in this business, the durability of it. The growth algorithm starts to look a little bit better. I would also point out that their productive sales reps are up 15% year over year. If you go back 12 months ago, that was just flat. So Salesforce themselves is seeing more reason to invest behind these trends. The real driver is what they call Agentforce. This is their agent-based AI software. It frankly got off to a very slow start in calendar 2025. The last couple of quarters, and especially this one, it has really picked up. It was at $540 million in annualized recurring revenue last quarter. It's now at $800 million. So the growth is starting to compound. And in calendar 2026, we think that's going to start to have a measurable impact on the overall growth for this company.
To be clear, Agentforce is a slew of autonomous AI agents that can do the whole process end to end, whether it's sales, service, marketing, et cetera. Greg, it feels like the profitability acceleration that people are looking for in Salesforce has to come from the expense of either human capital or in terms of gaining market share from other potential software providers. It doesn't feel like it's a winner-takes-all type of environment. Which avenue do you think will allow them to accelerate revenues? Who loses?
So I agree. This is certainly not a winner-take-all environment or situation as it pertains to Salesforce or the space more broadly. Now, where we see Agentforce being most applicable, certainly over the medium term, is in customer support, what they used to call their Service Cloud business. Secondarily, we see a real opportunity within certain aspects of Sales Cloud, which of course is their CRM business that they have been known for and really the roots of the company. Conversely, you mentioned marketing and commerce. That is a real pain point for Salesforce. That growth has been decelerating. We are not expecting that to pick up in calendar 2026 either. I think that's going to continue to be a thorn in the side of Salesforce. Having said that, it's also a smaller business than Service Cloud and Sales Cloud. And so we still think on a net basis, you're going to see some more meaningful trends around Agentforce and what it means for the growth of this company.
You sound pretty positive, and yet you lowered your price target to $265 from $280. Why?
In our opinion, this was a bit of a mixed quarter, slightly underwhelming. Their CRPO, what they call current remaining performance obligations, that's Salesforce's most important metric. It was 13% on a constant currency basis, 13% year-over-year growth. That's not bad, but it was right in line with guidance. Usually we see Salesforce do a little bit better than that. Also, their organic revenue growth was a little bit below where we and consensus had expected for this quarter. So again, I'd say a little bit underwhelming, and we're being reflective of that in our price target. It does not, however, change our view of accelerating growth in 2026. And our price target, of course, does still reflect substantial upside versus where the stock is trading today.
Hey, Greg, I know yesterday evening was busy for you. Thanks for making time for us early this morning. We appreciate it. Thank you. Greg Moskowitz there of Mizuho on Salesforce. That name down this morning by close to 3 to 4% softer. You're not going to get it done with 1 quarter on a stock buyback. You're going to need to see this performance repeated quarter after quarter and demonstrate more confidence in the outlook.
And monetization and where the channels are going to come from. And that is a continuing question at a time. Where is that monetization going to come from?
Up next on the program, we'll catch up with Emily Rowland of John Hancock, Dan Ives of Wedbush, Lumen Technologies President and CEO Kate Johnson, plus Matt Brill of Invesco. The second hour of Bloomberg Surveillance is just around the corner.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo.
And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this yield forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders.
Bloomberg has learned that there are discussions around a potential all-cash offer for Warner's studio and streaming businesses.
For the past few years, we hadn't really seen any deals above $30 billion. And now we're seeing, Warner Brothers, $80 billion, the big railroad deal. And what we're hearing from sources is that next year we're going to see more of the same. It's just going to be the mega deal.
I would expect next year will be an even better year for M&A and IPOs.
That's just kind of what we do at Serena Ventures, is just kind of learn how we can fill in different gaps in different areas that are being missed. And by the way, these gaps tend to be really, really massive.
I know you've been very bullish on the return of M&A. Do you expect more deals, if they are of this size, to have the same sort of structure and contours?
I think we're going to see the return of large transactions, and I think they're going to avail themselves of both private credit options and public options.
There's a lot of merger talk. There's a lot of firepower.
Investors wanted to know at what price would this deal be, and now they answered that question at $70 a share.
So congratulations to Bloomberg's deals team for getting it first.
I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment. 3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
You know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Now is the time for the economy to be really accelerating. And there's not much evidence that that's actually happening.
I'm really nervous about the economy for the next few months.
There's a lot of different forces pulling in different directions.
Right now, recession seems a long way off.
We think in an environment where the Fed maybe still has 1 to 2 rate cuts ahead of it.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the second hour of Bloomberg Surveillance starts right now. Your scores, the price action looks like this. Equity futures pretty much unchanged on the S&P 500 following 2 days of decent gains led by tech, software doing nicely until this morning. The Nasdaq futures are down by, let's call it 0.1%. 2 names to look at. Let's start with Salesforce. Salesforce cannot get out of the penalty box. That name is down by 3.6%, even with a $50 billion stock buyback. The other name, the obvious one, NVIDIA. Fantastic numbers. And yet here we are. The stock is only up by 1% in early trading.
And it's a tale of 2 different industries, right? NVIDIA got it done. Nothing you could poke a hole with in terms of their earnings report. The increase year over year is just tremendous. The fact that they've got 75% profit margins, what can't they charge their hyperscaler customers? With respect to Salesforce, a bit of a different story because they didn't show the acceleration in growth that a lot of people were looking for. Nonetheless, what will it take, given the fact that Mark Benioff sounds very happy? He's talking about not the Sascopolis, but the Sasquatch, which, again, I'm trying to wrap my head around. But nonetheless, it does seem like this market is firmly in, what was it again, AI derangement syndrome?
Yes.
I think that that's exactly perhaps where we are.
Gee, I don't know if you had any research calling that phrase a little bit earlier this morning. Emily Rowland's going to join us in a moment. She said this, it's like NVIDIA's winning the game, but investors are giving participation prizes out to all the other players.
It seems like right now, NVIDIA is the ultimate winner of $650 billion of CapEx spending from 4 hyperscalers, and yet people are looking beyond that and saying, actually, it might be beneficial for everyone or for nobody. There are a lot of unanswered questions. And a lot of these papers that are going viral about whether it will completely eradicate white-collar jobs, I'm talking about the deployment of AI, go to the heart of the fear. Can it be that we get this sort of nirvana-like productivity boom that leads to benefits for all, or are we going to end up in the same post-globalization reality that you've talked about, where suddenly blue-collar jobs were shipped overseas? Is it going to be a similar kind of apocalypse in the white-collar space? We can't answer that question. Even Fed officials themselves are struggling right now.
Well, as they struggle, what I found interesting this morning is whether it's Frankly or Angelo Zeno talking about the fact that what they had from NVIDIA, what they delivered, is everything they expected. Both of these analysts said they didn't tell us anything new, which is probably why maybe we're not seeing the stock actually take off that matches the numbers that are just absolutely blockbuster from the company.
Speaking of earnings, numbers from Warner Brothers Discovery just dropping. Yohara will get you up to speed on the details of that in just a moment, but in some ways, the numbers kind of don't matter anymore, right? You're following the earnings coming out of this stock, out of Paramount, and you're sitting there thinking the same thing. Who wins the race for this one name?
And evidently, people can't throw enough money at a company that is losing money, right? I mean, we're looking right now, we're talking about how NVIDIA is minting cash. I mean, hundreds of billions of dollars coming in their doors. We're talking about Warner Brothers losing, sort of declining in revenues, losing about 10 cents per share versus the estimate of 3.8 cents a share. And you're seeing subscribers come in light. Doesn't matter, because ultimately this is going to be somebody else's problem and somebody else's opportunity. And frankly, it's a different kind of drama.
Stand by. We'll get you more details on that name in just a moment. Coming up on the hour, we'll catch up with Emily Roland of John Hancock as the equity market rally stalls. Dan Ives of Wedbush as strong NVIDIA earnings struggle to impress. Matt Brill of Invesco as AI CapEx debt continues to swell. We begin this out as big tech struggles to impress. A blowout quarter for NVIDIA, failing to spark a market rally. Emily Ronan of John Hancock Investment Management writes in the following: it's amazing the market doesn't seem to care. It's like NVIDIA is winning the game, but investors are giving participation prizes out to all the other players. Emily joins us now for more. Emily, welcome. I think a lot of people feel the same way this morning, looking at those numbers yesterday evening, looking at the price action this morning, and Emily asking themselves the question, what is going on?
Yeah, John, there has never been anything like this in U.S. corporate history. 80% year-over-year earnings growth. The estimate was 57% on a $5 trillion company. Like, this is just so remarkable. And then you wake up this morning and you look at the relative winners again, and it's the Kospi, it's Europe, it's the CAC, it's everything else except U.S. technology companies. The market cap of NVIDIA hasn't really changed very much over the past 6 months. And meanwhile, we've just seen massive multiple expansion, massive changes in terms of the size of pretty much every other company on the planet. We've been talking about this sort of idea of March madness coming up. To us, it's momentum madness that we're watching. And you think about the brackets, it's Spain, it's the Kospi, it's Europe, it's silver. And that's really where the focus has been. And the markets are really not all that impressed by NVIDIA. Pretty remarkable to us, given the strength of the earnings, the margins, the revenues there.
Emily, you saw it as soon as the year started, straight out of the gate. The Kospi, off to the races. South Korean equities are up by close to 50% year to date. We're not even 2 full months into the year. You talk about the momentum. The team's going to have plenty of questions about tech and what's happening stateside, but the momentum that's happening elsewhere, do you really want to fight that right now?
I mean, momentum, as we know, is a really powerful force. Matt Miskin and I have been watching the Kospi for about a year now. It's up 160% over a 1-year basis. And we're always trying to square that with what the fundamentals look like and what the economic picture looks like in some of these countries. You look, for example, at Europe. The estimate for earnings growth this quarter was 3%. They barely beat that, and that European equities are on fire. In the United States, the earnings growth estimate for this quarter was 8%, and we're coming in at 15%. That's almost double. Technology companies just produced 33% year-over-year earnings growth. In the United States, it's not getting rewarded. Look at Japan. Their stock market's on fire. Guess what their GDP growth is? It's 0. They just missed a technical recession. So it's just hard to really square this momentum, this sentiment, this technicals that are driving these markets with what's really happening underneath the surface. We want to participate in this, but investors might want to think about right-sizing positions in a market that's been driven by momentum.
At the same time, Emily, U.S. markets have already benefited from momentum, right? I mean, if you look at NVIDIA shares, they've gone from $3 essentially at the beginning of 2019 to almost $200 today. I mean, it's been a tremendous tremendous blowout in terms of market capitalization. How can you understand, even when we're talking about such big numbers, what that's baking in and how many more multiples to price in at a time where there are many beneficiaries, clearly, and the race is very, very intense?
Yeah, absolutely. And the earnings engine is on in the United States. So when we think about valuations, we really care a lot more about the denominator. And we've seen that, especially in some of these AI beneficiaries. But we just saw so much momentum. To your point last year, it's just going to be hard to repeat that, to continue to compound that. So we understand this idea that there's catch-up potential in other areas of the market, but we are always following earnings. We believe that stock prices follow profits over time, and that's where the earnings are. Now, do you need to protect against the valuation risk that's inherent in some of these big, large cap companies, tech companies in the United States? Absolutely. So what we're doing is we're looking at sort of our favorite, more quality cyclical areas of the market. Industrials has been a top idea for us for quite some time. We're going down in market cap and looking at mid-cap stocks, which have elevated earnings growth prospects and at least like reasonable valuations in a world where everything is expensive right now. So it's about owning tech. It's about looking for the earnings, following the profits, but then diversifying from that down in market cap and looking for quality value.
Emily, is it a contradiction to go down in market cap, to go to smaller, riskier companies and also like high quality bonds? I mean, is there a contradiction here betting on the reacceleration of the economy on one hand, but then on sort of the opposite on the other?
So great question. So it's a key reason that we're overweight mid versus small cap stocks. We look at small caps, they're lower quality. 40% of the Russell 2000 index is comprised of unprofitable companies. We really prefer to be up in cap to mid caps, which are not our parents' mid cap stocks anymore. These are pretty large companies. But on the fixed income side, that's an area that we just think is mispriced. With the 10-year Treasury yield still over 4%, there's opportunity, especially in the intermediate part of the curve here, to lean into that. Bonds returned 4 to 5%, or 7 to 8%, like very quietly last year. We think that can happen again. Now, there's not as much value on the shorter end of the curve now. Given the moves there, investors can benefit from roll down. They can get income. We don't think that bond investors are sniffing out the disinflation and the lower growth that's coming down the pipeline. And that's an area that we think offers some relative value across markets.
Emily, if investors like utilities, materials, and some of these more tangible assets, aren't they also part of the AI trade? You have to have a case that the AI build out is going to be real.
Oh, that's a huge part of it. These are traditionally more defensive assets, but they're also benefiting from the build out of data centers around AI. We're looking at industrial production, automation, robotics as key themes. So these sort of old school, parts of the economy, parts of the market are also, benefiting from this AI build out, the lack of supply that's needed in order to build the infrastructure here. So, we're looking at that as an opportunity, again, to sort of look at the tertiary beneficiaries of AI here.
So wouldn't the market view that as the AI trade is real? And when you see blockbuster results like you have from NVIDIA overnight, that you want to buy into it even more this morning?
Yeah, absolutely. And I think, Anne-Marie, the challenge is just the size of this. You look at how important that market has become to the economy, and it's just remarkable. Consumer net worth right now is sitting at a record $176 trillion. The stock market at $60 trillion dwarfs the size of the U.S. economy right now. So we've seen this incredible capital appreciation that's been driven by AI as being the most important thing. The market is like the tail that's wagging the dog of the economy, and it's usually the opposite. So we want to think about diversification given the fact that there's so much wealth that's concentrated in AI, and it puts us in a little bit of a precarious position. If we do see a challenge here, there's a lot that's been written, of course, as of late around software companies and the obsolescence potentially there. We think that is overdone, but we've got to think about how much of a risk there is given this massive wealth concentration in the AI trade, and think about other ways, other assets to own to diversify from that, whether it's infrastructure, whether it's bonds, whether it's utilities, et cetera.
Emily, it's good to see you. As always, thanks for jumping on. Emily Ronan there of John Hancock. It's easy to forget how big some of these companies are. more than 4.5 trillion. Imagine telling someone 40 years ago that the biggest company on the planet would be close to $5 trillion. Nvidia something like 4.7. US GDP in the mid-80s was about $4.5 trillion. These companies are massive.
Which is the reason why, as we're saying that NVIDIA is barely moving or barely responding, up almost 1% is up almost $50 billion. So, I mean, we're talking about not nothing. So at a certain point, are we just reaching sort of warp speed here, and any incremental gains is just a massive amount of money still?
Futures so far this morning just about unchanged to both the NASDAQ and on the S&P 500. With an update on stories worldwide this morning with your Bloomberg Brief. Let's cross over to Yahara for more. Hey, Yahara.
Hi, John. World Economic Forum chief Borge Brende is stepping down over his ties to Jeffrey Epstein. In a statement, Brende said it's time for the forum to continue its important work without distractions. The WEF thanked Brende for his contributions and leading a successful meeting in Davos in January while announcing a new interim president. Meanwhile, shares of Warner Brothers Discovery edging higher in the pre-market following its earnings release just moments ago. The company reporting adjusted EBITDA for the quarter that beat the average analyst estimate. The results coming as the bidding war for Warner Brothers is heating up. Investors awaiting the final word on whether Netflix or Paramount Skydance will seize control of the Hollywood giant. And over in London, Rolls-Royce shares hitting a record high. The company announcing a record stock buyback of nearly $12 billion over the next 2 years. Rolls-Royce also raising its mid-year earnings target thanks to orders for aircraft engines and power systems due to AI. That's your Bloomberg Brief, John.
Yahara, thank you. More from Yahara later this hour. Up next on the program, NVIDIA struggling to impress.
I think right now the street really more focused about the risks tied to AI, more so than the growth opportunities here long term from AI. And I think that the street's really trying to grasp the two sides.
So if you want the bull case, you speak to the bull himself. Dan Ives of Wedbush joins us next, live from New York City this morning. Good morning.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
So things at the index level feel really snoozy once again within 1%. I think now within 0.5% of all-time highs on the S&P. Just about unchanged so far this morning on the S&P. On the Nasdaq, unchanged as well. Talked lots about Salesforce, more to come on Nvidia. Check out the banks as well. Citi yesterday had a really decent day, up by more than 4%. Citi this morning down by about a tenth. There's a great note out from the team at Morgan Stanley on the most defensible stocks and some of their picks on the bank side of things. Citi, Bank of America, State Street. Here's the quote from them. Regulatory intensity, balance sheet requirements, relationship-driven models limit disintermediation. AI drives productivity gains across operations, risk, and client service, supporting sustained operating leverage. This is why, from an AI perspective, some of the analysts over at Morgan Stanley like a few of these names.
Because ultimately, the big are going to benefit that much more from their platforms, as well as the fact that people need to go out and actually talk with their clients. We've heard this from the likes of many people at Citi Wealth and beyond. A question of who then this is a detriment for, right? And we've seen that kind of cannibalization from other wealth management platforms. Is it going to be everyone benefits in this sort of nirvana-like productivity boom, or are we looking at truly the winners and losers and the market's trying to figure out who's who?
It just seems at the moment, Brammer, we're spending too much time thinking about who loses. The fear has taken us in that direction, and not enough time, not sufficiently and not enough time to focus on who's winning at the moment or who might win further down the line and why.
It seems like right now people are saying that the U.S. is priced to win, and right now we're not sure whether everyone's going to win in the same way, so we're just going to go invest in the Kospi. And that essentially is what people are doing, even though there are going to be some very big winners, which is the reason why you're seeing Walmart, for example, really benefit. But why wouldn't the biggest banks also be on the other end of that?
A close to 50% move on South Korean equities year to date is just phenomenal. Under surveillance this morning, Nvidia struggling to impress.
It's this changing AI narrative that you're seeing across the markets, right? And I think right now the street really more focused about the risks tied to AI, more so than the growth opportunities here long-term from AI. And I think that the street's really trying to grasp the two sides, but right now they're really focused on this, the risks tied to the AI side.
So here's the latest this morning. Blockbuster earnings and a strong forecast from Nvidia failing to spark a market rally. Concerns rising that an overheated AI economy may weigh on growth. Dan Ives of Wedbush raising its price target on the stock to 300 and writing this. Nvidia is at the beginning of this transformational superstar narrative playing out for the tech world. Dan joins us now for more. Dan, welcome to the show. I'm going to repeat myself. I feel like a broken record, but it's got to be asked. If that's the case, why has this stock done nothing for 4 months?
Look, I think right now, I mean, the street's this glass half empty view. You look at these numbers, these are Michael Jordan-like. I mean, in terms of the beat that you saw in data center, the $78 billion for next quarter, I mean, that's almost, call it 500 to 700 bips above street. Look, I think, you hit it. Right now, everyone's focused on the losers, how AI is going to hurt. The reality is that it's all about CapEx numbers and data center demand. What you saw from NVIDIA, the AI bubble essentially gets thrown out the window. And look, I think this is a stock that's ultimately like up 3 to 5% today. And in my opinion, like $300, as we talk about, that's probably base case to where this ultimately goes. I think we're just in one of those narratives, you follow the numbers, superstar performance.
And yet, Dan, you follow the market response too. And the market's telling you that much of what you're saying is well understood and well priced. And now we're starting to get our hands around what the transition is going to look like to Rubin from here, starting to understand potential constraints, maybe even deceleration in CapEx from here. Dan, what's your response to all of those things?
Yeah, my response would be, if you look at physical AI today, it's less than 3% of revenues for NVIDIA. And I could argue that's probably going to be 15 to 20% when you look at the next few years. That's not factored in. I think the street continues. If you think about over the last few years in NVIDIA, they underestimate what the demand is going to look like. And when you look at the trillions of dollars of spending over the next few years, there's one chip in the world fueling it, but it's the derivative impacts. I think Jensen hit on in terms of the software doomsday trade right now. I call it an AI ghost trade. I mean, software is going to play a huge role in terms of the use cases, and that's another ripple effect in terms of the AI.
Dan, the fact that they had 75% margins, to me, indicates they can charge whatever they want, that the demand is so great that they can raise prices significantly more than their input costs. And I just wonder, where is the competitive moat around that, right? I mean, how much better are their chips right now that allow them to charge whatever they want at a time where AMD's trying to come after them, Broadcom's trying to fashion chips for Microsoft and Google and all the others in order to compete with them?
Yeah, at least right now it's their world. Everyone else is paying rent. And I think I'd say they're probably 3 to 4 years ahead of any competitor. Look, they're a third-rate chip, an H200 restricted in China, even though obviously no revenues. That's better than Huawei, probably by a year or two. Now, look, obviously competition is going to continue to increase over time. Big tech will build their own chips, but right now demand and supply is 12 to 1 for NVIDIA chips. And that's why when you look at those margins, you look at numbers, I mean, the fact that this is a stock that's under 200 relative to where I think ultimate earnings is going to play out. Now, I continue to view it as a table pounder name, despite obviously a muted reaction, at least initially.
Well, Dan, how much do you see actually some competition being posed from the others? AMD got a lot of attention this week due to their arrangement with Meta. I just wonder, given how much they have raised prices and given the fact that not everybody needs a Michael Jordan, some people just need an average college coach or even a high school coach to help them get to the next phase of technology. I mean, where do you see some of the pull coming from in terms of competitors?
Yeah, look, and if NVIDIA is the Jordan, like AMD could be the Scottie Pippen, right? I mean, the point is like AMD is going to play a huge role. Micron's going to play a role. You look down like in terms of TSMC and just the whole derivatives on the supply chain. Look, obviously Intel is trying to get into the game, but just the reality is that NVIDIA is so far ahead. But you think about the spillover, Meta can't get enough chips for NVIDIA. They're going to have to go to AMD. And that's why AMD is one of our, the IVES AI third, and it's a core winner in terms of everything Lisa Su is doing. It speaks to just this overall market opportunity. You're going to have trillions of dollars spent, and also for every dollar spent on NVIDIA chips or even overall CapEx, $8 to $10 multiplier across the rest of tech. That speaks to what I view as on software and infrastructure. Street is massively mispricing the ripple effects that's going to happen here.
At risk of totally derailing the conversation and pulling a TK, everyone wants to know who Dennis Rodman is. No? Dan, who's Dennis Rodman of the chip world?
I mean, look, I think if you had to do Dennis Rodman here, that'd probably be the Palantir.
Yeah.
If I kind of had to put that in there to maybe go into that narrative.
That's a good response. I think they might like that too.
I'm impressed on the spot with that. And maybe the Steve Kerr would be the Microsoft.
There we go. Something sensible. That makes sense. Dan, let's talk about another name, Salesforce. You've got an outperform rating on the name, 325 price target. That name is really, really struggling. Why are you sticking with it? We're at 184 and we're down 3% of the pre-market.
It's because it's my view. It goes back to, I think, the most disconnected narrative in tech that I've seen in my career is the software doomsday narrative. Salesforce, look, have they struggled in terms of monetizing AI? Yeah, and I think Benioff would admit that. But they will be a winner over the next 12, 18, 24 months in AI. And it speaks to my view, like, call it 2-3% of revenue today. That's call it AI impacted. That's going to be 25% by next year. And I think they're laying out with Agentforce the narrative. They're starting to monetize. And I just look at the stock relative to free cash flow. I mean, I view this as kind of a 10% downside. I ultimately think could be a double in terms of the upside. And that's why that risk reward, I view it as a table pound here. I get right now New York City cab drivers bearish in Salesforce, bearish in ServiceNow. But this will be viewed as the time to own these software names, and that continues to be our view and our thesis.
We'll see if that's the case, no doubt. We'll catch up in a month, and we'll see where the prices have taken us. Dan, it's good to see you. Dan Oates there of Wedbush. Salesforce down at the pre-market, NVIDIA struggling to rally. A lot of these things, we understand the bull case, and yet here we are with fantastic numbers behind us, and we're not getting that rally in the name.
Yeah, we're getting just a marginal rally because there just still are so many questions. I will just say, commentary from the audience, thank you for this. Going down a dangerous basketball analogy road, abort. So I think that I will stand clear of talking about Dennis Rodman, but I thought that was actually pretty
What
funny.
kind of trouble do they think you're going to get in?
Embarrassing myself.
Oh, okay.
Like horribly. The whole touchdown
I would have
thing.
run out of basketball player names after that. Anyway.
I was about to say,
I want to know who
Once you
Huawei
get
is.
through like the 90s Bulls, I've not got much left.
That's
So then go to Kobe and LeBron and then kind of stop there.
Yeah, well, I'm not going to try.
A few others.
I'm going to take your advice. Thank you.
As well. I'll take that advice too. Next on the program, terrible product, the NBA, right now.
Oh my God. Of course we went back there. Come
okay.
on.
Living Technologies President and CEO. Kate Johnson joins us next.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Haslida Amin in Davos, Switzerland, and this is Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
How did I forget Allen Iverson? Fantastic player.
I thought you said that we were going to stop
That's
this.
when the product was good.
Oh, really? So you're still going to go back to that?
That's when the product was good.
You want to go back there?
Now the product is not very good.
Why is it not good, John?
It's a tedious thing to watch, I find.
It's fun in person.
The players aren't as good. And LeBron, and I'm going to get stick for this, LeBron throws himself on the floor all the time. And given that he's like the guy, the franchise guy right now for the NBA, not what Jordan was.
Slippery slope, though, when you talk about
probably going to get a lot
football,
of hate.
and when you get football and some of the people in terms of, oh my God, my left arm.
Sure.
You know,
but
women
these guys are
don't do
like
that.
7'4" and 250 pounds.
Okay, fair. This is not. I abort. I'm going to just abort right now.
We can do that later. Okay.
And they're the world champions, Jonathan.
All right. Forgive me.
You should know that.
I didn't expect you. I didn't expect you to.
Synchronicity.
I didn't expect you to self intro.
Stories.
I didn't expect you to self intro. We'll do that in a moment. All right. Stand by. More to come. Looking forward to this conversation. Futures right now on the S&P positive by not even 0.1% on the S&P 500. On the Nasdaq, just about unchanged. Some single names out there worth having a look at. Before we get to it, I want to talk about the commodity market. Crude down for 5 sessions, the longest run since August, pulling back even as geopolitical risk stays heightened. WTI is down by another 2%. WTI crude this morning, 64, up double digits on the year so far, but a bit of pushback over the previous 5 days.
Yeah, pushback because today we have diplomatic table happening right now in Geneva. You have the U.S. officials meeting. They had breakfast this morning with the Omani foreign minister, and they're meeting with the Iranian counterparts. Potentially there is an off-ramp to what we've seen in terms of the really insane military hardware right now in the region. And we heard from Signum earlier, and they say they don't think anything in terms of a strike would happen just yet. That may be a few months out.
LaFlop is what I just got. Literally, messages from Bloomberg subscribers. LaFlop instead of LeBron.
Yeah, well,
there you go.
People agree with you.
Bad product. 2 hours away from the cash open. Morning movers with Danny Berger. Hey, Danny.
Hey, John. Yeah, some important ones this morning, and NVIDIA is the one everybody is checking. And I guess it's good that the shares are now moving up. It was this big narrative of a disappointment. But for NVIDIA, I mean, options were pricing a 3% move in either direction. So 1.6% is quite tame. A huge beat for fourth quarter revenue, 70% above expectations. First quarter beats as well. But of course, there's just always kind of like the whisper number with NVIDIA, that people are always expecting more. They did point out, especially for their gaming division, which obviously makes a smaller slice of the pie now, that they are still contending with a memory chip shortage. And that was enough to spur an even bigger move for a different stock this morning. Let's check out what SanDisk is doing, because it is the biggest gainer of the mega cap companies this morning of the S&P 500, up 3.2%. Again, just because of those comments from NVIDIA that there's this memory chip shortage, which we already know about, but that was enough to move SanDisk. Also looking at some breaking news just in the past 30 minutes, Victory Capital coming in with a new bid for asset manager Janus Henderson, $49 a share. They say that this beats out what was already agreed upon for a bid from Treon and General Catalyst. Again, that deal was already agreed upon, but Victory Capital coming out this morning saying we have a superior bid, we're offering more money. Shares are being priced at $53. Perhaps we might have a bidding war in our hands. John.
Danny, thank you. Appreciate the update. More from Danny in the next hour. On our radar this morning, results from NVIDIA. Failing to impress Wall Street, the company facing a critical shortage of memory chips and uncertainty in the Chinese market. The CEO insisting the AI boom is delivering massive profits. Elsewhere, Amazon's full $50 billion OpenAI investment is reportedly on the line. According to the information, the deal hinges on OpenAI going public or reaching human-level intelligence. And finally, the Netflix co-CEO reportedly heading to the White House today. According to Politico, Sarandos will discuss the company's potential acquisition of Warner Brothers. The visit also following pressure from President Trump to fire the Netflix board member, Susan Rice.
This is the speculation we've been hearing. Is this going to be ultimately a question of Larry Ellison versus some of the board members at Netflix, and who is the political preference of this administration? This whole thing makes me uncomfortable because when you start talking about antitrust, how does this play into that? I mean, where does the regulatory overlords think about this in terms of who you say yes to and who you say no to? Is it about antitrust and competitive, or is it about maybe something else?
Who is the regulatory overlord
in
this case? Is it just one man in the White House? Is that what this comes down to?
Potentially, but we don't even know actually if the Netflix CEO is going to be meeting with President Trump. We just know he's going to the White House. Potentially he's going to meet with some staff. But I was thinking about when I heard about he's going to the White House, it comes after President Trump said you got to get rid of the board member, Susan Rice. Remember when Trump said that Intel had to get rid of their CEO? And then all of a sudden they were best friends, and Trump made an equity stake in Intel?
Is he buying Netflix?
You actually don't know what you think you might know the outcome might be. We actually don't know based on what happened in the past.
It's a really good point. The stock is up this morning by 0.75%. No one thinks he's buying Netflix, just to clarify. Let's keep it on tech. NVIDIA CEO Jensen Huang saying $700 billion in AI-driven spending from hyperscalers this year might not be enough. Lumen Technologies staking its claim in the race to develop AI infrastructure. The company announcing a new partnership with Anthropic to build out a fiber network across North America. The Lumen Technologies president and CEO, Kate Johnson, joins us now for more. Kate, good to see you. I should say hello properly this time.
Yeah.
Do you want to start in Lumen Field in Seattle first? So we start there?
I think we covered it.
When did that relationship begin?
The Seahawks and Lumen, maybe 20 years ago. The sponsorship, and it's been quite an evolution. We're excited.
This company's changed a lot. A couple of years ago, summer 24, $1. $1 a stock. What's changed? What have you changed to get from that position to where we are today?
We have changed everything. We've turned around the capital structure through a couple of important transactions, sold $13 billion of private connectivity fabric, sold our fiber to the home business so we could double down on enterprise and double down on digital, reposition the company to become the trusted network for AI, total culture transformation so our people are empowered to actually focus on growth. It's a new day for Lumen.
How painful has the transition been, given that this is new technology that changes all the time and the skills are quite different?
Yeah, so, it's adaptation, right? I mean, it's about acquiring new skills. It's about injecting new skills into the company. It's about reimagining how assets that have been around for a long time provide new value. It's a total refresh. We find it very energizing. AI is very disruptive, but poses a huge opportunity for our growth because it proliferates data, and we move data for a living.
How much easier is it for you to raise money, given the fact that there is this buy-in right now from Wall Street in the build-out of fiber connectivity, the build-out of what is necessary to power the AI hopes and dreams?
Well, honestly, we don't need to raise money. We fully funded the next several years of our transformation with the cash that we've gotten from deal making and from redoing our capital structure. So we're in a great place. I think you'll continue to see us tweak our capital structure, continuing to opportunistically reduce leverage and go after great rates. So, I mean, we're in a great place right now.
When it comes to one of your major customers, partners, Anthropic, are you concerned a little bit about the pushback Anthropic is getting in Washington, D.C.?
So look, Anthropic is a great partner, and they tapped us to be the trusted network for their AI services. So we're super proud of it. We're connecting their data centers, and we're moving at lightning speed with them to help them grow. But the question remains. New tech often raises complex questions. We've seen this movie before with public cloud. And, as that discussion evolves, I think it really points to the fact that we probably need stronger policymaking muscle, stronger governance muscle, and adjudication. So we're watching it quite closely.
Well, what if the DoD actually says they are supply chain risk?
If there's supply chain risk deemed, I mean, we'll obviously, as we always do, comply with the full extent of the law, federal regulations, and contract requirements.
Does it give you pause about establishing a relationship, given that's on the line at the moment?
It doesn't, because no matter what the landscape is at the model level, everybody needs their data to be moved from anywhere to anywhere, quickly, securely, effortlessly, and we're sticking to that, which is several abstraction layers away from the discussion about the model
Things
itself.
are happening really, really quickly, and the numbers, the sums involved are absolutely ginormous. We had an individual sat in your chair, I think maybe a week ago to the day, who turned around and said that this CapEx boom is the biggest bubble he's ever seen, and the constraints are going to come from things like energy. Can you give us the counterpoint to that? Because I'm sure that's something you hear a lot as well.
For sure. So there's a couple of different layers to this problem, right? Whether or not there's a bubble, it's disruption. There are going to be winners and losers. There are going to be value propositions and business models that are changed and incumbents that are threatened. And who wins at the model layer, who wins at the services layer, that's up for debate. What stays constant is the need to move data from anywhere to anywhere, and that's what we do for a living. We also got paid up front for building out all the infrastructure. So we're helping build the supply side of the AI economy, and we were able to take in all of that cash up front, and it'll take several decades. We have more in pipe, so we know there's more coming along. I think on the demand side, it gets really interesting. It's as enterprises start to consume, those services, what does that look like? And I think that's where a lot of the adaptation that we talked about earlier needs to happen.
Aside from some of the bombastic headlines about AI being a bubble and data centers being a bubble, when you talk to people, one of the fears is the data center that isn't near a big city, the data center that's out in the middle of Tennessee, and whether that becomes a stranded asset. You're kind of the answer in terms of connecting all of this. Mm-hmm. How big of a concern is that? I mean, do you think that the connectivity between some of these more remote data centers is feasible over a longer term with a bigger load?
Honestly, we already cover a lot of the remote data centers, and the ones that are being built are looking at all of the constraints, energy, fiber, et cetera. And we're right there in partnership with them as they build those plans. So our coverage is an asset. It gives us an advantage in that marketplace, and we're leaning into it. It's how we're winning so many of these contracts. From an energy scarcity perspective, there's a couple different things. We have a programmable network that allows companies to move data anywhere very quickly in real time. So we are actually energy's best friend, because we can actually pivot workloads to markets where there's more energy available or where the pricing is more favorable.
The Citadel versus Citrini 7. I just want to go to this because it really speaks to what you're talking about. The whole Citadel comment was that the amount of energy that would be required for the kind of productivity and human replacement that Citrini was talking about totally undermines the whole argument, and that we're so far behind it that it just seems absolutely implausible. At that point, just getting a human to do it is much easier. I mean, how big of a constraint is the energy picture right now?
I think right now the problem is that the workloads and data are trapped in markets where there are constraints on energy. But if you look at all of the energy that's available across all the markets in aggregate, there's plenty of energy. So the question is, can you move the processing to where the energy is available? And with a programmable network from Lumen, the answer is yes.
We've explored some of these issues with you before. I'd love some deeper insight on this particular topic. Mm-hmm. The difference between this moment compared to, say, the internet of 30 years ago. Back then, the telecoms weren't the people who made the massive money. The massive money was made at the application layer with some of these big tech firms that came along, like the Amazons, the Metas of this world, that produced the kind of things that took advantage of the infrastructure that was built for them. Is this different with AI?
It's different for a couple of reasons. Number one, there was a huge overbuild at that time, and every project looked like a great project for telecom companies. They were also in the utility mindset where they were charging rents, and it was kind of like, oh, there's going to be this huge traffic boom. We can't wait to get all these orders. This is different because it's not just about pipes. it's not just about bandwidth. It's about the capabilities to connect that bandwidth to the application layer. It's how everything talks to each other. That's the essence of our strategy, is this digital platform actually makes the network programmable, just like compute and storage were made programmable in the world of cloud. We've promoted network to the same level, and now it's become an incredibly valuable asset. Manage your energy, manage your workloads, push your data from anywhere to anywhere, and data applications and people are spread everywhere, so you need that fiber.
The transformation of this company has been amazing to follow. It's great to catch up with you. You're welcome back anytime. It's good to see you.
Thank you so much.
Thanks for dropping by. Thank you. That was Kate Johnson there, the Lumen Technologies President and CEO.
Some real fascinating food for thought, especially with the pushback that we're hearing in terms of stranded assets. Well, they don't become stranded if you have a connector, and that seems to be the solution here.
Let's get you an update on stories elsewhere this morning with your Bloomberg Brief. Yahara drops by for more. Hey, Yahara.
Hi, John. President Donald Trump and Ukrainian President Volodymyr Zelensky holding a call to discuss next steps for peace talks. Negotiators from both countries planning to meet in Geneva today. Sources telling us here at Bloomberg another round of U.S.-led trilateral, including Russia, could take place next week. The president's also preparing to host big tech at the White House next week. The companies, including Amazon, Google, Meta, and Microsoft, will sign a pledge agreeing to supply their own power for AI data centers. Data centers are, of course, facing opposition in communities across the U.S. as people blame rising utility bills on the facility's huge electricity consumption. And Salesforce trading lower in the pre-market, down 2.7%. The company giving a lukewarm outlook for growth in the new fiscal year. Its forecast fueling concerns that the software giants will lose out to new competition in the age of AI. That's your Bloomberg Brief, John.
Hey, Yahara, thank you. Appreciate it. Up next on the program, big techs, big spending.
We struggle a lot with just the absolute dollars that are being thrown into this. There will be giant businesses created, but the amount of capital being thrown at it and the losses that some of these companies are generating is absolutely mind-boggling.
That conversation up next with Matt Brill of Invesco, live from New York City. You're watching Bloomberg TV.
The problem we've got as an industry is when the government's overtaxed, and let's say they tax at 30 or 40% of net gaming revenue, what happens is it starts making it uneconomical for the regulated operators like ourselves. And then the customers land up going to the black market, and the black market don't pay tax, do whatever, and there's no customer, there's no responsible gaming, and the fiscals of these governments don't collect any money. So it's finding a balance between overtaxing and then not regulating. Anything from 15 to 25% of your net gaming revenue paid on tax is probably the right number. And when you start going above that, the metrics start becoming a bit more complicated for lots of the operators.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Stock's just about unchanged. Steady waters here on the S&P 500. Beneath the surface, though, you know it's been vicious. Continues to be. Salesforce down in the pre-market. We'll talk more about that in the next hour. On the Nasdaq, just about unchanged. And the Russell positive by 0.3%. Under surveillance this morning, big techs, big spending.
Trying to predict when these things are going to pop is a fool's game. I do believe that it's people underestimate the long-term aspects of it, but they sure overestimate the near-term aspects. We struggle a lot with just the absolute dollars that are being thrown into this. We think it's very real, though, and there will be giant businesses created, but the amount of capital being thrown at it and the losses that some of these companies are generating is absolutely, mind-boggling.
So here's the latest this morning. The NVIDIA CEO, Jensen Huang, looking to reassure investors that hyperscalers will deliver about $700 billion in capex this year. Matt Brill of Invesco writing, the market continues to brace for more hyperscaler issuance, with two having already come this month, totaling $45 billion combined. Matt joins us now for more. Matt, welcome. You're an expert in this space. I just want to know from your perspective what the risk is of overbuild and allocated to stories that won't work out.
Yeah, that's a great question. And I think, unfortunately or fortunately, we're probably not going to find that out for several years. So over the near term, the risk is more of the technicals and the supply that it's putting on the market. The longer term, we'll have to figure out if there's actually end demand for this. But you heard Jensen Huang last night. He said the compute power demand or the computer demand is just off the charts. Obviously, he's got to say that because he needs his clients to continue buying chips from him. But if these, I think he's telling the truth. And the reality is we're starting to see the expansion at the end user base as well. So the expansion of margins is really picking up, and they're going to keep buying from them. So I think overall this is good, and they're afraid of the risk of missing out here and the risk of falling behind. So they're going to keep spending, and that means they're going to keep borrowing.
We've heard that directly from companies like Alphabet. How impressed have you been, Matt, by their approach to the debt market, their ability to diversify risk across different regions, across different maturities?
Yeah, so it's really three-dimensional what Google or Alphabet's been doing, where they issued all the way from 3 years in the U.S. out to 40 years, and then they issued in sterling, and they issued in Swiss francs as well, and they did the 100-year sterling bond. So basically 3 different currencies and probably something around 8 or 10 different maturities, and all the way spanning from 3 years out to 100. So they're diversifying their sources. I'd say it's pretty incredible what their debt has done. If you look at the 3-year, it's still tighter from where they issued. Their 30-year and 40-year bonds are about flat, but everything else is tighter. So there's still demand as much debt as they've printed. They're still doing well, and that's very contrary to what you've seen from Oracle, where their debt has actually continued to move wider on a little bit of pressure of just the amount of supply that they've done as well.
Matt, how much does this really change the investment grade index, given the fact that we're talking about 40-year Google debt, and we don't understand what role a search engine will be or have in society in 30 years, let alone 5. I just wonder how much you're seeing risk getting built in that isn't properly reflected in spreads.
Well, we're seeing steep curves in tech, and the steeper curves are reflecting the fact that you can probably predict for a few years where things are going to be, but not much further than that. And so you're going to generally believing in the balance sheet, and you're believing in management that they're going to do the right thing longer term. But we don't know from a technology standpoint how quickly things will change. So in the instance of Google, you got somewhere around a 60 to 70 basis point 3s to 40s curve. So it's reasonable. In a name like Oracle, it is greater. It's a bigger curve. It's steeper curve. So I always point out to people, these are liquid bonds. These are multiple billion-dollar bonds. So we need to get paid a steep curve, and then we need it to be liquid, because if things change, we're going to need to sell it. And I think that is key, because you can lock up capital in this market very quickly. There's a lot of private debt deals that are going on. There's a lot of illiquid deals that go on. And I'm less interested in those for the long term, because these things can change, and I need to be liquid and be able to get out of them.
You're talking about a potential $400 billion of issuance for investment-grade corporate debt in the United States this year. That's up about a fifth more than what we saw last year. I mean, at what point would that be concerning? Where is the money coming from? Is it just in cash? Is it coming from overseas? Is it coming away from Treasury issuance?
It's a little bit of everything. We've been hoping that the money would come out of T-bills and cash, and that the T-bill and chill trade would go away, but it's been pretty tough to break that. But it is generally been coming from annuities and pension plans. You just had the holiday over in China for a little bit there, and so in that regard, that took away a little bit of demand for a week or so. But for the most part, you're seeing the yield-based buyers stepping in, and I have some concerns that if you break below 4% on the 10-year Treasury, that's going to start to dry up a little bit of that demand. So we need the yields to stay elevated. We've been in this zip code for a while where yields are elevated, but spreads are tight. If that were to change and companies still continue to issue at this pace, I do think credit spreads would have to go wider.
Matt, just finally on the pockets of stress we're seeing in private markets at the moment, we're seeing some companies having conversations about redemptions, questions being asked about their ability to meet them. When you start to see signs of that starting to emerge, is there a risk the more liquid, higher quality assets have to be sold because some of these companies that have got exposure in those places where they can't sell need to raise some capital?
100%. I mean, at the end of the day, when there's a crisis that hits, you sell what you can, right? So you generally sell your most liquid, and you obviously are going to sell your best quality stuff as well. So we'll see if some of the sales that have gone on, the published sales that have been out in the news, if there's been cherry picking or not. We'll have to find that out. But I do think that does create opportunities for us. The problem is it creates a lot of pressure on the market over the near term. But this is going to be a bond pickers market throughout the year. There's going to be potentially some panic selling. There's going to be some forced selling. Overall, we generally like that. We don't like the path that creates at that time, but it does create opportunities for us. We're looking at the software space. It does feel a little bit early there now, but software, BDCs could provide a lot of opportunities on the year. We just got to get paid and get a little more comfortable of where the market's going to be headed in the future.
Matt, that's another way of saying you expect more pain. Is that fair?
That is fair, exactly.
Matt Brill of Invesco, thank you, sir. Good to see you. Expecting more pain in those pockets of stress we've seen already.
What's interesting to me is how much public credit markets feel so good about the pain in private markets, because they're saying this is isolated to them. There's going to be pain. We can be on the other side of it, but we're going to benefit. And guess what? We're sitting pretty because we're being responsible. It's their problem.
It's hard to keep that contained, though. Once it comes to the surface, you sell what you can, not what you want. That's when problems start.
Especially if it is fundamental. And this is really the ultimate question. Is this fear for fear itself, or is this something problematic with the business models? And probably it's something in between. And the question is how that shakes out.
The stock story is pretty calm so far this morning at the index level. Once again, the S&P within about 0.5% from all-time highs on the S&P 500. Futures going nowhere to positive, maybe 0.1%. In the next hour of Bloomberg Surveillance, we'll catch up with John Bilton of JP Morgan Asset Management. Looking forward to speaking to Pierre Farragut of New Street Research. On the surface, NVIDIA knocked it out of the park, and yet the stock is not rallying hard. We'll talk about that in just a moment. Plus, Nita Richardson of ADP, another look at the labour market. Jobless claims just around the corner, 34 minutes away. And we'll talk tech more broadly with Tony Wong of T. Rowe Price. The third hour of Bloomberg Surveillance, up next.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the U.S. or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to
any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
We have two crises, two essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked. And we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
Welcome to Bloomberg This Weekend. I'm David Murray.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jemana Bersecci in Davos, Switzerland, and this is Bloomberg.
I'm not sure the market is actually reflecting the strong nominal growth environment.
The mood around technology remains very guarded.
The bar is always very high. It's a tale of two markets almost.
There are incredible things coming out there for AI. It's not going to be quite on the sort of Wall Street timescale.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the third hour of Bloomberg Surveillance starts right now. The price action looks like this. Unchanged on the S&P, on the NASDAQ, likewise on the Russell. Very close to all-time highs. Not encouraged by some fantastic numbers coming out of NVIDIA. We'll talk more about that a little bit later. In the bond market, 10 still very close to 4%, even though the outlook apparently is bright for the U.S. economy. Yields at 4.05% going into this at 8:30 Eastern Time. Another read on the U.S. labor market. Jobless claims are just around the corner.
It's really going to be of increased import given all of the speculation around how much you can see this divergence between the AI hopes and dreams and what we're seeing in the underlying economy. It feels like things are holding in. We saw that really good jobs report in terms of what came out last month. Can we see a continuation of that given some of the layoff announcements, et cetera? Or do we see a reacceleration, which is what a lot of people, at least in the optimistic side, are projecting?
Incredibly important number. This is going to be from the likes of Governor Christopher Waller, who said he's going to really think about where the labor market is and potentially it's going to push back his dot on where he sees the next interest rate cut. Also, you mentioned that Citadel Securities report. Citrini has this doomsday scenario, and Citadel's like, look at all the software jobs there are. There actually are white-collar jobs right now,
And you should look elsewhere. It's not just doom and gloom when it comes to AI and Ed Yardeni's AI derangement trade.
The Fed doves are becoming more balanced. I'm pleased you brought that up. You see that from Governor Chris Waller, much more neutral compared to where he was. Governor Myron, less dovish. I wouldn't call him hawkish, but certainly less dovish. And this from Susan Collins in the last week as well. I think that it's quite likely that it will be appropriate to hold the current range for some time. This is setting us up for a prolonged pause, and that prolonged pause expires when the new guy gets in.
And I wonder how much that story changes next Friday when we get the payrolls report for February. How much do we need to see confirmation of this, given the fact that they see a lot of growth? And to the extent that they are concerned about the AI Armageddon that Citrini was talking about, we heard a couple of different Fed governors, including Lisa Cook, saying even if that were the case, it's unclear what role monetary policy plays in that. So there is a very split decision here, but it does seem like on the margins, and what's getting priced into the market is a lower chance of a rate cut, an increasing number of rate cuts throughout the year.
Lots to get through this hour. We'll be catching up with John Bilton of JP Morgan Asset Management, with stocks struggling to maintain momentum. Pierre Ferragu of New Street Research recapping results from NVIDIA, and Nita Richardson of ADP breaking down the latest labour market data. We'll begin this hour with stocks flat as investors search for clarity in big tech. John Bilton of JP Morgan Asset Management writing, the broader AI ecosystem remains on solid footing. The Mag 7 have derated to their smallest PE premium in 7 years, creating upside potential if adoption accelerates faster than expected. John joins us now for more. John, good morning. Good to see you. Are we suffering from AI derangement syndrome, in the words of Ed Yardeni this morning?
What a great phrase. I think there's an awful lot gets talked about what is basically the fourth wave of technology development that we've seen in the last 50 years. So let's take a step back. What have we seen? We've seen mainframes coming out, potentially disrupting businesses back in 70s and 80s, became embedded in business processes. The economy grew stronger as a result of that automation. E-commerce, you know, obviously we had the dot-com era in the 90s and 2000s. That's now something we just take for granted. Mobile telephony. We spend most of a good amount of our time doom scrolling and, you know, forgetting that actually we do so much on our phones that we didn't think about doing 20 years ago. So the idea that we are in a position where we're overestimating in both directions, both the doomsday scenarios for AI in terms of replacing every job and some of the extreme scenarios, I think we have to calibrate for that. And that's what I think the market is doing right now. It's calibrating to the fact that it's waking up that tech may be the architecture that we need, the broad tech complex benefiting from this wave of AI investment. But it's also an area which has businesses that will be disrupted. And the market's trying to calibrate that. And at the moment, I feel fairly comfortable about looking at technology generally because the market's doing what it should do. It's differentiating between areas that may be disrupted. It may be overreacting in some cases. And it's generally being fairly stable in terms of the overall outlook. Last 5 years, tech has risen about 120%. This year to date, it's down about 2%. Comm services, the other side of tech, up about 60% over 5 years. This year to date, down 1%. This is not tech Armageddon, as some people have been describing it.
Let's stay on valuations. Sure. You mentioned your quote there about the derating we've seen in some of the Mag 7 names. And really, so far, it's been a valuation story, not an earnings-led sell-off.
Exactly.
So let's sit on the derating and why that's happening. CapEx intensity has picked up. The character of these names has changed. Doesn't that warrant a lower multiple?
Well, I think there's a couple of things going on. First and foremost, what we're seeing is we're getting a little bit more internal competition going on within the tech complex. It's no longer, you know, they can do nothing wrong. It's more that actually they're beginning to compete with each other. That's good for the economy longer run because it actually brings price points down. It allows you remove some of that monopoly power. But ultimately what it means is you've got to reprice things. And what I think is going on and bringing the multiple down today is the fact that the forward cash flows are becoming a little bit less certain. They're still good, but they've got a wider band of uncertainty around them. If you have a wider band of uncertainty about your forward cash flows, guess what? You pay a lower multiple. But then let's look at the facts. If we look at the multiples today, they're around 20% above the rest of the index for Mag 7 versus the 493. On average, they're running around about 40% premium. So right now, we're down at the levels that we've not seen since the last market turmoil of Liberation Day. So if you keep going in this way, with the type of earnings growth which has been delivered and shown to be delivered, and is actually being projected forwards, these are going to be a deep value sector pretty quickly.
Which raises a question, have people gone too quickly into Europe, into the Caspy, as John's mentioned several times, into other places that they see as maybe at a discount? Has that sort of discount evaporated, given the gains that we've seen so far this year?
Well, certainly Asia ex-Japan, Asia ex-China have been really on a tear this year. And I think a lot of that is also wrapped up in this tech hardware story because, you know, the need to invest in technology to maintain one's business position is as strong today as it ever was. So the hardware, the energy, the connectivity, et cetera, is still really important. And that money is being spent. So I think that that's got some legs to it. So the idea that, you know, suddenly we've seen a good outperformance of emerging markets, a good outperformance of Europe year to date, you know, I think that's more of a catch-up trade than anything else. And there's more going on than just the tech story. We've got a weakening dollar. We've got investments being made in Europe at a level that we've not seen in a generation. So as a result, there's reasons to think that there's some legs to this catch-up trade. That said, you know, if we look at the markets generally around the globe, the S&P is not down on the year. It's up 1.5%, give or take change. And, you know, we're having all this sort of existential conversations about US stocks when if we compound that up and play it forward, we're looking at a 10 to 12% year for S&P, which is smack bang on the kind of late cycle average in terms of total returns. So for us, diversification around the globe is driven by a number of themes, not least the dollar, not least investment, but frankly, technology is still looking back here at the domestic markets.
You said late cycle, and that's concerning for some people, given the fact that this might be feeling really good if you're in the AI sector and if you're invested in some of these names, but it doesn't feel good if you're responding to the consumer sentiment surveys that are handed out by the University of Michigan and others. And I'm just wondering how you see this late cycle as being different from prior late cycles.
So I think, you know, late cycle economies are an interesting piece. When we look at them, what's actually going on? The economy's kind of running at potential. As long as it doesn't do anything crazy and borrow too much from the future and behave too badly, those late cycles can carry on for a long time. You know, the late cycle from 95 lasted, you know, give or take, sort of coming on for 6 years. We had a very long cycle pre-COVID, around 10 years in duration. So late cycle phases can last a decent amount of time. I think what's interesting today, you know, as we try and calibrate how long a late cycle phase might last, is that we are operating at full employment. We're operating roughly at or slightly above trend growth. So we're pretty much in that place. But we're not seeing massive exuberance taking place, certainly not in terms of primary market activity, deal activity, et cetera. It's beginning to pick up, but we're not seeing it. Household leverage has been reasonably well contained. Yes, it's picked up, but it's not flashing red as things stand. So this could be a decent cycle extension. With regard to the consumer, you know, we've just been through a period of softness in the labour market, a little bit of concern there, but we're just beginning to see that slightly turning the corner in our view. We're starting to see, we saw a good payrolls report, you know, in January. You know, the 4-week rolling average on jobless claims running at 219,000. That's right on cycle lows. And we're just in some of the softer data in some of the surveys. We're seeing things like, you know, jobs easy to find versus hard to get, just beginning to plateau and start to turn up. So we take a more positive view that as this investment's coming into the economy this year, it will find its way to the consumer, and that should extend this cycle a little bit further.
John, you sound very constructive. There was a report yesterday from the FT, really a think piece about the death of the Trump trade and how everyone basically have all this backlash against U.S. markets. Is that really happening?
Well, we're not seeing it. I mean,
it went viral. It seems like potentially it depends on what side of the Atlantic you sit on.
The Trump trade.
Yeah.
We're not seeing a huge selling down of US assets because, quite frankly, if you want exposure to cutting-edge technology, to the largest consumer on the planet, the biggest bond market out there, and the world's reserve currency, you're buying into the US. Now, does that mean that you're not going to be casting your eye on other markets? I think we've got to look at where the marginal euro, pound, yen, Swiss franc, et cetera, goes. Because it's not necessarily going to go as fully into dollar assets as it was before. It's actually finding its way more broadly around the globe. But a bigger part of that, to my mind, is the willingness to see the dollar soften some. Obviously, we think we will still get a little bit more action from the Fed. We think one more rate cut during the course of this year. And we've got a situation where we've got rates going up in other places, such as Japan. So under those circumstances, further dollar weakness could actually be the one part of that sell America trade that takes place. But broadly across the asset complex, Not seeing it.
I think there's a human element to a lot of this that we don't discuss enough. A lot of people internationally that work in this business have been sick and envious of what's been developing in the US for the last 10 years. They've spent a decade of walking into rooms trying to sell UK equities and European stocks and being laughed out the room. And now they feel like they've got this opportunity to talk their book a little bit more. Do you sense that in client meetings at the moment, that there's that home bias, that emotion, that envy of US equities that develops these kind of headlines we've seen?
I think it's a little bit bigger than that. I mean, the US has a massive home bias in terms of if you're an investor based in the US, then you've got everything you need.
That's where the envy comes from. Because they're the individuals that are sending these people out of the room for the last decade. Come into the room and try and sell someone UK equities, and they're sitting here in the United States. They're going to get a 5-minute conversation 10 years ago.
It has been a tough deal because if you look at it, you don't have the same equity culture. If you look at the Eurozone, the equity footprint is roughly half the size of the nominal GDP footprint. In the US, the US stock market is roughly double the size. And that's because you've got a much more equitized culture. So what's causing the problem in terms of something like European equities? Well, we've been through a significant period, over a decade of derating of a massive banking sector. We've got a savings culture which is a lot more focused towards fixed income assets. It's been governed by rules which have made it harder to buy equities. So trying to then go a layer further and sell those outside of the region becomes a harder thing to do. But I would say that we get more and more conversations, both internally and externally, about diversifying portfolios, thinking, okay, if this technology trade, which we started with, is moving along as prior technology cycles have done, from the adoption phase to the deployment phase where everybody benefits from it, then surely we need more diversification away from technology. And if I can get that diversification cheaply internationally, especially if the dollar's under some pressure, sure, I'm interested again.
It's happening. John, thank you, sir. Appreciate your time. John Bilton of JP Morgan Asset Management. This from Deutsche Bank's Tim Baker. US underperformance is now clear on a 1-year time frame, perhaps long enough for foreign investors to reconsider their allocation. Stories changed. I remember when I first moved here, and an individual, I won't name them, came into the room because I felt offended at the time, turned around and said, Europe's good for holidays, for vacations, and not for investing. And that was true for the next decade or so. I think the Europeans have an emotional response to that that's built up over the last 10 years or so. And the moment you get a slight bit of outperformance internationally, they're like, it's our time, it's my time. There is an emotional element to this story that I don't think we spend enough time talking about.
There is. At the same time, people are looking for diversification. It's partly because of the dollar story. How much that changes if the dollar weakening stops, I think is going to be a big deal.
And also the food when it comes to Europe. But going back to all of this, John offers this constructive view where when the Financial Times is talking about how it's actually investors trying to avoid not just U.S. markets, they call it Donald Trump's market. And it feels very politicized.
Absolutely. The Trump derangement syndrome is pervasive in European conversations. The headlines sell America. It's not in the data. You don't see it in the data. We've talked about it a million times. The more recent data, you don't see it at all, and the stock market is still close to all-time highs. There's a difference between less buying and selling. And maybe what you see more recently is less buying because of the action of fireworks elsewhere.
And there's a difference between emotion and needing to have a bottom line that actually does cater to investors, and I think that that's also playing out.
Let's get you an update on stories elsewhere. We'll move on. Your Bloomberg Brief with Yahara Arnott. Hey, Yahara.
Hi, John. Netflix co-CEO Ted Sarandos is heading to the White House. Politico reporting he's planning to discuss the company's potential acquisition of Warner Brothers. The talks are expected to highlight the regulatory and political hurdles facing the deal. The visit also coming amid pressure from President Trump, who is demanding the removal of Netflix board member Susan Rice. German Chancellor Friedrich Merz says he will push ahead with a new effort to strengthen ties with China. During a meeting with Chinese President Xi, Merz also acknowledged challenges, saying high capacities in China far exceed demand. His government has committed to reduce dependence on America by expanding existing partnerships. And Stellantis shares now edging higher in the pre-market after reporting its first ever annual loss. The Jeep maker scaling back an electric vehicle push, triggering a wave of impairments and charges. The company is also weighing using EV technology from its Chinese partner Leapmotor to help lower costs across its mass market European brands. That's your Bloomberg Brief, John.
Yahara, thank you. I feel bad. I love the food. It's fantastic.
You feel bad about the food where?
I love the Europeans.
The continental Europe. Maybe not so much the United Kingdom.
Don't love European bureaucracy, but the Europeans. Up next on the program, the Morning Calls, plus Pierre Farragut of New Street Research, recapping results from NVIDIA. That conversation up next. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk. You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Right now, everyone's focused on the losers, how AI is going to hurt. The reality is that it's all about CapEx numbers and data center demand. What you saw from NVIDIA, the AI bubble essentially gets thrown out the window. And look, I think this is a stock that's ultimately like up 3 to 5% today.
That was Dan Ives of Wedbush on NVIDIA. More on that name in just a moment. Futures just about positive by 1/10% on the S&P. On the NASDAQ, just about unchanged. That's the price action. Here's some morning calls. That one name in focus. First up, Citi, raising its price target on NVIDIA, highlighting exponential agentic AI demand. Your second call from Bernstein, raising its target, noting continued Blackwell momentum. And finally, JP Morgan raising its price target on the chipmaker, calling lingering growth concerns, quote, overblown. Let's stick with NVIDIA. A blowout earnings report, failing to impress Wall Street. Ed Ludlow joins us now for reaction. Ed, your thoughts?
Yeah, high bar for the buy side as well, right? In the current period, sales will be $78 billion, plus or minus 2%, but that does not reflect any revenues from China and China data center. They disclosed in a regulatory filing that the US has given them limited licenses to do that, but of course they can't control China, so they don't know if China's going to let them ship H200s. That's the frank reality of it. To your last few points, Jensen Huang was asked very clearly, do you look at the capital expenditures guidance of the hyperscalers and expect it to grow from here on a multi-year basis? And his answer was, what we expect is that their cash flows will improve. Because right now, what they're trying to do is evidence the durability of what's happening. He talked about the present economics of AI and profitable tokens. In other words, to NVIDIA's mind, models are now giving output that customers are willing to pay for, and pay for at a level that is higher than the cost of running them, the compute, and that is NVIDIA's whole business model, right? So he tried to give evidence along with CFO Colette Kress that that's happening. Final bit on supply chain and supply. They have multiple quarters of inventory and capacity to meet demand. That gave some confidence, but warnings that there will be some supply chain issues that persist. Other than that, to their mind, again, John, the story is very much intact.
Ed, thank you, sir. The stock is high by 1%. We'll catch up with Ed later, of course, on Bloomberg Technology a few hours from now. Pierre Farago of New Street Research raising its price target on the stock following earnings, writing NVIDIA now trades at a discount. We see very limited risk of disappointment. Pierre joins us now for more. So, Pierre, let's go through this piece by piece, and I'm going through your note here as well. They've got the purchase commitments. They've secured the capacity to meet that growth. If you look at the margins, they're guiding the mid-70s as far as the eye can see. And yet we've derated relative to the semis index. Pierre, what explains that?
Well, what explains that is that the market is wondering whether the earnings power of NVIDIA today is sustainable. Are we at the top of the bubble, and should we expect like earnings to pull back? And then the problem is not on the very low multiple you see today, it's actually the earnings number that is way too high. And our conviction is that given where we stand in the deployment of AI, when we look at who is investing in AI and what the underlying economic model is, we are relatively confident the earnings power of NVIDIA today is really, really sustainable in the long run. There might be a bubble at some point, a correction, like a pullback in something, but we do think the amount that is being spent on AI infrastructure today is going to continue to grow.
Pierre, how much do you see competition as one of the flies in the ointment? I mean, I'm looking at margins. You can talk about how they're in the mid-70s as far as the eye can go. I mean, they're minting money. They can charge whatever they want. At what point does that open the door to the Broadcoms of the world, the AMDs, to really bring some business away from them with offering a lower price point?
Yeah, it's a great question. And I think the door has actually been made wide open by NVIDIA many years ago by just charging prices that reflect like 75% gross margin, give and take. And the door is open and people are getting in. Look at the success of Broadcom. Look at the success of Google deploying their own chip. Who would have guessed that Google would deploy for several tens of billions of dollars a year of their own chip, the TPU? It's absolutely mind-blowing. Who would have guessed that AMD in the last few months has baked in contracts to deploy 12 gigawatts of data center based on their technology? So the door is wide open and competitors are getting in. Now, the chip business is a very high return business because when you sell a chip, you sell an ecosystem, you sell an environment in which your clients have to invest a lot, and you sell a technology that is evolving very, very rapidly thanks to Moore's law, thanks to design innovation, that actually drives very, very high returns. So competitors are coming in, instead of doing 75% gross margin, they do 60% gross margin, so they can thank NVIDIA for that. But they are not putting enough, like-for-like pressure on an NVIDIA for NVIDIA to feel material pain on their gross margin. So I think in the long run, gross margin will probably erode over time as the bill of material of the chips keep going up very, very, very fast. It's going to be an arbitrage for NVIDIA to give away a few points of gross margin very slowly over time to protect, to maximize, the demand potential. But like the competitive risk of I have to lower my price or I'm going to be displaced, that's not something we've seen in that industry. Like these very high-end, high value-added chips have very defensible pricing power in a very, very sustainable way.
Yeah, thanks for jumping on for us. Pierre Ferragut there of New Street Research. That name this morning is higher by 1%. There are some doubts. We have seen a D-rating. Pierre, going through some of the reasons.
Yeah, in fact, you are going to see some competitive pressure really come in. Nonetheless, the ecosystem is rife for money to keep pouring in, and it's not exactly as if anyone's crying over the fact that they're increasing their revenues and their profits. Just unbelievable type of sales increases. I was looking at the balance sheet this morning, and it's just, $100 billion of cash flowing in. I mean, these numbers are just made up.
The opportunities and the progress that's been made, and you heard Pierre talk about the technological progress and how rapid it is at the moment. The efficiencies, as these chips become more efficient, the pressure on people to upgrade as we reach energy constraints, it's going to be absolutely massive.
Yeah, and this is a reason why people say that the CapEx cycles are only going to accelerate after already doubling and tripling over the past couple of years.
Up next on the programme, we'll get you the latest jobs data. Jobless claims just around the corner. Some reaction from Nina Richardson of ADP from New York City. This is Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good question.
Great question. I so appreciate that question.
You said they ask interesting questions.
Bloomberg Television. Top experts, great questions.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on.
I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Struggling to add to 2 days of gains on the S&P 500, firmer here by around 0.1% on the S&P, up by 0.06 on the Nasdaq. You know, a year ago, if Nvidia put up numbers like that, the Nasdaq would be up 2-3%, Nvidia would be up by 5 to 10, and here we are this morning, up by what? Single digits?
Yeah, buying up the shares of psychiatry bills because we all have evidently AI derangement syndrome, and that seems to be the story.
Great phrase, isn't it?
2026. Ed Yardeni, thank you. That was a gift this morning.
It's a play on Trump derangement syndrome. Thought it was fantastic. Ed Yardeni earlier on this morning. In the bond market right now, yields lower by a basis point on a 2-year, 346. The data just crossing. Mike McKee has more. Morning, Mike.
Good morning, John. We've got jobless claims derangement syndrome this morning. 212,000. That's up a little bit from 208,000, a revised number from last week, but it is still a very low number. Continuing claims, 1,833,000, down from 1,864,000 the prior week, and of course those are week delayed. The number of claims on unadjusted basis did not change all that much. So at this point, it looks like what we're seeing is continued low fire, low higher. And that's what all the Fed people are talking about, and doesn't seem to be any indication that we're moving on from that. And we're finally getting to the point now where you're past all the holiday distortions. So you're getting kind of a clean read, more or less, on all of this, although there was a New York schools were out, and that kind of feeds into this time of year data.
I think we're all just losing our minds, Mike. Don't worry about it. It's the longest first quarter in the history of financial markets, and we're not even 2/3 through. Almost.
Fake news. It's almost over.
Almost
Welcome to
there.
December.
Doesn't it feel that way?
I mean, it does. It's partly because the narratives are shifting so quickly and keeping track of everything. I mean, it's exhausting. You can kind of feel it for everyone coming in. They're all like, yeah, it's like this, and this, and this. Like, can I go home now?
That's what it feels like.
I know, maybe I'm just
It's got all that noise beneath the surface and at the index level still within 1% from record highs.
And it's stories. It's not fact. There's nothing you can dig into and get excited about. I mean, you get these earnings, they come out, they're great. Yeah. And then what you got is just not exactly coherent with that. It's very frustrating.
Well, Citrina Research put out that report, and I'm reading it Sunday evening. And I sent a message to the author and said, this is really thoughtful stuff. I thought it was really interesting, just to stretch your mind a bit about the future, whether you believe any of that stuff's going to happen or not, just to stretch your brain and think about where things might go, might not go in the next year, 10 years, whatever. I was so shocked to see the move on Monday across several sectors, and people attribute those moves to just that piece.
The faster things move, the more exhausted we all get trying to keep track of it, because right now, if markets are a forward pricing mechanism and you think that technology is moving that quickly, you have to start thinking science fiction, which is the reason why Citrini was a great thought exercise but seemed more probable. It also fed into the sentiment that people feel, trying to look at the jobs picture and saying, why isn't it getting better? Why is it not looking more robust, given the fact that we have all this growth? Oh, maybe it's because of AI, and that leads us to Ed Yardeni.
But it's not getting worse.
It's not getting worse, and that's, I think, the big story.
Is that the good news? Is that the news from this data this morning, that it's not getting worse? And is that enough for this Federal Reserve?
Well, enough for them to remain on hold, yes, and that's the reason why people have priced out a lot of rate cuts this year.
Mike McKee there, breaking down the jobs numbers. Low higher, low fire, and you see that in the claims numbers, and we've seen it now for several months. Low fire, you see that in claims, initial claims. Low hire, you see that in continuing claims. If you don't have a job right now, it is very difficult to find one still, and you're seeing that in the data repeatedly. Nita Richardson of ADP joins us now for more to break this down. Nita, welcome to the program. What are we learning about the labor market from the incoming information?
Well, good morning, John. And I can validate that at least for the ADP private sector data, it's not getting worse. We actually put out a weekly index, and you can see that on your Bloomberg terminal for those in your audience that have it, in which we look at the 4-week moving average as of February 7th. And the numbers are tracking about 51,000 private sector jobs right now for the month. I think we do need to put that number, though, in context. What I think is that the stability is masking some fragility in the labor market. It's a labor market defined more by its inactivity than its vigor. We're seeing the job openings come predominantly from one sector, namely healthcare. And so while it's a super stable market, it's one that seems to be very fragile because all the gains are lopsided.
Nita, how unusual is it for it to be this steady for this long? I've heard the phrase frozen being thrown around, that it's a frozen labor market, but I've heard that phrase now for more than 12 months, maybe 2 years. How unusual is this?
Let me put a number on it for you, Jonathan. This is the first time, or actually this is the lowest level of January turnover we've seen in 9 years that we've been tracking. So it's very unusual. It's very unusual to see the kind of caution we've seen from employers. And it's not just real-time cyclical data. That's the issue for the Fed. It is still the long-lived shadow of the pandemic, which taught firms to be cautious both in how they hire and how they let go, because those swings, those massive swings of pandemic recovery and the Great Resignation, trying to hire people in mass, were really problematic for firms, very costly, and you're still seeing those ramifications. And on the employee side, you're also seeing the ramifications of getting higher salaries, higher benefits, better working conditions during the Great Resignation. So we're still feeling those effects that are from the pandemic.
Can we break out of this, Neela, given the overhang that we currently have of AI derangement syndrome?
Yeah. So here's my hypothesis, and I think we have the data at ADP to study this. We do have this very placid labor market. Back where I'm from in the Midwest, we say still waters run deep. And so you are seeing this mask of stability. But underneath that mask is a lot of churn. While external labor markets are frozen, internal labor markets within companies are extremely dynamic. You can't bring people in, or if you're not bringing people in, that means internally you have to fill those spots. You have to repurpose your talent. You have to promote. You have to fill in retired workers. You have to skill up the workforce. And I think that's where all the action is inside the firm instead of outside the firm. And that's going to have implications, going back to AI, of how companies really change in the face of these technological advances if they're not hiring external talent.
Do you think that there's any catalyst in the next couple of months that could potentially push us out of this low hire, low fire zone? I mean, this idea that maybe we could see employment pick up the way that John Bilton was mentioning.
Yeah, absolutely. I mean, what's really driving the labor market right now is consumer spending. It's like hiring is bending to the spending, right? And this is not my line, by the way. Consumer spending is driving healthcare job hiring. It's driving leisure and hospitality hiring. But if we were in a new world where investment, not just AI investment, but investment writ large was driving the hiring, then that's when we would see more broad-based gains. When those technological advances came from not just the models, but the applications, where new tasks, new occupations were being redefined, that's when we would see some job gains. Right now, we're not seeing that, but that doesn't mean that this economy isn't quickly accumulating the potential for that widespread growth.
What you're talking about basically is the AI CapEx, basically meaning the actual build out happens. Construction workers, manufacturing workers. Is that potentially in the cards for this year?
It would be a struggle. And the reason isn't on the demand side, it's on the supply side. You need that talent. And what we're seeing at ADP is that talent is actually aging out of the workforce. So the very skills that you need to deploy that infrastructure is quickly exiting. And so this is where the rubber hits the road. We need both supply of those specialized skills, even as we see the demand for them. And right now, the supply isn't coming on fast enough.
So basically, not only is the market frozen, but the labor supply isn't there. Is it just construction and manufacturing? Or, you know, Ed Yardeni was talking about software engineers. This was in the Citadel report as well, that when it looks like job postings, FEM, are up 11% year over year.
You know, we are heading, especially in those tech fields, into a more specialized software development space. So the AI, the machine learning specialists, those are in high demand. You can see that at ADP in the wage increases, even relative to other digital or software development tech jobs. So yeah, there's a high demand for those roles, and there's just not enough people to fill them. So this goes back to the overall idea of stability. We don't have micro stability. We have macro stability. On the micro side, on the granular side, we have huge pockets of supply-demand mismatch. And that is what's, I think, hamping and cramping the labor market from pushing forward.
Neela, good to see you. Interesting conversation. We appreciate your time. Neela Richardson there of ADP. Tons of data points in that conversation. Number one, at least for me, the lowest January turnover we've seen in 9 years, was it?
Yeah.
Kind of speaks to the moment we're in.
And it speaks to the reason why we're not seeing more wage growth and the reason why we're not necessarily seeing anything in terms of a change in this low hire, low fire dynamic. What's going to ultimately change is, this is why this is such a frustrating moment, right? We're talking about this rapid change. We're talking about dreams. We're talking about stories. Then you look at the data, it's really not that interesting. It's just sort of showing stasis. And so you're trying to sort of superimpose all of these big ideas onto data that's very inconclusive and not really doing as much as you'd think it would be.
Equities supposedly are an anticipatory asset class, and they're trying to work out the future. And right now it's difficult.
Yeah, good luck. I think that's what we're all reeling with right now.
Do you want some job guesses?
Please.
Okay, 60K is the estimate for next week. That's the median. A week tomorrow in the payrolls report. We've got 7 guesses so far in a Bloomberg survey. The range is pretty wide. 104 at the top end, 35K at the low end. Saw an improvement at the start of the year. You want to see that continue. And a lot of the calls at the Federal Reserve in their next meeting are going to hinge on this meeting. And of course, particularly from the doves on the committee, for the likes of Governor Chris Waller, for Governor Myron. Governor Waller's become a lot more neutral compared to where he was off the back of some better economic data. It is payrolls, it's also the ISM. You want to see a little bit more of that, and then we can't start to really establish a prolonged pause with the doves on board as well, going into the middle of the year.
Chris Waller was the one who was talking about labor market carnage and the weakness, and that he said it would be a coin flip whether or not he would vote to cut rates at the March meeting. And ultimately, it does hinge on that employment report. Does it confirm the strength that we saw in January payrolls?
That jobs report a week tomorrow. Let's get you an update on stories elsewhere this morning with your Bloomberg brief. Yahira has more. Hey, Yahira.
Hi, John. Recapping the data we just got, jobless claims coming in at 212,000 for last week. That's lower than estimates of 216,000 and up from the prior week. Continuing claims falling, coming in at 1.83 million, slightly below consensus. Former Secretary of State Hillary Clinton is set to testify before members of the GOP-led House Oversight Committee today as part of its investigation into the late sex offender Jeffrey Epstein. The closed-door interview will be videotaped. The committee is scheduled to question former President Bill Clinton, her husband, tomorrow. And nuclear talks between the U.S. and Iran are set to reconvene later today. According to Iranian state TV, diplomats from both sides will continue negotiations in Geneva in just a few hours. This marks the third round of talks between the two sides, with just days until President Donald Trump's deadline to use military action. That's your Bloomberg Brief, John.
Hey, Yahara, appreciate the update. Thanks for this morning. Up next on the program, Tony Wong of T. Rowe Price, breaking down the latest earnings from NVIDIA and what he's seeing more broadly in the tech space. Plus, Danny has your morning movers. Janice Henderson surging on a Victory Capital takeover bid. That name is up by close to 6%. From New York City, you're watching Bloomberg TV.
Have you ever thought about, or would you make a movie for a streaming service? Would you make a Netflix movie?
Man, that's a great question.
I mean, I'm waiting for one where I ask and you go, that was a shitty question.
Yeah. I mean, you know, you good at your job, bro. Like, it's just actually the first time anybody's ever asked me that. You know, I'm not here to say what I would and wouldn't do in the future. You know, but the theatrical experience is one that means a great deal to me. It means a great deal to us. I feel a certain responsibility. Like if Fruitville had happened a calendar year later, it probably would have come out on streaming. You know, I've been fortunate enough that everything that I've written and directed has been a theatrical release. So I feel a duty to try to protect that. You know, but that's where I'm at today.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
The market cap of NVIDIA hasn't really changed very much over the past 6 months. And meanwhile, we've just seen massive multiple expansion, massive changes in terms of the size of pretty much every other company on the planet. The markets are really not all that impressed by NVIDIA. Pretty remarkable to us, given the strength of the earnings, the margins, the revenues there.
And so on, and so on. And yet, we're not seeing a massive rally. That was Emily Rodard of John Hancock. Right now, equity futures just about positive by 0.1% on the S&P 500. On the NASDAQ, a similar move. Some
Too much, but I do just at least want to kick off showing us what NVIDIA is doing this morning. You mentioned not a huge move. It's now up less than 1%, even though a big beat in the fourth quarter. Full catalyst for $49 a share. This morning, Victory Capital comes out and says, I don't think so. We want to buy you, and we have a better price of $57.04. So we're trading just under that. Who's going to win out? We still are higher by more than 5.5% in Janus Henderson in the pre-market. Finally, we also got an update from Krispy Kreme this morning. It's all about right-sizing their balance sheet and bringing leverage down, and it's something the company said, yes, we will be able to do that. They're ending an agreement with McDonald's, but they're closing a lot of stores, 1,400 stores that are less profitable. Instead, putting standalone counters and high-volume retailers. That strategy seemingly working. It's lost 26% year-to-date. It gains more than 21% in the pre-market, John.
There we go, Danny. Looking forward to the program. Danny and Matt Miller coming up in about 15 minutes' time. Look out for that. As we count you down to the opening bell, let's get to the trading diary for the day and the week ahead. Today, Fed Governor Bowman testifying before the Senate on bank supervision, plus results from Dell and CoreWeave coming after the closing bell. Tomorrow, some PPI data, and into next week, more Fed speak, plus some ISM manufacturing data. The big data point, of course, a week tomorrow. Kind of on snooze now, as far as the schedule is concerned, going into the weekend.
Yeah, it seems like there isn't that much coming out, although what we are going to be getting with the jobs report is going to be key. In terms of the Fed, it feels like people have accepted the fact that the Fed is going to be remaining on hold for the first half this year. So I wonder if some of the Fed officials are kind of screaming into a void. They're used to getting this big reception and having the market respond in mass, and maybe they're refreshed, or maybe they're kind of like, where am I? Come on, pay attention.
Everyone has accepted that, but maybe one person. That's the president.
Yeah, he wants rate cuts. And the reason the conversation's not moving forward is because it can't really. They've established a prolonged pause, and most people are on board with them until there is a change of leadership. And at the moment, as far as the market is concerned, there's still great division as to what Kevin Walsh is going to bring. You speak to people, and they'll say, yeah, 2 cuts, that's what the market's looking for. Back half of the year, new guy wants rate cuts. I don't know. Wait for the testimony. Wait for the hearing. Still not on the calendar.
Yeah, wait for the calendar to actually mark a hearing. Wait for the actual DOJ lawsuit to get resolved. Look, There is a lot of uncertainty here. Right now, people are looking at the economic data and saying this isn't an economy that warrants significant rate cuts.
No, and that's why you had some of the pushback between, more notably, Governor Waller, who is the individual that can actually maybe make the argument to other individuals to join his side. And then, of course, even Steve Myron, to your point, it's not that he's not going to be a dove, but he's a little less dovish.
50 basis points less dovish, right?
Yeah.
But still looking for 100 basis points of cuts this year. Still dovish. That's the Federal Reserve. Let's turn back to our top tech story this morning. The latest earnings from NVIDIA failing to ignite further market gains. Tony Wong manages T. Rowe Price's Science and Technology Fund, which includes most of the Mag 7 in its top 10 holdings. He writes the following: the market doesn't know what to do with this level of growth. It's just thinking this is not sustainable. Tony joins us now for more. Tony, welcome to the program. Do you believe it is sustainable?
Yeah, so I think that what really matters is this other leg of AI that's coming, which is, I think, agentic AI, essentially. And I think you look at the develops around Claude, and when I talk to my software programmers that I know in the ecosystem, they would say it's a dramatic step function improvement in what they could do with their time. Essentially, they let it run for a few hours, and it only costs a couple dollars, and they're seeing tremendous productivity gains. And so, to me, I think you have to really look at like the end driver of what's going on. And I think the market right now just doesn't know what to do with this level of growth and this quantum of growth, and it's just writing off as this is like unsustainable. I think it's why the stock is chopped sideways for a bit. But I think that what really matters in the multi-year is the token flywheel of are the customers seeing significant ROIC, and that gives them more revenue and then more CapEx to spend. So I think that's what really matters over the long term.
You could have probably just stopped it. This market doesn't know what to do. I mean, I wonder, have you ever seen a period of time where the stories that people tell triumph over earnings and forward-looking guidance from the companies themselves?
Yeah, well, I think that a lot of times, the narrative follows the price. And so a lot of times there's justifications, there's stories that people talk about. And at the end of the day, I think what really matters is like the earnings and the sustainability and then people's view on terminal value. So I think that, there's definitely some things that are overhyped, but at the same time, I think we are seeing a big tech inflection in terms of what's going on in AI, and I think it's really driving a new refactoring of how work is done, and I think it's going to make a lot more productivity happen in the economy as a result.
And we're seeing that being priced into a lot of investors trying to pick winners and losers in this new economy. Software companies in particular have gotten really beaten up. Who are the winners going to be if it isn't necessarily a screaming buy of NVIDIA? John was asking, everyone's looking for the losers. Why are people not identifying who the winners are going to be?
Yeah, well, I think that, the memory, like compute bottlenecks, optics, I mean, you see like those are becoming like significant winners in the market recently, especially. And so I think that there are definitely winners that are going to be the fuel for these. I think that there's been, still strong signals from both companies that they're really important partners to each other. And, Jensen has talked about, OpenAI being a very consequential company and his interest in investing. So to me, I think there's a little bit of drama.
But Tony, it went from 100 to 30 billion. It's a big gap.
Yeah, well, I mean, I think that, at the same time, I think the quantum is still alive, and OpenAI's got, plenty of backers at the same time. So, I think you'd have to ask Jensen for that comment. But to me, there's still a lot of confidence in terms of what they're doing.
And no doubt someone in the team will ask him. Tony, just a final question from me. You're a PM. These names have served you really well, but the gains you're seeing abroad are absolutely ginormous, particularly the two names that are seeing a rip-roaring rally in South Korea on the Kospi, up by close to 50% year to date. How are you managing that story at the moment, Tony? Are they names that are in the portfolio? If they are you going to stay with the ride? Can you just tell us what's been going on?
Yeah, so I think there's a big compute bottleneck that is capturing a lot of economic value. And so, we have holdings in Samsung and SK Hynix. And so to me, what's going on in memory is pretty awesome. And they have this new kind of compute TAM that keeps growing. And so to me, what's going on in DRAM, HBM, as well as I think NAND, they're becoming more strategic. And you look at the content in these AI infrastructure subsystems, they are gaining a lot of share, and it's becoming more important to delivering value.
And you want to stick with it. Tony, it's good to see you. Tony Wong there of T. Rowe Price and some of the names in his portfolio right now. Dan Ives of Wedbush was on the program a little bit earlier. NVIDIA's Michael Jordan, AMD's Scottie Pippen, Palantir was Dennis Rodman. I thought that was great. Microsoft is Steve Kerr.
Is that what he's saying right now? That's hilarious. I will just point out that we found out this morning that Michael Jordan and Jensen Huang have the same birthday, I believe. So
Is
maybe
that
that was
true?
I need to verify it.
Yeah, February 17th.
So that might explain everything.
Is that where it came from, or was that an accident?
I can't
Great
tell you
people
the
are born in
genesis.
February. Mike Bloomberg, February 14th.
Okay, who else?
Oprah Winfrey is
Who
also
else?
born in February.
My father.
Anne Marie Hurd is
There
born
you
in
go.
February.
I knew where this was going. I just wanted to get that.
And my
Okay.
mom is her birthday this week.
She's a great woman. Yes. There we go. Coming up on the program tomorrow, we'll catch up with Steve Orth of Federated, Victoria Fernandez of Crossmark Global Investments, former White House senior advisor Amos Hochstein, and Mark Lehman of Citizens Commercial Bank from New York City this morning. Good morning to you all. Thank you for choosing Bloomberg TV. This was Bloomberg Surveillance.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
AI, some people would say that there's maybe a little bit of a bubble in AI. When you have companies with market caps of $5 trillion, you don't see any bubble there at all?
Whenever we have an acceleration in technology and people get excited about it, you have significant capital formation around new companies that are trying to capitalize on that opportunity. And, you know, we've seen this before through history, and you're seeing it now. It won't be a straight line. The opportunity set with AI is enormous. There will be winners and losers. And it's hard to pick the winners and losers now. And certainly a lot of the capital that's being deployed will not produce adequate returns. And a bunch of the capital that's being deployed will actually not produce any returns. But it's hard, it's hard to call the timing on these things. And the thing I'd point to just from a historical lens is in the fall of 1996, Alan Greenspan talked about irrational exuberance in stock markets, and the NASDAQ was at 1,300. And the NASDAQ peaked 3.5 years later at over 5,000. So, these things can go on for a long time, but ultimately, there are adjustments, there will be drawdowns, there'll be rebalancing, and just, it's hard to call it because the technology trend and the investment is real.
Is back to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure. Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard.
Oh boy.
Can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that. And the speed of the business has never moved faster.
My career might stop, but I'd still be driving some.
Yeah. Probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
It is Thirsty Thursday, 30 minutes until the start of trading. I'm losing my voice. I'm Matt Miller.
We'll take it from here. I'm Jenny Berger. Bloomberg Open Interest starts right now.
Coming up, Netflix upbeat forecast fails to win over investors, still questioning the broader impact of AI.
And another private credit warning, Marathon's Bruce Richards says software defaults could hit 15%, but sees no contagion risk.
Plus, a bidding war for Janus Henderson is underway. Victory Capital tops a takeover offer from Nelson Peltz's Trian. I feel fine, actually.
I know. It always happens. Your voice like betrays you and makes you sound.
It's just the way I sound.
Okay, well, why don't you take a little bit of a vocal rest?
Yes.
Let me show the folks at home what NVIDIA is doing or at work. We are not even up 1% at the moment. We're only up, I don't know, less than 0.9%, even though it was a huge beat. More than 70% for the fourth quarter. First quarter outlook looks good too. They boost their guidance for the year. But it just shows there's a lot of anxiety, a lot of conflict on both the impact of AI and just how things are priced right now.
Yeah, definitely one to watch, as it always is. Salesforce, on the other hand, down as its outlook failed to impress. Investors are concerned about the software giant's growth amid growing competition from artificial intelligence. You know the story has been riling the markets for weeks. Salesforce shares down 2.2% in the pre-market.
So let's get more on these stories. CEO Jensen Huang pushing back on concerns around growth sustainability.
I am confident in their cash flow growing. You need compute capacity. And that translates directly to growth, and that translates directly to revenues.
Let's bring in Bloomberg Tech co-host Ed Ludlow. Ed, again, the narrative is a really strong beat, but not enough to get shares higher than more than 1% this morning.
Yeah, it was a high bar from the buy side going into it as well, which is important to reflect. $78 billion plus or minus 2% does not include or reflect any contribution from data center revenues in China, despite the disclosure that they were granted limited licenses by the US government in the month of February to export H200s. And what NVIDIA was saying is we just don't know if the Chinese government will allow us to do that. The reason I bring that point up is that overhanging all of this is this longer-term projection of $500 billion of revenues just from Blackwell and Rubin systems over 5 fiscal quarters. And what Jensen Huang and indeed CFO Colette Kress outlined on the call was they are tracking ahead of that. And what they had said previously at CES in January was that China may contribute to that. It's not in the near term. And so what they were trying to do is point to evidence that the broader AI ecosystem is very much alive and kicking because they're building on top of NVIDIA's compute. And you're right that the market wanted more.
Ed, what's the problem with Salesforce? I mean, I can't repeat enough how Workday's CEO said that OpenAI and Anthropic still use his software, and Salesforce is much bigger, much more integrated in companies. I mean, it must be much more difficult to live without. Why is their outlook disappointing?
So, yeah, the outlook, $46 billion, is basically completely in line with estimates. And what the story with Salesforce has been is organic growth versus inorganic growth. A lot of the growth that they are seeing, or even if it's perceived as muted, comes from their M&A activity in recent quarters and years. And so the question really is, when is all of this agentic in-house offering going to start paying off? And there was commentary around that they will indeed start to see more organic growth going forward in the era of agentic AI, which, Jensen Huang talked about as well. There was a pretty nice sweetener for shareholders with boosted buybacks, not enough clearly with the stock down, but down 1.7%.
Hey, Ed, thank you very much for that. Ed Ludlow, and catch him at 11 a.m. on Bloomberg Tech, he will be speaking with the CEO of Snowflake. You can also catch Caroline Hyde on Bloomberg Tech, who has been tracking Paramount earnings. They topped estimates as it hopes to take over Warner Brothers Discovery, which also reported earnings. She joins us now. Caroline, I guess it's hard to interpret these earnings because everything could be different with these companies.
I think what was solid and what they're showing is that with integration of Paramount and Skydance, with the new asset that they now own by David Ellison, he is managing to do more with less in terms of profitability. They smashed expectations in terms of how much they're bringing in overall adjusted earnings. So that shows that even though revenue is on the downside, even though they're seeing all the myriad of issues that we continue to see batter cable, whether we see the concerns about what people are doing going in and watching movies, he's still able to steer a ship that even with revenue crimping a bit, we're able to eke out more with every single dollar spent. That's going to be important if they're thinking about whacking on another great big amount of assets. And it's important also when we get the numbers out of Warner Brothers, where we see revenue decline, where we see profits decline, but putting two things together for many will make sense. They have the scale, they won't have to fight each other out in terms of ads. In fact, maybe they can then score more ad revenue coming in for the cable business, which I might add for Paramount, cable's the only bit making any profit, but both are showing growth in terms of subscribers to the streaming. So maybe that will show some resilience. So this was really a way in which they could convince investors that this will be good if we merge these two for Paramount Skydance. And Warner Brothers Discovery is saying, look, we're just going to do our fiduciary duty and what is best for the shareholders in terms of the competing bids. Because Netflix, like, smashes them all in terms of revenue growth and earnings growth.
Actually, I hear often, and just yesterday, a CEO was telling me, for Paramount, Warner Brothers Discovery is a must-have. Like, they need this. And for Netflix, it's a nice-to-have. And clearly the shares in Netflix show that. Can they get this done?
Who, Paramount Skydance?
Yeah.
It's certainly the fact that they've reopened negotiations, the fact that they're only going to give the likes of Netflix 4 days to respond on the upped deal, the fact that overall they've convinced the board, even though it was so combative. Do you remember the state? We stooped so low in terms of the aggression that was being seen. The fact that David Ellison was claiming that Warner Brothers Discovery wasn't taking them seriously, that they were favoring Netflix from the offing. This has been a war of words. The fact that they've now been able to come back to the table, convince them with a $31 per share offer that maybe it's worth reconsidering, I think that shows just the real fierce commitment that David Ellison has.
By the way, do you and Ed hear that too on Bloomberg Tech, that Paramount, that this is make or break, that they have to get Warner Brothers Discovery?
I think that there's more onus and there's more fight coming from the Ellison clan is what we're hearing time and time again. What's interesting on the flip side is, yes, look, we're about to have Laura Martin on the show. She has for years been saying consolidation is the only way forward in terms of media assets, because from Netflix's perspective, and what they want to convince everyone of, is that it's not just Netflix versus usual cable, usual subscribing networks and streaming. It's YouTube. It's the big tech, it's Amazon. These are the competitors of the future. You've got to have more cash on hands, and you've got to have an amazing array of content. That's what David Ellison needs right now.
Caroline, thank you so much for bringing us those earnings. Again, Caroline and Ed, catch them 11 a.m. on Bloomberg Tech. Another bidding war on our hands, apparently. Victory Capital offering to buy Janus Henderson for $57 a share, topping Trion's bid by 16%, who was in conjuncture with General Catalyst. Joining us now is Bloomberg Intelligence analyst Kevin Ryan in London. Kevin, this is a really fascinating saga because Victory had before tried to bid for Janus Henderson and before had a higher bid than what the current buyers are offering. So how will this one make a difference? Is $57 enough to wrestle Janus Henderson away?
I just don't know. And have they come too late? Because Janus Henderson seemed happy with Trion and General Catalyst. But what I can say is that the Trion bid is offering 1.5% of assets under management, and Victory are upping that to 1.8%, which I think is quite toppy historically. So 1.5, 1.6 times is the sort of average.
Janus Henderson and Trion, though, have historically worked closely together. I mean, that relationship must mean something.
Yeah, I guess it does. My sense is that if they go with Trion, there'll be another deal to put them together with another asset manager. Because I think what we're seeing here is that Janus Henderson has got just under $500 billion of assets under management. And in the game of running assets now, that's just not quite big enough. And it seems that the starting point is $1 trillion now, which is just extraordinary. But nonetheless, it seems to be the benchmark of being competitive in a market that is being brutal on margins.
Kevin, why is that? What has changed that makes this so necessary and that margins have gotten so compressed?
I think it's the rise and rise of trackers and ETFs.
But Kevin, isn't that an old story? I mean, we've had trackers and ETFs for a while now. Why is the consolidation just taking place?
Because I think certainly active managers like Janus Henderson have been reluctant to say, do you know what, the market's moved on. They don't want active management anymore. They don't want all these people sitting in fancy city offices. So it's taken this amount of time for the penny to drop. But top lines aren't growing. Your costs generally go up, even if you try and keep them flat, at around CPI 2-3%. So this has been relentless over the last decade. And as I say, I think the penny's just beginning to drop with managements, that they just need to be bigger.
Such an interesting saga to follow. Kevin, thank you so much. Kevin Ryan from Bloomberg Intelligence. Let's get a check on your future markets this morning. You are seeing very, very tepid moves. I mean, maybe not moves at all. And maybe that's because NVIDIA isn't moving much. But we did end yesterday just 0.5% away from all-time highs. NASDAQ 100 futures slightly lower. Russell 2000 futures, those outperform up 0.2%. Some of the single stock movers, Matt.
Yeah, let's look at some of those stories. One of them near and dear to my heart. Stellantis swung to a loss in the second half of last year after scaling back its EV push. That cost the company nearly $30 billion in charges. Also hurts earnings per share. Missed estimates, but revenue slightly beat. Nonetheless, the stock being punished in the pre-market, down 4%.
And then there's Trade Desk. Their forecast was weaker than expected. It sees competitions in the ad space from giants like Amazon down nearly 14%. But coming up on the show, we're going to get to the big earnings reaction. It's NVIDIA. Mizuho's Vijay Rakesh, who has an outperform rating on the stock, is going to be joining us next. This is Bloomberg Open Interest.
This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones.
Some good-looking trophies. 1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzone.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets. Take a look at how we're faring when it comes to Asian markets.
Let's get to high interest and look at what's making headlines around the world. The U.S. and Iran have started a third round of nuclear talks in Geneva today as President Trump's March deadline looms. Tehran says it's flexible, but defends its nuclear rights. Meanwhile, new satellite images show Iran preparing and hardening nuclear sites damaged last year, undercutting Trump's claim that the U.S. would easily win a conflict. Oil markets, those remain on edge. Cuba says that its Coast Guard killed 4 armed Cuban Americans after their Florida-registered boat allegedly opened fire while attempting to land. 6 others were detained. Havana claims that the group carried assault rifles and Molotov cocktails. The U.S. is investigating as tensions escalate under President Trump's crackdown on Cuba. Massachusetts Senator Elizabeth Warren is urging regulators to investigate Wall Street executives over their ties to Jeffrey Epstein. In a letter to the Fed, the OCC, and FDIC, she demands public probes and answers by March 12th. In her letter, Warren called out executive J.P. Morgan, Catherine Rumler at Goldman Sachs, and Jess Staley, the former CEO of Barclays. Elsewhere, NVIDIA's upbeat forecast drawing a lukewarm reception from investors. CEO Jensen Huang pushed back on AI concerns. Let's bring in Mizuho Securities analyst Vijay Rakesh, who has an outperform rating on the stock. Vijay, a tepid response from the market. We're only up 0.5% this morning. What was your take on the earnings set?
Yeah, thanks, Danny. So I think NVIDIA overall was a pretty solid, clean beat and guide. I think if you look at the data center revenues, it is accelerating from up 75% last quarter to up 85% the next quarter, year on year. The networking had the strongest quarter in their history, up almost 260% year on year. So massive growth across verticals. If you look at 2026, data center revenues this year will be $340 billion. So you're seeing some massive numbers come through. So, and it's very tough not to own this. They're growing 70% this year, 30% plus next year. Those numbers will probably go up. And the stock is trading at 20 times forward. So it's very hard not to own this thing. And so we think this will continue to move higher.
But everyone
Multiple
does.
Catalysts ahead. Go ahead.
Everyone does own it. I mean, we're talking about a stock that's, what, 10% of the S&P, 8% of the S&P. And, we've been buying it for 3 years now. So maybe the marginal buyer just isn't there for these shares.
Yeah, I think, Matt, that's a good point. I think over the last 2 quarters, we think NVIDIA is probably a little less owned. It is probably a little under-owned in the last 2 quarters, given how the stock has tracked. So I think there's an opportunity to now come back because all the metrics on the data center side, networking side seem to be accelerating. They talked about token generation. That seems to be starting to pick up as well. They talked about the cost per token going down 10x, meaning the cost of inferencing cost per token will be down to a 10th going out. And that will be key for all the hyperscalers to continue spending. So we have seen the stock trade sideways because of some of the hyperscaler capex concerns, but now as the costs start to come down, you're seeing more token generation, more agentic AI, software getting disrupted. You will start to see more money flowing back to these names. There is also significant catalysts ahead from GTC coming up. They're presenting at conferences. There's a huge Rubin launch in the back half of the year. So there's plenty of reasons to step back in.
Costs are coming down, but maybe the competitive dynamic is also changing within that because you have custom chips coming from the hyperscalers. You have emerging technologies and chip makers also trying to come into. Vijay, where does the state of competition stand for NVIDIA?
Absolutely. That's a great point. So I think we do see internally hyperscalers drive some ASIC platforms, custom ASIC platforms. But that's because they can control that ASIC platform internally. They can control the supply. They can control the cost there. But NVIDIA still leads the globe in training and inferencing. They are the golden standard. That's what the ASIC guys are chasing in terms of performance. But it's a very risky trend as well, right? Because NVIDIA on every year, they keep bringing inference costs down, training costs down. So the ASIC hyperscalers have to continuously be on their toes to evolve the ASIC roadmap as well, so that the gap between the GPU and the ASIC does not become too far wide. And so that's always a tricky proposition. But the reason you have these ASIC platforms coming on for the hyperscalers is because they want to control that roadmap. They want to have a lower cost option. But when you look at training inferencing, no alternative to NVIDIA in terms of where they are in the lead. So
I wonder, Rakesh, if they're constrained by, capacity in terms of production, right? They can't sell as much as, we know they are, but maybe that's part of the problem, right? And also, what about competition? AMD seems to be making headway here. Is it a viable competitor, something that could worry shareholders?
Yeah, no, I think in terms of capacity, they have very good line of sight on the capacity. They have obviously a very strong partner with TSMC, and they are adding capacity in Taiwan, in the US, in Japan. So that continues to be, a nice tailwind for them. I think they have pretty good handle on that. In terms of AMD, it's a good competitor, but I think as you look at 2026, AMD's data center revenues are somewhere in the 17, 18 billion-ish, 18 billion plus minus. If you look at NVIDIA's data center revenues this year, 340 billion. So that tells you the math of where these things are going. Plus also, as you look at some of the new RAMs from NVIDIA, the performance in terms of Blackwell being 50 times the prior platform, Rubin driving 10x lower inference costs, and CUDA, right? We cannot forget CUDA because that's a huge software stack that's been a massive moat for them. Continues to drive a big value proposition for NVIDIA. So,
Vijay, when are we going to get management assuming some China data center revenue in their outlook?
That's a great question. I think this 340 billion obviously does not include any China, and China, as Jensen has himself noted, is almost 50 billion a year in incremental data center revenues. So, and that's not even in the guide or at this point in the numbers. So I think we should start to see that pick up in the back half because if anything, China does need the performance and the trading platforms from NVIDIA. So.
Vijay, great to get your take as usual. Really appreciate you joining us. Mitsuo Securities Senior Analyst Vijay Rakesh on NVIDIA. Coming up in the next hour, we'll give you more on the big chip maker with shareholder Brooke May of Evans May Wealth. This is Bloomberg Open Interest.
To Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good question.
Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Check on your futures market going a whole lot of nowhere. We are, though, within 0.5% away from an all-time high. Who knows if we're going to get there? So the S&P, again, at 69.64 for your future session. NASDAQ slightly weaker. Russell 2000, that's doing pretty well, up 0.3%. So at least something is moving in this market. Some of the individual names are moving, too. IonQ surging 15.5%. Growing adoption for its quantum computing technology. And Celsius as well, Matt, having good
Yeah, IonQ, really a name that we know. Celsius,
well put, Matt.
Celsius, it is a $12 billion company. Celsius sales more than doubled from a year earlier following its acquisition of Alani Nu, so that's a big bump there, 16% for Celsius.
Have you ever had one before?
I have not. I had a bad Red Bull experience once in Vienna, and I never tried it again, but...
I don't think I want to know what that is. That sounds crazy, but...
Shonali Bassick used to drink Celsius by the case.
Yeah, well,
maybe she still does.
So I don't drink coffee, but sometimes if I'm really tired, I learned this from Anne-Marie, is have a Celsius, and it is like rocket fuel. It's amazing.
That's why it exists.
Yes.
Memory chip stocks are getting a big boost after NVIDIA's upbeat forecast. Except for Micron.
Yeah, it's kind of ironic that NVIDIA has earnings. It barely moves, but it talks about how its gaming division is challenged because the cost of memory chip stocks. And SanDisk is the one that moves. That's the big beneficiary of NVIDIA earnings.
Yeah. By the way, it's funny to hear gaming division, because when I was a kid, that's what NVIDIA did.
That's all they did.
You know?
Yeah.
It was all about video game graphics processing. We have less than 4 minutes until the opening bell. We're going to kick it off today with Ann Barry, so we're very excited about that. She joins us, I hope you're on set. This is Bloomberg Open Interest.
Estava sitiada.
Isso ao começo eu tremia, não sabia o que fazer.
Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home there, they are suffering, and someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
Trading day is about to start.
And you're already looking for that edge.
The Opening Trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Hazlida Amin in Davos, Switzerland, and this is Bloomberg.
Moments away from the start of trading on this Thursday morning. This is Bloomberg Open Interest. I'm Matt Miller, and I feel fine. I just have lost my voice. We have S&P futures not doing very much right now, swinging back and forth between gains and losses, as Danny said, because NVIDIA really isn't doing much after earnings yesterday. So those earnings not only failing to move NVIDIA shares, but really the market. We expected a big beat to lift the market or a miss to drop it, and none of that's happening. Lumen ringing the opening bell on the New York Stock Exchange. We've interviewed the CEO before. They provide solutions and in essentially telecoms and data centers, and the shares are down 33% over the past 5 years, but they've been, on a bouncy path the last couple of years. Elemental Royal ringing the opening bell down at the NASDAQ.
Well, they're all in ties. I think that's
site.
the first time I've seen NASDAQ men all of them wearing ties.
I don't get the no tie thing.
But I think
really
it's like,
don't
I'm at the
understand
NASDAQ. We're like techie. We don't need ties. We're not as formal.
Right. I mean, Ed Ludlow sometimes tries that. Have you noticed?
He always tries that. I never see Ed Ludlow.
Does he
in a
never
tie.
wear a tie?
Yeah.
How
Do we
do
have
you
him on
come
again
up
in the
with
show?
that?
We need to do that.
I feel like it's part of the dress code for being a television anchor on Bloomberg.
He's an SF. He doesn't need a tie.
Okay.
Anyway, speaking of all things tech, NVIDIA actually negative now. It's down 1%. What a ride for NVIDIA. So first reports earnings, it was falling in the post-market trade. The pre-market trade, it goes up by 1%. Now it's down by 1.2. I'm sure this thing's going to be completely different by the time we close, but it had a huge beat in the last quarter. It boosted its guidance for the year, but it just shows how conflicted investors are and concerned they are, Matt, about AI and its impact on the world's most valuable company.
Yeah, I figured they wouldn't be worried about this part of AI. We all see the CapEx going to these chip makers, and this chip maker specifically is supply constrained. So it's interesting there. Salesforce is one I would understand, even if I don't think it's true that AI is going to eat CRM lunch. They failed to impress with their outlook, I guess. The shares were down in the pre-market. They're up in the cash trade. Investors worried about the growth because of that sales outlook, the competition from AI, if there is any. But I say, I've been saying the past couple of days, if these AI companies, Anthropic and OpenAI, are using Workday software, and I imagine they're probably using some CRM as well, I don't see why we think that a smaller company wouldn't have to.
But the problem is that they're using it for now, that they're so big and they're so sticky, but that doesn't always last, and maybe at some point in the future they won't have to use them. That's what we're pricing in this really uncertain future.
Right, but I'm not sure it's 2 years, as Citrini put it. If it's 10 years out, then I don't know why you would sell the shares now, but.
I mean, we're just pricing in mass uncertainty.
Let's ask someone who does.
Correct.
Threadneedle Ventures founder Ann Berry here with us on set. And what's your take on the Citrini research piece on this sort of dark sci-fi idea that AI is going to replace like most white-collar workers and software like Salesforce or SAP?
So I read it, and they're sort of saying out loud what a lot of people have been fearing and thinking, right? So when you crystallize that, it becomes a moment. So I read it, and I'm getting increasing anxiety about the idea that software, or rather sort of AI, could end up replacing a lot of white-collar work. And here's why I say that. I have now spent an inordinate amount of my own free time, weekends, before and after work, using Claude, for example. And I'm just wowed by how much it can do, and I'm certainly not going to be the most sophisticated user of it. And there are a couple of things I see there. I'm now making recommendations in board meetings that, frankly, we replace certain functions or certain subsets of functions with more aggressively training our workforce on how to use these models and how to use these add-ons. And then the other thing, too, just to the conversation you were just having, you see the ability to plug in Claude to Salesforce or to PowerPoint, for example. This reminds me a little bit of when Google used to place ads on Yahoo, right? everyone is getting exposure to something like Claude's Anthropic now or something like ChatGPT. At what point is all the data getting sucked out to the likes of Anthropic, and then they suddenly have the ability to replace the software that they're partnering with?
Right. Well, what if the software isn't replaced, but it becomes the plumbing, that they still need that data? Surely in that case, it's pretty bad for these companies too, because where do margins go?
Right.
If you're all of a sudden just plumbing and no one cares about your name, they just want you for the data and the customers maybe you already had, that also seems like a reason to sell some of these companies.
Yeah, absolutely. And here's another example. If I were to go, and this is going to be an unpopular thing to say out loud, but I'm going to say it. If I were to go and hire a consultant right now, one of the big brand names, an Accenture, whoever it may be, you bet I'd be saying, why is your pricing X? Why has it not come down versus the last time you pitched me 18 months ago, when I know that your cost of executing against this, given the AI tools you're using, is almost certainly going to be lower.
Can I just ask, with consultants and with CEOs, I know you talk to so many industry leaders, is there even anyone that they can turn to that can tell them what to do with their business? I mean, all of this, I know AI in some form has been around, but it feels like all of this is happening so rapidly. If you're a CEO and you're like, I have no idea what to do, is there even the knowledge out there, the talent out there to help guide companies through a period that basically no one knows what's going to happen?
So the person I had a version of this conversation with is one of my old business school professors, Kareem Lakhani, and he's leading the AI effort at Harvard Business School. And what he said, and again, he sees more leaders coming through asking exactly that question, asking for his counsel, and he says the following: you need to get your hands dirty. You got to go use the tools yourself. If you're going to have any conception of what they are capable of, any intuition for it to make the judgment, so even if a consultant does turn up and give you a recommendation, you can't make a judgment or a decision on what to do with it unless you yourself have exposed your own time and energy into getting into the details of this. So I think there might be people with ideas, but decision makers can only make decisions by having exposure.
All right, so yesterday we were talking with Catherine Borrell-May from Goldman Sachs, and she was saying that she likes companies that are AI-proof.
Yeah.
Like we used to talk about companies that are recession-proof, so
Yeah.
hardware, industrials, and that sort of thing. What do you like out there? What makes you less afraid to buy?
Well, I like those companies. I wouldn't even call them AI-proof. I would call them AI-enhanceable.
Okay.
And I'll give you one example of that. I love industrials too. I run an industrials company. I'm trying to think about the thesis I've invested behind, and I've come and discussed with you over time. And one of them is industrial distribution. What an industry that is ripe for taking AI and improving SKU selection, portfolio management, demand planning, route optimization. And then I say, look, healthcare is not going away, and in fact, demand for it's going up. So Henry Schein's one example. It's not talked about very often. It's not a sexy business, but it's $10 billion of market cap.
Healthcare?
Healthcare distribution, products going out to dental offices, veterinary clinics, doctors' offices. It's not going anywhere. Distributes 33 countries, 140,000 plus deliveries a day. It's a massive business. Can you imagine if they can get its grip on AI, to your question, Danny, get the right guidance, get the right systems in there, and this thing's trading at just north of 11 times EBITDA, which in this market's pretty attractive.
I'd also be super interested to hear your thesis behind Clear, because I know that's a company you like too.
Yes, I do like it. I added that in the fall, and here's why. It's again this idea of take a thesis and try and find other ways to play it. I've been long experiential, travel, concerts for a long time, and all those assets have run up, Live Nation, TKO. So I said, okay, what's the adjacency? And I looked at Clear. I'm a user of the product myself. And I think it's one of the few brands at the moment that people actually trust with their biometric data. I think there's a lot of fear around it. And people are saying, we're actually okay with Clear using it when we go and try and clear security at the airport. And what I like is they're now expanding. They announced a partnership with Mount Sinai.
I hope so.
You hope they're expanding.
I've actually used them at Mount Sinai.
You have? Okay,
yes.
talk about that. What did you do?
That was great.
Yeah.
When you say it, I think about the airport experience.
Yes.
And my wife doesn't have Clear, and I do.
Right.
So we often, she'll go TSA pre-check, and I'll go
with
Clear.
her?
No, because we want to see who can get there quicker.
Okay.
You know,
Right.
and I lose a lot.
Okay.
And also, it's like only available at Detroit and LaGuardia.
Not
so,
everywhere yet.
Yeah.
It's not everywhere. But at Mount Sinai you went. I guess you checked in for your doctor's appointment. And the idea is with medical records, it's a nightmare to try and get hold of your medical records. You still have to go get it on CDs. This is a way that a biometric access point can expedite access to it. And that's what Clear's moving into. So I added it. They've overshot, I think, a little bit yesterday. They're up sort of nearly 40%.
Producer Will Shaker says Yankee Stadium also.
Yes, that's right.
Stadium.
Yeah. That's right, venues.
I want to ask about cybersecurity and quantum. We were talking about IonQ earlier, but I know that you like this sector as well. What's your pick?
I think that Palo Alto Networks is on the money when it comes to looking at quantum. I think the baby's being thrown out with the bathwater. We've seen this sell-off because of software. And I would say cybersecurity, the demand for it's going to go up, not down. And I think Palo Alto Networks is getting punished right now because it's going through an integration lift, bought CyberArk, big deal, 2 other integrations on the cusp at the same time. But I think they'll get through it, and I think they'll come out stronger the other.
You've liked this company, by the way, since I started interviewing you like 3 years ago, and it's had a great 5-year run. I always default to 5-year, up 145%, but it's had a tough, let's say, 3 months, right? Or 2 months.
Yes.
You can see here, over a year, it's down 22%.
I like the entry point. I do. I think it's getting software punishment, and it's not a software business like the others. It's not a Salesforce. This isn't one that I think is going to be displaced by some of the LLMs.
So one of the babies thrown out with the bathwater. And so wonderful to have you on. Always a treat. That's Threadneedle Ventures founder Ann Berry. About 10 minutes into your trading day, let's get a check on your equity market this morning. If NVIDIA isn't playing ball, neither will the overall index. We're down by 0.1%. Just looking at some of the leaders, a lot of financial names are doing very well today. Not any clear catalyst for that, or if there is, please write me and I'm being silly and missing it. Because look, you can see in the top gainers in terms of points added to the S&P, JP Morgan's on there, Berkshire Hathaway, Bank of America, Goldman Sachs, Amex is having a good day too. But again, it's NVIDIA, that's the problem. It is dragging the S&P 500 down 12 points, nearly 13 points this morning. And keep in mind, the index is down just about as much. So if you were to somehow wipe NVIDIA out of the index, the S&P would probably be higher this morning. A lot of the other big cap tech not doing well too. So when you look at the sectors, that's what you're gonna see. Financials at the top, up 1.3%, infotech, the worst sector, because of NVIDIA, down 0.6%. So Matt, today is a good example of what happens when you have a very highly concentrated index. One, I guess, disappointing earnings can drag down the whole entire thing.
Yeah, also a turnaround from the futures, from the pre-market trade, right?
Yeah.
NVIDIA was up 1% and change when I came in right before the show started, and now it's up 2.5%. Now it's down 2.5%. So really going to drag the index. Coming up, stocks stalling with that as Wall Street questions the sustainability of the AI trade, or at least as Wall Street takes profits for now. This is Bloomberg Open Interest.
Climate change is going down right now. It's going down. And we've tried everything to shame people and blame people and put them in their place and tell them that they're doing things wrong and that they're killing everybody. But if we keep telling them that, then we are going to kill everybody. So we got to figure this out. And we're not going to do it by blaming people who are just trying to wake up and make ends meet every day, especially when a lot of those people have the same connection to nature and the environment that we all share here. I hike and I ski and I love the environment just as much as anybody else, but so does somebody who works in an oil field. The Cabela's shopper and the REI shopper want the same things. They want clean air and they want clean water and they want to be able to recreate outdoors. So until we figure out how to get on the same page, we will continue to lose. We cannot afford to lose anymore. We need to build a winning coalition of people across the political spectrum, or we will never create the solutions that we need.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Good morning. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television. Check on your equity market, and it's NVIDIA that's causing the downturn. NASDAQ down 0.5%. S&P, that's down about 0.25%, while the Russell 2000, that's hanging on, up 0.2%. A turnaround from the future session for both the main index and for NVIDIA. Let's get you some of the top calls to analyst action that we're watching this morning. First up, TD Cowen raises NASDAQ to a buy after its investor day, citing stronger confidence in its platform. The firm says NASDAQ is a key beneficiary of AI and calls its valuation, quote, attractive. Next up, Truist Securities, that is upgrading U.S. Bancorp to buy, saying profits from lending will pick up this year. The firm's also confident on margins, expects credit card growth to boost earnings, shares up 2.8%. And finally, NVIDIA posting a beat and raising its outlook. It's not enough, apparently. JP Morgan, though, calling it the biggest beat and raise the chip industry has ever seen. Truist says the company has significantly growth and stock upside potential. The market doesn't see it that way, I guess. Shares up 3.33%, Matt, or down 3.33%.
Well, or they're taking profits, right? Because everyone already owns this stock. We've been talking about this morning. If you don't own NVIDIA, then you're not really a diversified investor, right?
Yeah, very true.
Let's bring in an expert. Bloomberg Intelligence Global Head of Technology Research is here with us at the desk, Mandeep Singh. Mandeep, first of all, what did you think of the earnings? Just give us your take on the release.
I mean, stunning, really. That's the best way to frame it, because you don't see, companies of this size, have, growth of over 70%, and then really keep beating their quarters the way NVIDIA is doing it. So with that being said, the part that was interesting is they said 50% of their revenue, data center revenue, comes from hyperscalers. The other 50% is now enterprises, neoclouds, and sovereigns. And if they are guiding for 77% growth and they feel that part is going to accelerate, to me, that is music, because so far the risk to NVIDIA's story was hyperscaler CapEx. If it starts to decelerate, that's going to have a big impact on NVIDIA. Well, if their customer base is more fragmented and enterprises, neoclouds, sovereigns are buying, that's all inferencing revenue. And to me, that is more durable in terms of sustaining the high growth rates that everyone expects of NVIDIA.
Can you find any sore spots in the earnings that would explain a negative reaction? Or is this just something completely different and not based on fundamentals, what we're seeing this morning?
Yeah, I think right now it feels like more of, the SaaS complex really impacting NVIDIA, because at the end of the day, if SaaS companies are getting hurt, there's no way that, people will spend more in terms of their IT budgets on NVIDIA, because NVIDIA is a chip maker. You have to translate that to software usage. Yes, we are seeing that in OpenAI and Anthropic's growth rates, but all of these software companies right now are bleeding. I mean, they're more in the value side and they always used to trade, as growth companies. So from that perspective, there is a disconnect right now that you see in the market in terms of where SaaS companies are trading and how fast NVIDIA is growing. But at some point, you want to see, a company like Salesforce starts to see top-line acceleration. Same thing for other software companies that should benefit from AI in theory, but right now it's not reflecting in their top-line results.
What about competition? I mean, You know, a few years ago, we would say all these other chip makers are like a decade away from NVIDIA's capabilities. Now AMD seems to be getting some big contracts at least, right? We were talking with Samba Nova. I know they're tiny, but super smart CEO, really fascinating company, a product that, at least as far as I can understand it, is really efficient. Are there cracks now in NVIDIA's dominance?
Actually, yesterday's print shows that competitors are way behind, because if they're growing networking revenue, you know, at 350%, that's huge. So NVIDIA is now, the co-design that they're doing with their chips, networking, and other gear is what's really driving the total cost of ownership. And because power is the real constraint, everyone still wants NVIDIA systems, not just the chips. And that's the big differentiator between NVIDIA and AMD. Only Google TPU comes close, but right now, I would say NVIDIA, Google TPUs, and everyone else. And even AMD had to, you know, do that deal with Meta, which really wasn't very attractive for them in terms of giving away stock warrants. So from that perspective, they have a clear lead, and that's not changing anytime soon.
It's just a mind-boggling thing of hearing you talk about just how strong they are, and then looking at that screen and seeing shares down 3%.
But they're up 1,400% over the last 5 years, so they're down 3% today.
Yeah, but it used to be NVIDIA would get a huge reaction to the upside because earnings were so strong, and there was a really strong set of earnings.
You know, just to me, it's so fascinating that we're all worried about AI eating software's lunch, but no one has talked about AI eating chip designers' lunch. Like, why doesn't Claude design a chip that's better than NVIDIA's?
Well, I think there's so many use cases, and that's what Jensen highlighted. You know, Claude Code, that is the use case around agentic AI that's taken off. But that's new. It's not really replacing existing software, you know, what they're doing with Claude Code and Codex. And that's where you have to really hope that there are new use cases, productivity use cases that create these new markets that everyone feels excited about. I mean, really, the coding agent use case has taken off, and that's what Jensen called out as the real driver of inferencing use for their chips.
Mandeep, thank you so much for joining us this morning. Off the back of those NVIDIA earnings, Bloomberg Intelligence Global Head of Tech Research, and maybe the smartest man on this planet, Mandeep Singh, coming up.
And a great tennis player.
And a great tennis player. I would love to play you, Mandeep, one of these days. Coming up, Stellantis shares make a U-turn as the automaker CEO strikes an upbeat tone on the U.S. We're going to have that story coming up next. Stay with us on Open Interest.
Your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Verrett.
I'm Lisa Mateo. And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jemana Bersecci in Davos, Switzerland, and this is Bloomberg.
CEO of Stellantis, Antonio Filosa, says he expects returns in North America to improve, boosting the car maker's share price. Joining us now is Bloomberg's Gabby Coppola, who covers Stellantis for us out of Detroit. And I sure hope that their sales in America improve, because they've had a real problem with the crown jewel of, American brands, Jeep, as well as Dodge. Chrysler doesn't even make cars anymore. What are they going to do?
Yes, Matt, that's right. I think they are leaning hard on North America and getting their new products out the door. They have a new Jeep Cherokee hybrid. Remember, this is a product that had been dropped from the lineup for a couple years, and it's finally, they ramped up production in December, and it's supposed to hit dealerships in March. But the big thing Filosa talked about was the Hemi engine, the Hemi V8, baby. I mean, they are just undoing a lot of products made CEO. They're bringing back, combustion muscle cars after, just a few years ago saying these are the last combustion muscle cars we're ever going to make. Now they're making them again. So there's just so much work to be done in sort of just fixing the product lineup, and they are getting that out now. But it's not just having the right product. It's also they have really tough quality issues. That was part of why you saw they, had like a huge write-down, the biggest of all of the D3 write-down, which they released earlier this month. And yes, a lot of that was charges for EVs that didn't sell, but a lot of it also was quality and warranty issues and things like that. So they've got a lot of operational problems on top of trying to get the right product out the door.
I mean, maybe they watch this show. I've been saying, axing the Hemi was the biggest mistake they could possibly have made. I say it so much that they couldn't not have heard me. And
I think they agree with you. And that's why they're talking about putting, they're bringing back more variations of the product. They're just leaning hard on all of the, core product because President Trump rolled back the CAFE regulations. That is liberating Detroit, as we've written about.
I like the 345. I own the 392. They need to bring back the 426. Hopefully Antonio Filosa comes on this show with us. Gabby, thank you so much. Gabby Coppola there in Detroit. Listen to my podcast, Hot Pursuit.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the U.S. or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Is CBS News on the Hour, sponsored by JTV.com.
I'm Deborah Rodriguez. Another heavy hitter is resigning over connections to Jeffrey Epstein. Correspondent Nicole Killian has our top story.
The CEO of the World Economic Forum, which convenes in Davos, has resigned after the forum launched an investigation related to potential ties to Jeffrey Epstein, and really is just the latest, a global elite who has been kind of caught up in this dragnet.
Former First Lady Hillary Clinton is set to give recorded testimony to lawmakers in Congress next hour on her association with Epstein. Former President Clinton will testify tomorrow. A third round of nuclear talks between the U.S. and Iran that began this morning are expected to resume shortly. CBS's Ramy Inocencio is at the foreign desk.
Oman's foreign minister, as we look ahead to talks later today, he's been shuttling messages back and forth, and he said that they hope to make more progress. He also said that the two sides have expressed what he calls openness to new and creative ideas and solutions.
The talks are aimed at averting a war amid a massive U.S. military buildup in the Middle East that includes aircraft and warships. Cuba's president says his island will defend itself against what he calls any terrorist aggression after a deadly shootout yesterday between Cuban border troops and a U.S.-registered speedboat off the island's northern shore. 4 U.S. residents were killed. CBS's Christian Benavides has more from Miami Beach.
There are a lot of questions about what happened, mainly because the Cuban government routinely disseminates misinformation and disinformation, which is why the U.S. government is calling for an independent probe.
The speedboat was registered in Florida. Facebook and Instagram's parent company have plans to notify parents if their teenagers use social media to search for self-harm content. Tech contributor Ian Scher.
The fact that Meta has gone through the effort of creating this feature shows that there is a need for it, and hopefully that it can make a difference in at least saving some lives.
Couple of food recalls may have you rethinking a fruit plate for lunch. CBS's Stacey Lynn.
Nearly 56,000 pounds of frozen blueberries are under a top-level recall for possible listeria. The product was distributed by Oregon Potato Company. Meanwhile, Walmart's Great Value cottage cheese is being recalled in 24 states over pasteurization concerns.
In New York City, the NYPD has just announced the first arrest in Monday's massive snowball fight in Washington Square Park. Suspect charged with assaulting 2 officers. This is CBS News. Some Central Florida elementary school students are teaching the world that a little kindness can go a long way.
To hear DeBarry, Florida fourth grader Sophia Campbell tell it, she was having a rough day.
I feel like I'm not that smart sometimes.
Turns out she was in the right place. Her classroom is also known for its kindness squad. And when classmates noticed she was out of sorts, they started plastering her desk with Post-it notes like these.
I know you're awesome and pretty. You can do special things.
Teacher Joanne Miller posted the video, which has racked up millions of views and hundreds of thousands of comments.
About how this has restored people's humanity.
Peter King, CBS News, Orlando.
Officials in Rhode Island say a third relative has died 9 days after a mass shooting at a high school hockey game. The suspect's 75-year-old ex-father-in-law had been in critical condition. One person's daughter and grandson were also killed. Deborah Rodriguez, CBS News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
Concern about rising prices spooking investors.
What does renewables investment look like in the U.S.?
More tariff talk coming out of this administration.
Breaking market headlines and corporate news from across the globe.
The president wants lower interest rates. He wants a rate cut cycle.
How do you broaden out the AI play?
Are people just looking for something to worry about when it comes to China?
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, originals and the Bloomberg Business app.
Good Thursday morning from the Bloomberg Interactive Broker Studio in New York City. To our worldwide audience, we're streaming live on YouTube, and we're streaming live on Bloomberg.com/video, and that's where you'll find us. Scarlett Fu out today. Not to worry, Isabel Lee sitting in for the next 2 hours. We appreciate that. Isabel will take care of us here on this Bloomberg Intelligence program. Coming up, we're going to take a look. We're going to chat with Caroline Hyde, Bloomberg Tech co-host. So much tech news out there, starting with the NVIDIA earnings, but a lot more to talk about. So we'll talk to Caroline Hyde. She's on top of that. Sandy Braggart, the Chief Client Officer at Asperian, on her outlook for the markets. Anurag Rana, Bloomberg Intelligence Tech Analyst. I want to talk to him about the software stocks. She's getting beaten up big time over the last 4, 5, 6 weeks. We spoke to Dan Ives earlier this morning. He's pounding the table on a lot of these names. We'll talk to Anurag Rana as well about the software stocks. And then Gene Munster, absolutely one of my favorite technology analyst. It's been that way for 20 years. He's been so good on some of the really big issues facing technology. So we'll get his thoughts on the NVIDIA earnings and what to do with AI vis-a-vis the software stock. We're really one of the best names out there on the streets. We got a few minutes of his time, which is a good thing. Right now, we're going to kick it all off with John Tucker and a Bloomberg Business.
All right, guys, this report brought to you by IBKR. In 2025, IBKR retail clients averaged a 19.2% return, beating the S&P 500's 17.9%. The broker you choose matters. Visit ibkr.com/2025. A major stock average is mixed right now. And yeah, we got to start here. NVIDIA delivering really strong results. Investors wanted more. Worst performer right now in the Dow. Bailey's going to break it down in just a minute with a little more detail. Shares of NVIDIA right now, 3.5% lower. Salesforce, they delivered kind of a so-so forecast. They're the poster child of Wall Street worries over AI disruption. But the shares right now, they are up. Salesforce is up 3.3%. Somebody who's smarter than me said they were oversold since the beginning of this year, like down 24% since the start of the year. Who doesn't love a bidding war? A bidding war for Janus Henderson. Victory Capital offering to buy the money manager, $57.04 a share. So that tops a previous offer from Triumph Fund Management. Janus Henderson up close to 6%. Meantime, Ed Yardeni at Yardeni Research says investor fears over AI disruption, they could last into the summer.
We've all gone from a situation where AI is all good, productivity enhancing, good for profits, good for the economy, to suddenly kind of a Frankenstein monster that's going to devour us.
Right now, the Dow up 86 points, S&P 500 down 28 points, NASDAQ 100 208 points lower. Do yields, the 10-year down 3 basis points, 4.02%. The 2-year 2 basis points lower, 345. You know, as it turns out, making healthy French fries, that's a lot more difficult.
Who wants that?
Well, these young kids,
okay,
they're all crazy. Sweetgreen workers, they actually warned their managers a while ago that the attempt to make the healthy French fry was too labor intensive. So it was a doomed introduction, swift demise. just kind of a microcosm of some of the problems. It's people like Isabel Lee.
Yes.
They go for those
And Bailey
things.
Lipschultz.
Anyway, it was a disastrous year. The company squandered about 80% of its market value.
Wow.
And, you know, that kind of tells the whole story.
Yeah, you don't do healthy French fries, and you don't do the giveaway all you can eat shrimp. Didn't I heard somebody at one time?
That's just you as a customer
Exactly
can destroy
right.
a company with that.
I had a very traumatic first experience at Sweet Green. I didn't know how to order. So fortunately, there was a very young Bloomberg person behind me who helped me out. So it kind of got me through. But
It's high pressure there. You
it is.
have to know what you want, or else they'll give you the glares and
I know.
the
Oh,
people
they're going to give
and
me
the
a
ones
glare.
behind you.
Oh, no. Oh, no.
See, you go up to McDonald's, it's number 2 with a Coke. It's the same way I've been since I was 14. John Tucker, thank you so much. We appreciate it. Isabel Lee sitting in for Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube and streaming live on Bloomberg.com. Let's take a look at some of the stocks on the move today. We can do that with Bloomberg's Bailey Lipschultz. Bailey, what are you looking at?
Yeah, I want to start with Celsius Holdings, ticker CELH, the $15 billion energy drink maker, beating expectations right now, up about 15%. Management talking up the demand, the diversification of energy drinks. They have a female-focused energy drink that is driving some pretty darn good growth. That is the Alani Nu, which management and analysts really say is a potential long-term growth driver. I don't know about you guys. I don't know. Energy drinks, not really my cup of tea. I'm more of a like double Americano when I want.
Really?
Caffeine.
Okay. All right.
But
Interesting. Double short mocha here. There you go.
Oh, okay.
Yep.
Nice. Respect it.
Yep.
Also, then going to pivot to Snowflake, ticker SNOW, one of my favorite tickers. Right now, up 6%. Biggest intraday gain at its highs since August. This is one of those stocks that just has been beaten down heavily with investors selling down some of the software stocks. Even with today's rally, it is down 18% year to date. Okay. And even looking through the analyst notes, like pretty solid print, not too great. Looking at their forward guidance, better than was expected. But some of the traders that I talked to were saying, you know, management team maybe being a bit more optimistic than expected. So we are seeing maybe some short covering or just people taking some of those bets on Snowflake right now.
I tell you, boy, if I was a hedge fund, boy, I'd be into my boss saying, I think we need to buy them. I think we need to just go in there and buy all these names that are down 20, 30%.
It's tough. I mean, it's one of those things.
Call, one way or the other.
Exactly. You can make a ton of money, and you're now the guy who, like Michael Burry, you were right one time, and we write books and make TV shows about you. Or
I'd probably be the other guy. All right, NVIDIA.
The one that matters, NVIDIA, ticker NVDA, right now down 3.7%. Worst day in, call it 2.5 weeks or 3 weeks. Came after pretty darn good earnings, at least at the face value. Beating expectations on revenue, gross margin still looking strong. Just year-over-year growth north of 70%. The big debate around the company and the entire AI ecosystem, obviously, is at what point is there a slowdown? At what point does hyperscaler CapEx hit its kind of breaking point? Analysts still, again, across the board, more or less bullish, but the big puts and takes or debates on some of the desks so far this morning is when does that kind of max out? You can't grow at 70% forever.
Yeah, law of large numbers, if nothing else. All right, Bailey Lipschultz, thanks so much. We appreciate it. For more conversations like this, subscribe to Stock Movers. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, and anywhere you listen. Boy, this has been a tech-heavy day for us. On Bloomberg Surveillance, we had Dan Ives coming up. We're going to have some other cool guests there talking about the tech business. And right now we have the Caroline Hyde, B-Tech co-anchor for Bloomberg News, joining us here in studio. Caroline, busy day for you in your tech world. Every day is a busy day. What's your thought on NVIDIA? I thought it was one of those beat and raise kind of things that the tech kids like. What did you see?
I mean, extraordinary. One of the quotes from Morgan Stanley is saying, this is the largest, cleanest beat and raise in the history of semis industry. And yet we still sell it. And interestingly, I've just been going back over history. The stock has generally risen after earnings. That's because they generally beat. 13 times, about 81%, they tend to rise after the earnings. 3 times, about almost 20%, have they fallen in the last 16 earnings events. Now, at the moment, they are struggling against just sentiment. Sentiment wants to sell some of these winners. Sentiment has been concerned about the capital expenditure, about the resilience going into 2027 as really Bailey had been articulating, how long can this run for? Now, analysts are super bullish. 78 still say buy the stock. Only one says sell, and that one Seaport analyst has been saying sell it for a very long time now. But we are going to see revenue eventually start to fall in terms of growth. It's still going to grow, but you cannot expect a $4.8 trillion company to continue to grow at 78% revenue is what they're forecasting. That's significantly higher than $5 billion more than the consensus. At some point, the law of scale means, look, revenue will grow 20%. Is that a bad thing?
So do you think that the worries about CapEx spending and return of investment are overblown or justified?
Certainly analysts are saying that they're overblown, and that really you should see that the management are clearly identifying that they've got inventory in place, they've got the capacity in place for the next few quarters. Capital expenditure is still going to be coming thick and fast from their biggest data center buyers who are the hyperscalers. They have no issue issuing debt at the moment. They have no worries about continuing to scale. Yes, people question perhaps how the neoclouds are continuing to build out and whether we'll start to see a bit of an issue on them tapping the debt markets. But more broadly, it's resilient. I think the lingering question mark is market dominance. Jensen Huang did a great job at saying we are seriously penetrating in inference, not just training. But where people worry about is, look, Meta's just done a deal with AMD. And you're seeing ASICs really win the day. Everyone wants to build their own chips. What is the case when OpenAI with Broadcom makes its own chip rather than turning to NVIDIA?
Yes.
That's what they really need to push up against. And also, we didn't get anything new on China.
That's what they ask. Are they doing business in China? Sometimes I think they're selling some chips, but no chips. I know the analysts have took the China revenue out of their estimates.
Yeah, and so did NVIDIA, to their point. And they were saying, look, we haven't included anything of that in our forecast. They've got the licenses, H200s, they're allowed to go and start selling them. And they have to give 25% cut to the government, remember?
Oh, I forgot about that.
Yeah, but still they're allowed to. It's just there's no demand. China, the government, as it stands, doesn't seem to want H200s. Now, different question mark when it comes to the potential Blackwell iteration, but as yet they haven't had the licenses to be able to sell those.
So with global competition and regulatory issues, what should investors be watching out for after these earnings? Yes.
I mean, investors at the moment are wondering whether or not when you start to buy the stock. Now, the notes that I'm reading, particularly over at Mizuho, for example, are saying into GTC, which is when you get the big, bold bets. So that is their big tech conference.
Okay,
that is when they release, twice a year really, they release what's coming next.
When's the next one?
And that's coming up in March. So maybe there'll be a catalyst there. That's when you're going to see how much Rubin is dominating. Look, they couldn't have said better things about the run rate that they see more than $500 billion by the fiscal full year end for Rubin, for Blackwell architecture. But what next? Look, this is a company like Apple that every single year is innovating and bringing us a new, more powerful chip. And they say that's more efficient. So maybe that's the catalyst. But for now, again, like in software, no one really wants to catch a falling knife.
I tell you, this is one of the most amazing income statements I've ever seen anywhere. $344 billion projected for this year in revenue, up 60%, amazing. In EBITDA margin, that's the world I came from. EBITDA, they have almost 70% EBITDA margin. It's just extraordinary. And then the next thing is, they bring most of that down to free cash flow. Out of that $236 billion of free cash flow, like $175 billion goes down to free cash flow. It's just an extraordinary model. And I mean, if I were Jensen Huang, I'd say, don't worry about so much the top line. Look at my profits. Look at my free cash flow.
And people are really calling out how classy the CFO and investor relations have been in terms of stock-based compensation. They're even folding that into their future projections.
Okay.
So look, they're really trying to be as transparent with the market as possible, but the market is just looking for every hole right now. And it's really owned. And I think maybe that's the point. Like, everyone has topped up on NVIDIA. If you're a believer, you're still a believer. Where is your marginal buyer at this moment? And maybe they just needed a bit more convincing.
Great point. Caroline Hyde, thank you so much. We appreciate that. Caroline Hyde, BTech co-anchor alongside Ed Ludlow. They do a great job covering the world of technology, and it requires full-time coverage, and that's what they do. And we appreciate getting a few minutes time. Caroline Hyde joining us here in our Bloomberg Interactive Broker Studio. NASDAQ taking on a chin today, down 1.5%, 355 points. Oof, this is ugly.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Let's start off with the S&P 500. Only 4 of the 11 major industry groups in the index higher right now, being led by financials. And dead last at the bottom, information technology and communications services, all the tech stuff. So when do you buy NVIDIA? Apparently it's not today. Never was said a discouraging word from all the analysts we talked to, you guys talked to this morning. Shares right now down over 5%. And, of course, you have chip stocks, most of them following them lower. If you look at the Philadelphia Stock Exchange Semiconductor Index, the SOX, that right now down 4.25%. Some of the individual shares on the move today. Yep, Ford recalling nearly 4.4 million vehicles, including some of the F-Series pickups and popular SUVs as well. On the economic front, you had jobless claims rising less than expected last week, indicating that layoffs remain relatively low. We get more of the economic data tomorrow as well on Friday. Some of the inflation data at the producer price level, that is. Right now, the S&P 500, 76 points lower, down 1.1%, 6870 on the index. The Dow Jones Industrial Average, 171 points lower, and the NASDAQ 100 is down 450 points. Projects known as double wides, I thought these were trailers, or mega mansions cropping up across Manhattan Island, like the super yacht or the private island. Homes assembled from 2 or 3 townhouses have now become the latest mega-rich status symbol. It's a fascinating story in the Bloomberg. So you buy several townhouses and put them all together.
Okay.
And well, you got to be really super rich to do that.
Okay. Yeah.
Because what does a townhouse in Manhattan go for? Like 40 million? Oh no, you're going way back. No. Anyway, we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Isabel and Paul.
All right, John Tucker, thank you so much. We appreciate that. Isabel Lee sitting in for Scarlett Fu. I'm Paul Sweeney, live here in our Bloomberg Interactive Broker studio, streaming live on YouTube and at Bloomberg.com. As John was just reporting, stocks rolling over here at some point. For some of these tech names, you got to say, where's the bottom here? You know, I don't know. We'll be talking to a lot of smart people here about that, including Gene Munster coming up in just a moment. That'll be a good discussion. Cindy Breger joins us now, Chief Client Officer at Adsperian, based out there in San Francisco. Cindy, what's the conversation you're having with your clients these days? 2025 was a really good year for stocks, bonds, commodities. 2026, still good numbers, still good returns, but there's some pockets of concern out there.
There are, and I have to say, Paul, that our clients are pretty happy 2 months into 2026 with returns. We've been taking a very diversified approach, which has been really helpful, and I'm happy to talk about that. But I will say the biggest question we're getting from our clients, who happen to mostly be corporate executives, family business owners, and entrepreneurs, is coming from those with concentrated stock positions. And they're asking for guidance about taking their concentrated stock positions down in the most tax-efficient way possible. And that's not to say that they're running for the hills and trying to dump everything, but they are wanting to be more proactive and thoughtful about a timely exit from some of these concentrated positions that they have. And that's different for us. Usually we're the ones on the side of the table saying, hey, you have a lot of stock there. Let's take a look at it in the context of your financial plan and maybe take some of it off the table.
That is indeed interesting. I mean, the 2026 narrative has shifted from optimism to AI anxiety. What are you telling investors? How are you telling them to position when it comes to not only tax efficiency, but also the risks of over-concentration?
Yeah, so in terms of diversification, Isabel, we're looking at bonds and stocks, you know, sort of typical participants in a portfolio, but also what we call diversifiers. These are oftentimes liquid alternative strategies, trading strategies, and other assets that tend to be not correlated with stocks and bonds. So I think commodities, market neutral, macro, global macro strategies. And we've been generating a lot of positive returns over the last year in particular, and certainly this year with returns up above 6% in those areas. So they've been a nice diversifier in the portfolio. Within the stock portion of the portfolio, we are globally asset allocated. We have a penchant toward value-driven stocks. We just think they've gotten a lot of lack of attention over the last couple of years, and they've really been rallying, and they've benefited from the AI exuberance, as a lot of the companies are in areas that are related to the picks and shovels of the AI world, building data centers and things like that. So that's been helpful. And certainly with the overseas allocations, not only in developed markets, but emerging markets too, we've been seeing double-digit returns so far in 2026, which has been great.
Sandy, we've seen, I think starting kind of late last year, October, November, kind of a rotation happening in the U.S. equity markets, maybe a little bit away from some of the growthy tech areas into some of the maybe more value-oriented, more cyclical, maybe even small and mid-cap. Is that something you guys are participating in? Is that something that is a longer-term play throughout 2026?
It is. We're definitely participating in it. We think it is a long-term play for us in 2026. We expect returns to continue to do well there. A lot of these companies in the value space across large and small caps in the U.S. and also overseas have really been ignored by the market as the Mag 7 have elevated, and all those tech companies have done really, really well. And so we are seeing a bit of a reverse of leadership there, and we think that that will continue. We're pretty bullish at this point about the economy. We think that we should see sustained growth, and these smaller companies should be able to adjust, and the value-oriented ones in particular should do really well.
Sandy, thank you so much. Appreciate it. Sandy Brager, Chief Client Officer for Aspirian, based out there in San Francisco Bay Area. Appreciate getting your thoughts on the markets here. Again, sell-off here across the markets with the S&P off 1.1%. And once again, Isabel, it's the tech-heavy NASDAQ really taking on a chin down almost 2% here.
It's been unbelievable to see NVIDIA yesterday, and then before the market opened, and now, and it's definitely edging lower in the red still.
All right, let's talk to some really smart tech analysts. We've got two right in a row. Anurag Rana kicks us off here from Bloomberg Intelligence. Anurag, you've been covering the software space for decades here. Give us some context as to what you're seeing out there as it relates to investors selling a lot of these tech names, particularly software as a service. What are you seeing out there in the marketplace?
Yeah, it's been actually a very bad season for them over the last 6 months. Frankly, I mean, you look at something like a Salesforce, I think it's from its peak to bottom, it's now down 45, somewhere between 45 to 50%. And when you look at the growth numbers or the revenue numbers, I mean, the decline over there is 1 to 2%. So they're still growing around 9 to 10%, which again, I know it's not the 15% growth these guys used to grow at, but when you look at overall enterprise tech spending, AI is where the money is going to, and the non-AI part of it is what's struggling. So that's what's facing Salesforce right now. But I mean, when you look at context of price to the actual fundamentals, I mean, it's a very different story.
So what are key market factors for Salesforce that could cause the company to exceed or to fall short of expectations, particularly in enterprise IT spend? I feel like this is what investors are really looking at.
Yeah. So the basic thing is, all of these SaaS vendors sell their products on a per seat basis, which means if a bank is going to hire more people, more salespeople, they're going to use their software to, be more productive. Same thing for an HR software company. What's really happening is, as companies are investing more in AI, they're actually not hiring those white collar workers at that same level that they used to. And that's really what's driving down some of this demand for software. Now, on the other hand, the big narrative is software won't survive in the next 5 years because of AI, and that's what's really cutting the valuation more. So there are two different, I would say, issues that are going on with SaaS names right now.
And that second one, that one seems to be the real worrisome, the concern that AI may eat the software industry. And, most of us don't even have a good idea what AI is, what it can do, what the applications may be in the future. But that doesn't seem to stop investors from selling these names here. So is there a sense of we just got to let this play out?
No, I think so. And again, that's partially the reason. But you saw some relief rally yesterday. All the SaaS names are really good up today. I think Jensen said it publicly that it's not the people. It's not going to be like that bad. Or he was a little positive on it. The SaaS company themselves are really talking about accelerating their AI push. So there's a lot of I would say opposing forces right now. We are on the side that at least the really large, well-established firms that sell into big enterprises, I think they should be fine. It's these really small vendors that are selling point solutions that may be up to risk of disruption.
Let's go to CoreWeave because its business is closely tied to the AI ecosystem and it has significant partners like NVIDIA. How should investors think about the risks and benefits of this dependency? I mean, especially when you look at technological changes, competitive pressures, and all that. I mean, it is really just one whole interconnected ecosystem.
Yeah, I mean, the simplest way to think about is CoreWeave is basically a factory that's deploying NVIDIA's GPUs and selling those services out there. NVIDIA doesn't want to probably do that because it has a very high margin product business. The CoreWeave story is very simple. There is no shortage of demand. We have known that from all the hyperscale CapEx investments, NVIDIA results, and so forth. So that's not going to be a problem when they report tonight. The question is how much they need to go out and borrow, how much of capital expenditure needs to go in. So it's those things that are far more important when it comes to CoreWeave than actually the demand side of the equation.
CoreWeave stock is up 34% year to date. 18 billion, 19 billion of debt here, 3 billion of EBITDA, but growing super quickly, the EBITDA. What is the feeling for something like a CoreWeave in terms of if it needs to tap the capital markets going forward?
Oh, it has to tap the capital markets going forward. In fact, we just read that they are looking to raise about $8.5 billion again to fulfill the contract they signed with Meta. So the way it works is they get a contract from a large cloud providers, they got to go raise money, and then they have to basically go out and build a data center.
So both Salesforce and CoreWeave are positioning themselves within the broader AI ecosystem. Can you talk to us about the differences in risk and reward between investing in an AI-enhanced software platform versus an AI infrastructure provider?
That's a very good question. There are two absolutely different, parts of the pie. The AI infrastructure on CoreWeave is renting GPUs, taking your data center, and that's the base layer on which you will build the application. What Salesforce is saying, I have one of the best sales automation and customer service applications. On the app side, I'm going to add more AI capabilities, such as adding more GPT-like capabilities in it, so that if somebody needs to get a quick answer, they can do it. So it's a very low capital intensive business when Salesforce model comes in, whereas on the CoreWeave side, it's highly capital intensive.
Anurag, great stuff as always. Anurag Rana, technology analyst, Bloomberg Intelligence, chatting to us from Chicago. All right, folks, catch our new show, Bloomberg This Weekend. David Gura, Christina Ruffini, and Lisa Mateo bring you unique conversations in-depth interviews on news, politics, lifestyle, and culture. Watch and listen on Bloomberg TV, Bloomberg Radio, and the Bloomberg Business app. Saturdays and Sundays, starting at 7 a.m. Eastern. 7 to 10 a.m. Eastern will be that program starting this Saturday. Markets selling off here. The S&P off 1.25%. The NASDAQ off over 2% now. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom, with this Bloomberg Business Flash. Well, investors running for cover. I'm going to pin this on fears of an AI bubble. And you can see that with NVIDIA shares. Those shares right now down 4.7%. Chipmaker delivering a first quarter outlook. It beat the estimates, and also a 73% surge in Q4 revenue. So where's money going right now? You look at treasuries, the safety of treasuries, the 10-year yield is down close to 3 basis points, 4.02%. The 2-year is 2 basis points lower, so that's at 3.45 right now. The 10-year, the lowest since November 28th. Rian Metrione, meantime, at the McCallan family office, is the focus on AI. That's going to continue to dominate investing.
There has never been anything like this in U.S. corporate history. 80% year-over-year earnings growth. The estimate was 57% on a $5 trillion company. Like, this is just so remarkable.
And Verizon shares, they're lower, not by much, down like 0.1%. So I'm being told there's some sort of an outage. So I don't know if the two are connected. Energy, among the best performing industry groups right now in the S&P 500. That's because oil is higher. Brent crude, the international benchmark, up 1.2%. WTI, Texas crude, 0.8% higher, 65.92. You know, it's a talent war out there for interns.
What?
I guess. McKinsey. Yeah. Paul's already replacing the interns. Yes. So McKinsey is going to start searching for its 2027 class of interns this spring. The accelerated timetable is also prompting some of their rivals like Bain to do the same. It sent college career counselors scrambling to help prepare students for interviews and networking.
Kids don't know what they don't know at that point.
Do we know how much they're paying?
Oh, it's probably a lot.
Probably.
I mean, I'm not going to go into it. Anyway, just get me my cup of coffee, kid.
Exactly.
We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash, folks.
All right, JT, thank you so much. We appreciate that. Isabel Lee sitting in for Scarlett Fu. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Brokers studio, streaming live on YouTube, streaming live on Bloomberg.com as well. We are fortunate here at Bloomberg to speak to some of the smartest people out there in the marketplace. Our next guest certainly qualifies. He's been so kind to give us time over the years to help us get up to speed on what's going on in the world of technology, and that's Gene Munster, managing partner for Deepwater Asset Management. Gene, let's just start with, I guess, the topic of the day, which is NVIDIA. You know, I know you tech guys look for the beat and raise type of thing, and I think that's what we got here. What do you make of NVIDIA's report, Gene?
Well, there's like 3 orbits here, Paul. There's the reaction, the report, the reaction to the report. There's the fundamentals, and then there's kind of the AI trade. So there are 3 different orbits. And maybe specifically on the stock being down, we'll call it 5% today on what objectively was better than the whisper numbers. And so I want to zero in on what the key whisper was. That was revenue growth for the April quarter. The street was in print at 64%. The whisper was that they were going to guide to around 70%, and they guided to 79%. Wow. That's the high end of their range. And so if you put those together, that's kind of why you got that first like up 3% kind of reaction when initially the numbers hit, the guidance hit. And so, like you said, it's about beat and raise, beating the whispers specifically. So how do you make sense, if that is in fact the case, how do you make sense of what the stock is doing? And I think part of it comes down to there is this broader narrative just around this company is just getting too big. There's also the piece that some of this, like I mentioned, is that the whisper number was higher than the in-print numbers. Shares of NVIDIA, since we saw Google and Amazon ramp up their CapEx commentary 3 weeks ago, shares of NVIDIA, even with the sell-off today, are up about 8%. Now that compares to the NASDAQ, which is up about 2%. So essentially, some of this was priced in, even though they beat the numbers. I think that's really some important context. But if I may just kind of even zoom back even further and look at the broader narrative around NVIDIA, is since October 28th, That's when Meta shares got hit because of their big CapEx guide and kind of changed the narrative in terms of how investors think about AI infrastructure. Since October 28th, the NASDAQ is down about 4% and shares of NVIDIA are down 10%, even though the numbers have gone up, call it 30% since then. And so what you're really seeing here is this continued skepticism that investors have specifically about the sustainability of the trade. And I don't think it's any commentary about the strength of the fundamentals, but I think that's what we're seeing with the share price reaction this morning.
I think it's also because NVIDIA has a huge moat in training because of its GPU, but when it comes to inference, not so much. And I feel like that's where AMD is a competitor and Broadcom with its custom chips, and maybe that's where the disappointment came from, at least when we're seeing this morning.
Well, that all plays into this longer narrative, which had less to do about what was said on the call last night. And so what you're tapping into is as inference, and I just want to quickly frame in inference for those listeners who may not be as familiar with it. A lot of the AI infrastructure spend, of course, has been related to training. The inference piece that's really the substance of what AI is. Think of AI as inference. Inference is thinking. That piece is, there's debates about what are the optimal chips, the optimal GPUs you need for that. And my sense is that as part of the conversation, I think NVIDIA is going to be in a great place. I suspect that they're going to grow and count. So I think inference is going to be a huge opportunity. I want to just quickly frame in how big inference is, that you can have multiple winners here. If you look at the size of inference, Jensen talks about being potentially 1,000 times bigger than what traditional compute is. What we're seeing in our own use of AI internally is we're seeing tens of thousands of times more use of tokens when it comes to inference. And so inference is this scary topic because for some NVIDIA investors, because this competitive dynamic comes up, do you need less powered chips? But the reality is the amount of chips, still the amount of AI infrastructure that's going to be needed to power this over the next decade, I think is being grossly underestimated by investors.
Gene, you've been covering this technology industry for decades. You've seen everything. I want to ask you, based upon your experience, how do you think about what's happening in the software side of the business right now? Stocks selling off, particularly the software as a service stocks like a software, Salesforce.com, really under the guise that, boy, AI is going to really disrupt this software business. How do you put that into context for people?
So I think that for those who are reading the headlines and looking at the stock reaction to these earnings, I think kind of the substance of what's going on underneath the hood is being missed. It's really hard for, I think, that audience to really grasp the improvement that these models have had over the past 3 months. Of course, OpenClaw and Claude Code, ClawWork are kind of the signature products that have caused some of that breakthrough. But that change has had what I think is going to have a profound impact on software. And the way we've been investing around it is we've lowered our exposure to seat-based software companies, because ultimately, if this is right, that knowledge work is going to be impacted, there will be less seats out there. AI agents don't purchase seats. And separately, that the usage-based models, so we're still holders of companies like Datadog and Snowflake. And so those models, I think, are going to do well. So, Paul, the answer is that software is at a profound crossroad. And I don't think that all software is created equal. I think the usage-based models. But I would say that software needs to do something that we still haven't seen, even with the Salesforce results last night. We need to see these software companies stand up and basically punch back at AI. They haven't done that. That's exactly what Google did in the June quarter of last year when they showed that they can use generative AI to their advantage in search. They really short-circuited that negative narrative. And until software companies can say, look at our seat growth moving higher, look at how our ARPU is per user is improving, until they really have that flex, that stand up, I think that this narrative, this negative narrative around software is going to persist.
Gene, thank you so much. Yet again, Gene Munster, managing partner, Deepwater Asset Management. He was one of the first folks that kind of helped me understand what AI is. And now I kind of get a little bit of a better understanding of what the potential threat for software can be when you think about the seat licenses, and that could be a weakness for some of that revenue model there. So again, Gene Munster, one of the best folks, if you want to understand what's going on in the world of tech, get his research, one of the best. S&P down 53, The Dow up 36, the NASDAQ down 335. That's 1.45% on the downside. For the tech-heavy NASDAQ, this is Bloomberg. Good morning.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Paul Sweeney, and we are here in New York City at the Bloomberg Interactive Brokers studio, streaming live on YouTube as well. Earnings season well in gear here. And that includes Magna International, ticker MGA. Magna is one of the world's largest automotive suppliers, headquartered in Ontario, Canada. Joining us today is Swami Kotagiri, CEO of Magna International. Swami, thanks so much for joining us here. I know you guys recently released earnings. What can you tell us about your earnings that you just released, maybe your outlook that you shared with your investors?
Good morning, Paul. Thanks for having me. You know, we finished really, the fourth quarter was strong, helped us finish the year 2025 in a strong way, setting us up really good for 2026. We delivered, you know, good cash flow. We hit the margin range of 5.6% in EBIT that we talked about, which set us up really good for 2026. We are forecasting a EBIT range of 6 to 6.6. We are confident in the cash flow generation and actually converting the earnings to cash. So we gave a clear indication that we're going to be returning value to the shareholders in the form of repurchase of 24 million shares in 2026. And all this in a flat volume, as you see in our automotive industry. That is the result of operational excellence and capital allocation discipline. We have been doing this for the last 3 years, 35 to 40 bips annually. So if you take 2026 into account, this is the 4th year running, and our total margin expansion would add up to about 200 basis points. So all in all, we feel pretty good. It is a structural change in the operating methodology and how we set our cost basis to the reality of the industry today. So all in all, we feel pretty good about 26.
With global auto production expected to stay flat, how realistic is a mid-teens profit growth this year?
Yeah, I think, like I said, the key of the margin expansion has been operational excellence from our side. It is actually controlling the controllable, as we said. And on top of that, we are going through digitization process where 80% of the plants are online on a unified platform, which gives real good operational visibility for us, looking at every little detail, how the lines are running, what are the stoppages, how is the material flowing. Every penny counts. So all of this is what has helped us add the margin expansion in the last 3 years, and we have good visibility, not just for this year. We believe it's still early innings going into next year. The second part really was, working through the inflation, right, which started in 2022. And we have started quoting jobs in 22, 23, 24 with new economic terms. The new programs are rolling in. So a combination of self-help and new economic terms is what gives the incremental margins that we're talking about.
Swami, talk to us about tariffs, how they have impacted your company, what changes you have made, or what to deal with the tariff situation.
So to sum it up, last year we had roughly 10 basis points of impact. The actual tariff impact was somewhere in the range of 170 million for the 9 months because, it started in April 1st. We have been able to mitigate, with some of our own actions, working with our customers, and then staying USMCA compliant, increasing the USMCA compliance going forward. So all in all, in 2026, we believe it'll be in the same range. The annual impact, given everything as we know today stays, it's about 200 million or so, but we believe we can mitigate, continue to work with our customers, and so on and so forth. So the net impact still would be in the range of 25 to 30 million this year.
How much of the growth would come from higher content per vehicle, especially as Detroit, for example, shifts towards larger pickups and SUVs?
Yeah, I think part of the margin increments that you're seeing is the mix and the new programs coming in and the change in content per vehicle. But a good point to note might be we have been doing this for the last 20 years. The growth over market has been we have been growing about 4% a year. If you look at a 10-year period, for the last 5 years, we've been growing at 2.5%. So all in all, we continue to grow in low single digits, I would say, if you take a longer period of time. One data point which will help you give context. 20 years ago, Magna was a $20 billion company, and North America was producing 15 million units in production. Today, roughly the same production as 15 and a half, and we are a $40 billion company, right? So all this came through diversifying our customer base and increasing our content per vehicle.
And it is reflected in your stock price. Stock price is up 0.5% today, up 21% year to date, up 70% over the trailing 12 months, giving Magna a market cap of $18.2 billion. Swami, thanks so much for joining us there. Swami Kotagiri, he is CEO of Magna International, ticker MGA. You can blast into your Bloomberg terminal. And again, some great results. All I know is Joe's Auto Body in Manasquan, New Jersey, the parking lot is packed with cars being worked on. I think the average age of a car is now like 12 years old or something like that. The dude's just raking it in.
Yeah, I mean, it's tough. Have you popped open the hood of your car and looked in there lately? I don't recognize anything anymore.
No, it's
no carburetors gone.
I say it's basically an iPhone with 4 wheels. For our listeners on the U.S., a reminder, you can listen to us via satellite radio on Sirius XM channel 121, access the world's only global business network, and Sirius 121 is presented by Golden Crest Metals. More coming up. This is Bloomberg.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals and the Bloomberg Business app.
All right, Isabel Lee in for Scarlett Fu. I am Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio in New York City, streaming live on YouTube and at Bloomberg.com. Coming up, we're going to check in with Geetha Ranganathan. She is the media analyst for Bloomberg Intelligence. Warner Brothers Discovery out with some earnings today. My read was, you better sell this company like now. They post lower sales, lower profit. I don't know what's going on out there. But we'll get the latest on that M&A trade. Geetha is on top of that. Netflix is still there. Paramount has a sweetened offer, so we'll get the latest there. We're also going to check in with Michael Halen, Bloomberg Intelligence Senior Restaurant Analyst. Shake Shack, fourth quarter comparable sales match estimates there. I went to Shake Shack a couple weeks ago. Pretty darn tasty there. Ari Sass, President and Portfolio Manager at MD Sass, get his thoughts on these markets and the AI disruption. And then Kujan Sabani, Bloomberg Intelligence Senior Semiconductor Analyst. He's out there in Silicon Valley. He'll break down the NVIDIA numbers for us and put it into perspective. So we got a lot coming up here in this next hour. Let's kick it all off with John Tucker at Bloomberg.
All right, this time the major stock averages, they have turned mixed with the Dow higher right now. Not by much, but it's Salesforce that seems to be doing the heavy lifting there. It's over 3%. The best performer in that index. So Salesforce had a revenue forecast. It was in line, but buyers seem to be stepping in after the shares were down, like 27% since the start of this year. They make the software as service, what we call SaaS. The CEO, I loved his comments, Mark Benioff, in the call. He said, this isn't our first SaaS apocalypse. So, you know. NVIDIA, the worst performer in the index, after impressive earnings, it's down right now close to, 4.6% right now for NVIDIA, with fears of an AI bubble. So information technology and communication services, worst performing industry groups in the S&P 500. Rian Metrione at the Callan Family Office says the focus on AI, that is going to continue to dominate investing.
The market's just trying to figure out, is this going to continue? Is this spending going to continue? Are we going to see the payoffs? And I mean, our view is this will continue. We are still in early days, and this should still be, AI should be a big driver of growth and disruption for years to come.
The S&P 500, 50 points lower, down 0.7%. The NASDAQ 100, 361 points lower. That's down 1.4%. And again, the Dow up right now, up 83 points. That's up just about 0.2%. I hadn't heard this phrase, set jetting.
Set jetting? What is that?
When you travel to destinations featured in movies and TV.
Oh, set jetting.
Set, what did I say?
No, you got it. No, you said it correctly.
The trend intensifying over tourism concerns. Expedia says 81% of Gen Z and millennial travelers, don't we hate them? They plan vacations based on locations featured in film and television.
Okay. I guess that's true with whenever White Lotus films or shows a new season, yes, people go there a lot.
Okay, people come to Jersey to see the Sopranos stuff.
I would love to go to Jersey.
Do, actually.
I'm still waiting for it.
A lot of the scenes, there was one that in Seabright by the Beach Club down there that they filmed one. Yep. So anyway, that's a while ago. We check the markets for you, and they just keep coming for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Isabel and Paul.
All right, Isabel Lee sitting in for Scarlett Fu today. I'm Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube and Bloomberg.com as well. Norma Linda joins us here. She's Bloomberg's television markets correspondent. What's going on in the world of stocks out there? Any movers out there?
You know, not too much going on. Just NVIDIA in focus today. Ticker NVDA. Of course, we do see this stock really weighing on the broader market. Shares currently down more than 4%, earlier plunging as much as 5.6% for its worst day since November. This, of course, is as people are really digesting the latest earnings report out of the company, really failing to dispel fears of an AI bubble. A lot of people are looking at this as the barometer for what the future could hold as we think about artificial intelligence spends as it relates to a lot of these companies, and just whether or not there's any continued overhangs and fears here. And it seems as though this was not enough to really shake or transform this market in terms of its outlook on that CapEx spend and what the future could hold here for a lot of these chip makers.
Definitely not enough. It seems like investors just want perfection and all of that. What's happening in GoodRx? That's a stock I'm not familiar with.
Yeah, GoodRx, keeping with the medical space, because we've been keeping our eyes on a lot of those names more recently. GoodRx, I see the commercials all the time. But we're seeing this company is essentially a digital healthcare platform. They have telemedicine, and this is GDRX, tumbling to its lowest level ever. Shares plunging today, down as much as 22%. This is after its forecast revenue for the year fell short of Wall Street's estimate. It also gave an estimate for the lower bound of 2026 EBITDA that was also below expectations. A lot of analysts were saying that they were surprised by the scale of margin deterioration implied by its profit outlook. So certainly still seeing Wall Street trying to parse how they feel about this, and not looking too bright. If you take a look at the year-to-date scope, stock is down about 26% as well so far this year.
Wow.
All right, one more.
And lastly, pizza. Looking at Papa John's, that's ticker PZZA. Shares down earlier as much as 7.7%. Now pairing some of those declines down about 1.5%. This is after its sales shrunk more than expected and its outlook for the year trailed estimates. A lot of people have really been focusing on the consumer. Apparently, customers have been cutting back on orders, and that's certainly weighing on the company here.
Nora, thanks so much. Appreciate that. Norma Linda covering the stock movers here today. For more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. For months, we've been talking about the potential sale of Warner Brothers Discovery, either to Netflix or to Paramount Skydance. And we're going to get the latest on that because there has been some movement. But these two companies actually reported results. And let's get the latest there. Geetha Ranganathan, she's the media analyst at Bloomberg Intelligence. Geetha, we'll get the deal update in a minute, but just give us a sense of how these two companies are performing on their own.
I mean, I think you summed it up perfectly, Paul. You said it's a good thing that Warner Brothers Discovery is being sold, and that's absolutely right. I mean, you look at the TV networks division. This has been the problematic division for all of these media companies. TV networks EBITDA slumped something like 27% in the fourth quarter. You look at the whole of 2025, EBITDA for that segment is down 21%. And the writing is on the wall. I mean, this is why this company is up for sale. It's very clear. I think really what everybody is going to be worried about is what is the outlook? Should the spin happen? Should Discovery Global be spun out into a separate company? What really is the outlook for the TV network business? And again, we saw kind of very similar results with Paramount as well. Yes, they're making, the best of what they can, but again, the fundamentals themselves are pretty weak across the board.
Management also flagged a multi-billion-dollar efficiency program. How should investors think about the trade-offs between short-term cost and long-term profitability for these initiatives?
Yeah, this is what we've always been worried about. I mean, we've seen, this story play out multiple times, Isabel, in all of these media companies. And yes, there's always synergies and there's always efficiencies to be extracted, but it does come at the expense of long-term growth. We've seen that with Warner Brothers Discovery. They came out with very aggressive synergy targets. And yes, they were able to deliver on a lot of those, but then it did kind of hamper their growth prospects, especially, in the TV networks business, where we've seen a significant deterioration in the fundamentals, in the outlook. So that is always, it's a very, very tricky balancing act. There's a very, they have to walk this really, this tightrope. Again, the whole deal with Warner Brothers Discovery for Paramount is predicated on something like about $6 to $8 billion in synergies. So, we'll see how all of that plays out. But yeah, it's going to be a tough road ahead, regardless of whether they win or they don't.
What is the update on the deal mechanics? Geetha, where are we right now?
Yeah, so it was really interesting, Paul. So in Paramount's earnings release yesterday, they said that there's a good chance of the Paramount $31 per share offer for all of Warner Brothers Discovery being deemed a superior proposal. And we've seen kind of Paramount rally a little bit on that. We've also seen actually Netflix rally on that. I think investors are becoming more and more comfortable with Netflix kind of walking away from this deal. So again, a lot to play out here, but there hasn't been any official word just yet from the Warner Brothers Discovery Board about whether the Paramount proposal is in fact superior.
It seems like it's still a story that we're going to be following closely. Paramount also offered modest revenue growth targets for 2026. What key drivers do you think will determine whether the company meets that outlook or exceeds that outlook or even surprise investors perhaps?
I mean, so the organic growth outlook is about, yes, they're trying to do their best. Remember, they did, this is also a merged company, Paramount. They just recently acquired Skydance. So they're trying to do the best with, those new film assets. But again, if you just kind of look at it across the board, in the context of the entire media landscape, it's still a very, very subscale company. Whether we're looking at streaming numbers, about 80 million subscribers versus almost 330 million for Netflix, or whether you're looking at the film business or even the TV business, everything is fairly subscale. So they definitely need some kind of an M&A strategy. Obviously, Warner would be perfect if it happens. If it doesn't, we'll have to wait and watch. But, they're doing their best that they can from an organic growth perspective. I just don't think it's going to be enough.
Do you think Netflix will walk away? That would be pretty bold.
They should, collect. They should collect the to almost $3 billion in termination fee. I mean, this is really. I mean, you think about this, Paul, in the long term. Yes, it's a great asset to have. There's no doubt about it. But it also comes with a tremendous amount of risk. Not to mention the biggest one being regulatory. So that's going to be a big overhang, for the next 12 to 18 months. And then, of course, after that, you have integration, execution risks. So it's by no means is it going to be a rosy path ahead. I actually think Netflix will be better off on its own.
Very good. I think I might be in your camp too. Geetha Ranganathan, media analyst for Bloomberg Intelligence, calling us from Princeton, New Jersey. J.M. Smucker & Company. I think about jellies and jams and that kind of stuff. Stock's up 6% today. It's up 15% year to date. It's got a market cap of $12 billion. They reported some numbers here. We want to break it down. We can do that with Diana Rota-Sarapena, Bloomberg Intelligence consumer staples analyst. What's new at J.M. Smuckers?
Well, it seems things are stabilizing and the stock is responding to that. But there's an activist investor in the works with Elliott. It doesn't seem that there is a significant campaign, but there seems to be some productive discussions according to management.
So this is a surprise this Thursday morning, and the investor said it was one of Smucker's largest investors. It didn't disclose the size of the stake. How are we viewing this development? Is it good news, bad news?
So in the past couple of years, basically for activist investors, we haven't seen anything for packaged food since the pandemic.
Oh, wow.
So this is probably going to be the start of a new wave of activist investors for the sector. And the reason for that is obviously volume hasn't reached out growth yet across the different companies that we cover, and I think there's a lot of urgency in terms of that. So particularly for Smucker, everything seems to be in the works. It seems fiscal 2026 is going to be a work through year, and then there's going to be better catalysts coming into 2026, 2027. But I think Hostess is still a significant drag on the company.
Hostess?
Yes.
Really? I love the ho-hos and ring-dings and
you might have to eat some more
because they're like. Through 8th grade, that was a staple in my lunchbox.
I've never tried that.
Ho-hos, ding-dongs. Exactly. Look at him. He's like, how's it going?
Maybe when you tour me in Jersey, you can also have that in my goodie bag.
What's wrong with Hostess? What's going on there?
Well, so it seems that category growth is not where they want it to be. They thought that they were entering a category that was growing at a 4% CAGR, and now they have reduced it to 2%. So obviously the growth doesn't seem to be materializing. They they also took close to $1 billion of impairment charges in 3Q. Last year, fiscal 2025, they had 1.7 billion. They bought this company at 5.5 billion in 2023. So, yeah. So if there's anything with the activist investor, this might be the part that they might be focusing on.
And to cut costs, Smucker said that they're trimming the number of individual products it has by 25%. Is that because they have too many now and they want to consolidate their lineup?
Yes, exactly. They want to be very strategic about the products that they have out there. They mentioned things at CAGNY last week in terms of making more permissible indulgence. And I have been covering the sector long enough to know that this is like
permissible indulgence.
Yes, exactly. So now instead of like a whole cupcake, you can eat like 3 mini cupcakes, and it's the same calories, but
it will be equal to 1 cupcake.
Yes.
Oh, but you feel like you're eating more.
Exactly. They're giving you less product, but they're convincing you that it's for your own good.
Oh,
I love these companies.
Just go for 3 full-size cupcakes like Paul and I.
Exactly. That's how we roll. I mean, again, bologna and cheese sandwich, potato chips, and like a ring ding. That was my lunch for 8 years at Blessed Sacrament School.
And a cupcake.
And chocolate milk. So there you go. James Smucker went public in 1959, listed on the New York Stock Exchange in 1965. Just a cool name that's been around forever. What do these companies do? Is it a GDP growth business and you just try to manage the costs as best you can? Is that the story for these companies?
Yes, and I think there's a lot of significant way on capital allocation. For example, in case of Smucker, they stopped share repurchases for the time being. They're focusing on debt, and there's pretty much implied during the call that it's probably share repurchases are going to come back in fiscal 2027.
And are you expecting them to have a good year or a good next few months, especially with this potential activist investor taking over underway?
I think they're going to be more aggressive in terms of the things that they're going to do. Coffee prices have stabilized. They are not taking another price increase. So they expect next year's coffee crop to actually be positive in terms of lowering costs. And that is going to make them probably more aggressive in terms of closing the pricing gap with private label. And that is, including with this, activist investor, I think they're going to be more aggressive in terms of that.
And there still is the president and CEO, Mark T. Smucker. So the family's still fully engaged there, which is very cool. Dan Orsetto-Pena, thank you so much for joining us. J.M. Smucker, it's a name you don't talk about a whole lot, but it's still there. They're still out there cranking out those quality products for people out there.
I love the peanut butter with the jam in between. So, in one scoop, you have both.
Oh, okay. That's how you roll? Very good.
Yes.
That's pretty solid. You can stick around here.
I didn't know there was such a thing. I'll have to look into that.
I hope I'm not making it up, but that's it's seared in my memory.
So there you go. James Smucker. S&P down 43 points off the lows here. Coming back. We had the Dow actually up here 59 points. We got the NASDAQ still off 1.3%, still taking it on the chin there. So we'll keep an eye on the tech stocks. They can't seem to get that bid yet. 10-year Treasury yield 4.02%. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash, and we're brought to you by Golden Crest Metals. Inflation, tariffs, volatility have some investors turning to gold for stability. To get a free gold and silver information guide and learn how to add metals to your IRA or 401k tax and penalty free, go to goldencrestmetals.com/guide. That's goldencrestmetals.com/guide. Right now, the major stock average is mixed. So NVIDIA delivered that really strong result, but investors wanted more. Worst performer in the Dow right now are also fears of an AI bubble. Now, Salesforce had the so-so growth forecast. They're the poster child of Wall Street worries over AI disruption, but the shares right now are up. Salesforce up 2.8%, NVIDIA down 4.2%. eBay cutting about 800 jobs, 6% of its full-time employees. Those shares right now 4.2% higher. And IMAX shares rising 11%. The large screen theater company reporting fourth quarter results beating expectations. And a good neighbor, State Farm, is going to pay a $5 billion cash dividend to the auto insurance customers. They posted strong underwriting profits. So it works out to, I mean, $100 per vehicle.
I got a bunch of vehicles on my State Farm thing.
There you go. You're buying lunch. Yeah. The largest dividend in the company's 103-year history. It's a mutual. It doesn't trade publicly. Right. It's mutual. Anyway, S&P 500, 42 points lower. The Dow up 50. The NASDAQ 100 down 319 points. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Isabel and Paul.
John, for those of us who patronize Penn Station every day, the renovated part of Penn Station, they have some new restaurants in there, including Shake Shack.
Oh.
That explains a lot.
The mushroom burger is yummy.
Yep. I mean, I'm just pointing out the part they did renovate, which is like maybe 20% or 30%, very nice. It's just the rest of it that I use.
You're one of those guys who actually hangs out in Penn Station as a destination.
Sometimes you find yourself there at odd hours and you're a little hungry. But anyway, Shake Shack put up some good numbers here today. Stock's up 10% here today. Michael Halen joins us here, Senior Restaurant and Food Service Analyst for Bloomberg Intelligence. Michael, talk to us about Shake Shack and the numbers they report. It looks pretty solid there.
Yeah, it was a great call all around. The results were a little bit mixed in terms of the fourth quarter, heavily impacted by weather, which was no surprise. I think what investors are really hanging on to is how well they did in January. I know, despite all of the weather, the cold weather and the snow that we got in January, and the heavy Northeast presence, they were able to put up a 4.3% same-store sales comp in January. They said that included 400 basis points of headwind from the weather. So a great number, and guidance here is pretty solid here for 2026, better than the street had expected. Several metrics, and this is a company that historically has guided very conservatively.
How does Shake Shack compare to its peers?
In terms of same-store sales, we've seen some pretty good numbers year to date, right? Like restaurant customers are kind of shaking off this weather and still making it to restaurants, ordering delivery. We had written about that late last year that we thought, spending would be boosted by some of the tax reform. We're going to see cheaper gasoline prices, which are kind of reversing here a little bit, but still solidly below last year's levels. And that's what we're seeing. There is a spread between the winners and losers that still exists in the restaurant space. But man, we're seeing some companies like Chili's and Texas Roadhouse and Shake Shack put up really, really strong results to start the year.
Hey, Mike, how about on the cost side of the equation, beef and, I don't know, other stuff, labor? What's the cost situation look like at Shake Shack?
Yeah, so that's another reason why this stock is up today. There's been a lot of concern about beef inflation, rightfully so. The management team's looking for high single-digit beef inflation in 2026. But they're, wringing out efficiencies in the supply chain And because of that, they're only expecting a low single-digit increase in inflation. In fact, they mentioned that this company is finally going to be able to achieve leverage on its G&A spending in 2027, despite the high, beef costs. They're expecting restaurant-level margin expansion this year, right? So a lot of good things came out of this call today.
All right, good stuff. We heard about the high beef costs, and apparently they can't just make more cows. It's more complex than that. So, but Michael Halen, thanks for bringing it up. Senior restaurant and food service analyst for Bloomberg Intelligence. He's based down there in Princeton. Never getting him out of there. Let's get back to these markets here. The S&P off 43 points, but the NASDAQ really gets your attention, down 285 points. That's 1.25%. So the sell-off still continues there. Ari Sass joins us here in studio. He's president and portfolio manager at MD Sass. Ari, it's great 2025 for equities, particularly if you're outside the U.S., but even inside the U.S. Good start, pretty good start to 2026. But there's definitely a rotation going on out there. How do you guys think about the U.S. equity markets right now?
Yeah, thanks for having me. Appreciate your time here. So look, I think, as you said, there's a real rotation going on. You had growth stocks that have done really, really well, and you're seeing a shift now more into value stocks. I think there's a few things going on. I think from a cyclical standpoint, it's certainly advantageous to more value-oriented sectors of the market. If you think about some of the things that happened last year that have implications for this year, such as OBBB, right? We have more tax refunds into consumers' wallets this year, over $100 billion, which is good for the consumer. You have tax incentives on capital equipment spending, and you're comping against very difficult periods within tariffs, right? And at the same time, you also had an industrial recession that seems to be turning. So all of those things are positive for value stocks. At the same time, you're having concerns about AI, which I'm sure we'll talk about, and that's leading to a real breather in a lot of sectors within growth. So I think that AI concern, coupled with some cyclical tailwinds, really explains that shift from growth to value, and we actually think that has legs.
When it comes to AI, are we moving from the AI infrastructure to AI applications, and which traditional industries do you see stand to gain from that?
So I think that's another great point, which is, and if you look at prior tech cycles, right, it starts with the infrastructure, but then it moves into the services and software piece, right? And I think we're moving into a period now where AI enablement will be really the next big investment opportunity. And a lot of that AI enablement will happen in sort of the physical goods economy, right? It's going to happen with logistics, right? It'll happen with human-intensive processes that could be automated. So we do think we're heading into this AI enablement period, which is also a boost, we think, to that sort of hard goods, physical world economy as well.
We've had value outperform growth for the first time in like forever, it seems like. Is that a short-term trade? Is that something that can play out the remainder of the year? How do you guys think about that?
Well, I think you have to find situations where earnings will be materially above consensus. That's what we do. Yep. So we don't invest broadly in value as an asset class, let's say.
You guys bottom up.
We're very bottoms up. Yep. We only own 20 to 25 stocks.
Are there certain sectors you like or factors you like? How do you pick those 20-25 names?
Well, since we're fairly concentrated in a number of names, we like to be diversified in our factor exposures. Okay. So we have allocations in various sectors. I think the beauty of owning 20 to 25 stocks is there's always something to do in each sector. We don't own the whole sector. So we are fairly well diversified amongst that concentrated portfolio.
The recent Citrina research scenario, which basically says massive unemployment and stock market declines, envisions at least a massive unemployment and stock market declines because of AI, has caused, obviously, volatility.
Yeah.
In your opinion, how should investors distinguish between scenario-based narratives and real economic risks when evaluating AI's impact on markets? Because it did get a lot of backlash, including from Citadel.
It did. Look, the challenge with long-term bear narratives is you can't disprove them in the short term, right? And so this was a long-term bear narrative, and we don't know whether it's right or wrong. Now, let's just apply some logic, though, to some of the points. And you mentioned the Citadel report, which I thought was a good one, and others have said, which is the compute needed to accomplish that dystopian end state is massively higher than what reality could suggest. In other words, we are constrained today by power and by wafers, semiconductors. That is a constraint on the growth of AI, right? The demand outpaces supply, and the reason is because we are power limited and wafer limited. So there's not a real world scenario where we can achieve that objective simply from the law of supply of watts and wafers. So we don't subscribe to that. I think it'll be a more gradual process. And I think throughout history, we've seen humans evolve with technology changes. Jobs will shift, political and regulatory reforms will happen that will support human labor capital. So we don't subscribe to that bearish view, but again, it's a long-term bear narrative and we can't say it's wrong today. So time will tell.
You guys are 20 to 25 names, bottoms up. Talk to us about the insurance brokerage Aon. What's the story there? Why do you own it? That's a business that is, I find it tough to understand. How do you guys think about it?
Sure. Well, historically, it's been a very good business. It's levered to risk capital, and risks grow with time, and new risks form. Like cybersecurity, for example, wasn't a true risk until, let's say, the last decade. And we're going to have new risk factors growing. For example, with data centers, that will require insurance. So I think if you look over the long term, it's been a nice growth business. The reason why the stocks have underperformed, one, there's the AI fear in insurance brokerage, which we're not buying into for commercial insurance, P&C insurance. We just don't buy into that. And two, we think Aon will be an AI enabler, not AI disrupted. And three, I think there's been some weakness generally in P&C insurance pricing, but that's, we think, cyclical, which I think creates the opportunity with Aon trading at a fairly depressed multiple. So we like that story. They're growing strongly organically, even in a depressed pricing environment. We think that'll accelerate as that normalizes.
How do you incorporate AI-related macro risks when it comes to modeling your portfolio? You only have 25 stocks, more or less, which is very concentrated. Are you watching any assumptions closely? Do you have doomsday scenarios in your own team?
I mean, AI is part of most conversations we're having, right? Because even if you're not in the business of AI, it will impact your business, no doubt, just like the internet did, right? And arguably, this is a way more powerful force. So AI is a part of every conversation. And when we think about risk reward, we're looking for companies where we think AI enablement will be positive optionality to the business. Of course, we do model downside as well, but we think we're on the right side of AI enablement with our companies.
Yep, absolutely. Ari, thank you so much for joining us. Ari Sass, President and Portfolio Manager, MD Sass, based here in New York. Hey, folks, catch our new show, Bloomberg This Weekend. David Gura, Christina Ruffini, and Lisa Matteo bring you unique conversations and in-depth interviews on news, politics, lifestyles, and culture. Watch and listen on Bloomberg TV, Bloomberg Radio, and the Bloomberg Business app Saturday and Sundays, starting at 7 a.m. Eastern, starting this Saturday. They're bringing new content across all of the Bloomberg platforms. S&P off 44 points, the Dow flat, and the NASDAQ taking on the chin off 280 points. That's 1.2%. More coming up. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom, with this Bloomberg Business Flash. Shares of NVIDIA right now, they are down 4.25%. The chip stocks following them lower. The Philadelphia Stock Exchange Semiconductor Index, that's down right now 3%. And with this risk-off mood, for the most part, the markets say money's flowing into treasuries, and it's, of course, pushing the yields lower. You have the 10-year, the benchmark, 3 basis points lower, 4.02%. The twos down to 2 basis points. That's right now at 345. So it's information technology and communication services, the worst performing major industry groups in the S&P 500. Angelo Zeno at CFRA Research says with NVIDIA stock, this right now is all about the trajectory for him.
4 quarters from now, we expect them to hit a run rate, an annual run rate of about 200 billion or so, or exceed 200 billion. So the free cash flow potential alone is what we think drives the value.
Right now, the S&P 500, 54 points lower, down 0.8%, 68.91 on the index. The Dow, 71 points lower right now, down 0.2%. And the NASDAQ 100 down 344 points. This is a decline right now of 1.4%. Google is rolling out a new version of its popular AI image generation tool. It's meant to produce better visuals more quickly. 6 months after challenging OpenAI with the release of the original. This is Nano Banana 2 will make, I'm only doing this story because I want to say Nano Banana, will make features that were previously only available in the Pro version. So Nano Banana 2 is available starting today.
All right, good to know.
We checked. I used to call my grandmother Nana Banana. I think they stole the name
so
from me. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Isabel and Paul.
All right, John Tucker, thank you so much. We appreciate that. Isabel Lee sitting in for Scarlett Fu. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio in New York City, streaming live on YouTube, streaming live on Bloomberg.com. As John was just reporting, the big earnings story of the day is NVIDIA put out a really, really solid number, but being caught up in the downdraft, continued downdraft, selling of technology, in particular software, kind of AI-themed names, more specifically. Kunjan Sobhani, he is the senior analyst covering the semiconductor companies for Bloomberg Intelligence. He's based out in our San Francisco office. Kunjan, I'm just reading your research note here. Give us a sense of how you think the quarter went for NVIDIA.
Yeah, this was one of the more stronger quarter showings. If you look at the last 4 quarters, the 1Q guide, which is the next quarter guide, blew off most of the high bar of the buy side bogeys that we think the buy side was at. There was really nothing negative to find, even if we go through a fine comb in this quarter and print. There were a couple of positives that we really liked. One is the revenues from their customers outside of the top 5 CSP and hyperscales grew actually faster than those 5 customers. When we look at the whole last fiscal year, that group grew almost close to the top 5. So all the focus always goes to the top 5, but this really speaks to the breadth and the quality and the diversification of demand for NVIDIA products, which is a good, robust sign. Second thing we really liked is networking. So if we look at the 4Q numbers, majority of the beat in data center was coming from networking. Their networking attach continues to get stronger and honestly surpassing expectations of what investors have for their networking division. And the final thing we really liked was the gross margins. We all are aware of the rising memory cost, the rising wafer, the rising substrate cost. Despite all of these costs, which the company does not pass through to its customers, so sort of in a way eats that cost, they're able to maintain this ridiculously high software level gross margins for a hardware company.
What about growth in other segments like automotive or edge computing? How important are those when it comes to the company's long-term earnings profile?
I don't think right now anyone's focused on those. When you look at the scale, I mean, majority of the revenue is coming from the data center, right? So they don't really move a needle a lot. Automotive, however, will become very critical when you think about the next 3 to 5 years, because once we get to the stage where we have a massive deployment of L3 plus, L4 plus automobiles on the road, not just in the US but also in China, this is where this could bring in tens of billions of dollars of revenue for NVIDIA.
So how should we think about China here? Because I can't keep track. I don't know what chips allowed in, not allowed in, how long it will be allowed in. Is the company just saying, we're just going to step back until we get greater clarity?
Yeah, and that's not just with NVIDIA, it's with all AI chip makers right now. I mean, for the last, I guess, 2 to 3 quarters, nobody's been able to ship to China, right? So there's 2 factors. US allowing them to ship to China, and then also once that happens, will China accept these chips or not? So until that issue is completely resolved, the street has taken out numbers, companies have taken out those numbers. They're just not talking and, not thinking about that right now.
So it's been a blowout quarter. Any risk that investors should be watching that might affect growth and margins in the next quarters?
Nothing specific to the company. What has really been hampering the sentiment is this overall AI fatigue. I mean, look, on one hand, the top customers who are announcing these big capex raises are getting punished because they're spending too much, right? So you can't have it both ways, where the same investors who don't like this spending too much from the customers, NVIDIA is getting rewarded because of high capex spend, will also keep on getting rewarded. So there is this AI fatigue that how long can you keep on increasing this spend and what happens next year? Every year when these numbers go up, the question comes about, well, can you keep making them go up again next year or not?
I'm looking at the chip stocks, Kunjan. Your list is looking really good here. Advanced Micro Devices and Intel both up 90%, NVIDIA up 40% over all on a trailing 12-month basis. Are tech investors, software investors, are they hiding out in your chip names?
Well, chip names definitely are doing better from a sector perspective overall in the tech, and for the obvious reasons. When you now look at the EPS growth prospects, the revenue growth prospects, right? A significant big portion of now that in the next 2 to 3 years is definitely coming to the chip name. So fundamentally, a good spot to be in, I would say.
What's the next play here for the chip space here? Is it simply iterating on new chips, and that drives the longer-term revenue outlook?
Yeah, exactly what you said. Like when we think about the markets where AI has already proliferated, which is really data centers, is just keeping up, iterating to make the compute more efficient, so we can reach the stage where all this AI capex spending is no longer a concern because the customers are able to monetize from that. The second big wave will come from markets where AI has not yet proliferated. So think of your edge device, your smartphones, your PCs, think of your automotive vehicles, right? So this will be the new vectors of secular growth for the chip names, where if AI proliferates faster here, they can start collecting a lot more revenue.
So just very quickly, how confident are you that this demand will remain strong throughout 2026 and beyond?
So from the visibility that the NVIDIA and its peers have announced, it definitely looks like, for the chip guys at least, until first half 2027 is sort of locked in and pretty safe, unless something major macro or geopolitical event doesn't happen. Beyond, starting second half 27, we don't have a lot of risk modeled in, but that is something we cannot say but for sure that it's locked in already.
Kunjan, thanks so much. Appreciate it. Kunjan Zabani, Senior Analyst Semiconductors for Bloomberg Intelligence. Darkening the door. One Matthew Miller, what is on your mind personally?
Well, there are a few things, and I just personally,
a minute and 14 seconds.
I just wanted to talk to you about my cruise experience last week on Disney Cruises.
Okay.
Because like you, I was a skeptic.
Okay.
And it was amazing.
Was it?
Amazing.
Because you have kids, or just amazing?
I mean, I have kids, but even as an entertaining thing to do, it was far better than I expected. The other thing I want to do is to promo my show. I'm going to anchor the 12 noon show. Okay. And Isabel Lee is going to join me.
Oh, nice.
And we have a fantastic show set up.
Right.
We've got the CEO of IonQ, that stock moving today. We got the CEO of Celsius, and Christina Ruffini is going to join us to talk about her weekend show.
Perfect. So you guys are all set to go at noon.
Yeah, looking forward to it.
Great stuff. So you're a cruiser now?
I'm a cruiser. I'm like already applying for my next cruise.
I've never been on one.
Wow.
I don't want to be a Titanic.
It turns out to be a lot of fun, and Titanic would be an amazing way to go.
You're going to go. That'd be a good way
dramatic.
To go. All right, folks, there you go. Matt Miller giving a thumbs up on the cruising business. I mean, we know Charlie Pellet's a cruiser. I'm doing my first cruise ever in October, France. cruising around there on the riverboat type of thing, I guess. I don't know. S&P off 57 points. This is Bloomberg Morning.
You're listening to Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, this is the Bloomberg Intelligence program. Paul Sweeney live here in our Bloomberg Interactive Broker studio, streaming live on YouTube and streaming live at Bloomberg.com/video. And that's where you'll find us here. We got a new program coming on the Bloomberg platform this weekend. Bloomberg This Weekend with David Gura, Christina Ruffini, and Lisa Mateo. It debuts this Saturday at 7 a.m. Eastern Time. You can catch it Saturdays and Sundays, both at 7 a.m. So we got some live programming on the Bloomberg platform. Christina Ruffini joins us here. She's a foreign affairs journalist and host of Bloomberg This Weekend. Christina, talk to us about the show. What are you guys trying to do? Because we haven't had live programming, I don't believe, at least in my tenure here, on the weekends on a consistent basis.
No, I mean, my understanding is none of the business networks do at the moment, and Bloomberg is the first to do this. Also, I'm so new here, I'm still wearing my ID
it's all right.
badge
It's
like
all
a
good.
dork.
We have to wear it every day.
Listen, it's not the kind of climate where you can just shut off on the weekends, and I think we're increasingly learning that people may not want the same rate and the same level of news consumption, but they do want to stay informed. So that's what we're trying to do. On Saturdays, we're going to step back. We're going to talk to you a little bit about what happened during the week. We're going to highlight some of the amazing Bloomberg reporting you may not have time to get to because you were busy in the terminal doing terminal things. And then on Sundays, we're going to do an hour. We're going to dedicate to politics. We're also going to do some long form thing. We're going to have authors. We're going to have actors. We're going to have directors. We're going to have musicians. All the things that you want to do on your weekend, we're going to talk about, but we're going to talk about in a smart Bloomberg-y kind of way.
Exactly. You know, one of the things that we learned here in Bloomberg Radio TV, just the content side of the business, we have 3,000 reporters and Bloomberg Intelligence analysts and BNEF analysts, some of the smartest people around on their respective fields. You can tap into those people as well.
And much to the chagrin of our hair and makeup department, we have booked tons of them for this weekend. Yes, we have, I think, a dozen people coming in on Saturdays.
Okay.
Because to that point, there are so many people here who are doing such amazing articles and deep dives, and there's this weekend print product as well that is just really, I think, interesting is the buzzword. Like every time I click, I'm just like, well, that's cool, that's cool. And we want a place to kind of pull that out and talk to folks and add in some video elements. But you know what? If you don't want to tune on your TV, we are also an audio show. We're also streaming on Bloomberg and on YouTube, and then we're on your television. So we are everywhere you might want to be on your weekend, and you can take us with us as you go out the door.
And I'll tell you, with what we learned with President Trump 1.0 is 24/7 news cycle. And so for those folks in the news business, it's never off. And there's no such thing putting a lid on it at this White House. So my guess is you're going to have breaking news during your shows over the weekend, whether it's from the White House or geopolitical front. There's so many hotspots going on out there.
I mean, that's the thing. Look, we've got a huge military presence outside Iran right now. Negotiators have stepped away from those negotiations in Geneva. Last I checked, they hadn't gone back to the hotel yet. Unsure what the status of that is going to be. That's in a holding pattern. Folks I've talked to in the Middle East are nervous that something could happen sooner rather than later. But to your point, this is an administration that doesn't do 9 to 5. I covered the first Trump administration. It was a marathon, not a sprint, and we want to make sure that we're staying on top of it, and we're resourced to do that here on the weekends. So if your first instinct is what's going on, turn us on. We'll be here.
With your foreign affairs experience, this situation in Iran is really unique because we don't typically, the U.S., mass that type of firepower and kind of not do anything. So is the expectation still that something is likely to happen from a military perspective?
It depends on who you talk to. Sources I spoke to, these are non-American regional diplomats, after the first round of negotiations were a little more optimistic that maybe cooler heads would prevail. But look, if you think about the first Iran nuclear deal, the JCPOA, that took months and months of negotiations in Geneva. The odds that Iran could turn around and in 10 days come up with a plan that would be acceptable to the Ayatollah and to President Trump and get it signed before all those military guys feel like they want to take action at the behest of President Trump, I think the odds are slimming as we get further and further down.
Is it this a simple case of, well, not a simple case, but a straightforward case of the Ayatollah and President Trump really communicating directly to get something done? Does that even occur?
No, and even in these talks in Geneva, we talk a big game, they're in negotiations. They are not in the same room. The Omanis are going between rooms. So it's a very complicated process. They're not sitting across the table. They're not talking directly. They're almost passing notes, essentially. They're going, well, this is our deal, and then the Omanis take it, and they give it to the Iranians, who then take it and give it back. So it's a complicated process, and they're not on the same page. The Iranian foreign minister said he was optimistic earlier in this week that they could make progress, but I think it's a really, really tall order.
And we don't even really know what the U.S. ask is. I mean, is it?
That's the other problem with
what
this.
Is the strategy?
It has evolved over time as to what the threat of strikes is, right? It started because President Trump said he was watching those protests in Iran and the brutal crackdown, and he said if the government didn't stop, he was going to take action. That then morphed into, if Iran doesn't come to the table on a nuclear deal, I'm going to take action. That's the other thing that's a bit confusing about this. What exactly they ask is what they will allow Iran to keep as far as a peaceful nuclear program, and whether Iran's ballistic missiles need to be in this deal or it's not a deal at all.
All right, well, you and the team will have it covered this weekend for sure. Christina Ruffini, foreign affairs journalist and host of Bloomberg This Weekend. And again, catch that new show, Bloomberg This Weekend. David Gurr, Christina Ruffini, and Lisa Mateo bringing you unique conversations and in-depth interviews on news, politics, lifestyle, and culture. Watch and listen on Bloomberg TV, Bloomberg Radio, and the Bloomberg Business app, Saturdays and Sundays, starting at 7 a.m. Eastern Time. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. Your top stories and global business headlines are coming up in just a moment. As we look at the stock market here, the tape is still red. We're at or near session lows. The S&P's off 67 points. Let's call that 1%. The Dow's off 140 points. That's 0.3%. But the real action, yet again, is in the tech-heavy NASDAQ, down 395 points. That's 1.7% decline. The VIX blows out to just about 20. Yields coming in slightly. 10-year Treasury yield is in 3 basis points, 4.02. But the real action is in these technology names. Again, AI as a risk to some of the technology stuff. We'll have more coming up. This is
CBS News on the Hour, your home for original reporting.
I'm Peter King. Hillary Clinton has been talking to the House Oversight Committee about the late convicted sex offender Jeffrey Epstein, not in Washington, but near her home outside New York. And in her opening statement posted to social media, she says she had no idea of Epstein's criminal activities and doesn't recall ever meeting him. CBS's Nicole Killian is in Chappaqua.
The Clintons had called for a public hearing, but Oversight Chair James Comer said they must appear for their depositions first before he considers a public hearing, and that's in part because they didn't show up for depositions last month on Capitol Hill, prompting the committee to hold them in contempt of Congress. Ultimately, that didn't make it to the full House for a vote.
Committee members will question former President Clinton tomorrow. Secretary of State Marco Rubio says the U.S. is not rushing to judgment after the deadly confrontation between Cuban border guards and boaters from Florida who came too close to the coast for comfort. CBS's Nancy Cordes.
When Cuban border guard troops approached the vessel to ask for identification, Cuban authorities say men who were on board the boat opened fire, injuring a Cuban commander. Cuban officials say the troops shot back, killing 4 people aboard the boat, and then arrested the other 6.
The U.S. and Iran are talking again, with the president's son-in-law Jared Kushner and Middle East envoy Steve Witkoff heading the U.S. team. CBS's Aaron Navarro.
The Trump administration has made clear this week that while their military presence builds up, while military options remain on the table regarding Iran, diplomacy is President Trump's preferred route. Secretary Rubio told reporters last night, though, that the administration is getting a bit frustrated with Iran's ballistic missiles not being a part of the negotiations yet.
Instagram says it will now offer alerts to parents if their kids search repeatedly for information about suicide or self-harm. CBS News tech contributor Ian Scher.
Though hopefully not very many people will actually need this feature, the fact that Meta has gone through the effort of creating this feature shows that there is a need for it, and hopefully that it can make a difference in at least saving some lives.
More than 4 million Ford and Lincoln vehicles are being recalled because of an issue involving trailers. More from Detroit, WWJ's Jeff Gilbert.
A software problem can prevent the trailer brakes and lights from working on a number of 2021 through 26 model year Ford and Lincoln pickups and SUVs. No injuries or crashes have been reported. Ford says it's identified the problem, which will be fixed by updating the vehicle software.
Wall Street, the Dow is down 164. The NASDAQ has lost 380. This is CBS News. A rock star welcome for an Olympic hockey hero.
More accolades for the guy who scored the overtime goal in Team USA Hockey's gold-winning game at the Winter Olympics.
Devils fans, let's hear it for number 86, Shaq
A day after President Trump gave the men ups during his State of the Union address, Hughes got a hero's welcome on the ice in New Jersey.
From the bottom of my heart,
all my teammates, USA teammates, we just want to thank you guys for all the love and the support. We feel it. Thank you.
The Devils drafted Hughes as their first overall pick in 2019, and yep, he still got missing teeth to show for that performance in Milan. Deborah Rodriguez, CBS News.
Orlando's gay days are back on after sponsors and the host hotel originally dropped out of the 5-day fest. Organizers say they've got a new host and will hold most of its events there, although attendees are expected to go to area attractions, as has been their tradition. Peter King, CBS News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
Iran hardens its nuclear sites ahead of possible strikes by the U.S. Welcome to the Thursday edition with new satellite imagery showing activity on the ground in Iran, hardening sites, and displaying to the Pentagon that it would confront a more formidable adversary than many have thought. We're going to get the latest on this with another round of talks underway today in Oman with Becca Wasser at Bloomberg Economics. Mike Shepard will join us a bit later as the Pentagon gives Anthropic its best and final offer for military use of its AI. And as Republicans run their first ad now from this week's State of the Union address, we'll cover midterm politics with our political panel. And it's all after a look at Wall Street. Charlie Pellet standing by at World Headquarters in New York with the latest on the Thursday trade. It's not looking great here, Charlie. Day after NVIDIA. What do you have?
And let us begin there because we got NVIDIA shares tumbling 4.4%. Joe Matthew, the Dow, the S&P, NASDAQ all following suit. A rout in chip makers weighing on stocks. NVIDIA's numbers failing to inspire investors seeking reassurances about the AI outlook. Again, NVIDIA down 4.4%. S&P keeping it all in context. The 500 index down now by 0.9%. Dow Industrials down 177 on the Dow, drop there of 0.4%, while the NASDAQ Composite Index is down 360. NASDAQ lower by 1.6%. The NASDAQ 100 Index down 1.5%, and the Bloomberg Max 7 Index down now by 1.7%. The 10-year 4.02%, with the 2-year yielding 3.45%. Gold is up $19 the ounce, 51.84 now, at higher by 0.4%. And West Texas Intermediate crude now advancing 1.6%, 66.45 the barrel, as traders keep an eye on any and all developments out of the Middle East. Our next jobs report is a week from tomorrow. Today we got jobless claims. Applications for unemployment benefits rose by less than expected last week, indicating that layoffs remain relatively low. Claims up by 4,000, a period that did include the President's Day holiday. Neela Richardson is chief economist at ADP.
It's a labor market defined more by its inactivity than its vigor. We're seeing the job openings come predominantly from one sector, namely healthcare. And so while it's a super stable market, it's one that seems to be very fragile because all the gains are lopsided.
ADP's Neela Richardson interviewed this morning on surveillance. NVIDIA again lower after last night's earnings report, down now by 4.3% last night. We also heard from Salesforce.com out of San Francisco. Salesforce shares, they're gaining now by 2.2%. And Hertz Global Holdings this morning reported a fourth quarter loss that was worse than expected. This because of the government shutdown. Hertz shares down 1.8%. Briefly, the 30-year mortgage rate falling below 6% for the first time since 2022. Perhaps political implications there. I'm Charlie Pellet, Joe Matthew. That is a Bloomberg Business Flash.
Hi, Charlie. I appreciate that. This NVIDIA thing is kind of cracking me up. A 94% increase in profit. If you saw that in some tiny biotech, the stock would be up 100%, right? In this case, the biggest company in the world. So it's kind of actually more remarkable, and we can't sell it fast enough. Beat and raise, life-changing quarter, 94%. I mean, wow. The numbers just jump off the page. $68 billion in sales, up 73%. Company's going nowhere. Sell it. Although it's interesting, having heard Jensen Huang talking about the software stocks earlier today, it's a strange world we're in. We're dumping the chips. Broadcom is south by 6% right now, but Salesforce is on the rise. Cyber's rising. I don't know. It's a fun market. We'll keep tabs with Charlie and have more in about 15 minutes' time. in his view, from Wall Street. Markets want to know what's going to happen in Iran. We've been looking at oil prices as kind of a proxy there, and WTI is up another almost 2% today, more than 1.5% to approach, once again, $67 a barrel. Not that we have any clue of what's going to happen. There are talks underway today. I said in Oman, and when I say that, I mean that very technically. It's actually at the Omanian embassy in Geneva. It's another day of shuttle diplomacy in Geneva. You do one romp with Iran, you do another one with Ukraine, cross town. That's the life of Steve Witkoff and Jared Kushner. All the while, the Secretary of State is in the Caribbean right now. Not anything more than a coincidence with what's happening in Cuba. I believe it was St. Kitts. He was down there with Eric Martin from Bloomberg and answered questions about the talks underway today. Listen to what he said.
The negotiations tomorrow and the talks tomorrow will be largely focused on the nuclear program, and we hope progress can be made, because that's the president's preference, to make progress on the diplomatic front. But it's also important to remember that Iran refuses to talk about the ballistic missiles.
And that's where we start running into trouble. I mean, the nuclear thing was already a problem, of course, but there had been talk about maybe allowing Tehran to have a very low level of enrichment that's allowed for medical research, for, I guess, for domestic energy purposes. But ballistic missiles, well, wait a minute. That starts to complicate things. And as we learn now that we just dropped, what, a dozen F-22s in Israel, people are wondering what the heck is going on still, having not received much, if any, clarity in the State of the Union address. This is where Becca Wasser comes in, runs our defense team at Bloomberg Economics, and has had her eyes on some of the satellite imagery that is making news today. Iran is hardening sights, and they are preparing for what might be coming. It's great to see you. We were talking last week about maybe it would be this coming weekend. We still have no sense here, and there is a sort of going narrative that maybe he just wants to swing the big stick this time and not actually use it.
Well, if that's the case, it's a very expensive stick to be swinging. I mean, ultimately, if he doesn't end up using force, I do think then this looks like a very expensive bluff. And there's long-term costs from doing that, including readiness for potential future crises that the U.S. military might need to respond to. So all of that to say is, yes, maybe this has just been one massive pressure campaign to get Iran to capitulate to some of U.S. demands. But if that is the case, it's come at a tremendous financial and long-term readiness cost.
I'd love to know just what the daily rate is on gas, just what we're burning in gas alone. The F-22s arrived in Israel. That got a lot of attention. How come?
Well, because the U.S. usually doesn't have fighter aircraft in Israel. So this is a big deal in that respect. But the F-22s join so much other air power in the region. I mean, we've got tons of fighter jets and combat aircraft located in Jordan, nearby Israel. There's also some really interesting intelligence, surveillance, and reconnaissance assets positioned in Saudi Arabia. And then you also have aerial refuelers and, you know, heavy airlift in Qatar and other places. And that's just some of it. So the F-22s are really the icing on an already very large cake.
Sure, interesting. You talked about readiness. The second carrier group to arrive that we've been moving around the world from one hotspot to another is the USS Gerald Ford, biggest aircraft carrier in the world, but it needs a lot of work.
Yes.
Becca, you know about this. I believe it was due in Port Norfolk like 6 months ago for a rehab, and there are reports that they're having plumbing issues, that sailors are not living in good conditions. What do you know about that?
I mean, right now we are looking at an extended deployment for the Ford Carrier Strike Group, and I think it might even continue longer than folks have planned.
Wow. They've been at sea for 11 months, right? And what typically would be 6? Is that fair to say?
6 to 8.
Okay.
And 8 is even on the long side.
Wow.
So think about it. You've got sailors on board who haven't seen their families in 11 months. Right? So there's just a lot of morale issues going on, including some of their living conditions that you rightfully mentioned. But the Ford itself needs a ton of work. It's an older ship. It's aging. Think about it. You're out at sea. There's rust. There's various things that end up being corrosive. So at the end of the day, you're going to need to maintain your capability so you can use it, but you also need to maintain your people. They need to have the right morale and they need to have the right rest, or else you're going to run them ragged.
So then the question becomes how long, and I've asked you this before, can you maintain this crouched position financially with regard to personnel and morale? The president said 10 or 15 days. We're walking up on that would be what, early next week? Is today's round of talks pivotal in making that decision?
I think it's fairly crucial. I think President Trump wanted to wait to see if diplomacy could bear out. If, as you rightfully said, if by putting all of this massive military pressure on Iran, they would come and make the concessions that he wanted during negotiations. But if that doesn't happen, I think all bets are off, because the U.S. can't maintain this posture indefinitely. It can't have this much of the preponderance of military power in one region alone when the U.S. is supposed to be a global superpower.
Yeah, right.
So at the end of the day, it's sort of the clock is ticking. I think Trump has thought that the clock has been ticking on Iran, but the clock has also been ticking on him and his decision. So we need to see how the rest of negotiations pan out today. And then, you know, I think we'll see where things go. But I think we are coming up to a crucial decision point.
There are reports that the U.S. might want Israel to make the first move. Do you buy that? And what would that signify politically to the region?
I think there's a few things. If that were to be the case, the U.S. is looking for, you know, almost an excuse to sell to the American public as to why they became embroiled in this conflict.
So we're somehow backing Israel now.
We're backing Israel. They've made the first move. They've softened the targets. The U.S. needs to go in and finish the job. Very much akin to what happened last June. So I think that's really where it's coming from. But, you know, in terms of signaling anything to the region, I think that that would only heighten some of the tensions that already exist between some of the Arab states and Israel. And ultimately, I don't think it would make that much of a difference, because at the end of the day, if this were to be some type of campaign that actually has a lasting effect, you would need U.S. military might to be in support of any Israeli strikes, or both potentially to be operating together.
Becca, we have a really fascinating piece by Bloomberg News on the terminal today. It's got a green bee on it, and it's based on satellite imagery from inside Iran, suggesting, as I read, the Pentagon would confront an adversary focused on preserving its most crucial military and nuclear capabilities. Photos taken this month show Iranian engineers clearing debris at the nuclear facilities we damaged last June with the U.S. and Israel again, reinforcing key sites against future attack. In our remaining 30 seconds, what does that tell you about the resistance the U.S. would run into?
I think Iran is being smart. Iran is hardening its assets. It is trying to make it so that it becomes really complicated for U.S. or Israel to target some of these sites. It doesn't mean that it's impossible, but it does mean that it's complicated, and likely if some of these sites are reinforced, which, to be frank, we don't know exactly what exists under some of these reinforcements. We don't know what they've rebuilt. That means that there will need to be a lot of munitions expended.
Wow, incredible stuff. She used to play war games for the Department of Defense, for Rand Corporation, now with us here at Bloomberg Economics, to be specific. Becca Wasser, you're so good at this, and we appreciate your walking us through it, as always. I'm Joe Matthew in Washington. We'll turn our attention to Anthropic at the Pentagon next, here on Bloomberg.
12:21 on Wall Street. We do check markets all day long here at Bloomberg. I'm Charlie Pellet. Chip stocks getting hit today as NVIDIA tumbles. NVIDIA after earnings down now by 4.3%. The Dow, the S&P, NASDAQ 100 index, and the Bloomberg Mag 7 index all in the red. We begin with the S&P down 66 now at 68.79. Drop there of 1%. Dow Industrials down 163, down 0.3%. While the NASDAQ Composite Index hard hit down 1.7% now, down 382 points. Our Mag 7 index, of which NVIDIA is a part, down by 1.8%. Again, NVIDIA after earnings bears repeating, down 4.2%. The 10-year 4.02%, with the 2-year 3.45%. Gold up $16 the ounce, now at $51.80, up 0.3%. West Texas Intermediate crude up 1.6%, $66.50, as traders keep an eye on developments out of the Middle East. We do have Bitcoin down 3% now, 66,864 on a Bitcoin. Ford is going to be recalling nearly 4.4 million vehicles, including some of its top-selling F-Series pickup and popular SUVs. In a setback for the company's push to improve quality, Ford shares higher, little change, but up now by 0.1%. The New York Mayor Zoran Mamdani and President Trump all set to meet today in Washington. That according to the New York Times, which says there's no word on topics to be discussed. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie, we do thank you. Keep NVIDIA in mind, because I need to ask Shep about this Madhouse reaction today. Thanks for being with us. It's the Thursday edition of Balance of Power. You made it to Little Friday. I'm glad you're here on Bloomberg Radio. We're streaming live, as always, on YouTube. Search Bloomberg Business News Live, unless that's already part of your routine. It's nice to meet you here again. We'll welcome our global television audience to the conversation coming up at about 1 p.m. Eastern Time. With our eyes on the other side of the Potomac, we're looking at the Pentagon here in the first half of this hour. We just talked to Becca about Iran. This is a whole different matter involving Anthropic. It's a story that we introduced to you earlier this week in a conversation with Gregory Allen at the Center for Strategic and International Studies. Gregory Allen, boy, is the salve that makes social media work. I think more than 400,000 of you have watched this conversation on YouTube alone. You start adding TikTok and the rest, and this guy is helping to keep the lights on around here. Listen to Gregory Allen on guardrails that Anthropic wants to see on its AI technology. So it will not include mass surveillance or human-free weapons, autonomous, think the Terminator. Of course, the top brass, well, I guess beginning with Pete Hegseth, don't want Anthropic to be making those decisions. They want to be able to use this technology for whatever they can. Now the best and final offers reportedly gone out. And Bloomberg's done a lot of reporting on this. Here's the aforementioned Gregory Allen, his take from CSIS, knowing that he worked on the AI program at the Pentagon just a couple of years ago. Listen.
I'm sympathetic to the DoD in saying it needs flexibility in these contract terms. What I think is an unreasonable escalation is threatening to designate Anthropic as a supply chain risk. That's what we do when we find out companies are secretly have Chinese or Russian ownership. Yeah. To take a domestic AI champion at a time when the White House is saying that the AI race with China is equivalent to the space race during the Cold War with the Soviet Union, you do not want to take one of the crown jewels of your industry and light it on fire over something like this.
But that might be about to happen, with reports now that the Pentagon's gone out to the old line defense contractors and even some of the new ones to find out how integrated their systems are with Anthropic. How difficult would it be to cut the cord and potentially run this company into the ground if, in fact, they were deemed a supply chain risk? This is what's on the line here. We're talking about a company that was going to be one of the biggest IPOs in the world this year. Hold your breath. Mike Shepard's been reporting on this for days and helped to craft this beautiful big take that we have on the story today. Anthropic's Pentagon Showdown is about more than AI guardrails. Mike, it's great to see you as always. We're going to get an up or down. The secretary says by Friday. That's the ultimatum. Is this not looking good for Anthropic?
It's unclear. We're getting no signal, though, that the company is ready to yield to the Pentagon's demands, that it relinquish as part of its usage policy those two conditions that you just mentioned, no mass surveillance and no fully autonomous weaponry. Now, the catch is in this conversation is the two sides are maybe an element of them talking past each other. The Pentagon has said that, look, we just want lawful use of this. And lawful use, of course, precludes mass surveillance of Americans domestically and fully autonomous weapons. They insist that a human will always be involved. But Anthropic has really stood by those two conditions as its red line. And it will be interesting to see how, if at all, they try to come to some sort of final compromise based on that final offer.
Do we have any sense, if you call Boeing and Lockheed after they do their internal review, what their answers would be, how deeply integrated Anthropic is in these defense companies, knowing that their technology was used in the capture of Maduro in Venezuela?
Well, it's a great question, because does it spread? I mean, when you think about the impact of this, how wide is the blast radius of this move? So in other words, if Boeing and Lockheed are using it, say, in human resources or in their financial accounting, and we have heard so much about the way Claude plugins can be used across business uses. What does it mean for that? Let's say we're not even talking about, say, a classified use of this technology by a Boeing or a Lockheed or even a Raytheon or other old line defense contractor. What does it mean for that? Does that mean they have to disconnect that? And what is the business? What are the business implications then for Anthropic there? And Greg Allen, in other parts of his conversation, which was an excellent interview, and I recommend the nearly million people, kudos to them for listening. But if you hadn't, it really was a great, enlightening conversation. That was one of his key points, that this could really spill far beyond just this dispute over the government contract.
Right, when we're trying to get this industry off the ground, at least by the view of the administration. Just like that, I'm guessing Sean Parnell is listening to us again, Mike. He just went up on social media, on Twitter. This is a spokesperson for the Pentagon. The Department of War has no interest in using AI to conduct mass surveillance of Americans, which is illegal, he says. Nor do we want to use AI to develop autonomous weapons that operate without human involvement. He just wrote this.
Yeah.
This narrative is fake and is being peddled by leftists in the media. You guys are hearing this as Shep and I read this. Here's what we're asking. Allow the Pentagon to use Anthropic's model for all lawful purposes. Lawful.
Yeah.
This is simple common sense request that will prevent Anthropic from jeopardizing critical military operations and potentially putting our warfighters at risk. We will not let any company dictate the terms regarding how we make operational decisions. Get this, Mike. They have until 5:01 p.m. Eastern Time Friday to decide.
Yeah. And we are bracing for that. And again, you heard the argument there that, in essence, we don't need your usage policy. We already comply with it. We don't need these conditions on the contract because we've got you there. But Anthropic is, in essence, saying they want that additional check. They want that additional assurance, in writing, a pinky swear. I don't know how else to put it. And there is a backdrop to this, Joe, and that is something else that in our big take we explored, and the whole question of whether this Pentagon and this administration is fully abiding by the lawful use of force. And, what U.S. law and international law have recognized over the years. And this specifically refers to how the Bud strikes were carried out, how the raid that captured Venezuelan strongman Nicolas Maduro was carried out. And there were a number of former military officials, members of Congress, human rights observers, and others who said, wait a minute, some of those moves have crossed the line. And the question is, is the Pentagon moving too swiftly with this rapidly evolving technology, with which, when you talk to Dario Amodei and others from Anthropic and other AI companies, they all acknowledge it's not perfect. It is still error prone. And they do want to make sure that there is an extra safety and safeguard on it.
My God. James is already producing a special for 5:01 p.m. Friday. What do you think of this hard line, though? They're acting like this company has somehow crossed the Pentagon or broken the law. My God, the company's going to turn into a pumpkin at 5:01 tomorrow.
Well, this hard line was actually being baked into the AI strategy at the Pentagon for some time. The document that they published last month kind of laying out their vision for accelerating adoption of artificial intelligence by the military, becoming an AI-first force. That included language, Joe, that really pointed toward doing away with those kinds of usage requirements from the companies that the Pentagon sees as a hindrance, and an insistence on, look, we will use this technology by the letter of the law, and therefore we do not need your usage policy. They don't want to be constrained by an additional codicil or asterisk or anything else coming from the company that might, do they want to sign off from the company in the event that they have to go to war, they have to use force? And the answer is,
they're not
from
going
the
to be
Pentagon,
making phone
no.
calls when
they don't want to be making that
fly.
phone call.
Fascinating, Mike. Well, I guess we're about to find out a little more than 24 hours from now. We're sitting here talking the morning after NVIDIA results. I have to ask you about this because it's the biggest story of the day, of course, in the market, and it might be for many more days. I'm just trying to get my head around this, and pull me in off the ledge. 94% profit growth, 73% revenue growth, a beat and raise, a conference call that was borderline inspiring. Don't look at me. I don't know anything. And I'm not trying to turn you into a stock analyst. How do we have this experience after so much doubt leading into the tape, and a stock that's been just kind of hanging around, and everybody wants to sell it?
Well, Joe, for the past couple of years, NVIDIA really has been the belle of the ball when it comes to earnings, when it comes to tech, when it comes to the AI boom. And some of the bloom is off the rose here. We are really seeing that investors are growing skeptical about how much longer this AI infrastructure
Is this about private
story
credit?
can last.
Is it more than NVIDIA?
I think they're also looking at, the longer term. What are going to be the long-term use cases? Will it eventually run out of steam? Now, Jensen Huang and his CFO at NVIDIA, Colette Kress, insisted yesterday that we have enough customer demand to keep this going. The need for compute power is growing exponentially, and we even saw in the past week deals that Meta struck to buy millions of NVIDIA chips, and then AMD to buy AMD stock and buy billions of dollars of their hardware too. So there is clearly some momentum from the so-called hyperscalers. And yet also the AMD deal with Meta does raise the prospect of, what does that mean for NVIDIA? Is that some competition? And does that put some stress on the long-term storyline? And that is something else. And then Michael Burry also weighed in, a Big Short fame. He pointed out,
Jensen can't win.
He can't win. And the concerns that he raised this morning about, purchase obligations going way up, and really just raising the question about what does it mean if, the demand train slows a little bit, and where does that leave NVIDIA? And the words from him really do carry that kind of weight with investors. And we have also seen just the broader fear and loathing about how disruptive AI is going to be, and what the adoption will start to look like across the economy.
Fear and loathing with Mike Shepard. I love it. Maybe fear and loathing in Silicon Valley. I don't know. Jensen's going to have to get back in the Oval at some point here. By the way, this is a breaker. Did you hear Mayor Mamdani, Zoran Mamdani, in the Oval Office today? New York Times says they're going to meet at 1 p.m., less than a half hour from now. If, of course, they open the doors and let the cameras and microphones in, we'll bring you with us. This is Bloomberg.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. I'm Charlie Pellet. We have got the Dow, the S&P, NASDAQ all in the red right now. Chip stocks getting hit hard. We've got NVIDIA down by 4.3% after earnings. Salesforce, by the way, which did report last night, it is higher now by 2.3%. But NVIDIA's results failed to inspire investors seeking reassurances about the AI outlook, and that has caused today's rout in chip makers. Right now, we have got the S&P 500 index trading lower by 70 points, down 1%. Dow Industrials down 190, decline there of 0.4%. NASDAQ down 398 points, a drop there of 1.7%. And the SOX, that is the Philadelphia Semiconductor Stock Exchange Index, right now it is down by 4%. The 10-year, 4.02%, with the 2-year currently yielding 3.44%. Gold is up $11 the ounce to $51.76. Spot gold up 0.2%. West Texas Intermediate crude oil up 1.7%, $66.51 a barrel. And Bitcoin now lower by 3%, back at $66,850. Beyond tech, geopolitics also a major concern for investors today. I mentioned oil higher, as Iran said earlier. Nuclear talks with the U.S. were intense. Andrew Bishop is senior partner at Signum Global Advisors, and he sees negotiations with Iran continuing because of calendar reasons.
We're in the middle of Ramadan. You've got Nowruz, Persian New Year. Liberating the Iranian people by bombing them is not necessarily good PR. And then President Trump is going to China at the end of March. And we all know that this would potentially be a multi-week operation. I don't see how bombing one of China's biggest suppliers of oil right before visiting Xi Jinping is going to help extend the trade truce.
Andrew Bishop of Signum Global Advisors interviewed this morning on surveillance. Oil stocks are advancing now, along with the price of crude. ExxonMobil up 0.9%. Chevron up 0.6%. ConocoPhillips also up by 0.6%. Stay with Bloomberg for any and all developments out of the Middle East. Again, S&P down by 1%. The SOX right now down by 4%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. And back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie, we thank you. He'll be back in about 20 minutes with his latest reading on the markets here. We're going to be tracking NVIDIA through the day. Everybody's upset about one of the best-looking earnings reports in history. Look, hey, maybe this thing just ran up. Everyone knew 6 months ago how good this was going to be, right? That's what the market is telling us. We'll get back with Charlie and a lot more, and we'll have more in the after-hours session on the late edition of Balance of Power. By the way, going to try something new today here. Producer James is already in New York, and I'm going to be going up there because there's big stuff happening this weekend. You've heard about this, right? You heard about Gura and Ruffini? It's going to change your weekend plans. If you haven't seen the promos or heard about this, just let me tell you, set the clock for 7 o'clock Saturday morning and do it again for Sunday morning. Bloomberg this weekend. We're in the weekend business starting Saturday. And, of course, you know, I'm not just going to sit around here. I'm going to go up and try to be a part of this and witness it firsthand at World Headquarters. I'll get a chance to see Charlie. I'll see Cece, Gura, and Ruffini. Just put that away for now. We'll talk more about it later. Because in about 15 minutes' time, we're told the mayor of New York is going to be in the Oval Office with Donald Trump. It's going to be another Trump Mamdani. And we'll see if they allow cameras. I don't know what they're there to talk about. New York Times says it's just about to happen. Be a nice lunch. Maybe a reunion of the Bagel Caucus. As we all recover from the State of the Union, an hour and 47 minutes. I haven't even seen Rick Davis since then. He's going to be with us in a moment because, God, we had one of the longest nights of our lives. And one of the big takeaways, you remember that when the president dared Democrats to stand up when he gave them the big ultimatum, right? You either stand for American citizens or illegal aliens. And they weren't going to play into that and be props. Everybody said the same thing on Tuesday night, that was made for TV and it'll be used in ads all through the campaign cycle. Well, guess what? They already made the ad. They must have been working on this all day yesterday. They've already made a 30-second ad of President Trump's moment. The conservative group American Sovereignty put it together. It's going to run nationally, but will be targeted specifically in states like Michigan, North Carolina, and Georgia. Here's a taste of what people are going to see and hear.
If you agree with this statement, then stand up and show your support. The first duty of the American government is to protect American citizens, not illegal aliens.
All right, so what you'd be seeing now, if you were with us on TV, is a bunch of sleeping Democrats and others who are too disinterested in America to stand, and a bunch of Republicans who are standing up and cheering. It closes with text on the screen. This is a little between the eyes. Okay, Democrats are for illegal immigrant criminals. Republicans are for you. It's like a Trump campaign ad from 2024, isn't it? We've seen those words before. Let's assemble our panel to get their take because, hey, it's the post-State of the Union romp is on. J.D. Vance is on the road today on his way to Plover, Wisconsin to deliver the message. And I already told you where these ads are running. Bloomberg Politics contributor, Republican strategist Rick Davis is back with us, partner at Stone Court Capital. And I'm glad to say that Democratic strategist Megan Hayes is here as well, former special assistant to President Biden. Megan, I'm going to start with you here as the Democrat. If you are concerned about the way this is going to play in swing states like Michigan.
No, absolutely not. This is tried and true. This is political theater. People forget the State of the Union, probably have already forgotten it today. Folks in this country are more worried about how they're going to pay for groceries than whether or not Democrats played into Donald Trump's political theater. I mean, this is just more reality TV, but it's actually not decreasing their cost of groceries or health care. And that's what Democrats are focused on and should be focused on continuing through the midterms.
Do these optics have a corrosive effect for Democrats, Rick? Do they reinforce the base for Donald Trump? Because like I said, everyone saw this in the making. They were producing a TV ad right in the middle of the State of the Union, and Democrats said they didn't want to play into this and be used as props.
Yeah, look, I mean, the State of the Union is a 2-hour TV ad. Little did we know it was going to be that long, but at the end of the day, that's what you use it for. You're communicating, and probably one of the biggest items that Donald Trump had to grapple with at the State of the Union is to fix the position he was in, which was mispositioned on affordability. And he spent 30 minutes of the speech at the very first segment talking about that. When he got to immigration, that's another hole he dug, the administration dug themselves into. So how is he going to fix this? This was the fix. Republicans in the House and Senate now have their talking point that they're going to run for cover on through the midterm, saying, this is all about who do we protect. And I look, I mean, do I think that's going to change numbers in the polling data we're seeing on America basically losing confidence in the immigration policies of this administration? I don't know. I mean, you're going to have to run that ad a lot longer and a lot harder than they're doing now. And you can't overrun it, right? In the sense that I think some of the cry-ons on this ad are over the top, right? You got to be credible.
Yeah.
And the president has the tagline at the very end saying, "These people are crazy." I don't think that's helping the message. Yeah, I mean, don't step on a good message when you've got it.
Well, that's right. That wasn't the script, by the way, Megan. Your Democrats are crazy and cheaters, I believe he said. But I'm curious, Megan, what ad you would be making. A lot of people were playing Donald Trump talking about how tired Americans are of winning. It was the run-up to introducing the men's hockey team, the gold-winning men's hockey team. Here, just take a taste. This is maybe you've already made the ad, Megan. Here's Donald Trump from the State of the Union.
Our country is winning again. In fact, we're winning so much that we really don't know what to do about it. People are asking me, please, 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 Mr. President, we're winning too much. We can't take it anymore. We're not used to winning in our country. Until you came along, we're just always losing, but now we're winning too much.
Do you just put that on a loop, Megan?
Yeah, I mean, the delusion coming from Donald Trump and the lack of empathy and humanity coming from him during this speech of people having real issues with not having health care and not being able to afford groceries or their gas or electric prices. It's the middle of winter and people can't afford to turn their heat on. I mean, the lack of empathy is really what's going to move the needle here with votes and what's going to change people. And the previous ad is really good for his base. They're energized by that, but they were always energized by that. They're always going to vote for the Republicans. So you're trying to move the needle on independent voters voters or get more people out to vote. And those types of ads just aren't going to work because you can't just negate the way people feel. Ask Democrats, they tried it in 2024. It didn't work. You have to empathize with people and you have to understand where people are coming from and meet them where they are. And Republicans are not meeting the moment on that.
Well, I'll tell you, the Republicans are trying to maintain the narrative on the Epstein files as a Democratic problem. And it's something that is coming to fruition today in a pretty unprecedented fashion. Look no further than Chappaqua, New York. I heard a newscaster I heard a newscaster say Chappaqua, what really split me up the other day. But this is, of course, where the Clintons live. And there's a field hearing, a deposition, I guess is what I should say. The Oversight Committee is up there to talk to Bill and Hillary. Today it's Hillary. Tomorrow is the former president of the United States, about their involvement, their knowledge of the sex offender, Jeffrey Epstein. We heard from the chair of the Oversight Committee, James Comer, about his intentions. Here, listen.
Again, we're not accusing Hillary Clinton of wrongdoing. We know that Jeffrey Epstein said many times in emails that he was the first person to raise money for the Clinton Initiative, the Clinton Foundation, that he solicited money at some of his properties for the Clinton Foundation. Again, that's not saying anything's illegal, but there are a lot of questions pertaining to Secretary Clinton with respect to Epstein and his involvement in the Clinton Initiative and her relationship with Ghislaine Maxwell.
Closed-door depositions. I believe the Clintons demanded that they be filmed so they could challenge, whatever leaks come out of this thing, because members of the committee plan to speak to reporters at the conclusion of each session. I mentioned today's Hillary. Tomorrow, the first time a former president has ever been compelled to testify in a congressional investigation against his will. Megan, how should we read that moment?
I mean, first of all, this is just more political theater. If these Republicans on the Oversight Committee cared so much about actually having people be held accountable, they would have gone to Ohio and heard Les Wexner's deposition, which they failed to do. So instead, they're hauling everyone up to Chappaqua, spending taxpayer dollars when they know darn well that Hillary Clinton doesn't have the first idea of anything and has already told them that in a written statement. And it's gross. And if we're going to continue to have women come and support their husbands or defend their husbands' actions, which, by the way, Bill Clinton had no interactions with Epstein after his first conviction, then where's Melania Trump? Let's bring Melania Trump up and ask her what she knows. This whole thing is just so disgusting for the victims and not holding anyone accountable. And that's really who's losing here, are these victims and the crimes that have been committed against these people and the cover up to these crimes.
Well, I'll tell you what, Megan, I wonder if that happens now. The precedent that's being set today would suggest that a couple of years from now, you see Melania and Donald Trump in a similar deposition. What do you think of this move, Rick? Is this good politics for the Republican House? And why should the former First Lady have to answer for Bill Clinton here?
Well, I must say, I've spent a better part of my political career going after the Clintons, and every time we thought we had them, they wiggled out of it. I mean, on the Bob Dole campaign in 1992, we thought, we're going to beat this guy, Jennifer Flowers. People are going to find it's unacceptable. He beat the pants off of us. Next thing you know, he's impeached. 73% approval rating after impeachment. Boy, that worked great. Let's do that again. So maybe Comer's so young he hasn't seen any of that movie. But let me tell you, if I'm placing a bet today, Clinton +1 after today and probably +2 after Friday. I mean, this was a mistake. You're breaking a tradition. Donald Trump didn't get deposed by Congress after January 6th. Then nobody should be in that position again. And now you're right. He gets out of office, and you can probably count on a Democratic Senate or a Democratic House calling him up and doing the same thing. It's just a continuation of this partisan divide that has caused a lot of problems with our country's politics.
Boy, how about that? 30 seconds left, Megan. Is that the deal? You don't put this genie back in the bottle, right? Every former president now gets hauled up to Capitol Hill after they get out of office.
I mean, I would hope not. I hope that we turn the page from this. I just don't see how that's going to turn the page until well after Donald Trump is out of office. I think putting the genie back in the bottle is going to be extremely challenging at this point.
Wow, man. Well, listen, we're going to be listening closely to these news conferences. They're going to come out, I guess, brief the media following these depositions. And, there's going to be all kinds of leaks. So I suspect tomorrow morning is going to be quite a read. We've got a great panel today. Of course, Bloomberg Politics contributor Rick Davis. He'll be back with Democratic strategist Megan Hayes in our second hour. Kaylee Lyons is going to take over, and I'll meet you on the late edition of Balance of Power. If you want to play a little game here, Escape from D.C. It's the latest game of The Amazing Race. Let's find out if I can get up there in time. If you see me on, you hear me on at 5 p.m., you know the air traffic control system is working. Producer James, I'm on my way. This is Bloomberg.
From Washington, D.C., this is Balance of Power with Joe Matthew and Kaylee Lyons.
Very intense and very serious. That's how Iran is describing high-stakes talks with the U.S. in Geneva today. Welcome to Balance of Power on Bloomberg TV and radio. I'm Kaylee Lyons. Joe Matthew will be back on air later this afternoon as we're awaiting details on whether or not progress is made in these talks that could avert potential military action. We'll have more this hour with Bloomberg's Tyler Kendall, who is live at the White House, and check in on what this means for energy markets with Bob McNally of Rapidan Energy. Plus, there's more than one set of talks happening in Ukraine today, or in Geneva. There's also talks happening on Ukraine between Ukrainian officials and Steve Witkoff and Jared Kushner. We'll have more on that with Angela Stent of the American Enterprise Institute, and our political panel will be here this hour as well. So we have a lot to get to, but we also have to get to these markets because NVIDIA is down and it's taken a lot down with it. So for a check on that, we turn to Charlie Pellet in New York. Hey, Charlie.
Hi, thank you very much, Kaylee Lyons. Absolutely right about NVIDIA. Shares trading lower now by 4.5%. The Dow, the S&P, NASDAQ, they're all lower. S&P very close to session lows, down now by 1.1%. We've got the SOX, the Philadelphia Stock Exchange Semiconductor Stock Index, down 4.1%. S&P down 75, again down 1.1%. The Dow is down 0.5%. The NASDAQ Composite Index down 1.8%. The NASDAQ 100 Index down 1.7%. And the Bloomberg Mag 7 Index, of which NVIDIA is a part, down 1.9%. Again, NVIDIA down now by 4.5%. Spot gold is up $3 the ounce, little changed, up under 0.1%, 51.68 the ounce. 10-year at 4.01% with a 2-year 3.44%. West Texas Intermediate crude up 1.6% right now, 66.45, as investors keep an eye on rapidly moving developments out of the Middle East. Again, recapping here, we do have NVIDIA shares trading lower, down 4.7%. Those losses in part on doubts that booming AI-related spending can be maintained. Also out with earnings, though, heading in the other direction, Salesforce up now by 2.8%. It did give a strong outlook for long-term sales, also announced a large share buyback, recapping S&P down by 1.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. And back we go to Washington. Once again, your host. Here she is, Kaylee Lyons.
All right, Charlie Pellet in New York, thank you so much. It's round 3 of talks between the U.S. and Iran in Geneva today, with just days to go until President Trump's self-imposed deadline for Tehran to make a deal over its nuclear program or risk potential military action from the United States, which of course is amassing great military force in the region, as we have seen in recent weeks. And while the president said once again in his State of the Union address just this Tuesday that he would prefer diplomacy prevail, it does seem the administration is starting to move the goalposts a little bit in terms of what they would like diplomacy to ultimately achieve, what kind of deal they ultimately want reached. Perhaps not just about the nuclear program, but maybe other things like ballistic missiles as well. Just take a listen to the Secretary of State, Marco Rubio, from yesterday.
The negotiations tomorrow and the talks tomorrow will be largely focused on the nuclear program. And we hope progress can be made, because that's the president's preference, to make progress on the diplomatic front. But it's also important to remember that Iran refuses to talk about the ballistic missiles.
So we want to get more on this as we turn to Bloomberg's Tyler Kendall, who is live at the White House. And usually I would say Tyler's on the White House North Lawn for us, but she's actually been moving about a little bit because there's also some high-profile visitors to the White House today that Tyler is trying to catch. Tyler, have you seen New York City Mayor Zohran Mamdani or the Netflix CEO yet?
No, not yet. And if you're joining us on Bloomberg television, you'll probably see my head is on a swivel as we are waiting for these two potential high-profile visits here today. Reports that the New York City Mayor Mamdani will be here. We're not totally sure exactly what he will be discussing with President Trump, but amid reports that the Netflix CEO Ted Sarandos will be here as well, we have probably a clearer picture on what he would like to talk to with this White House, including its bid for a Warner Brothers acquisition, as well as you know, Kaylee, President Trump in the last week calling on Netflix to remove from its board Susan Rice, a former Biden and Obama administration official, threatening that there could be consequences. You might have seen in the past week, Susan Rice had said on a podcast that Democrats will remember those media corporations and law firms and companies that, quote, bent the knee to the Trump administration. The Netflix CEO, in an interview on the BBC, shrugged off these concerns, saying that this is a business deal, not a political deal. But of course, this is all just underscoring the political dynamic to any potential acquisition.
Well, Tyler, as we are looking out, or you specifically are looking out, and I'm making sure I'm keeping an eye on the feed for you. I'll holler if I see anyone you need to go and talk to. But we know that President Trump, in addition to these meetings today, also is probably going to be kept abreast of what's happening in Geneva in the talks between the U.S. and Iran. Just talk to us about what kind of deal the president is now looking for. Is this going to be just a deal over the nuclear program, or is this now about something much beyond that and for a much longer period of time, perhaps, if Steve Witkoff is to be believed, an indefinite deal?
Right, and Kaylee, you're framing this perfectly, because it does appear that there are those contrasting parameters between the U.S. and Iran on what a potential deal will look like. It is our understanding that this current round of talks is focused just on that nuclear program amid disagreements about how much and whether, if at all, Iran should have domestic enrichment capacity, as well as what will happen to Iran's current stockpile of highly enriched uranium. We're getting some conflicting headlines about what may or may not be a red line for the U.S. there. But we heard from the Secretary of State, Marco Rubio, saying that the U.S. also needs to see some of these other critical agenda items put on the table for a potential deal, mainly Iran's ballistic missile program, but also its support for proxy militia groups in the region. And as you well know, deadlines shift a lot here in Washington, but we did hear from President Trump saying that Iran has until next week to reach a deal. And there's definitely the military firepower to back up that threat. You well know that there has just been such an amassing of U.S. military assets in the region, as Israel actually confirmed this morning that the U.S. did move over F-22 fighter jets as well as refueling planes to the country, the first time any such move has been taken. So we have our eyes on all sides of this. The U.S. has not weighed in yet, though we do know that the White House's position has been that diplomacy is the first choice, but potential military action is not off the table.
All right, Bloomberg's Tyler Kendall, live at the White House. Thank you so much. Of course, these talks between the U.S. and Iran, the potential outcome is something financial markets are paying very close attention to, especially perhaps if you're an oil trader, as we consider what military conflict could mean for oil supply coming out of the Middle East. Could you actually see Iran, in retaliation, close off the Strait of Hormuz or attack the energy infrastructure of other U.S. Gulf allies and OPEC producers? These are all within the realm of possibility. And of course, that could have implications for the price per barrel of oil and therefore prices at the pump for Americans. This is actually something we got into yesterday with Republican Senator Steve Daines of Montana. How could this economically impact people here at home? This was his response.
We have decoupled our country from many of the global markets as it relates to oil. We were overly dependent on the Middle East. Today, the United States is the largest producer of oil and oil derivatives in the world, and that helps soften the blows if there is any kind of connectivity going on in Iran. So I'm not as concerned about what happened to oil prices, given the fact that we have done a stellar job, thanks to President Trump and the American energy industry, of becoming much more self-sufficient, and we are now energy dominant. We are an exporter of energy, where once upon a time we were a net importer.
We want to get another take now as we turn here on Bloomberg TV and radio to Bob McNally. He is president and founder of Rapidan Energy Group, also former special assistant and senior director for international energy on the National Security Council under President George W. Bush. Bob, welcome back to Balance of Power. I wonder if you agree with the senator's assessment.
Hi, Kaylee. Great to be back. The senator's absolutely correct from a broad macroeconomic perspective, right? The fact that we are an oil exporter means that if we were to see a sudden rise in oil prices, from the perspective of our whole economy, the impact would be less than if we were a big net importer. So our companies, our investors, our industries that employ people producing energy, their value would go up. So it is true at the economic standpoint, broadly. However, as the senator well knows, from the perspective of a voting motorist going to the pump to pay for gasoline, there being a net exporter doesn't help us too much in terms of insulating that consumer from the pump price implications of a crude oil price spike. So it's a bit of a mixed story, but he's correct at the broad economic GDP level.
Okay, so if you were advising this president, as you've advised presidents in the past, Bob, about the implications that taking military action could have for energy specifically, what would you be telling him? How should he be calibrating his moves here with that consideration in mind?
Well, I think the first thing is he has to understand, the president has to understand, there are no quick and easy solutions here. The SPR, the Strategic Petroleum Reserve, even if it was full, which it is not, unfortunately, could not offset the loss of Hormuz. That when we think about taking on Iran, it has the capability to disrupt that 20 million barrels a day of crude and some refined products, 20% of LNG, for longer perhaps than people think. It's not going to be the first Gulf War. It's not going to be the second Gulf War when it was over in a few hours to days. It's not going to be nabbing Maduro or even the 12-day war. And so it's the most serious kind of risk you can run. That being said, to be fair, you know, if we defang Iran and we achieve our goals with Iran and Iran is neutralized, the benefits from an energy security standpoint, economic standpoint, and terrorism and security standpoint are enormous. So I would be telling him enormous risks, enormous rewards, and I would be suggesting the priority militarily ought to be to suppress Iran's still intact inventory of mines, missiles, drones, boats, submarines, and other things that could stretch out that interruption of Hormuz, because that is what's really going to hurt the global economy and the U.S. economy if Iran can shut down that waterway.
Well, and so that's when the other Gulf states and other OPEC producers come in here, Bob, because it's not just about a risk-reward calculation for the United States, but our allies in this region as well, who might be worried, what if Iran comes for our infrastructure, actually takes out our capacity for a significant period of time, our ability to actually not just move this stuff through the Strait of Hormuz, but originate it in our countries.
Absolutely. They do not want to see a conventional war, wide-scale war in their region. Look, Saudi Arabia, it suffered about as close a call as you could have in September of 2019 when Iran attacked not only the most important Saudi infrastructure, arguably the most important energy or even economic facility on the planet, the Abqaiq stabilization plant. Now, Iran chose back then to just show what it could do. It didn't destroy it. So Saudi Arabia, UAE, other countries are very vulnerable. So is Iran. If this conflict spreads to attacking each other's above-ground energy infrastructure. Kayleigh, you got to be careful with predictions. I'm thinking that's less likely. Saudi Arabia is in a better place with Iran right now. If Iran were to inflict catastrophic damage on Saudi or other facilities, I think the response would be the ending of the Iranian regime. So it would only be something they do in extreme dire straits. It'd probably be the last thing the Iranians did. And so I think the focus will be on raising the price of oil to try to back President Trump off temporarily. And you do that by just stopping the flow through Hormuz, because that's something you can start again once the conflict's over.
Okay, so how far in terms of raising the price of oil realistically do you think we could see in this scenario, Bob? Because right now I'm looking at Brent crude, $72 a barrel. Are we talking triple digits once again? Are we talking 90? Do you have a sense?
Yeah, I think on the outbreak of conflict, should that happen, I think we're probably going up another $3 to $5 a barrel easily. We've been telling clients for some time now, there's a 75% probability of military escalation. As you mentioned, there's a good $5 to $10 in the price right now, more betting in the options markets. So, but we think we have a ways to go. So it's probably up 3 to 5. You know, Kayleigh, I can actually see a relief drop in oil prices as the conflict extends, because the market may think, oh, wait a minute, when the U.S. shoots at an adversary in the Gulf, it wins within hours to days. I hear over and over, oh, the U.S. is going to clean up the Strait of Hormuz in days. I think that's mistaken. I wouldn't be surprised if we saw a spike and then a reversal. But I think if Iran chose, and our military advisors tell us, if Iran chose to make the Hormuz Strait unsafe, it could do so for weeks. It's sort of like back in April when the Houthis absorbed 52 days of pummeling by the U.S. military, and we did not stop them from making Bab el-Mandab unsafe. Iran has much better weaponry, better coastline than the Houthis. So I can almost see spikes and reversals here. And if it gets to a prolonged Hormuz disruption, well over $100 a barrel, it'll have to cause demand destruction through economic downturn.
Wow, that's incredible to consider, Bob. It's so valuable to have you weighing in on this potential conflict. But I also want to ask you about some other areas as well, as of course we're seeing another escalation, and at the very least rhetoric around our relationship with Cuba, and of course the U.S. Playing a more active role now in choking off Cuban supplies, including that of energy. Bloomberg is now out with a story that's just crossed a red headline on the Bloomberg terminal about the Trump administration aiming to make Cuba more dependent on the United States for supplies. Apparently, this plan would include reassuring energy companies that they can sell oil and fuel to Cuban businesses. And authorizing the resale of Venezuelan oil to Cuba under certain conditions. I know you're hearing this news just as it's breaking, and I'm reading it to you, Bob, but I wonder if you have a thought as to whether or not Cuba can actually become a real market for American energy, what this would entail.
Absolutely. No, I think the Trump administration, it began with Venezuela, but I think its vision of, ejecting foreign influence, adversarial influence in our hemisphere, and confronting and defeating regimes in the region that are hostile to the United States is underway, and Cuba's probably next after Venezuela. That being said, I don't think you're going to see as an aggressive approach to Cuba as you did with Venezuela. I don't think the administration, Marco Rubio, the president, want to cause a humanitarian crisis in Cuba. In some ways, it's even more vulnerable than many other countries in the region. So I think, and the Russians are sending a boat there. I don't think we want to have another Cuban crisis with Russia. So I don't think we're necessarily in a huge hurry. And I think they're going to be toggling things and calibrating pressure and inducements. But I think they see that the trend is toward pushing Cuba to come closer to the United States. And so I think that maybe is reflected in this sort of balanced policy and balanced announcement that you're seeing.
Well, and of course, Venezuela is tied into this as well, and you mentioned it, Bob. What role is the Venezuelan oil that the U.S. is now selling playing in the global market right now? What kind of a factor is it?
It's a big factor, but for a small part of the market. If you're a complex refiner and you'd love to slurp, if you will, to consume Venezuela's gunky, heavy, sulfurous, poisonous oil, you're loving it. It's a huge deal because you couldn't get this really. It was all going to China. So if you're a Chinese competitor with the United States refiner, you're not happy. If you're a U.S. refiner that likes this stuff, your Christmas just keeps on rolling on for you. It's wonderful. But the overall volumes measured in the hundreds of thousands of barrels a day are a drop in the bucket in the broader global oil market. What's happening in Iran is much more important. What's happening in Russia is much more important than is happening in Venezuela in terms of the broad market. It's more of a niche of the market, this supply and demand for this very healthy, heavy sulfurous crude.
All right, Bob, we so appreciate it. A voice of expertise on this sector and how it ties into these many geopolitical dynamics we are facing right now. Thank you so much. Bob McNally, founder and president of the Rapidan Energy Group, and again, former special assistant and senior director for international energy on the National Security Council under President George W. Bush. Now, regarding those talks between the U.S. and Iran, which again are underway in Geneva, a third round today, we do have some fresh reporting out, this from Axios, that Jared Kushner and Steve Witkoff, who of course are the two U.S. envoys who are charged with leading these talks, were disappointed by the morning session. Remember, there was talks this morning, then they took a break and returned for a second session. And according to Axios, that evening session is still ongoing. So these negotiations are still underway. But again, Witkoff and Kushner apparently disappointed by what they heard from the Iranians earlier today. We'll continue to follow this story for you, and we'll have more with our political panel coming up next, right here on Balance of Power on Bloomberg TV and Radio.
It's 1:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got stocks in the red. The Dow, the S&P, NASDAQ, all declining. A tech sell-off right now. We've got NASDAQ down 441 points, down 1.9%. S&P keeping it all in context, down 1.1%, down 75. The Dow lower by 0.4%. All about NVIDIA. NVIDIA shares down now by 5.3%. Stocks lower after better-than-expected results from chipmaker NVIDIA failed to quell investor concern about the sustainability of big tech company gains. The 10-year 4.01% with a 2-year 3.44%. Spot gold right now up $12 the ounce, up 0.2%, 51.76. While West Texas Intermediate crude up 1.2%, 66.19 a barrel, as investors keep an eye on any and all developments out of the Middle East. Bitcoin, meanwhile, down 3%. Bitcoin at 66,888. Sources tell Bloomberg Stellantis is considering tapping electric vehicle technology from its Chinese partner Leap Motor to help lower costs across its mass-market European brand Stellantis shares. They're up now by 3%. Elsewhere in the auto industry, Ford recalling nearly 4.4 million vehicles, including some of its top-selling F-Series pickup and popular SUVs. Ford down by 0.5%. Recapping, NVIDIA now down by 5.2%, S&P down by 1.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. Balance of Power continues now. Back we go to Washington. Once again, your host. Here she is, Kaylee Lines.
All right, Charlie Pellet checking on the Thursday trade for us from New York. Thank you so much. And of course, if it's Thursday, that means we're 2 days post President Trump's State of the Union address, which, as we all anticipated, focused at least in part on the issue of affordability, casting blame on Democrats for the higher prices Americans are experiencing even more than a year after the presidency of Joe Biden came to an end, and also pointing to areas in which prices have come down since President Trump took office. It's a message that he delivered to the millions of people who tuned in for at least part of that almost 2-hour-long speech on Tuesday night. But it's a message now that the administration is taking on the road, not just via President Trump, but other surrogates, including today, Vice President J.D. Vance, who made travel to Wisconsin, actually just wrapping up a speech at a machining facility in Plover, Wisconsin, doing his best to sell the Trump economic agenda, answering questions there from local media, including around the president's tariffs, which he says are aimed at helping Americans. And we want to bring the panel in on this as we turn now to Rick Davis, who, of course, is a Republican strategist, partner at Stonecourt Capital, and Bloomberg Politics contributor, joined today by Megan Hayes, former special assistant to President Biden and Democratic strategist. Welcome to you both. Rick, I'd love to get your take on just J.D. Vance as the messenger here, with his upbringing, with his populist bona fides. Is he actually one of the better people to sell this economy, this Trump economy, to the public?
Yeah, I would say, just as a note, I think that part of what the administration is doing better this year than it did a year ago is sending the cabinet, is sending the vice president out on these tours around the country to promote the message that the president delivered on Tuesday. So kudos to the administration for getting their organizational act together and realizing in a competitive midterm they've really got to work it extra hard. Yes, J.D. Vance in the Midwest is a commodity that's worth selling. He's got a lot of popularity in Ohio and Minnesota, not necessarily Minneapolis, and in Wisconsin. And so, yes, I mean, there's going to be some competitive races there, and having him present there is going to help the Republican turnout.
Well, so if he might be a better person to sell the message, Megan, I do wonder about the message itself that they're trying to sell. You obviously worked for a president that tried and really struggled to say my economy is better, at least statistically, via the data, then you might feel that it is. We know that dogged Joe Biden for much of his presidency and his reelection campaign, while there was one. And it seems President Trump is in the same position now. How do you sell the idea of affordability to an electorate that is still saying, at least to pollsters, things are too expensive?
Yeah, I mean, J.D. Vance can put lipstick on a pig, but it's still a pig. He's going into Wisconsin, where they've lost 2,200 manufacturing jobs since Donald Trump took office. They've already laid off 4,000 people in their workforce and 16 family farms, which is a 700% increase from 2024, have declared bankruptcy. That's not happening because the economy is doing well and these tariffs are helping them. They are a direct impact, and they are a tax on people in their state, and they're losing jobs, and their economy is suffering because of it. So J.D. Vance can go there and try to spin all of Donald Trump's narratives and the administration's policies. But the fact of the matter is, people in Wisconsin, just like along with the rest of the country, really feel it in their pocketbooks when they can't afford things. So they can go there and give speeches, but it does not change that people still can't afford things, and the numbers don't lie. When people's increase in electricity goes up and they can't afford to pay it, that is a real problem for a lot of the American people.
Well, it's obviously a problem that J.D. Vance is trying to tackle today, or at least message his way around. But it's not just that J.D. Vance is up to, Rick, because as of Tuesday night, when the president announced it mid-State of the Union, apparently J.D. Vance is also helping to lead the war on fraud, a war that he launched yesterday by announcing a pause on federal Medicaid reimbursements to Minnesota. Is this an assignment that J.D. Vance, as we consider not just J.D. Vance, the vice president, but J.D. Vance, the potential 2028 presidential candidate, is this an assignment that he can make work for him?
Yeah, it's a bit of an insider deal. MAGA has been obsessed with this, situation in Minnesota. It's been highly circulated around MAGA social media, platforms. And I would say, from what I've seen in the numbers, has not broken into sort of the popular nationwide discussion. The president put it on the agenda Tuesday. I think if J.D. Vance is looking to pursue a presidential race in 28 and wants to be the darling of the MAGA movement, then, yeah, it makes sense that he'd want to own this. But I think that from a broader perspective, I can't disagree that unless you're talking about affordability in a place like Wisconsin, especially today, then you're missing the mark on what the messaging is. And so, great that he's going to do it. I think it helps him with the base of the MAGA movement. But is that going to change any votes leading up to the midterms? No. And frankly, a lot of his prospects for national office in the future are tied to their ability to not have a bloodbath in November of this year. And so I'm not sure I'd spend a lot of time talking about fraud unless it's directly related to what the price of bacon is.
Well, Megan, I'd love for you to weigh in on that idea of the 2028 prospects as well. I know we're a long way out from that, but it seems that President Trump keeps playing into this, who will I pick kind of narrative on J.D. Vance, the vice president, and Marco Rubio, the secretary of state. And it was not Vance that really was applauded by the president out of the State of the Union, but Marco Rubio, who was called out for his efforts diplomatically on a variety of fronts, and at least half of the room stood for him at that point. Where do you come down on this idea of Vance versus Rubio? And the two, of course, are reportedly very good friends.
It will be interesting to see how it sort of plays out. I think that part of this fraud assignment is that J.D. Vance needs something to do, and he needs something that he can actually try to tackle as vice president, because normally the vice president handles a lot of foreign policy. That's what we did when Joe Biden was the vice president. We traveled all over the world and really held the diplomatic core in those negotiations. But Marco Rubio is clearly much more effective at doing that. We saw that in Munich this year. J.D. Vance kind of went there and made a disgrace, had a lot of mess that the United States had to then clean up. But Marco Rubio went and said very similar things, but his tone was different, and he is received much differently abroad. So it's sort of interesting to see how it plays. I just think that Marco Rubio has more of an opportunity to show the American people what he can do diplomatically, and that he's already been a senator. He seems to be a much better candidate, and J.D. Vance will always be tied to Donald Trump's economic policies, where Marco Rubio gets to sort of distance himself from the domestic policy. So it'll be interesting to see how it plays out, but I don't think J.D. Vance has a really good shot unless they can clean up the economy and people really feel it.
Well, on the issue of the economy and of affordability, obviously housing plays a role in that. And we understand that the New York City mayor, Zohran Mamdani, is meeting with President Trump at the White House today to discuss housing, keeping in mind that the president also talked about Mamdani in his State of the Union address on Tuesday. Here's a reminder.
And even the new communist mayor of New York City, I think he's a nice guy, actually. Speak to him a lot. Bad policy, but nice guy. Just said they want people to shovel snow. They got hit hard.
He says he speaks to him a lot, Rick, apparently speaking to him in person at the White House today. According to Bloomberg's reporting, and this is via sources familiar with the matter, they're expected to focus on housing development in New York City, specifically discussing ways the city can pave the way for more big projects. Are you surprised to see this kind of collaboration between a Republican president and someone he's describing as a communist?
Any Republican president, yes. This Republican president, no. Donald Trump seems to always fall in love with those he hates the most. And obviously said a lot of really tough things about Mamdani before the election. Mamdani came to Washington, met with the president, and you thought he was his new adopted son. It's quite a turnaround. But look, I mean, at the end of the day, I think even for Donald Trump, these policies that Mamdani's promoting in New York City, especially a $100 billion plan to build 200,000 union-produced housing units is more than Donald Trump can swallow. Mamdani needs the federal government. He won't have that opportunity to get money out of the state in an election year. And so if he wants to make good on his promises, he's got to find a benefactor. And why not go to the biggest person in the world, and that's in Washington.
And I should note that it's actually Politico reporting that we're leaning on here. Megan, please weigh in on this as well. If you're Mamdani, having just kind of ridden this incredible wave to the mayor, to become the mayor of New York City, with this very specific message to a Democratic base, specifically the left side of the Democratic Party, how does it play optically for you to be working closely with this president that Democrats clearly are not a fan of?
I mean, I think it plays well for him. He's doing what he needs to do to get things done for his city, and that's exactly what our elected officials should do. They should cross party lines and work with people to get it done. I do think it's problematic for Donald Trump and the fact that he's taking the wind out of the sails of all the Republicans that are trying to paint Mamdani as a boogeyman by working with him, inviting him to the White House, and having these jovial conversations. So, it's interesting because the whole Republican Party is trying to make the whole country believe that everyone is Mamdani and everyone is a communist and it's going to be like New York City, when it's just, that's just not true, as we all know. So the more that Trump cozies up to him and they become buddy-buddy, I think it's just bad politically for Trump and Republicans. I don't think it impacts Democrats at all.
Well, and when we consider the issue specifically today that they're discussing, this one of housing, Megan, is this an area in which Democrats and Republicans, to your point on working together for the betterment of your constituency, is this going to be one of the few bipartisan areas of compromise, perhaps even legislative effort, that we see in this midterm year? Is housing basically as good as it gets if you're looking for progress on something?
I would sure hope so. Housing is extremely unaffordable for people. There isn't enough rental homes for people to live in. So I do think it is a major issue, and it's not just impacting cities, it's impacting small communities as well. So it is something that I would hope that people could work bipartisan on, because it does impact literally every single person needs a place to live. So I just, if there's one issue that we could cross the lines on, I always thought it'd be healthcare, but I guess housing will have to do.
All right, Megan Hayes and Rick Davis, our political panel today. Thank you so much for joining us. And I do want to bring our audience here on Bloomberg TV and radio up to date on what we're watching in Geneva. Of course, talks between the U.S. and Iran that are being mediated by Oman. And Oman is now saying that the talks have finished for today and that the talks made significant progress. Again, it's the mediator that's saying that. We'll see what the readout is from the United States and from Iran, whether enough progress was made to avoid military action. For now, we'll have more ahead right here on Balance of Power on Bloomberg TV and radio.
1:40 on Wall Street. We do check markets all day long here at Bloomberg and do want to begin with the latest developments on U.S.-Iran talks. Talks over for the day in Geneva. A mediator there says there was progress. Oman says talks on a technical level will take place next week in Vienna. The Dow, the S&P, NASDAQ are all declining right now. A rout in chip makers weighing on stocks as NVIDIA's results fail to inspire investors seeking reassurances about the AI outlook. We've got NVIDIA after earnings down 5% now. The S&P down 56, drop there of 0.8%. Dow Industrials little changed on the day now, down 15 points, a decline of under 0.1%. While NASDAQ is down 360 for the NASDAQ Composite Index, down now by 1.6%. The Bloomberg Mag 7 Index, of which NVIDIA is a part, down 1.7%. The 10-year, 4.02%. For the 2-year, 3.45%. Gold up $12 the ounce, up 0.2%, 51.76 on spot gold. West Texas Intermediate crude now lower by 0.2%, 65.25 a barrel, and Bitcoin down 2.5%, 67,194 on Bitcoin. Warner Brothers Discovery reported lower fourth quarter sales and earnings, underscoring the challenges that the media giant is confronting as it weighs competing takeover bids from rival entertainment firms Paramount, Skydance, and Netflix. Again, Warner Brothers Discovery, little change, down under 0.1%. Paramount, Skydance up 9.9% today. Netflix up by 2.8%. eBay cutting 800 jobs, 6% of its full-time employees. Again, recapping the Dow, the S&P, NASDAQ, all in the red. S&P down 0.8%. NVIDIA after earnings down now by 0.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. Kaylee Lyons, that is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. Incredible to see that 5% downward move on NVIDIA, despite what arguably was a pretty good quarter and a pretty good forecast. I guess just pretty good is a relative term if you're a market that already was jittery about the sustainability of the various parts of the AI trade. And of course, if you're looking at a company that already boasts a valuation like NVIDIA does. We want to get more into this and other AI stories that we're watching from here in Washington as we turn to Michael Shepard, Bloomberg Senior Editor for Technology and Strategic Industries. Mike, I want to ask you specifically about Anthropic in a moment, but if we could just zero in on NVIDIA, to what extent is this really about NVIDIA versus about how everybody seems to be just overly jittery around AI right now?
There is a lot of fear and loathing in the market, and this is yet another symptom of it. Part of it, Kaylee, really stems from the overarching question, which we've been asking in conversations with you and Joe, even in this space, about the utility of this technology. How will it ultimately be applied by companies over the long haul? And at the core for NVIDIA is the question of how long will the infrastructure demand be there. Now, the company insisted on its conference call that, look, we have demand for additional compute that's, as far as the eye can see, it's growing exponentially. The hyperscalers need our chips by the bushel, and, you know, we do not see any decrease in that. And in fact, their forecast certainly showed that with it exceeding expectations and projections from investors, that they really do expect a lot of growth. But we do see other analysts questioning whether for the long term, past, say, 2027, it will continue at the same pace. And then we also see the questions surrounding, you know, some of their purchase commitments that Michael Burry raised, and his voice certainly does cause some jitters, too.
Oh, indeed it does, of Big Short fame. I also want to talk about Anthropic because we are coming up on a deadline that Anthropic is facing from the Pentagon. 5:01 p.m. tomorrow, they have to decide whether or not they are going to comply with the government's desires as to how Anthropic's technology, and Claude specifically, can be used by the DoD. Do we have a sense, as they're threatened with perhaps the Defense Production Act being invoked or being labeled a supply chain risk, as to whether or not Anthropic is getting closer to acquiescing to the Pentagon's demands?
Well, Kelly, that really is the core question. And we just saw from the Pentagon spokesman, Sean Parnell, really the line in the sand from the Defense Department, and that is that they do not want any company dictating the terms of how they use this technology. And the Pentagon insisted, look, we will use the technology from Anthropic or any other company within the bounds of the law, A. B, we will not do mass surveillance. It's illegal. Sean Parnell, the spokesman, insisted and put in his post on X. And yet for Anthropic, they really do want that belt and suspenders assurance, and that has been a red line on the surveillance question and on the fully autonomous weapons question. And our sense from the company is that there really is no more ground to give. Whether or not the two sides can at least agree in some fashion, saying that, look, we believe that you will abide by our usage policy, or the Pentagon says, sure, we accept your usage policy based on what each side seems to be saying. But there is a question about application and how it actually works in the moment. If there is any moment where the technology may balk and not do what the Pentagon wants, that is really the core of it right here.
So should we be reading into at all the idea that Anthropic yesterday broadly dropped its safety pledge? Is that a kind of signal that, okay, we are rethinking how we want to consider guardrails around our technology?
Well, that is a great question, because a lot of people were starting to read that as potentially a move that would allow this dispute with the Pentagon to pass. But really, that safety pledge applies to Anthropic's own development of technology, and that it has long vowed to avoid pursuing AI technology that could be potentially dangerous. They've relaxed that slightly, saying that, look, we may go after AI tech that may be potentially dangerous if we sense a competitive disadvantage brewing. The other actually applies to their usage policy, and that is customers. So if you and I were using Claude, or in this case, the Pentagon, Claude Gov, we have to abide by certain terms. And those are the terms that they're trying to get the Pentagon to sign off on. And the Pentagon is saying, look, we don't want any strings attached or terms attached to our usage.
And again, the deadline is tomorrow, so I would imagine we'll be talking to you again then.
We'll be back again in this
Michael
space.
Shepard, thank you so much. Now, I also want to keep you abreast of breaking news that is just crossing the terminal a few moments ago as we watch talks that were taking place today in Geneva between the U.S. and Iran, mediated by Oman. Oman now saying that there was progress made in the talks today, which have wrapped up, and there will be more technical talks that take place next week in Vienna. That they will be continuing at a technical level. We're actually seeing a little bit of movement in oil off the back of this off-session highs on both Brent and WTI. We're trading at $71 a barrel on Brent, 65 roughly on WTI right now. But we also know that in Geneva today, it wasn't just talks between the U.S. and Iran. There were also talks taking place between the U.S. and representatives from Ukraine. Steve Witkoff and Jared Kushner, the president's envoys, very busy once again in Switzerland, after we know that the Ukrainian President Volodymyr Zelensky spoke by phone with President Trump yesterday to talk about these talks in Geneva today and how they could set the stage for potential trilateral talks in early March between the U.S., Ukraine, and Russia. Of course, the war in Ukraine, as of Tuesday, has entered its 5th year, Tuesday marking 4 years since Russia invaded, and Tuesday marking the State of the Union address from President Trump, where he did talk about this conflict.
We're working very hard to end the 9th war, the killing and slaughter between Russia and Ukraine, where 25,000 soldiers are dying each and every month. A war which would have never happened if I were president, would have never happened. As president, I will make peace wherever I can, but I will never hesitate to confront threats to America wherever we must.
That is the only thing the president said, mind you, about Ukraine and this war in the State of the Union address. But we want to get into this now with Angela Stent. She is senior fellow at the American Enterprise Institute, also author of Putin's World, Against the West and With the Rest. Angela, welcome back to Bloomberg TV and radio. It's good to have you. As we hear the president say once again that he would prefer to see peace, he wants diplomacy to potentially prevail here. Are we getting any closer to a diplomatic resolution to this conflict?
We are no closer to a diplomatic resolution than we were when President Trump was inaugurated in January of 25. The real problem is that Russia is engaging in what I would call performative negotiations. Putin doesn't want to annoy President Trump. He doesn't want any more sanctions on Russia. And therefore, the Russians pretend that they're really interested in ending the war. But they have not modified their maximal demands on Ukraine since these negotiations began, and those terms are unacceptable for Ukraine if it wants to remain an independent sovereign state.
Well, and certainly they're not slowing down their military action either overnight. Russia keeping up with his attacks, according to Ukrainian President Vladimir Zelensky, launching 420 drones, 39 missiles on 8 different regions of Ukraine, partially targeting energy infrastructure, injuring dozens, including children. Angela, does that actually tell us kind of everything we need to know about where Russia is right now?
I really think it does. And Russia has been increasing its attacks and bombardment both of the Ukrainian energy infrastructure and civilian targets in the last year. And every time there are some more negotiations, this time just between the US and Ukraine, but even when there were trilateral negotiations with Russia, these bombardments increased. And Putin has again said, we're nowhere near to ending this war. And so, the best I think that the Ukrainians can hope for today in Geneva is to get assurances from the United States about what they call a prosperity package, which will be economic investment in Ukraine, but that's once the war is over. And otherwise, Zelensky has said that there will probably be, as you said, trilateral negotiations again in March. But the last time there were those negotiations, the Russians sent as their chief negotiator someone who really doesn't have that much power and was mainly there to, again, give the false narrative about Putin, which Putin has many times given, which is that Ukraine is really part of Russia.
Well, so who, if we are to see another set of trilateral negotiations, who would Russia need to send for you to see it as credible, as actually being in good faith?
So I think they would have to go back to where they were before, which is to send the head of their military intelligence agency as the chief negotiator, but then also someone like Yuri Ushakov, who is President Putin's main foreign policy advisor. And he was present at the very beginning at some of the discussions with the United States, but he hasn't been seen since then negotiating with the Ukrainians. So I think that would be one signal. But I think the main signal would be if Russia really were willing to stop its bombardment and to show some good faith that it wants to achieve a ceasefire, and at the moment it's not interested in that.
Well, and to get back to what you were mentioning earlier, this idea that there is a fundamental disconnect between Russia's objectives and what Ukraine is willing to agree to. Issues of Ukrainian sovereign territory, which Russia obviously does not view that way, Angela. How can we possibly come to an agreement on that ever, regardless of who is sent to the negotiating table?
Well, I think the problem is as long as you have President Putin in power, and as long as the Russians are insisting that Ukraine has to give territory to Russia in eastern Ukraine, which Russia doesn't control, it's going to be very, very difficult to come to any agreement. One could theoretically at least say there's a ceasefire and there won't be any more attacks at the moment. The Ukrainians have said that they would be willing to have a demilitarized zone in the area that Russia wants Ukraine to give up, but the Russians have rejected that. If you could have a ceasefire, then you could at least think about what comes afterwards, but the Russians are now saying no ceasefire until Ukraine has made all these concessions, and the Ukrainians are saying they have to have some credible security guarantees from the Europeans with a backup from the United States in order for them to also agree to a ceasefire.
Well, so are the Europeans doing and promising enough here, Angela, or they simply can't do it enough on their own?
I mean, they're promising, some countries are promising as much as they can. The British, the French, the Germans, some other countries are willing to send some troops into Western Ukraine as a security guarantee, but that's only once the war is over. But I think everyone agrees without a U.S. backstop, and that would mean continued U.S. intelligence support for Ukraine, but also some kind of insurance that if the Russians then attacked again, the U.S. would be involved also in pushing back. And the Trump administration hasn't agreed to do that yet. And the Europeans, I think, by themselves, without U.S. backing, it would be very difficult for them to provide the security guarantees to Ukraine that Ukraine would need in order to deter Russia. That's the key question. How could you then deter Russia from relaunching an invasion once it had recouped some of its military?
We just have 30 seconds left, Angela, but where would you put the odds that we're still having a conversation about an ongoing war at this time next year when we mark 5 years?
I would say the odds, unfortunately, are rather high that we'll be still discussing this in a year.
All right, Angela, we always appreciate you joining us with your expertise. As somber as this conversation is, Angela Stent, of course, senior fellow at the American Enterprise Institute and author of Putin's World, Russia Against the West and With the Rest, weighing in on one set of high-stakes talks in Geneva today, the other, of course, being those between the U.S. and Iran, which the mediator, Oman, says has wrapped. We're making progress, and more technical talks will be taking place in Vienna next week. We'll have more analysis of that on the late edition of Balance of Power. Well, Joe Matthew will be with me once again from New York. So we'll see you then on Bloomberg TV and radio.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody, across Bloomberg platforms. Carol Massar, Tim Stanovic, live here at Bloomberg headquarters in New York City. It is Thursday, February 26th, kind of a Friday, but we got a lot going on, especially, our focus still on NVIDIA. Yeah, look at the S&P 500, which is down 0.8%. NVIDIA down 5.3%, the biggest drag on the S&P 500 and the NASDAQ 100 right now. But on the S&P, Carol, it's responsible for 29.5 points of the decline. Yeah, it's big. I mean, this is what happens when you're the largest market cap company in the world. We're going to get into NVIDIA. I mean, 73% surge in fourth quarter revenue, more than a 75% adjusted gross margin. I mean, what gives? Not enough? Well, it was supposed to be a blowout quarter. Well, it kind of was. But it has to be beyond blowout, at least for the guide. Those whisper numbers kind of matter and things like this. I mean, like Ian King told us yesterday, we do this every quarter, and if they don't knock it out of the park, like beyond the park, then it's a challenge. Well, investors not impressed. Hey, we're going to talk a lot more about NVIDIA. Also, we just want to point out 30-year mortgages, that rate falling below 6% for the first time since 2022, so in a while. That is kind of some of our backdrop. So we're going to get more on the trade in just a moment. Speaking of NVIDIA, though, semiconductors, that global race underway with someone who actually, I think many would say, kind of had a good handle on what was to come. Predicted the future, maybe you might even say.
Yeah, he wrote the book back in 2022. Chris Miller is the author of Chip War. He's going to stop by in just a few minutes.
And then from Hillary Clinton to Davos to the president, meaning President Trump, our roundup on figuring out the impact of Jeffrey Epstein. It feels like every day there is a drop of news stories, connecting the dots.
Yeah, and then we talk a little bit about health later this hour. Yeah. The top cause of death for women in the U.S. and the unique challenges that are around it. That's a little later this hour.
The gaps between men and women, especially when it comes to healthcare, is very evident when it comes to this. Hey, first up, though, let's get a check on that trading day on this Thursday and some of your top business stories. Here is Charlie Powell.
All right, thank you very much. Stocks lower across the board. Do want to begin with a developing story headline right now off the Bloomberg Professional Service. The smartphone market is set to fall 13% because of the memory shortage. Now, this is according to the latest numbers from IDC. It sees 1.1 billion smartphone shipments this year. That number is down from 1.26 billion. We're looking at a rout in chip makers today with the Dow, the S&P, NASDAQ very much in the red. Let's also throw in the Bloomberg Mag 7 index and the SOX. Philadelphia Semiconductor Stock Exchange Index down 3.7%, keeping it all in context. S&P down 55 right now, down 0.8. We've got the Dow lower by 0.1%, while NASDAQ is down 1.5%, and the NASDAQ 100 index also down by 1.5%. 10-year yield 4.02% with a 2-year 3.44%. Gold up $19 the ounce, up 0.4%, $51.84 the ounce. West Texas Intermediate crude oil up 0.5%, $65.74 a barrel as traders keep an eye on the latest developments in and around the Middle East. NVIDIA lower after earnings, down now by 5.1%. Salesforce after earnings up by 3%. Sources tell Bloomberg President Trump plans to meet New York City Mayor Zohran Mamdani at the White House. This discussion is expected to touch on housing. The meeting is expected to include a conversation about funding for specific housing projects. Again, recapping, stocks lower, S&P down 0.8%, NVIDIA down by 5.1%. Bloomberg Business Week Daily continues now. Once again, your hosts, Carol Massar and Tim Stanovic.
All right, Charlie Pellet, thank you so much. Carol Massar, Tim Stanovic, live here at Bloomberg headquarters in New York City. Hey, we've been watching a lot when it comes to what's going on in the world of Jeffrey Epstein, the relationships as everybody seems to try to connect the dots. On that, former Secretary of State and former First Lady Hillary Clinton, in a closed-door testimony deposed by committee staff of a House committee investigation on Jeffrey Epstein. It happened in Chappaqua. It's in upstate New York. It's where she has a home with her husband, of course, former President Bill Clinton. He is set to face questioning on Friday. Meantime, House Democrats today demanded President Trump follow the Clintons in testifying to congressional investigators on ties to the disgraced financier Jeffrey Epstein. We do want to head to the Bloomberg News Washington, D.C. Bureau and to Jamie Tarabby. She is Bloomberg News national security reporter. Jamie, good to be checking in with you again. A lot continues to come out around Jeffrey Epstein and any ties to people with a convicted pedophile. His relationships, unwinding what is significant or what is just random is the process that you and I feel like the rest of the world is kind of dealing with today. Tell us a little bit about the process before we get into some of the news events of the day.
Well, so the Republican majority of the Oversight Committee has been sending subpoenas to all kinds of people who might be tangentially related or directly connected to Jeffrey Epstein and his sort of web of finances that help fuel his sex trafficking operation. People who have already appeared before the committee or have sent in sworn statements include former Attorney General Bill Barr, James Comey, and last week we had Les Wexner up in Ohio getting grilled by Democratic staffers of the committee. So this time it's the Clintons. They had been putting off or trying to. They wanted to have a public deposition or a public hearing because they said they had nothing to hide, and because the committee basically said, we will hold you in contempt if you refuse. And they suspected that the Democrats in the House would have actually agreed to pass a vote of contempt. So the Clintons eventually yielded, and here we are. It's not the first time a former president has been called to answer to a subpoena post-office, but it is very, very rare.
Do we have any information at this point about what, and the former president is scheduled for tomorrow, but do we have any information about what the Clintons have said or plan to say thus far?
Well, Hillary Clinton released a statement this morning. She was very defiant about sort of the need to have her come out and do all of this. She basically had said that she'd sent a sworn statement in January that she had never met Jeffrey Epstein. So there was really no reason for her to be talking. She said this was just basically a sideshow to distract from President Donald Trump. So it's very interesting because the Republicans for the committee have said that they expect today to be a very, very long day and that tomorrow will be even longer. So what they're going to do regarding their questioning of Hillary Clinton is going to be really interesting. There are obviously some very rare connections of her with Ghislaine Maxwell, the sort of the former girlfriend, companion of Jeffrey Epstein, who's serving her own jail sentence at the moment. She, in fact, attended Chelsea Clinton's wedding as the guest of a friend of the former president. So that's at least one instance where they've crossed paths, and Jeffrey Epstein and Ghislaine Maxwell had some workings and participation in the Clinton charities. So that will also come up as well. But she's very her statement was very defiant. She said, "We have tried repeatedly to answer your questions. You really want a sideshow. You want a political circus," and they're basically seeing it through a partisan lens, and that's really how they're treating it.
Jamie, one thing we want to ask, and this was a story of yours, I think you had one earlier in the week and then kind of an update today, that House Democrats are demanding that President Trump testify to congressional investigators on ties to Jeffrey Epstein. We should point out that both President Trump and the Clintons have denied any knowledge of Epstein's criminal activities. As for President Trump, his name comes up a lot. I don't think, we all know in the Epstein files. There's also been a lot of attention to some reporting by NPR too this past week when it comes to President Trump. Tell us more about why Democrats want President Trump to testify.
Well, as you said, and this is something that the ranking Democrat, Robert Garcia, said today, he said the only person whose name, or maybe not the only person, but one person whose name comes up more often than President Bill Clinton is President Trump's. And so he would like to see President Trump now also appear before the committee if President Clinton can do so as well. They also said that they believe that they saw 50 files or records related to this case involving a woman who was a minor when she alleges that the president abused her in some way. We don't have details of that. The Democrats have said that the archive manifest shows that the DOJ took those files out and haven't returned them. And the DOJ is basically saying those are documents that were taken away and will be returned, but this is literally a very partisan fight at the moment over the existence of these documents and whether they will actually be returned, whether they'll be released to the public or not.
But there are missing files.
There are missing files according to the reporting and according to what the Democrats are saying. The DOJ says that the files are not missing. They have been removed for particular reasons. So, this is such a political story in so many ways. What was very interesting was that when reporters asked the Republican chair today whether President Trump ought to be brought for questioning as well, he didn't close the door on that possibility. And one thing that I thought was really interesting is that he himself, Jim Comer, the chairman of the committee, said that there was a possibility that the name of Howard Lutnick, the current Commerce Secretary, would come up today. And Representative Nancy Mace, who's a Republican, said that she was expecting to ask questions regarding Howard Lutnick as well. So it's just really curious what's happening today. And we're watching the same as everyone else to see what develops.
I'm glad you mentioned this as a political story, Jamie, because I'm wondering about repercussions or consequences for people who, what is the end game here for people who say, okay, we need to understand what's in the Epstein files? Because at least here in the United States, apart from Ghislaine Maxwell and Jeffrey Epstein himself, there haven't been any arrests in the U.S. It's not the case for outside of the U.S. And certainly some people have lost their jobs, and some people have or are stepping down from positions because of their association with Jeffrey Epstein. But what is the end game here?
I mean, that's a really great question. We have seen, as you said, arrests overseas, and here we've seen people resign their post, very prestigious post, and step away or, sort of relinquish the spotlight in a way. The problem with all of this is, it becomes this whole, the accusations of a cover-up that really start to take steam, because if these files haven't been released en masse, unredacted, then why is that? And you had elements within the Trump administration who, prior to coming into government, were very forceful about having those files released and to have that kind of transparency and scrutiny. And now they're really kind of pulling it back. You remember that FBI Director Kash Patel testified in front of a congressional committee saying that he didn't see any evidence of anyone else being involved in the Epstein trafficking operation. And so now there's discussions about bringing him back to sort of speak to those statements. Because the release of the documents has been so fragmented, because some names of people who are not victims and minors have been redacted, because of the lack of transparency for people who, if you're looking for a conspiracy, you're going to find one. And I don't know if anyone will ever actually be truly satisfied. Right. But what it has done is it's really caused a division amongst President Trump's supporters, particularly on the MAGA side, who have been sort of convinced of a deep state conspiracy here. And it's very unclear if they will be ever happy with whatever ends up coming out.
Yeah, very tricky, right? And putting the pieces together. Jamie, thank you so much. So glad we could catch up with you. Bloomberg's News national security reporter Jamie Tarabay there in D.C. All right, now let's get to the world's largest market cap company, biggest drag on today's trade. We are talking NVIDIA, two Bloomberg voices, looking at it from two vantage points. Bloomberg Intelligence senior semiconductor analyst Kujan Subani out there in our San Francisco bureau. Right here in studio, Robert Schiffman. He's Bloomberg Intelligence senior tech credit analyst. Kujan, let's start with you. Keep hearing on radio, TV, everywhere. This was actually a pretty strong quarter and outlook for NVIDIA. Why is everybody so concerned?
I don't think there's any fundamental concern. There was nothing negative you could find.
But investors are unhappy completely.
There is. I think it has a function of AI fatigue in the market. So if you look at the top 5-7 customers who are driving all this revenue, they all got punished because of raising higher capex spendings, right? So you can't have it both ways from an investor perspective. Like, if they don't like the high capex spending, the company that's capturing a lot of that would also likely not get rewarded. Also, like you said, it's a $5 trillion company, right? A lot of this story has been digested and absorbed and analyzed. So there's also that wanting for a brand new catalyst factor, which I guess was not there from the earnings.
Robert Schiffman, come on in here, because like Kunjan, you look at this from the credit perspective too. You look at NVIDIA in the context of the other companies too, and obviously the customers as well. How do you view the earnings? What story did it tell to you?
Yeah, sometimes I feel like I'm living in a bizarro world.
Why?
This might have been the greatest print in the history of the stock market with the greatest guide. And we're in a market, at least an equity market right now, where nothing is good enough. A lot of people are long this name. It's $5 trillion equity market cap. Where do you find the next buyer? From a credits perspective, spreads are tighter this morning. It's not a huge float, but tighter. NVIDIA got upgraded earlier this year, and I think they're going to be the next AAA rated name. So, what do my customers think? I think they think everything's fine. They're worrying about other names. NVIDIA is not one of them.
No signs, though, of credit stress. Let's broaden out in terms of hyperscalers, like tapping the debt markets and so on and so forth. Any of it that shows any signs of stress or strains when you look at these balance sheets?
What some see as stress in terms of borrowing money to build AI, I see as opportunity. And I think that's what the leaders of all these hyperscalers see as well.
Opportunity to buy their and own their debt and be part of this?
No.
What?
They're building the future. They're investing capital into cash flow generating assets. The problem is it takes a lot of time up front to build it before you start seeing the returns. So right now, all we're seeing is the spending. No one's actually seeing the returns so far. Again, I would argue that if you actually look at the first quarter prints for all of these names, whether it's Microsoft, Meta, Alphabet, they had all had record highs, and they're all guiding even higher, all with double-digit top-line growth. So I think there's a dichotomy between the equity markets and the credit markets. The credit markets are fine. We're actually hearing about a wall of worry, a dystopian world where we're all going to be walking around with robots and rocks. And quite frankly, I think that's news that sells, and I don't see it. The credit markets don't see it. And if these companies have more bonds to sell, there are buyers out there.
But to be fair, and Kunjan, come on in here, that part of the dystopian world is the promise of this technology actually succeeding. So to Robert's point, what would make you say, okay, we've gone from the place of spend, where these companies are spending money, to actually seeing the returns? What do you need to see in order to say we've gotten there?
I think we are seeing the return, is just like Robert mentioned, we are seeing a return from all of these names. Look at their earnings, look at their AI-driven earnings. In a lot of places, I know the data is too early, and you cannot still justify a token dollar spent to a dollar of revenue captured. But when you dig deeper and look at their key metrics, I mean, Salesforce also announced a new metric that they created to justify token usage to how an agentic task gets done. So we are seeing a lot of data points here, which is driving higher and higher revenue, driving higher and higher productivity for a lot of these companies that are spending money. But it will take time.
And, interestingly enough, we did get Salesforce earnings after the close. The stock's up about 3.5%. I mean, we're seeing some outperformance. The worries about the software space and so on and so forth, and forgive me, I only got about 25 seconds. Robert, any stress there? I mean, or there going to be some winners and losers?
I think down the credit curve in high yield land, there will be some stresses. But high-quality names like Salesforce, what did they announce yesterday? A $50 billion stock buyback. That does not show any stress in the credit markets. I think these markets continue to remain strong, and everything these companies are saying are actually pointing to that.
All right, we got to leave it there. Guys, thank you so much. Really appreciate it. Certainly one of the big, important companies of our universe at this point when we think about NVIDIA and just that whole tech AI world. Kunjan Subani, Bloomberg Intelligence Senior Semiconductor Analyst, and of course, Bloomberg Intelligence Senior Technology Credit Analyst, Robert Schiffman. When we come back, a little bit more on semiconductors with someone who seemed to call the...
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. Just getting word from FedEx that it's going to give any tariff refunds issued by the Trump administration to the customers and shippers who paid the duties in the first place. FedEx shares up now by 1.5%. A decidedly mixed market right now. Yes, the Dow Jones Industrial Average giving up earlier losses, now higher by 51 points. That is a gain of 0.1%. Both the S&P and NASDAQ, and the NASDAQ 100 index, they're in the red. Russell 2000 index of small cap shares gaining now by 0.2%. S&P well off session lows, down 0.6%, lower by 39, back at 69.06. We've got NASDAQ down 1.2% at 22,866 on NASDAQ. The NASDAQ 100 index down 1.2%. The SOX, the Philadelphia Stock Exchange's semiconductor index, it is down 3.5%. We got more on chips, semis coming up in just a moment. 10-year at 4.02%, with the 2-year 3.45%. Spot gold is up $22 the ounce, up 0.5%. Traders keeping an eye on talks involving Iran and the U.S. as West Texas Intermediate crude tumbles now by 0.7%, back below 65 at 64.96 a barrel. Bitcoin down 1.8%, 67,680 on Bitcoin. Warner Brothers Discovery reporting lower fourth quarter sales and earnings. It comes as the company weighs competing takeover bids from rival companies Paramount and Netflix. Right now, Warner Brothers Discovery shares a little changed, higher by under 0.1%. Paramount Skydance surging by 10.2%. Netflix up by 3.2%. Tim and Carol, I got one for you to ponder. A convicted American stowaway has been busted again after taking a flight from Newark to Milan. Lots of questions about how it all went down, but Svetlana Dali, detained at Milan's Malpensa airport, could face prosecution in the U.S. Yes, after she bypassed security to board a United Airlines flight. She's at it again.
So she tried.
She got on board. She made it to Milan.
Wow.
And this is after what happened roughly 2 years ago when she was convicted last year of a stowaway charge for a JFK flight over to Paris.
Maybe third time will be the charm, Charlie.
And all I'm thinking, though, is any one of us gets hassled like you can't believe for making sure you got a passport, making sure you got a boarding pass. How does it happen?
I don't know. I have no idea. All right, Charlie. Good to get that update. Charlie Pellet there, of course, with the Bloomberg Business News Flash. Hey, I got to say that there are moments in time like today with all the spend and build out and companies doing things related to AI and questions around the return on investment, the ROI, and the impact of artificial intelligence that we kind of wish we could pull out that crystal ball and see a little bit into the future.
Oh, I think it's fair to say Chris Miller saw something years ago. He's the author of the 2022 bestseller Chip War, the fight for the world's most critical technology. He joins us from Pittsburgh this afternoon. Chris, it's good to have you back with us. Carol and I were just talking, and you know, you wrote this book close to 4 years ago at this point. How different is the world of semiconductors and the world's reliance on semiconductors now than when you wrote the book?
Well, I think the key difference is just the scale of spending that we've got right now on building data centers and buying all of the chips that are required inside of them. NVIDIA first and foremost, but not only. We've seen companies transformed by the data center build out. But in a lot of ways, not much has changed other than that. We're still sourcing our key semiconductors from Asia and above all from Taiwan. And so the industry is supercharged its size, growing faster than ever, but dealing with some of the same supply chain choke points that it had a decade ago.
You know, we talk a lot with one of our brilliant voices on the chip world, and that is our own Ian King, who has seen a lot of cycles, the ups, the downs. And we talk a lot about that supply-demand imbalance and what happens when there's a lot of demand, there's not enough supply, the build-out continues, the investment, supply goes up, and then there's a glut. So I'm just curious what your view is when it comes to the cyclical nature of the semiconductor world. Has AI changed it, or we will see also an overbuild, an oversupply, and then a glut?
I think if you look historically, certainly you see cycles up, cycles down. But there are moments when you see step changes in terms of demand for certain types of chips. We saw that with smartphones, for example. There was no demand for smartphone chips, and then now everyone needs a new smartphone every couple of years. And what we're seeing in AI right now is that type of step change, a huge increase in just the baseline amount of chips that we're going to need for data centers driven by AI. And so I think we shouldn't expect cycles to be over. Certainly there'll be ups and downs in the future, but it's now very clear, I think, that we're just going to need a lot more compute for AI purposes in the future. And as a result, we'll need a lot more of the AI chips that go inside of data centers.
In your view, is the promise that many people think AI is supposed to deliver, will it actually be delivered? Like, what's the future that you envision after all this CapEx is spent?
Well, I think it's in some ways funny when we ask, will AI deliver? Because if you look just 3 years ago, even after ChatGPT was released, there are so many things that were not possible that are possible today, whether it's the number or the scale of hallucinations and answers that chatbots give you, or the scale of work that you can put together today that just wasn't possible in the past. We've already had so much new capability generated just in the couple of years since ChatGPT that in some ways I think it's an absurd question to ask, will AI deliver? It already has in a lot of ways. But I think I understand why there's plenty of questions about what about the investment that's happening right now? Will that investment pay off? And I think there are reasons to think carefully about how much each company is putting in over what time horizon. But I guess when I zoom out, I ask myself, do I want a world in which there's more access to compute or less? And it seems to me that we should, rather than being concerned that there's too much compute being put in the ground, be excited that there's actually companies willing to invest in the infrastructure that's going to deliver all these capabilities.
Well, I think it's an important question to ask for a few reasons. And one of those is because if you look at just the CapEx that these companies are spending, you know, one company, $200 billion in a single year, that's a big commitment. And that's something that they have to convince investors that is money that is going to the right place. That's money that has to be earned back, plus on companies coming to a hyperscaler and saying, yes, we think that this money is not only being well spent, but then we can use this compute to actually create a product that will provide a return on investment. So yes, we've seen a lot of the hyperscalers benefit, the Anthropics and the OpenAIs and the Mistrals. Like, that's amazing stuff. But at the end of the day, there are a lot of companies that are not necessarily technology companies that maybe aren't yet necessarily seeing an increase in productivity as a result of these tools. So my question is, do those companies start to see that? Do we live in a world where this is a layer, just like the internet was a layer of technology?
I think there's no doubt that we're going to have AI as a layer that's embedded into all technology that we use. And when I look at the economic question, I say, first off, is it profitable to serve AI systems today? Not train the next generation, but serve today's. And if you listen to what's publicly reported about OpenAI or Anthropic, their margins on their inference business are not just positive, but quite good. And so that, I think, is pretty strong evidence that the delivery of already existing AI services is a pretty profitable business. The next question is, should we be investing in R&D in the next generation, which is, of course, very, very expensive. But I think it's hard to argue we should dramatically slow down R&D and AI, just given all of the extraordinary improvements that we've seen over the past couple of years in terms of capability. And so when you start breaking it down and ask, well, which specific investment do we think is excessive? Which specific investment would we rather not be doing? Would you really like to be the CEO of the only big tech company that's not investing in AI? That doesn't seem like a very comfortable place to be. And I'd rather have a situation in which the big technology companies are investing more rather than putting money in the bank or buying back their stock because they didn't have any profitable investment opportunities.
Well, I would say Apple's doing it differently, and I guess time will tell whether or not their approach works out. Chris, I am curious too, who do you talk to? What research do you follow? What are the leading voices? What are the leading companies that you watch to figure out kind of how the semiconductor space is evolving? I mean, we still know TSMC is still the big manufacturer of all chips in the world, and there's geopolitical tensions to that. But give us an idea of where do you think kind of investors and just the world at large need to be focusing their their attention on when it comes to the semiconductor world? Is it NVIDIA? Is it China? Is it something else?
I think the hard problem is that it's all of the above, and we've seen this play out in the GPU supply chain over the past couple of years, where we've had shortages in different types of components, different materials, and the memory chips that go next to GPUs and AI servers. Each part of the supply chain has had to dramatically ramp up its production capacity to respond to this surge in demand. And so if you only look at one part of the supply chain, you miss the challenges that other parts are often facing. And so it's the chip designers, it's the chip makers, but it's also the materials suppliers, which are often not even thought of as being semiconductor firms, but produce many of the capabilities that are critical to actually manufacture the AI chips and servers that we need.
Do you think the world, or do you think the U.S. specifically does need to be restricting sales of its most sophisticated chips to China or on others? I mean, we did see NVIDIA, they still face some uncertainty in China. That's their largest market, or which it is the largest market for chips. The government granting some licenses to ship a small amount of some of its processors to customers there, but NVIDIA is not sure if the Chinese government will give its approval. So there's still some back and forth here. But is it still an arms race of sorts?
Well,
arms race
so.
of sorts, excuse me. Yeah.
Yeah, I think arms race is not a bad analogy. And when you listen to tech CEOs, they'll speak in the same language. They're struggling to get access to all the computing power that they need, that they envision needing more tomorrow than they've got today. And if you listen to Chinese technology leaders, what you'll hear from them is challenges in getting access to computing power. And the primary reason they've struggled to deploy AI products at scale is because they've struggled to get access to all of the computing capabilities. And it's on a regular basis. We see new Chinese models launched that can actually be deployed at scale because they don't have access to the advanced chips that they need. And so this does, I think, seem to me that this is still a very powerful card that the U.S. has to play. And so I think we should be very careful or on any decisions to give China more access, or at least make sure that you're getting something in exchange for that.
On that, Chris, the U.S. Support of TSMC and the U.S. support of Intel, different types of support, and I guess you could call the TSMC one encouragement to build here in the United States. What is the right industrial policy to reduce reliance on companies outside of the U.S.?
Well, it's a really hard problem because TSMC is such a capable and efficient manufacturer in their home base in Taiwan. But I think the U.S. government is right to say that we need a more diversified manufacturing base for the world's most important semiconductors. I think we've learned over the last couple of years there's no silver bullet. President Trump's tried tariffs. That comes with obvious downside. President Biden tried subsidies. That worked to a degree, but only to a degree. Here's the reality. The chip industry has involved hundreds of billions of dollars of capex over the last several decades. And so it's just not going to move fast. And so if you want to slowly change the structure of where chips are produced, you've got to plan for years of implementation of measures designed to shift the economics of the chip industry.
All right, going to leave it there. Chris Miller, thank you so much. Good to check in with you. Professor of International History at the Fletcher School at Tufts University, author of Chipboard, joining us on this Thursday. Sticking around, we're back in a moment.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. Stocks lower as NVIDIA fails to impress. NVIDIA after earnings down now by 5.4%. The Dow, though, higher, up 26 now, up under 0.1%. The S&P down 39, drop there of 0.6%. The NASDAQ Composite Index down almost 300 points, a drop of 1.3%. The NASDAQ 100 Index down 1.2%. And our Mag 7 Index down 1.5%. The Russell 2000 Index of small cap shares is gaining up 0.3%. The SOX, the Philadelphia Stock Exchange Semiconductor Index, down 3.6% with a 10-year currently yielding 4.02%. Spot gold is up 0.4%, $51.84 the ounce. West Texas Intermediate crude now down 0.1%, $65.33 a barrel. Oil fluctuating as traders digest mixed signals on U.S.-Iran talks. Victory Capital Holdings has agreed to buy Janus Henderson Group for $57.04 a share, topping a previous offer from Nelson Peltz's Trian Fund Management. Shares of Janus Henderson today are trading higher. They're up by roughly 5.5%. Victory down by roughly 7%. Again, recapping, we got NVIDIA down 5.3%, S&P down 0.5%. I'm Charlie Pellet. Tim and Carol, that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, Scientific American recently writing about how heart disease is the top cause of death for women in the United States, kills more of them than all forms of cancer combined. And it notes, quote, the unique signs and symptoms of heart disease in women are more likely to go undetected and untreated, Tim, than those in men.
And a new study out notes that it may be about to get worse. The study published today in Circulation also shows an alarming uptick of disease in younger women. Nearly a third of all women between ages 22 and 44 will be diagnosed with some form of cardiovascular disease by 2050.
All right, let's get to it. Time for the Bloomberg Business Week Women's Health segment, where we focus on key issues in developing technologies that are impacting the present and future of women's health around the world. We do welcome Dr. Joy Gelman, Associate Professor of Medicine and Board-Certified Cardiologist at Weill Cornell Medicine, joining us in New York City. Dr. Gelman, share with us a bit more when it comes to the reality of heart disease in women. We laid it out a little bit in the introduction, and kind of what are the common cases that you often see?
Well, first of all, thank you so much for having me and highlighting this extremely important issue for women, which is that it's been known for decades that heart disease is the #1 killer of women. And unfortunately, that not only is not improving, but as you pointed out, we're learning that as recently as, today, that the American Heart Association is forecasting that the burden of heart disease and stroke in women is projected to increase to a point at which 6 out of 10 women is expected to have some degree of heart disease by 2050. And even though it's known, in the medical world, unfortunately, the messaging does not always seem to get to the people who need to know. And by that, I mean women. And so it's, it's February, it's Heart Disease Awareness Month. And so I'm so glad that you're shining a light on this important issue.
Well, I think there's this challenge with medical communication too, and the way that we think about what heart disease is. So I have a lot of really basic questions that I just want to get to. How do you define heart disease? How does the American Heart Association define heart disease?
It's a good question. I would say that it's sort of an umbrella term that encompasses a lot of different conditions, ranging from coronary artery disease to heart rhythm problems to structure and functional problems of the heart muscle. So I would, it's when people are filling out forms in the medical offices, they sometimes wonder, do I have heart disease? I have hypertension. So risk factors for heart disease, I would include in that umbrella too. And in this report from the American Heart Association that's projecting the increased burden, it's mainly driven by an increased prevalence in risk factors for heart disease. And by that, I mean things like high blood pressure, diabetes, obesity, smoking. But one thing I will point out that there are risk factors that are actually specific to women that sometimes women don't always know, and sometimes even the doctors don't always ask about. And I definitely want to highlight specifically there's some adverse outcomes in pregnancy, hypertensive disorders in pregnancy, preeclampsia, gestational diabetes. These are conditions that, of course, are specific to women that do increase their risk of heart disease down the road. And sometimes in all the excitement and commotion of having a new baby and adjusting, that either doesn't get communicated or gets communicated but not fully absorbed. So I definitely want to highlight those factors here.
Why is it sometimes underdiagnosed or not necessarily asked about from doctor to patient when it comes to women? And I hate to say this, but I don't think I'm tearing back something on something that isn't known, but you know this, doctor. I mean, it just feels like the gaps when it comes to women versus men when they're in with a doctor and things that aren't asked or things that go undetected or things that are dismissed.
You're exactly right about that. So I think there's a few reasons why there's sort of an underdiagnosis and undertreatment of women when it comes to heart disease. Number one, as we pointed out, women sometimes don't know, they don't think that they're going to get heart disease. Maybe they think breast cancer is the thing that they should really be. You know, the breast cancer campaign and the pink ribbon, that's been a very strong public awareness campaign. And so, I think a lot of women think, oh, that's for men. That's the old guy shoveling snow who's clutching their chest.
I was shoveling snow this week, just to let you know.
Hopefully small, light piles. So that's number one, is they don't think it's going to happen to them.
Yeah.
Number two, women also don't always have the typical symptoms like you might see portrayed in the movies where, you see someone just clutching their chest or an elephant sitting on my chest. That's kind of a, textbook description that even doctors learn about in medical school. Women sometimes can have atypical symptoms, meaning sometimes they feel it might be nausea, it might be, sweatiness, it might be back pain. They might think it's, feel an indigestion feeling or just tired. And, women, tend to dismiss their symptoms. They're the caregivers. They're taking care of everybody else. And so they often will dismiss their symptoms. And then when they do present, when it does sort of, they go to the doctor or to an emergency room or an outpatient visit, and they describe these atypical symptoms, sometimes, even on the healthcare system side, they are, that's anxiety, you're stressed out, and so they sometimes there is a bit of under recognition of heart disease.
All right,
when women
help us out because we've got about a minute left to go, and I'm just thinking.
Okay, sure.
There are women who are listening. There are men who are listening and thinking about their partners, their wives, their family members. What should we be asking ourselves as women in terms of, since this is the number one killer of women when it comes to health conditions, what should we be asking ourselves? What should we be doing in terms of our health and when we go to visit our doctors or get our annual checkups?
Great question. Because, so number one, I would say, and this is sort of an American Heart Association slogan, that you do need to know your numbers, know your risk. Some risk factors that you have, you may not feel or notice. So when you go to your doctor, you want to get your blood pressure checked because you may have high blood pressure and not know it. You need to know what your cholesterol is. You want to know what your sugar is. Make sure you don't have diabetes. You, of course, want to eat a healthy diet and maintain a real healthy exercise regimen. And that should not be an intimidating kind of statement. So it doesn't mean you got to go to the gym and put on a sweatsuit. And, it can be, gardening, shoveling, cleaning, walking, anything that gets your heart rate up for at least 30 minutes, most, if not all days of the week. Prevention, and of course, limiting stress, trying to get good sleep. I know those things are not easy to do, but, to the best that people are able, working on those modifiable risk factors is really key.
So glad we could get some time with you. Thank you so much. Be well. Dr. Joy Gelman, Associate Professor of Medicine, Board Certified Cardiologist at Weill Cornell Medicine. Hey, we're counting down to the weekend. Stick around.
You're listening to Bloomberg Business Week Daily with Carol Massar and Tim Stenbeck on Bloomberg Radio and Television.
All right, everybody, you know we call this Friday's Eve, which means the weekend is just around the corner. And now on the weekend, we've got a new Christina Ruffini, Lisa Matteo, bringing you unique conversations, in-depth dives on politics, lifestyle, and culture. So much is going on, and they're going to tie it all together. Get you set for Monday, too.
So we bring in a new member of our Bloomberg crew and family here, Christina Ruffini. She's the co-host of Bloomberg This Weekend. She joins us here in the studio. She's familiar to everybody already because she, when you were out, Carol.
I used to watch her on the weekend at home.
I'm a long time. I never escape the weekends. I do actually love the weekends, and it just seems like I'm